Good morning. I'm Pete Molman. It's Forex Focus, and we have somebody new joining us today, Mike Henley, or as we like to call him, Twitter Mike. How are you, my friend?
I'm doing great. Got here in 25 minutes today, so
you see the magic of coming down at 4 a.m. I know it's 14 minutes down for me, 2 hours home every night. So yeah, it's spectacular. We're turning everyone into creatures of the night. So very good. All right, first time. Mike is one of the members of the team at tastyfx. He is, well, you're responsible for so many things, but Mike is somebody who is one of the people who, when you go at Tasty Trade and activate your account, what makes that so elegant, quick, and efficient, Mike is driving that ship in a very incredible way. So, Mike, you're a passionate trader. You're passionate about everything, and it's one of the great things we love about you. So, we're going to talk a little bit about markets, but just from I was listening to the sports coming in. It seems like the Pacers have this thing all set. I mean, what are your thoughts on this?
I think we're waiting to see what Halliburton's strain comes back with, what grade it is. He has I want to say it's the right leg. He has some tightness in that leg, so it really depends on that. I don't know. I'm 48 minutes away from an NBA championship, and I feel like I'm 12 years old again. So Thursday is a huge day for me. Yeah, for the Thunder itself, I want to send them home in Indiana. I don't care if we're not at home. I want to send them home right away in 6. So sorry to the Indiana fans out there, but we're rooting for OKC. Childhood dream coming true right now. So
look at you, passionate about that.
Yeah.
All right, we've got a lot going on overnight. We saw a rally in equities, rally in bonds. That's getting cut into pretty hard, starting about right when London rolled in about 1 o'clock, and we're actually seeing some softness come through in FX markets. Now, Mike, you are you're an active trader. You trade a lot of things, and just getting a sense of we've got the FOMC coming up at 1 o'clock our time. The announcement 1:30, the press conference. I think it's a given that they're not going to change rates this meeting. What will be interesting is the statement that comes out of one. So you get like a dual binary event. You get the market will move at 1 off the statement. Any changes to wording, don't read the statement. The market will read it very efficiently for you. At 1:30, then Powell comes out and talks about, and everyone will be looking, chubs in the water. Is he going to take a bite and respond to the rates should be dramatically lower statement? My guess is he says nothing. What do you think?
I really agree with that. I would say that's kind of sidelined in a way, and they have been for quite some time when you haven't seen them do much with open market operations this year. They haven't cut in 6+ months, right? So again, we're sitting at pretty much full employment right now. Sure, we've seen some tick up in jobless claims, and the unemployment rate itself is holding steady for the most part. Yeah, we see some softness in the full-time jobs and part-time jobs increasing, but that's really what Powell and the Fed are focused on. I want to say for the most part is that unemployment rate. Are we seeing cracks? Maybe. We're seeing some softness in the data, sure, and we do have jobless claims actually this morning, so that should be interesting. Kind of the question for me is
well, you say that. Yeah. Why is it interesting? It's a backward-looking number that constantly gets changed.
Sure. I want to say it's interesting because of the fact that so many people look at it itself, that data point kind of makes it interesting itself because of the attention that it brings. Yes, pretty much most of the time it's going to get revised down, up, sideways, one way or the other.
No, from an active trader standpoint, you hit on it exactly. I don't care what the number says. I just care what it does to the market. If the market pays attention to it, I'm not going to say they're stupid for doing it. I'm going to take that as an opportunity to find trade location. So you're spot on, and that's exactly the way a trader should think about that. I mean, you go through this stuff. Mortgage applications, nobody cares. Building permits, even less cares. Housing starts, interesting. That in a different time was a number that moved the markets. Absolutely no interest there. So it's initial claims. Again, looking at are there cracks in the employment picture? Doesn't seem to be.
And that's what this chart kind of shows when we expand on the data piece itself is we're seeing that regular tick up we kind of saw last year around this time. So is it seasonality? Is this just normal market conditions where all those holiday workers from Q4 are starting to go back, enjoy their summer? Or is this the start of something new?
Do you care?
That's the thing. That's why I think Powell is wait and see right now, right? Because it can go one way or the other. It's kind of like a chart at a support or resistance zone, right? Where you're waiting for it to play out. You don't know which way it's gonna go or not. And that's kind of when I listen to Powell's notes, when I read the press conference, I know you don't.
Wow.
Don't read
Okay.
it, but I'm reading.
Hold on. I'm taking the Kool-Aid away from you. No more Kool-Aid for you.
So when I'm looking at stuff like that, I really don't hear, throughout 2022, you really saw a sense of urgency in what they were doing with inflation, raising rates over and over, to get past that. And then I see a really dramatic shift in tone just this past 6 months, even from 2024. Again, the language is really soft. He just repeats himself over and over with, we're waiting to see how the data plays out. Tariffs historically can cause inflation based on the data we've assessed, right? But now we're waiting to see. Again, it's waiting to see how inflation looks. That's been soft for the most part. Is that just a kind of side effect from the tariffs we've seen and all the front running on imports we saw, and then it's pulled back a little bit? Yesterday we had retail sales that came in pretty soft. So is that just some normal, we got really scared because of tariffs, everyone started stacking their chips? Or is this, hey, maybe there's something there, maybe prices will exponentially increase here? Because not only do we have this tariff situation out, now we have, is this the start of a big war in the Middle East? Since last Thursday, we've had crazy escalation, I would say, in rhetoric, and it continues to escalate day after day as well. So
Yeah, but explain this to me then. Why is, and again, guys, this is a pair we don't focus on a lot, but with 80 plus FX pairs, this is kind of cool. Why did I? No, let me get this. There we go. Israeli shekel. Now you talk about, okay, how can we trade? How can we trade the war? Please don't take that as a morose statement, because it's tragic on both sides. You saw the shekel. Actually, this is dollar shekel, so the chart going up means the dollar is gaining against the Israeli shekel. All that was taken back out in a relatively short amount of time. So this is basically saying that, to me, as bad as the conflict is, it's relatively contained at the moment. Now, this is a market that's a little bit wide, but one of the things you get with the new product set like FX is the ability to look at, if you think about you can look at Palantir, and I know you have a strong opinion about Palantir. Look at Grimace, but Palantir at all new highs. It's viewed as, again, there's going to be more fighting. This is something that's interesting from a standpoint. One way to look at it, playing the currency pair is another way to look at it. But bigger picture for us looking at, and here might get us back to the full thanks page. So, and let's get down to, there we go. So we saw right around 10 o'clock our time, midnight, very early end of Asia, start of London, some dollar strength, which meant euro weakness. When you saw SPOOs down, bonds moving, what would your thoughts be as to currency reactions here, and because it's kind of a mixed bag. We're seeing things like flight to quality plays, dollar Swiss, plumbing new lows, almost plumbing new lows, coming back a little bit on that, but that that 80 cent level, which they've been pegged to for a long time, seems like it's getting close to giving way. Swiss often considered a flight to quality place, safe haven play. Now the Swiss are having a central bank meeting tomorrow where they're going to take interest rates. Prediction is they're going to lower them back to zero. And you would think, oh, zero, it's really low. Well, in the height of the financial crisis, Swiss rates were actually negative 2.5%. So are they as low as they have been? No, but zero is low. What are your thoughts that FX markets are great efficient indicators. For me, much more so than looking at an economic stat. Swiss awfully weak. The dollar is gaining a little bit of dollar Swiss weak, which means the Swiss is strong here. The dollar and other pairs like Euro, Aussie, Canada, Euro, dollar a little bit stronger. What do you make of? What does that tell you as you go into a setup day like today? You've got a Fed announcement, so conventional thinking is, well, everything just stays in the range until they announce. I'd say 75% of the time that's the case. The other 25%, the markets are reacting to other things and don't have the patience to wait. What are your thoughts when you go into a day like today?
It's interesting. Do we see just a bunch of mean reversion, right? Data drops 5 seconds, there's a huge move, market immediately mean reverts, or do we see maybe a change in direction? Or do we see this dollar strength continue to progress? Does Powell come out super hawkish? And he says that not only do we have tariff risks now on the plate, not only do we have softness in the employment market data, but now we have this war looming that will also add to the inflationary pressures that we're seeing from tariffs. Is this just an inside day where Powell comes out with the spiel he's been saying for the past couple months where, again, we haven't seen enough data. Not the most exciting thing to see, but maybe he has a change in heart. Maybe there's been some dramatic shift. Again, the data itself hasn't shown any craziness. I think everything's been in line with expectations for the most part. Maybe, again, if there's some drastic change in rhetoric, maybe we can get some big movement today. But if it's the same spiel, maybe it's just a little pop in the market's pricing in those comments, and then we see some mean reversion again, because historically we see that a lot with Fed announcements,
right,
where a huge pop one way. By the time he gets on the mic and starts speaking to the public, moves already made and it's priced in. Do we see that today, or is there some dramatic shift?
Yeah.
That's kind of what I'm looking at.
Okay. And, we'll see equities respond to this, bonds respond to it. Currencies will respond to it. It's a little bit, sometimes it's interesting. I'm really interested because let's not kid ourselves. We're off the 116 highs. We're 100 pips lower. We're wrapped right around 115. By any measurement, 115 is still awfully rich, considering we spent the better part of a year between 103 and 106. If this is the best they can do in terms of a pullback, it's not much of a pullback. Again, a low put in that's slightly below the previous low, this low right here, right below this, but we're still seeing the semblance of higher highs and higher lows. Higher high, higher low than the previous low. Same thing here, same thing progressing for here. Little bit of a change here in terms of us marking out some. How much credibility you put into, well, are we real? I think 116, again, currencies move on average over the last 30 years, about 2.2% a year. Now we've moved 11% in 6 months. Does that mean that we are going to go back to 105? No. We have anyone looking for that move. You can have that opinion, and you're going to have to give yourself a fair amount of rope to maintain that. I think realistically here is the idea of, is this 116 as far as we go? Because I think it's fascinating. You talk about safe haven flows, and gold is up, crypto's up. traditionally we would have seen after printing 116, I would have thought Friday with the start of the conflict, Thursday, Friday, we would have seen 113 because they would have basically challenged everybody who's long euros. Do you really want to still be long? And we couldn't do that much damage to the market. So it's hard for me to be bullish up here. I'm not a momentum guy. I don't look for the next, we're going to 120 print, but it's hard for me to get excited about being short because the market can take a lot of news, and it's really what it does with it, not what it's going to do with it, but what it does with it. So dollar yen, we saw dollar Swiss plumbing its lows. Dollar yen, not so much. A relatively constrained story. Now they're at 50 basis points. BOJ meeting Tuesday, no inclination to change rates or change any of the mechanics of what they're doing. We're not seeing dollar yen back at 140 again, which is really where Swiss is in terms of structure. Carry trade still plays here. It's actually a better carry trade in Swiss right now than there is in yen. So when you look, one of the great things, you want choices to trade. Now, you've got lots of choices in FX. You go back and trade, equities or futures, crypto. Which pairs are most interesting to you given the potential for movement around the binary event and where they are in extremes? You would think if it was a true flight to quality play, you would have seen, again, bonds higher, the dollar stronger, except for what they call safe haven currencies, which is yen and Swiss. Yen not biting, Swiss biting a little bit more. Does that mean the yen should be falling more or that the Swiss is cheap right now? And again, I want to be mindful of asking you too many opinion questions, but what I want to do is get a sense of, okay, how do you process all this stuff and how do you walk through it? Because you are passionate about trading, you're fascinated by the challenge and the exercise, and I love that. We do a mock trading challenge at tastyfx, and everyone looks forward to when you're up on the wheel to do it. So breaking down opportunity here, where's your focus going into this?
Yeah, and I pulled up a lot of daily charts here, just looking at all the pairs, and we can look at USD/JPY first. And again, you look at really any dollar cross pair with another major currency, and you put a peak for the dollar anywhere. It's the same time Trump got elected, and most of the part, it's in between those couple days of that inauguration, which is interesting for the dollar peaking. So since then, we've been in a complete downtrend for the dollar. And are we at extremes for USD/JPY right now? Yes. Looking back on this daily chart here, going back to all the way of 2022, we're at those levels there, and then we're in a little bit above that 140 support at 144.
Which has been rock solid. Yeah.
So I haven't really seen too much craziness out of Japan. It seems like their central bank has just been on pace with raising rates occasionally, and that's been it for the most part. Is the carry trade unwind still there and still in play? Maybe so, to the degree it was last August. Maybe not, where everybody's over-levered.
Where we saw this move from 162 down, straight down to, pretty much straight down to
you can compare those moves and ranges there, right? And we look at this move from July to August, that's a much more violent move than we see Trump getting elected till today, right? So I want to say there's some little bit more control and sense of direction. That move in August, was it panic? Kind of looks like it on the chart to me, right? Compared to this, where it's controlled trend itself, and you can kind of look at it from this past 6 months. It's been a bunch of chop in that downtrend all the way back to 140, and now we're seeing some bounce. So do we stay in this range of 140 to 160 for a couple of years where we're bouncing back and forth? Or again, is there some dramatic shift where either the Japanese economy cleans it up, that currency really becomes that safe haven, and the dollar continues to devalue, right, and drop way below 140? Is that a possibility? or do we just see a bunch of chop here in that zone where nothing really changes on the USD side or the Japanese yen side of things? And I think that's interesting. Are we at an inflection point here? I'm going to sound like Powell, and I'm in that wait and see mode right now, right? Because that's what the data is telling you, right?
See, but you just hit on a great fact that, and honestly, I spent the first 15 years of my career on the trading floor and then moved off and to screen-based trading. And one of the hardest things for someone who were in the pit, you were always, your job was to show a bid and offer, irrespective of if you had an opinion. You had to provide liquidity. The hardest thing sometimes is to do nothing. And it's like, I'm not doing my job because I don't have stuff on. There is a measured, you want to be, again, engagement just because if I'm looking at it, I should have something on. It's something you need to guard against. And I think you have a good discipline around, I want to see what happens and then make a decision. I think that's great. And I think everybody should feel that you're not failing and being a good trader by not having a lot of stuff on. You don't always have to express an opinion. From everything you've digested, and you read the Fed announcement, which again I find very troubling, and maybe I need to give you more work to do. But Mike actually works around the clock. He is truly incredible.
That's an after hours.
Yeah, I got you. Out of all the pairs we picked up, and we can look at the commodity currencies, which have given back a little bit more ground. Tariffs nobody's reached an agreement on tariffs. The UK is the closest. The Japanese said leaving G7. By the way, we don't have an agreement in place. Nobody cares. How do you compartmentalize that back into your trading decisions? Because we all cared a month ago, and we swung on every freaking tweet.
Yeah, I think that's kind of new to all of us, right? Because the last time we've seen tariff increases of this size is over close to 100 years ago in the 1920s. So anyone alive today telling you which way the market's going on tariffs, what tariffs are going to be set where. Again, where are they basing their opinion is my question. How are they getting this right? Because we look past, you have to go 100 plus years ago to find a historical example of something of this happening. So that's kind of how I look at it. And I think it gives you, right, we've seen volatility tick up massively the past 6 months.
Yeah, 22 is the new norm, and I think everybody is numb to that, and that's a great call out because we spent 3 years with vol between 10 and 14%. Vol is staying elevated, and it seems the market is relatively benign. If you were pick three things you want to follow at 1 o'clock, what are they? And they don't have to be FX. I'll let you off the hook.
Yeah, one is the most important is what Powell is saying.
Product, because what he says is what he says.
I'm going to look at Aussie because, again, we're looking at this 15-minute chart here and past whole week, again, since this craziness kind of started last Thursday night, right? We've been in this
contained shop, relatively contained shop, and I think that's a good call because if the spring does wind and it busts out, either direction, I'm actually indifferent to whether or not it prints above 65.5 or below 64.70 to see what legs it has on the downward, because this one is spun so tight. What else?
That Aussie is the biggest one, right? Because of how I've seen this range from 64.70 all the way to 65.40. There, something as well is big commodity currency, right? With oil on USD CAD. We look at that daily again. We see it peaking kind of toward, this was craziness of...
that was the tariff stuff.
Yep.
And again, that was the call from, I think, Goldman Sachs was, if these tariffs aren't resolved in 30 days, we're trading $170 Canada. That's where you compartmentalize that. Obviously, the markets took it otherwise. So we haven't talked a lot about Canada, and it's been relatively muted. This will be an interesting one to see if... Now, here we got a little bit of dollar bounce to it. So
that's kind of why I like this one, because it's a really different chart because we look at that 50-minute of choppiness for almost a week straight on Aussie dollar. Then we pull up USD CAD. It's a very different chart, right? We see CAD gaining strength that whole past week, peaking towards that 135.40 level there.
Right, which is a huge move. That's 10 big figures off of 7.5% off of its highs. So a big move down. Is it cheap? 135 is still rich Canada going back 10 years. And I don't go back 10 years. I'm just putting context in. I think we live with the markets we have. But it's a great walkthrough. So for you, jobless claims at 7:30, Fed announcement, you're going to actually listen. I love that. I let the markets tell me what he says. And then the announcement and then the press conference at 1:30. So action-packed stuff. Some markets more coiled where I want to see, as you said, I agree with you, see what it does within a relatively confined range. And is this, I think we'll see very clearly if this causes euro to challenge those recent lows, does it stay there or are they buying it up by the end of the day? If they do, that means there are certainly dollar sellers out there. If they don't, maybe we see a little bit of sea change. And it's, for me, it's a function of time. If it's bought up, if half that break is bought up by the end of the day, by 3 o'clock, this market isn't going any lower. So lots to work through, lots to do. Well done today. Great to have you on. We are going to get him more spun up. Trust me. It is well worth seeing him. But you have done an incredible job. Thanks so much for being on, Mike. And guys, good luck today. Lots of stuff to do. Stay focused and look for the opportunity. We'll see you back here tomorrow. Have a great day. Thanks.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
All right, yeah, I'll talk to you. There she is. Good, you found the place.
I did.
Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
I didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk
oh my
now.
God, that's serious.
Yeah, pretty serious. Are we getting serious? I think
What?
so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This
No,
thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these
no.
tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because
Gloves.
we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, Mike, we have earnings coming up next week in a time of high volatility and a lot of uncertainty. What advice would you give to traders in terms of attacking earnings in a time like this?
It's a great question. I think every so often we have this pocket of time where everyone is talking about the same thing. Or when Bitcoin and crypto came out, we had Radio Shack talking about it. We had a coffee roasting company talking about it. Now I think you're going to hear a lot of tariff implications. So there's going to be a lot more heightened implied volatility in that weekly cycle where earnings are. Just doing your due diligence, have an understanding of what might impact the company you're trying to trade and how potential tariffs might impact that.
And what would you say your earnings checklist is? What criteria do you look for in a company if you're going to try to make a play on earnings?
You have to be really small. Even when you have a super strong assumption, you can be really wrong with earnings. The options market's closed when the earnings come out. You can't adjust unless you're hedging with stock, which I would say maybe size down more than you normally would. Stay defined risk. Just because a company reports good earnings numbers doesn't mean the stock is going to go up. Just be prepared for a lot of uncertainty.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market. It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hi. Oh my God. Hello.
What? How are you, Vanetta?
I'm rethinking my life choices. Unmedicated boomers with a time change? No, ma'am. No, ma'am.
No kidding. No kidding. Saz, I am close enough. They can't see. Maybe we'll go to a 2-shot. I'm close enough that I can strangle you. So don't piss me off today. I'm already like I'm
I
for
have a water bottle that I'm ready to squirt on you at any moment right now.
I'm in the UK. Vanetta, I got in. They let me in.
How was it? How was the flight? How was your concierge level experience? Tell me everything.
Tom's got no yank. Okay.
Oh, I got yank.
No, you have no yank. He did not get me into the. Did I get into the concierge level with you?
No, I can only take 2 people, and there was 3 of them. So
Tom has no yank. Tom has no yank. I did not get into concierge level. I did not get the free sushi. I saw pictures of it though. He sent me pictures of it.
It was pretty gross.
I was able to have a pretzel and some hummus.
I did get them on the plane before anybody else.
Oh, that's nice.
I will say, I say the truth. I say the truth. And that is probably the worst thing I've ever done in my entire life. Like going before the veterans, before the disabled, before women and children, before all of those people, Tom gets to go on the plane. Like, you know, it's embarrassing. It's probably the most embarrassing thing I've ever done.
To be fair, he needs extra time to get up that jet bridge anyway with his Frankenstein-like wobble.
It's embarrassing when they say, "Oh no, yes, you can come now," and like, you know, the disabled are looking at you like, and the veterans. It was horrific. It was horrific. I didn't want to go, but I supported Tom as I do every day.
I didn't like the wheelchair person that you pushed off the side. I thought that was kind of over the top.
Vanetta, it's been a trip. It's been a trip.
Tom, I heard you went to one of my favorite places.
What?
Greg's.
The Loop?
Oh, no. Yeah, just to get a bottle. That place is gross. Just to get a bottle of water, though.
Why didn't you get a sausage roll?
I gave him that earlier.
Yeah.
What are you scraping over there?
Not scraping. I'm moving my feet. This is a new position for me.
Oh, you're elevated? Are you you're not your little legs are dangling, you're not used to it?
No, it's like a different size chair. Like he's got short legs. I have like long legs.
You know, it goes up and down. The chair goes up and down.
So how's the vibe in London? How's the weather? What's the tea? Let's go. Come on.
Well, it's a little after 1 here in the afternoon. I mean,
okay.
We literally got here 2 hours ago. 3 hours ago.
Tom did wait. Got my baggage with me.
So I'm like,
he did wait.
So Britt and I are getting off the plane. We're like, should we wait for Batista's? And I'm like, she's like, should we wait for the Batista's? It's the right thing to do. And I'm like, all right.
Because bad is with his family. Bad is with his wife and his kid, and it's
Yeah.
That's right. Vinny Van Gogh is with us. That's right.
Yeah. And it's like European vacation. We are traveling with that, with that crew. And so I have a little suitcase and a backpack. Britt has a little suitcase and a backpack because we're professional travelers. The Batistas, 75 bags. It's like coming to America all over again.
But they're going to be in Europe for 2 weeks. They're going to be in Europe for 2 weeks. What's an acceptable amount?
They're going to be in Europe
for Tom.
They're going to be in Europe for half the time that I am. They have trunks. Okay, they need it. They almost couldn't fit it in. There's no car that could fit all the stuff they got.
No, those black cabs are huge. Garrett and I brought camera. You're exaggerating. Garrett and I brought camera equipment.
Tom, we have a rule in the Batista house. The wife has to pay for the vacation when we're on vacation. So she has one suitcase full of shoes. So we need to just
she's paying it forward.
She's paying it forward.
Then why does your son need a suitcase that's bigger than me? Okay, he's got a suitcase that is 6 feet high and 3 feet wide.
I mean, Vinny's frosted tips aren't going to frost themselves. He needs hair products and all of the Axe body spray that a 15-year-old boy can need.
Right. So we decide.
It did take a long time to get.
So I go to Brett. I go. All right, we'll go with them to baggage claim. against everybody else because I didn't want to embarrass him in front of his wife and his son because everybody else knows the rule. If you check bags, we're leaving you.
That's right.
You get left behind.
You get left behind.
You get left behind.
You're such a dictator.
No man left behind if you don't check bags. If you check bags, you get left behind. That's the rule. An hour later, we're sitting there like, oh my God, they're coming off one bag at a time.
It was about 45 minutes. I will give you that. It really was.
At least.
And I apologize for that.
It's not his fault. He's not under the plane.
Do that quicker. We still got here 3 hours early. So
then I had to go. Then we had to go like trains, planes, and automobiles. Okay, the whole deal.
Yeah,
a long train ride.
That quick train ride is not so quick.
That quick train ride is not so quick. Then
you took the train?
Yes.
Yeah.
Oh.
And I will say the train took about an hour. It was an hour and 20 minutes in a cab.
Yeah, I think the cab's a better way now. After taking the train. Yeah, I'm a cab guy. I'm back on the cab.
Yeah, cab duty.
Cab. Anyway, that train was not because you had to
I was embarrassed. You know, my wife is in this train with all these people, and you know, like Tom. We're traveling with Tom. We didn't get into the concierge level. We sat in coach. We're sitting on a train. We got 2 bags with us. I mean, it was.
This was not the level of luxury that you were promised.
It's not the level of luxury that I treat my family with, no. But it's on the Sosnoff dime, you know.
When I got off the plane, Vanetta, this is a true story. There's a guy standing there with a sign that says concierge, which is me. So I go up to him and I go, hey, I'm here. And he goes, what's your name? So I tell him my name. There's only 2 of us on the list. And he goes, okay, I'll drive you to where you want, to where you got to go. I go, no, I'll walk. I got friends.
No. You were taking the train because Britt told you were taking the train, and there is no saying no.
I got to walk because my friends are lowly coach passengers.
Wait, you turned down a chauffeured ride?
No. To immigration.
Oh, okay.
In a golf cart.
I would have do it for the plot.
But I saw the guy come by. He's like, out of the way, losers. Like, Yeah. So anyway, we made it. We took the train. Then I had to walk. Britt made me walk like a mile. He goes, it's only 8 minutes. It was like 80 minutes.
Yeah, to your hotel, you walked.
Oh my God, bumpy streets, whatever the whole deal.
Yeah, see, I was off the Sosnoff dime by then, so
then it should be nothing. A big strong man like you
should have carried it.
Yeah, you should. Yeah, you should be fine.
Right. Yeah, strong man like me, I should have. But then that's it.
I've never seen it before on a train. There were women getting up for him and saying, "Will you please sit? Would you like my seat?" I mean, seriously.
To be fair, when he starts lurching, it's jarring if you're not used to it. Good times.
But we made it. We're here. We're ready to go. Ready to rock, ready to roll.
Were you able to trade on the plane? Were you able to monitor some of the overnight action? Like, how did that evening line up?
Yeah.
Okay.
I didn't make a lot of trades, but the Wi-Fi worked great over the Atlantic.
Must have worked in first class, but it didn't work back in coach.
I watched the Led Zeppelin movie. It was great.
That movie was great. Honestly, if you have not seen Making of Zeppelin or something like that, I forget what the name of it, but it was awesome.
Is it a documentary?
Led Zeppelin or something.
Yeah. Is it a documentary or it's a movie?
Yeah.
Or okay.
Yeah, the documentary.
Oh, okay.
The documentary on Netflix.
I watched it too. It was really good.
It was awesome.
Oh.
It was awesome.
And then, and I had to...
Couldn't watch the hockey game. Congratulations, Panthers. My Panthers. I sound like Dr. Jim now.
I got an email at right the minute the hockey game ended with a Venmo from Scott.
I like Scott's style.
That's right. Yeah, so you bet him on that. Right.
6-5 odds.
Good call on you.
Yeah.
Good call on you.
So I got the Venmo from Scott as soon as the game ended.
So is this setting precedence for when the basketball season is over? We should get an immediate Venmo, or you should get an immediate Venmo?
I don't know about immediate. I don't know if I'll be up at 3 a.m. ready to Venmo you. It's not going to be my number one thing. But you will get paid.
We'll see.
Yeah. Minus fees.
Oh, talk about fees! I got ripped off for some good fees to get some euros today. They got me.
No, you go to the cash station. Oh my God, are you public? You went to a currency exchange?
My wife said she had to have it right then.
Oh my God. How
listen, Saznoff.
Hold on, let me think about this.
Some things are just not
So it's
worth
116. You probably paid 135.
Yeah, just about. I think I still have it.
Wait, why are you getting euros and not pounds?
You mean pounds? Well, you
pounds. Sorry,
you probably did 145. You know what? You have to just go to a cash machine.
I got it. I understand.
Well, obviously, you don't.
Well, they didn't have a Citibank cash machine. I went to a cash machine. They charge you extra.
No, if you have the right credit card, you don't have to pay those fees. I don't have to pay international fees.
Oh my God!
I have the right credit card. If you take your bank card and try to grab cash out of a Barclays Bank one, and you're a Citibank, they charge you.
I have pounds.
They'll
anyway.
waive them. They'll waive them on the back end. Yeah, they might charge you up front, but they'll. Okay.
I got plenty of.
She would have gotten in first class on the way home too.
She could have gotten to first class.
All right, we are going.
She's out for afternoon tea, so it doesn't matter. She's not listening. She's not hearing.
Oh, I love that for them. Oh my God, I always wanted to go to high tea in London. I never got to.
That's what they're doing.
Overrated.
Okay, all right. Just
very overrated.
Paying forward.
No appreciation of traditions.
I like the little sandwiches with the one cucumber on them.
I mean, I love a scone
such a
with
diva.
clotted cream. No? Okay. Hey, we got a great show for you today.
Actually
Please,
underrated.
please bear with us. Tom and Bat are in the UK. We're dealing with a little bit of a delay and also a severe delay in emotional maturity. So just bear with us, everybody. But we've got a great show for you today at the top of the 8 o'clock hour. A tasty extra. We're bringing in Angeline. She is one of the hosts of IGTV over in the UK. If you have had a chance to meet Angie at one of the London shows, you know she is a little firecracker. But Tom and Bat and Angeline are going to be on at the top of the 8 o'clock hour. Just Godspeed, Angeline, today. Just Godspeed. And then at 8:40, because it is Wednesday, we're still doing What's Your Assumption, which is where viewers write in with an underlying and a directional bias, and Tom and Bat do viewer trades. And then 9 a.m., another tasty extra. We're bringing in Rich McDonald. Yes, hot off of his early 2000s reality TV fame. Rich McDonald is back to help Tom and Bat. That is still the greatest video I've ever seen in my life. I hope we can show it again today. But all jokes aside, Rich, wonderful host.
In case I want to get something to eat too.
Which he gave that to you for Vanetta. That's hers.
That's me. I told you it was
this
for me.
This is yours then. Here you go.
Thank you.
Yeah, I
for
got you. I
Greg's.
got you a gift card.
Yeah.
All right, well, there you go.
There you go. Now you can give it to Vinny.
He got her a gift card.
Now all of a sudden I'm like a carrier pigeon.
You got to carry it home for her.
You can give it to Vinny. That's fine. I want it though. I want a chicken bake. I love Greg's. Anyway. And then you guys are in for another treat because we are taking phone calls at 9:40. So, but not with just Tom and Bat. Rich and Angeline are also going to be taking calls. So we're taking global calls. So, Godspeed to our switchboard operator.
We want people to call in. We want people to call in from all over when those guys are on. When Angie's on first, then when Rich is on, if they want to, we might pick them up, and then at 9:30 equivalent to be 3:30.
You have no idea. Math is
it'll be 9:30.
It's right
Central
here
time.
on the
It'll be 3:30
schedule. If
here
you
in
would
London.
just look at the schedule, the times are
10:30
listed.
Eastern,
Okay.
7:30 Pacific. Sorry.
I know how it works.
Do you?
My math mind.
I know.
Sharp.
Sharp.
And also today, because it is Wednesday, we pre-recorded a little truth or skepticism with Tom and Dylan. Dylan, what did you talk about with Dylan?
We talked about G shares.
G shares.
It's a new concept that was introduced with the Nippon Steel, U.S. Steel deal.
Oh, golden
I think
shares.
it stands
yes.
for government.
Yes, golden shares is part of the U.S.
Golden-
government gets a cut of the deal. That's
Yeah, I didn't know if it was
interesting.
government or golden, whatever, but we talked about the concept of G shares, and it's actually a very interesting discussion because we didn't talk about it as being good or bad. We explained why a company would agree to do it.
Okay.
So there's so it's just, I mean, in the case of,
Don't give it all away, girl. Don't give it all away.
No, I know, but I just want to say, because it's interesting, because when I first read about it, I'm thinking to myself, why would anybody, how could this be good for how is this
in English? Can we get, I thought I was the one with
how is this good for deal making, and how is this good for, how is this good for deals?
Right. Why
when the
would
government gets
Nippon
to say
agree to these terms?
Right, exactly. And then the more...
Thank you, Vanetta.
And then the more I thought about
Maybe you should talk to Dylan with it.
Then the more I thought about it, I'm like, okay, it actually kind of makes sense, but where do you draw the line? And so I think it's an interesting discussion. If you were curious about that stuff and how it might impact deals in the future, it's a really good talk.
Very, very good. At least you guys can explain G shares. Still very clueless about the G spot. Hey, we got to keep it moving.
We don't know anything about G spots, but G shares, we are boom.
Locked in. You got it.
Experts.
Hey, let's just start this unhinged mess. You guys want your daily dose? Let's go.
Our leading story. Breaking news.
Coming
across the wire.
This just in.
Top story. Jump in.
In today's headline.
This just in.
Breaking news.
Couldn't hear anything. I'm just gonna assume the music.
Oh, I didn't hear it either, so I thought you were hearing
playing. Yeah, I was like, no, maybe.
Yeah, we can't hear it on our end.
Okay. All right, everybody. Today's a wonderful Wednesday. It's June the 18th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta, and I'm joined by Tom and Bat live from the UK. Are you ready for the news? Pip, pip, cheerio.
We're ready. 3
Bat,
days
any
away
earnings?
from the longest day of the year.
Yes. Possibly. No earnings. Just kidding.
No earnings. Okay. Hey, here's something interesting.
But I will say I will say this if I could, Vanetta, a bunch of ETFs like SPY with dividends on Friday.
Okay.
Oh, so you have to take care of it today.
Yes. So the market is closed tomorrow.
These are my.
Did somebody leave those on the plane?
Oh no.
No, I left my glasses in my bag that
You bought those at Greg's?
No, these are my sunglasses. These are my progressive sunglasses. So I have new glasses for today. Sorry.
All right.
They might actually change
sitting over
colors
there
with the
looking
light
like
pretty
Ray
soon.
Charles. Okay, very cool. Hey, stock market investors.
SPY, big dividend, $1.70 plus, or maybe even $1.60 and change, something like that.
Friday.
Yes, but we're closed tomorrow.
Yes.
Oh, poof, your mind is blown again. That's twice this morning I got you. That's twice I got you. I can see by that dumb look in those slits of eyes that you have. So I got you twice. If you're going to do something, you have to do something today.
Are you done?
It's a big move.
Are you done? Can I get on
no,
with my
you
news,
didn't.
please?
You might have heard it.
Behind
You didn't
schedule.
comprehend it. I'm sorry, Vanetta.
Okay. Hey, stock market investors have coined a new mantra to trade geopolitical shocks and other news. And it's basically this: nothing ever happens. Basically, there's a lot of stuff that happens every day, some of it good, some of it bad, but very little seems to make an actual lasting impact on the market. How are you adjusting your trading where everything just snaps back no matter what side of the market you're on? Like, nothing really ever happens.
Well, I kind of feel like we've been saying that since the beginning of time.
Okay, but
So
you
I'm glad
don't
that the
have
rest
an
of the world is
article in
catching-
Market Watch, so
I'm glad the rest of the world is catching up to us. Yes, you're right. I don't have an article in Market Watch, but then again, I've never read Market Watch.
yeah. But how? Again, all joking aside, but how do you adjust? How do you trade? What are you doing on entry? What are you doing on exit? Because if
Well, I would say that this requires a lot less adjustment. If nothing ever happens,
okay. So don't get too aggressive with
don't-
adjusting, you're saying, because things will probably snap back.
What I'm saying is, I think what you're looking for is what we talked about the other day, which is you don't get paid to try to market time macro events. You just don't get paid.
Right. Okay.
Doesn't work.
It doesn't work.
Hey, let's talk about Treasury yields. Treasury yields slid yesterday after retail sales tumbled in May. Consumers looked gung-ho to sort of front-run some of the tariffs, so there was a lot of buying in April, but that buying kind of declined in May, sending yields on Tuesday lower. 10-year Treasury notes fell more than 6 basis points. 2-year yields were lower than more than 2 basis points. Fed decision supposed to come out today. Let's talk just bonds.
Bonds 114.04. So remember, bonds have an inverse relationship to interest rates. So bonds are going a little bit higher. I don't know how they can raise interest rates then, Sadnov.
Well, all I can say is that we have been sitting here.
They're up 12 ticks.
Very patiently staying long bonds. I just covered a few of the short note puts we have, and I think we'll take a look at some of these bond puts, maybe buy in a little bit here. It's been a good trade. Listen, I don't think we've shut up once about this the entire year. Every single time bonds have dipped, we've bought them. I don't think it matters. I don't think these headlines mean a damn thing. I think it's just the story's the same. If the bonds
All right,
dip,
I'll see you later. Hey, I put this in as a joke, but now I know the truth. Oh, go ahead.
No, go ahead.
I put this in as a joke because I was going to set up Bat for a question, but I already know the answer now. The dollar could soon be set up for a nice bounce soon. And then I was going to ask, I was like, oh, who got fleeced by one of those currency exchanges?
Well, we kind of agree with you. It sure hasn't happened yet because the dollar's down again today. But we think the dollar, this is the first time in probably 2 years that I think the dollar is pretty oversold.
It's been getting beat up.
Yeah, it's been getting destroyed.
Okay. What's the exchange rate for you guys right now over there?
Well, it's whatever. You're talking about the British pound, it's going to be 135-ish.
Ooh, oh, that's painful.
Yeah, right around 135. I don't have I can tell you right now, actually.
Euro's up again this morning. Small.
/6B. What is the rate? 134.64. So 135.
Okay. Wow. Europe is taking a big step towards
No shopping.
No shopping.
Europe is taking a big step
Wait till you
towards
get to France.
Europe is taking a big step towards banning Russian oil and gas as the war in Ukraine drags on. I just want to talk about crude oil here, and I just mentioned this because you guys are closer to Europe now than you are to here. But let's.
Again, I don't think that this headline means anything.
Okay.
Crude oil's up 20 cents, but it was down. It was down about $1 earlier, and now it's up 20 cents. It was up $1 last night. It's at a
$2 range. That's a decent sized range.
Yeah, I understand.
$2,000 range. I mean, that's a big range.
I understand. They're finally taking a little juice out of.
This is a quiet opening across the board for you being out of town.
This is a quiet opening. I want them to stay. I think they stay here until Friday.
A lot of Tasty Nation was kind of fading the move yesterday because it was a little premature because you hadn't left yet, and they could use this little bit of a rally to get out because they have gotten hurt. Go ahead.
The U.S. Senate yesterday passed the Genius Act, which is a bill to create a regulatory framework for U.S. dollar-pegged cryptocurrency tokens known as stablecoins. The bill did receive bipartisan support. What are your thoughts on this?
I wasn't around yesterday, so I didn't read this.
They didn't contact you?
They didn't contact me, so I'm not exactly sure
you've
what
heard
it
about
says.
it. Like you knew it was in the zeitgeist. Like you knew it was happening, right? No, maybe.
I mean, I'm all for. I assume that as long as it's fair, I'm all for making the use of stablecoins more commonplace.
Define fair, me lord.
Yeah, they
I mean, it just
just
depends
wanted
on the fee
lawmakers to
structure.
pass legislation to create just rules that to create like a clearer framework.
Again,
And so,
I question sometimes, like it's weird to me that everybody from Walmart to 7-Eleven want to create their own stablecoin.
yeah, it
And
reported Walmart and Amazon want to create their own stable coins.
I know it reported Walmart and Amazon, but it's not just Walmart and Amazon. I mean, anybody can. The technology is absolutely nothing. So then the question becomes, I mean, is everybody doing this so that they can keep the 2% fees? Like I'm just curious about what's the end game here?
Sure. No, I get that. Bat, what are digital assets doing this morning?
After getting beat up yesterday, they're basically unchanged, but they're closer to 105 than they were yesterday when they were down around 103 and change. So they've been in a very tight range. Let's just call it from like 103 to 112. That doesn't sound so tight, but it's been making big moves both ways, $2,000, $3,000, $3,000, and going absolutely nowhere sideways over the time.
Coinbase is seeking a green light from the SEC to offer tokenized equities. The crypto exchange chief legal officer said if granted, it would allow Coinbase to offer stock trading via blockchain technology. What are your guys' thoughts?
So this is going to be very interesting because the New York Stock Exchange and the NASDAQ are not going to go down easy on this one.
They're not going to give away a piece of the pie?
They're not going to give away a piece of the pie, yeah. And it's not going to have any, it's not going to be marginable or anything like that. On the positive side, I'm all for new products. On the downside, I don't want to see money go into a debt investment that can't be that you can't margin and there's no derivatives for. And again, the positive side, I can give more, is that U.S. customers could potentially trade equities from other countries without having to convert to local currency.
Okay.
And without having to clear centrally. So there's a lot of potential positives. The downside is the counterparty risk, right? In this case, who's your counterparty? It's going to be Coinbase or somebody else that actually controls that fund. And who knows, what kind of fraud, I don't know, what kind of risk, fraud, whatever. And I also don't know, all that
Coinbase, you shouldn't have counterparty risk there.
Why?
Well, wouldn't Coinbase
so if you tokenize something, let's say they tokenize Apple, just as an example.
Sure.
Let's say Coinbase decides we're going to sell tokens. We're going to tokenize shares of Apple.
So just Coinbase's. So it's
just Coinbase.
Okay, there lies the issue. It's not fungible.
Oh, it's not fungible. And whoever's creating that basket of Apple stock,
right?
What if they're not real?
From? Right.
Yeah, where are you getting that from? So that token that you have has to convert to actual shares of Apple.
Sure.
What if they don't? This is like this. All the crap.
Locate it or whatever. they have it located from the very beginning.
Well, there really was no funds, because then you're going to have Walmart go.
So then it's like that movie. They sold 1,000% of only 100% of a stock, right?
Yeah, the producers.
The producers. That's right.
I mean, then you're going to have Walmart. Like, why is it?
Walmart down 10 days in a row, by the way. Go ahead.
Okay, but why is it okay for Coinbase to do it and not Walmart?
Right.
That's my whole point. Where are you going to draw the line here?
Right.
What's Coinbase doing as a stock this morning?
$254 on the bid. It looks like it's unchanged, maybe up about 50 cents. Even the S&Ps are up $6. Market's up small, so all stocks are pretty much unchanged, a little bit higher.
Hey, CoreWeave's stock surge has brought its post-IPO rally to 340%, and they still got an unusually positive analyst downgrade. CoreWeave stock was up 8% yesterday, again bringing that rally to 340%. But that was after Bank of America downgraded the stock, but he set his price target on the shares to a new street high. I don't understand finance at all.
Well, that's how you keep your big paying job. I mean, if you want a job at Bank of America, you better not downgrade something without saying that I'm downgrading it, but I still set my price target above the all-time high. That's the way you keep your job. You should understand that, Vanetta.
I mean, I do want to work for Bank of America.
It's called perception.
Yeah.
What are you doing in core
Like,
week?
you can make fun of me.
CRWV bat.
You can make fun of me, but then you have to say, "Oh, but he's really
Can I get you a cup of coffee?
he's really the greatest guy in the whole world."
CoreWeave looks like it's up a buck or so, 173 and change. So the downgrade is working.
The use of AI at work is accelerating and has nearly doubled in the past 2 years. The number of employees who say they used AI in their role a few times a year has nearly doubled from 21% of workers now to 40% of workers have used AI a couple times a year. Frequent AI use a few times a week or more has also nearly doubled. So it was just 11% of workers, now 19% of.
Every search you do now is pretty much AI. So why would that surprise anybody?
Sure, but I think this is
anytime you
more
search for something,
dedicated, like a specific AI engine, like an Anthropic, like a Claude or a Gemini or a Chat GPT, not just Google search. But Tom, you are right. That
well,
Google
it doesn't say that.
search. Okay, well, you're not even looking at anything.
I've used it.
Okay.
No, I've used ChatGPT in the most ingenious way. I think about what I want to say to my wife, and I say it in ChatGPT, and then it gives me back like a more, refined, less confrontational. Like I say, I make this less confrontational, and it's perfect. It works every time.
Works every time.
She falls for it.
Hey, AI will shrink Amazon's workforce in the coming years. That's according to Amazon CEO Andy Jassy. He said the company's corporate workforce is going to shrink as it adopts more generative AI tools and agents. Also, Amazon announced that they're making Prime Day longer. So instead of making it better, Prime Day is going to take effect next month. Beth, I'm on the next story here. July 8th through the 11th. So it's doubling from 2 days to 4 days. What are you doing with this bundle of Amazon news?
Amazon Prime weekend?
Now it's gonna be Prime Month.
Okay.
We're gonna have Pride Month followed by Prime Month.
Okay.
Everybody's gonna get confused.
Okay. No one's going to get confused, Boomer. What are you doing in Amazon?
I think they're already confused. I think they are confused. Is this Prime Month or Pride Month? I don't know. I'm all confused.
Okay.
What?
What are you doing in Amazon? Oh my God.
I didn't get to shower, Benetta. He got to shower. I didn't get to shower.
I have no position.
Okay.
Yeah, I'm clean. I smell good.
All right. Hey, Reddit stock jumped yesterday after the company rolled out new AI advertising tools. Reddit said the tools are powered by an engine that turns posts and comments into structured intelligence for smarter marketing decisions. What? So basically, like if your company has a lot of positive sentiment, they can turn that positive sentiment into an ad for your company. What are you doing in Reddit?
And Reddit jumped big on that news, $20 or so. Listen, Saz, you want to tell everybody why we're here today? IGG is now going to have an AI advertising tool, too?
Yeah, if that works. Sure, why not?
Why not?
I trade a little bit of Reddit. Reddit, that move was ridiculous. Reddit has an IV rank of 33. Today it's looking at 303, closed around 303.80 or so. So it's down about 75, 80 cents.
Tesla stock slipped yesterday after a report that
Reddit's
the
not
EV
300.
maker.
What are you talking about? 133. I'm so sorry. 133. Okay, sorry.
Tesla slipped. They
My apologies.
reportedly are pausing Cybertruck and Model Y production, and then the company as a whole got downgraded by some analyst yesterday as well. But they are hoping to launch their robo-taxi in Austin on June 22nd. What are you doing in Tesla?
I have no position.
IV rank at 26, up $1. So take that downgrade.
We did talk about this briefly yesterday, but just continuing, solar stocks got clobbered yesterday as the Senate is targeting an early end to wind and solar credits in the big, beautiful bill. So in phase SEDG was down 33%, RUN was down 40%. Sunrun is RUN. They are the largest rooftop panel installer.
Yeah, First Solar basically unchanged, down 50 cents maybe. Doesn't tell the whole
But it was down
story.
like 30 or 40 bucks yesterday.
Before the middle of my sentence got in the way of the beginning of Tom's, I was going to say that.
Well, I mean, you were dragging on. Oh my gosh. It's like, all right, get to the point.
Hey, this is crazy. Streaming has now surpassed combined broadcast and cable viewing for the first time. Streaming's growth is being driven by three main factors: free ad-supported channels, the rise of YouTube, and shifts within legacy media companies. In May, YouTube
That's right.
represented 12.5% of all television viewing, but this also includes Netflix, Amazon, Disney, Hulu, Discovery, yada,
And
yada,
everybody
yada.
who views Tasty Live.
Yeah,
I mean
it's
that's
all
all
Tasty
because
Live.
of Tasty Live.
Vanetta, I think you're not doing it fair, but we were like the original streamers.
That's correct.
Oh, okay.
When
Yes,
Roku
yes, we
was
were.
just like a baby
I
company.
mean, we're like legit the original streamers, and we don't even get credit for this.
You did have a vision. I will
Tom
give you credit
invented
for this.
streaming.
You did have a vision that was ahead of your time in terms of content.
We
and
were the original streamers. Nobody was streaming.
yeah, no, I
When we
said,
started Tasty,
we didn't even want to stream.
I know.
To be fair.
But nobody was streaming when we
expensive.
started Tasty.
I mean, you take
2000
one look at yourself in the mirror with those big headphones on, and you still made a bold call. You're like, yes,
Especially back then, dude. It was like,
yeah. You're like, I want this
all
to
I'm
be on
saying is-
video.
No, I didn't want
said
video.
no one ever.
It was bold.
I didn't want video, but it is what it is.
That's what streaming is. Yeah. What are you guys doing in Netflix?
Forget about video. Tom, when you're doing Netflix, how come you haven't cut the cable? You should be like,
I don't have a Netflix account.
Your family
you
does.
watch things on Netflix all the time. You have to have.
I have never watched anything on that. I've watched one thing on Netflix. Like
So you
5
watched
years
one
ago.
thing. How'd you watch it? Would
Like
you
5
steal it
years
from your
ago.
neighborhood?
Yeah, somebody.
Netflix, 1227 and change on the bid. That would be up around 7 and change. Netflix IV rank of 41, Sosnoff, starting to percolate a little bit. Volatility uptick the last day or so, but as earnings coming.
I'm just sick of people talking about like Netflix and all these other things about all the streaming. We started it.
Okay. All right. Yep.
He's very.
You're right.
Give him some credit, Vanessa.
Screw you, Reed
Give us the credit.
Hastings. See you in hell, Reed Hastings.
Yeah.
Uh,
Yeah, for sure.
hey, Health and Human Services Secretary Robert F. Kennedy Jr. wants to ban drug ads, which could have a devastating effect on traditional legacy media. If you've ever tried to watch the evening news, 90% of the ads are just drug ads. America is the only nation where drug advertisement is legal. I think it's an interesting take. Like, I'm not against this. I think the ads are a little out of control. But what are your thoughts on this, Tom?
They have kind of jumped the shark a little bit with the disclaimers at the end.
Well, you
Like,
have to disclaim the
My favorite thing
explosive
about drug
diarrhea.
My favorite thing about drug ads is the fact that I just love all the names they come up with.
Actually, you could be like a drug ad model. Like you look like those birds. If you have this problem and you look like me, you could take this and you could live another 6 months, but you might have explosive diarrhea. You might not be able to have a what? Erection. You might not, could be impotent. There's a lot of things that could happen.
In other health, but I'm not
Sorry,
sure if
Vanessa.
this affects a stock like Pfizer or Lilly. Obviously, again, because America's the only place where they can have these dominant, ads every, 5 seconds. I don't know if this affects biotech stocks.
Well, Lilly's always a leader, up or down by a percentage basis, but it's unchanged this morning. So I'm going to say it has no bearing whatsoever.
Okay. In other health news, Kraft Heinz is going to remove artificial dyes from U.S. products by the end of 2027.
Oh, that's
General
bullshit.
Mills also declaring that they will remove artificial dyes from their products. I love me some artificial seasoning, but you do you.
Yeah. I mean,
Yeah, but that's
get
good.
rid of
I think
artificial
that's good.
dyes.
Hey, I want to finish on
KHC?
time. I want to finish on time
in
here.
a long time. What
Because
is
you're
it?
going to have a lot of special
25
guests.
bucks.
So I'm going to my last story. Wendy's is partnering with Takis to collaborate on a new spicy meal, the Takis Fuego chicken sandwich and Takis inspired Fuego fries will be coming to Wendy's restaurants in the U.S. starting June 20th and Canada, starting June 30th. Tom, do you want the Takis Fuego chicken sandwich?
This is Vinny approved for sure. He loves Takis.
I've only had Takis once. I mean, they're okay.
Okay, but as soon as Eat, Drink, and Be Mandy eats this, you're going to be like, Vanetta, have you heard about this Wendy's?
She's got a good point.
I don't like when you bash her.
I'm not bashing her. I'm just saying you value her opinion over mine, and I've worked here for 15 years. Hey, finally today for my viral video of the day, we had a little fun around the office heralding your trip, you and Bat, to the UK. So I, in two parts, gave you a little quiz to see how good you were at knowing the British name for certain objects. This is part 2 in my series. No one has seen this yet. Bat, what's your over-under on how good Tom is? Because Tom says he's practically British.
Well, I saw part 1. And I think he was almost 50%. So
what?
I'm going to sell him at 50%. I'm going to take the under.
All right. Well, let's roll that beautiful footage. And if you know the answer, just chime in here. Watch this. Hey, why are you going to London?
I want a fish and chips. I'm going to do a live trading show.
So we're going to ask you some words. That's okay. And we're going to ask if you know what the British equivalent is.
Come on.
So
I'm practically British.
Given now that you are a grandpa, what do they call diapers?
I forgot.
They're called nappies. And do you know what the British word for a flashlight, not fleshlight, but a flashlight is?
Torch.
Yes!
No.
What do the Brits call it?
Yeah, I'm more British than you so far.
I don't know.
I don't know. That's 3 you got wrong?
What are biscuits of an English breakfast?
I could have got
black
that.
pudding, canned beans, eggs, toast, fried potatoes, bacon, sausage, and mushrooms, and cooked mushrooms and cooked tomatoes.
How can people find you more events?
3 to 1.
tastylive.com/events.
Want to say Cheerios?
Oh my God.
They don't really
You
say
got
Cheerios.
1 right out of 4?
I could say Tottenham.
Yeah, it was brutal.
What? I think she just put the losers in there. She didn't put the winners.
Sweetie, there were no winners. I hope you guys have the best
Good
time.
job, Vanetta.
Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got Confirm and Send next. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&Ps are up $5.25. NASDAQ is up $36 and change. Russell is down 90 cents, Sadnov, and the Dow is up 25. I'm still going to say the market's unchanged, even though you have 3 indices higher, 1 index lower. Volatility unchanged, Sadnov. And we did have a decent-sized move last night, about 50 handles on the E-mini S&Ps. Bonds up 5. They were just over 114 a moment ago. They're 113.26, up 5 ticks. Bitcoin hanging out at just under 105, 104.7 and change. Oil, which has been the big mover and the big mover on volatility, is up only 27 cents. Ivy rank is 101 and change. We'll see what volatility does this afternoon or this morning. Gold down $3, basically unchanged. Silver down 4 cents, basically unchanged. Nat gas up 6 cents on a percentage basis to the upside. That's one of the larger movers to the upside of the stuff that we look to trade on the futures. The euro is up small too. Sound enough? That's all I got. Public service announcement. SPY has a large dividend, $1.50, 60, 70. I didn't do the math. I know my son will do it later today, or somebody will do it on the show. But it's you're gonna have to take care of that today because we're closed on Thursday. Friday it goes ex-dividend.
Roll your positions.
Roll your positions. I will take care of everything. Yes, from 1 month.
Emails that came into us overnight. Let's go quickly so we can bring Ange on here. Let's see what we got today. So if something awful were to happen to the market, some awful is going to happen, all right, and it didn't open on Friday, how would options and futures that expire that day settle?
Yeah, we've had this before. Where options had expired and we didn't open for whatever reason, usually an awful reason. But we've had it as simple as water damage. I think that was there were some expirations in Chicago, if I remember correctly.
I don't actually remember this specifically.
Yeah, but anyway, they come up with a settlement price, right? I mean, the SIBO will come up with.
They have a set of rules. I believe that they have a little bit of they have a few options, but if it's not possible to reopen, then they go back to the closing price. Mm-hmm. But if it's possible to reopen either later that day or do a closing rotation the next day, they'll do that. But even if it's on a Saturday, but if not,
it's a cluster.
It's a cluster. They'll go back to a previous day, right. And it's
some of those options haven't traded. Some of those marks are bad, so they'll adjust.
It's not
those.
Good. Yep.
It's not friendly.
It just doesn't happen.
Right. Good for premium sellers.
Yeah. Let's go next slide. I saw Pete yesterday on the show discussing spot Forex. Mm-hmm. It seems to me that Forex is just another way of doing pairs trades. Am I understanding this correctly? And if so, why would I choose spot Forex over something like selling 6E if I want to get long US dollars?
Well, I wouldn't say it's a way of doing pairs. It's the original way of doing pairs trade. I mean, I think spot Forex came first before we started or anybody started looking at futures pairs to do that. But you're right. You could do it either way. You get a lot more leverage with spot Forex. You get a lot smaller with spot Forex.
Yeah. With the spot market, you can get smaller and you can be a little bit more strategic because you can get smaller. You can do, it's got a little bit more, it's customizable. Mm-hmm. You can do different pairs that you can't do with the futures. But other than that, they're the same thing.
Yeah.
Products are the same.
Yeah.
There's a little more leverage. You can
Rose by any of the names.
Yeah. I think there's a lot of reasons to trade the listed marketplace, but there's also becoming now more reasons to trade the futures marketplace. All right, let's go to the next slide. I'm just curious, since you're in London, does the Tasty platform look different? For instance, are Netlick and the underlying price in US dollars, or does the platform convert it to pounds?
No converting going on. It's all coming from the same server, no matter where you are or where you may be traveling at that time. It's all the same. Nothing changed.
It doesn't matter where you log on from. Right. Internet. It doesn't matter where you are, where you log on from, who you're with. None of that matters. I'm just saying, none of it matters. It's you're going to get the
size matters if you're with that type of person.
You're going to get the same platform you always had. Uh-huh. Let's go to the next slide. Shut up. On Tuesday, Amazon CEO told employees AI will lead to jobs being lost. How do you think AI will change finance and firms like Tasty?
I mean, like anything that you're streamlining, and I think that's what AI does. I think it just streamlines the process. It enhances the business that it's looking at. It also creates other jobs and other opportunities. Sure, it will take some jobs away. It's going to create others too. I think net it'll eventually be a win for the employee who's looking for a job. It's gonna. I don't.
Yeah, that's kind of what I think too. I think this is very here. Sometimes CEOs speak their book. They want to get rid of people, so they talk about AI will lead to jobs being lost because they always want to reduce the size of the workforce. That's your story.
That's what you said to me.
That's the story. How do I think AI will change finance? I'm going to agree with the bat on this one. I think it's going to create a lot of jobs, a lot of jobs.
Not on day one.
No, but we're not on day one. We're just
yeah
talking our way through it.
Yep.
Let's go to the next slide. Sometimes you will trade quarterly settlement in the SPX. Since tomorrow is a holiday, does that discourage you from making that trade since there's so much going on in the world?
Before I answer this, to get back to the last one, I'll give you a great example. I mean, we thought, at least I thought, you had more vision to it. So I'm going to give you props to it. Say we're on the opposite side. When the internet and computers were first invented, I thought it was going to take away trading forever for everyone. And it only made a boom for retail investors.
I think it's the same thing with AI.
I mean, and everybody thought that way. You had the vision to think that retail investors would blow up the business, and you were correct.
SMRT.
SMRT. Yes, get into SPX for tomorrow. It's all baked in. You do have another day of risk, so premiums will stay high and they will stay bid in the 0 day, or which will now be the 1 day options because they'll expire on Friday. So other than getting more premium from it and having more overnight risk, we don't do too much different.
Oh, man.
You're probably not going to make a trade. I'll give you that.
Yeah, it's going to probably discourage us from making a 1 day or a 0 DT trade just because I don't want that extra day of risk. Mm-hmm. And I don't necessarily think it's probably going to be worth your while. That's all. We don't trade a lot of expiring options anyway, so
right. We don't play the game for expiration.
No.
That morning print. We actually frown upon that, and we would frown upon it now.
Yeah. It's not.
You can trade the 0 day. You can trade today's options.
Yeah. Let's go to the next slide. So this person writes, I have a question on Spot FX. Is there an offsetting hedge I can use if I trade Forex? For example, if I sell the euro US dollars, you should get short euro. Mm-hmm. Can I use the futures as a hedge? And also, is there cross-product margin relief?
Well, the part I'm not so sure about. I don't think there's any cross-product.
There's no cross-product margin relief. Zero.
Right. And can you use futures as a hedge? Sure, if you're big enough, you can.
Yeah, the whole problem is size.
Yeah.
So if you're doing euro and there's a micro euro product,
No, you're gonna make me.
I think there's a micro one. I never used it. I think it's M. Is it M-E? I don't know.
You think it's M what?
I think it could be M-E or something like that. But anyway, /ME. Whatever the case is, yes, you can use futures as a hedge against
/M6E.
M6E. Mm-hmm. You can use futures as a hedge against the cash crypto market, but you have to use the micro futures, and you have to be smaller in the actual euro. You can use the futures, but you're going to have to figure out what the ratio is, because if you're using the micro futures, then you can probably do it against a smaller notional size in the spot market. If you're doing the larger spot market price, like $100,000, then you're going to have to figure out what the notional is for the futures.
Yeah, because you only use $12,000 on like one.
It's not very capital effective, and I don't even understand why you would do that.
Right, because you have the pair on for the reason.
That's right.
Let's take a quick 90-second break and come back. We got a tasty extra with a nice, so you're going to like this, ladies and gentlemen. Fan favorite Angeline coming in. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially, because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. You know, sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
In the money. It seems pretty easy to understand.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
A little tasty extra. I'm letting you do the introduction.
All right, Ange, we're back.
We're back.
We're
what
back.
took you so long?
I know what took. I know.
We're waiting for the cavalry. You guys are counting the days, and then
It's been a while. We haven't seen you guys since like November.
Did we say something? Did Rich not wear enough deodorant? What was it?
No. It's not on you guys.
Okay.
It's not on you guys.
Great. Phew.
But we didn't have a reason, and now we're here.
It's my parole officer.
Tony's
what it was. It's my
Tony's
parole
person.
officer.
You want to tell the story? Do you want to tell the story why you can't get on an airplane?
Okay, come on then. Out with it. Why can you not get on an airplane?
So
it's actually a good story.
That's a true story. So my father had a past, and he's not allowed to fly.
Okay.
And we have very similar names. My name's Anthony William. His name was William Anthony. So every time I fly, especially out of the country, I get flagged, and I can't fly because he hasn't died yet, allegedly, but he has died, but he didn't die under his name.
Ah.
So they still think he's alive. So I get stopped.
Nice. Did you get stopped on this occasion? Did you?
Yes.
So not only, what is it, 67 trunks?
He's just a typical person.
Is he that person? And viewers, please tell me as well. Is he that person that always gets stopped at the border check, at the passport control?
Well, when they think he's his father, yes. I mean, that's what he says. I don't really know if that's it, but
I do get stopped every time. I mean, yes.
I just want to make sure.
Hopefully, you're not going to get stopped at the huge event that's coming up on Friday. Everyone's excited.
No, I'm here now. They can't stop me now. Yeah, no stop me now. I'm ready to go.
You know the old quote: every saint has a past, and every sinner has a future.
This is true. This is true. That is an old
I always
quote.
thought it was a Bill Walton quote, but it turns out it was like
no. It's been around for a long time.
I know.
Probably centuries. Yes.
Okay, so there are more than 700, close to 800 people coming to watch you guys and Richard.
Well, that's somebody who signed up. But usually when they find out Tony's going to be here, it gets down to like 100.
No, you'll get.
It'll be a great turnout. We had a great turnout in London last November, and it's going to be more fun because we have a lot more people now, and it's a better facility because you read the screen.
Yeah.
And so the screen's going to be really slick, and so it's going to be great. Yeah, Friday night.
Fantastic. Loads of people still wanting to come, so we've told them to call Britt. We're kind of like, call Britt. Ahead of that, our viewers have questions. Everybody sent me questions.
Give it to
ready?
me. Yeah.
Sure. Are we going to do this now? I thought we'd do it during the show. All right, go ahead. I'm ready. Let's go.
Why does Tom always wear that hat? That's the question.
It's a beret.
It's a beret.
They want to know if there is a reason.
No,
is
just
it
'cause-
hiding anything?
No, I have hair. My hair was long.
History with the beret?
No, there's no history.
Okay.
I mean, there's
The truth of the matter is.
Do you remember him ever not having?
Oh, yeah.
Yes, he never wore a beret or a hat he never even wore a hat. He would wear sunglasses. He would take sunglasses and put them on top of his head. And when we went to do video of Tasty, which became Tasty Live, there was a reflection in the glasses, and he needed a little something as advertisement because who would want to look at that space?
Actually, I started wearing this like 25 years ago when we built Thinkorswim.
That is true.
And then I just changed the color from black to gray when we did Tasty.
Yes.
Nice.
And so it just keeps my hair back. So, I don't have to deal with like some of the.
Because the babushka didn't look well. He couldn't carry it. He couldn't.
Babushka is something different. That's like scarf.
He couldn't carry that. He couldn't carry that.
Cool.
And the bow made his head look even larger.
And I don't always wear it. Most of the time I
I've
don't.
never seen you without that beret.
It's business all the time. Yeah,
But do you have it when you're in the shower? Like, do you still have it?
Yeah, usually in the shower.
Okay. Good to know.
No, that's actually a trivia question. That's how he gets the hat to be that size. Because they really come smaller. I'm not kidding you. So he wears it in the shower to stretch it.
So when we
the joke on the floor would be, would you rather have Tom's head full of nickels or $1 million? And I'm telling you, it was a toss-up. It was a toss-up.
When I lost, I lose the beret every once in a while. When I lose it, I have to.
Actually, now that you say it is a bigger version. It is a bigger version.
Than the ones they have, yeah.
But when I lose it, I have to take a basketball, like a regular-sized basketball, and stretch it around, and then we water it, and
talk to it.
Eventually, it works.
Great. Okay.
It's a lot of work. It's a lot of work. Yeah.
Question number 2.
Yes.
How did you and Tom meet?
Blind date.
Blind date.
Blind date.
Didn't go with it.
It didn't go.
I could have done a lot better. I'm not gonna lie. It could have done a lot
love at first sight? Was
He
it
traded up. I could have done a lot better.
Who made the first move? Who made the first?
Who said I love you?
I think it was love at first sight. I think it was a mutual first move.
You know,
we met on a baseball diamond, no, softball.
I thought you guys said on the trading floor or something like that.
Well, we happened to have traded. We happened to have traded in the same pit,
right?
But we also were playing on the same baseball team,
right?
Softball team in the early '80s.
Yeah.
Okay, so both in the spy then.
Right.
Yeah.
And we needed somebody to carry the water.
And he was so obnoxious and annoying. I mean, I was like,
no.
Oh my God, it can't shut. If you think you can't shut him up now, imagine in 1983, he wouldn't shut up.
He's not lying. He's not lying. Don't lie. He's not lying.
He doesn't sound like a chat. You don't like a chat.
No, I would antagonize the other team a little.
He doesn't sound like a what? Chatty? He doesn't shut up.
Yeah.
Back in his heyday, he didn't shut up.
He was right. That was a little different back then. I'm mature now.
Mature.
Oh my God.
Mature, like a fine wine.
Yes.
Yeah.
Speaking of wine, all our viewers who watch your shows ask the same question over and over again.
Yeah.
Ange, are those cherries real? Behind Vanetta.
Oh yeah.
Real?
Oh yeah.
Great.
I wouldn't eat them, but they're totally real.
They're in formaldehyde.
That was from director Terrence in the Institute. That was one of the questions.
100% they're real. We bought like these big giant jars of cherries, and they're lit from the bottom, and they're totally real. But I think originally you could eat them.
Yeah,
but now
I don't think I would eat them now.
Right.
Yeah.
Yes.
But they are real.
Yeah, they are real.
Fantastic. Good to know.
And you'll notice I stick stuff behind there.
There you go.
There you go.
Yeah.
Fantastic. Yeah.
Every one of those
What do you
jars.
stick behind there?
Well, go down a little bit further. Can you go down to the bottom row? Okay, so there's an alligator head. A viewer sent me an alligator head, so I stuck the alligator head there, and then all the way to the left, like in the middle, there's an alligator head. There you go. And to the left there is a little plaque.
Why did they send you an alligator head?
I just, that was when I have a house in Florida, so they sent me an alligator head. That says the Scott Sheridan Studios. That was made by the whole team to represent Scott Sheridan's contribution to the studio. That little plaque.
We should give away like one of those jars of cherries and see if somebody can eat the whole thing.
No, let's not. Look, there's another can up there. So I put there. So we put.
And someone dumped all the whiskey underneath Vanetta's desk.
There is whiskey underneath the desk. I did not drink any of it.
Vanetta
I asked Ryan to check for me the other day. He was like, "Yeah, it's pretty empty." And
yeah,
the Batman sticker is there because my nickname is Batman. So
yeah.
There's a bunch of things in there. Yeah.
And last but not least, if there was one thing, this is a viewer friend called Jesse. If there's one thing you could change about each other, what would it be?
If there's one thing,
his packing.
I wish Tom would say what he's thinking.
He always does. He does say what he's thinking.
No. You have to listen to what Tom is thinking to really understand what he's saying. When he speaks, he does not speak in an intelligent way. He
I'm gonna edge away.
He doesn't say what he really means, so you have to decipher it. So that would be the one thing that I would change from Tom.
And
I'll point it out when he does it today.
And I wish Tony would think before he speaks.
That's fair. That's fair.
That would be great.
That's fair. Well, when we started this show 14 years ago, we decided that nothing was off limits. Like, family, friends.
So let me tell you
You're gonna have to give a bit of yourself.
Let me tell you a quick story.
Yeah.
Okay.
So when we originally built Tasty, and this is, I joked about it before, but that we were like the first streaming service. Nobody was streaming,
right.
And especially in finance, nobody was streaming. And so we came up with the idea, but the idea was we were going to hire a bunch of comedians. So we hired six different comedians. We hired 6 comedians that were at Second City.
But whatever.
Second City's famous, improv and improv Olympics, the whole thing. We had hired 6 of them. And we had our studios, and for 6 months, we tested them talking about different things. Then we were going to pull out different.
They were going to make fun of financial media.
They were going to make fun of everything, and it was. They were so bad and so boring, and they were
they were good.
They were really good comedians as stand-up comedians go, and as improv goes. They were horrible with each other.
They didn't like each other.
There was no
no camaraderie.
No chemistry.
Yeah, there was no chemistry. It was like
we're sitting behind, like in here, we're sitting behind in a production room with a glass window that can see into the studio. And we're sitting there, and we hired a guy that was a shock jock in Chicago, sports radio shock jock. And we're sitting there with this shock jock, Tony and myself, for like 6 months. And we're listening to these guys, and we're like, we can't go live with this. We cannot go live with this. Nobody will watch the show. And so we're like, he's like, what do you want to do? And I'm like, I don't know what to do. And so we're sitting there going, and then the other guy, the shock jock guy goes, I know what to do. You guys got to take this over. And we're like, we don't want to be on camera. We don't, the whole thing.
Yeah, that's true.
We took it over and never looked back.
You guys love the camera. You don't want to be on camera? You said you didn't want to be on camera in the beginning?
Time, there was no streaming with camera.
Yeah.
Like our thought was, well, it'll just be audio.
Cool.
But then nobody could see the screen, and we're trading, and we're talking about numbers, and it became, if we were going to do it, we had to do, and it's very expensive to house the video too.
It is very expensive.
Tom never thinks about money, but it's my job sometimes to, rein it in.
Rein him in.
Yes.
And I heard the original studio had like gaffer tape everywhere, and things were kind of when you first started. It's not the swanky place that you have right now.
Actually, when we first started Tasty, so I'll tell you this story because it's a fun one. When we first started Tasty, we were looking around Chicago. We looked at a bunch of production studios that like TV studios had.
Oprah Studios was kind of moving. And
like
selling
NBC and Oprah Studio. We looked at all these studios, and we didn't really like them. Then we walked into this hip hop studio.
Yeah.
It was a 3rd floor walk up, and it was a really cool hip hop studio. Brownstone with guitars on the wall, and it was one of the coolest places. We walked in, we're like, we'll take it. We literally walked in and said, we'll take it. And he said, we want everything that's in here
to stay.
And all we did was we paint the studio black. It was a really cool little studio.
Oh no, you're not telling the truth. I mean, there was no video. It was only
no video. It was only audio.
It was only audio. So we
built everything.
Then build out all of the video.
We stayed there for a couple of years, and then we ran out of space. And then we moved to our 2nd studio, which we built up from scratch. And then we're in our 3rd studio now, which we built from scratch.
And Tony did Goodfellas, right? Didn't he? Wasn't he a production assistant on Goodfellas?
No. No. On the other De Niro movie, not Goodfellas, the other De Niro movie.
A production guy who did the opening credit scene for a De Niro movie is the one who set up all the sight lines and everything else for us.
Oh, look, they're putting it up. Look.
Oh, yeah, that's the old studio. Yeah, that's the old one. Yeah,
yes, that's our original studio. I was a 3rd floor walk up, and that's where Liz and Jenny and Tony and myself started.
I love it.
Beth, what else you got inside there? We had
Any pictures of the inside, Beth?
Let me
yeah.
look. I will look.
And then we have the second floor too.
It looks like a movie set, guys.
That's cool.
And it's right down.
It's right in the middle of the city, and you can see the
in Central Loop, in the center.
It's on the north. It's in right off Michigan Avenue. It's really beautiful. It's really a beautiful building.
Did you ever get kicked out and have to sleep there?
Never. I mean, there and
someday I'll tell you that story.
No.
So I have a confession. You ready?
Sure.
So when I came over to Chicago, I was casing your joint.
Casing what joint?
My father sent you?
Your kit, your stuff, your box fresh camera equipment, your amazing for studio rooms, and everything was state of the art and super expensive. And this is like, casing it from the viewpoint of, coming from like the world of Bloomberg, where money is no object and they buy everything new, right?
Because Vaseline on the lens doesn't really work. We tried it with Tom. It was a disaster. So we had to get all the good stuff.
Super impressed when it was like, the one day when Tom was like, right, you're going to get stuff with Frank, get it shot, get it done. Like 4 people came out with all this like super, kit. And there was even someone coming to do the, checklist and 3 cameras.
You weren't even there. We had hair and makeup.
Where was the hair and makeup? I needed
before that.
Oh, what happened to hair and makeup?
Dylan, when we first hired Dylan.
Yeah.
Dylan Radigan.
Dylan was like,
he was a diva when we first hired him.
He was a diva.
Much different now.
He came from CNBC. So he was a diva.
When he was at CNBC, it was during the time when if you were working with them, 10 Armani suits a year. Well, the budget for
That's what they gave you?
Yeah, Armani suits a year. Obviously, that's all gone now, right? But it's also back in the time when, Bloomberg, you only travel on business, no less. And then they had their own fleet of cars. Now that's all gone too.
Oh.
Okay, that's all gone as well. But yeah, I was super impressed with your kit. It's like...
Well, if you ever want to hear a good video, listen to the one where they fired Dylan on air.
You see that one?
Oh, yeah, you can Google search it. It's awesome.
Is it better than the Eliminate one with Rich in it?
Oh, not really. Not really.
It's a close second. It's a close second.
He's going to kill me like that.
No, we played it.
I know, I saw it. It was, it was on the floor, outside rolling.
Yeah. That was good.
Yeah. But it's,
Oh, this is the old opening of tastylive. Oh, yeah. There's a young bat.
Look at that.
There's a young Tom.
That does not look like a mixing desk.
Tasty Ross, the old CEO.
You look the same bat.
I haven't changed.
You look the same, Tom. And
No, come on. There's 2 Toms there. Get Tasted was the name of it. Yeah. Yeah. So the name, it's had a couple of names. So yeah, Get Tasted was the first one.
Right. So you're staying after the event. Have you got like a schedule of what you're doing in the UK?
Yes, I'm on a honey-do list. Whatever my wife tells me I'm going to do, I'm going to do. So we have a couple of restaurants that we're going to go to. I know she's at tea right now with my son. So she's doing that.
Where's she going? Where for tea?
I don't.
Savoy?
I don't know. I don't pay any attention to it. We did a video with Tom and Vanetta, where Tom and Britt, where Britt says, I get Tom's passport, I get all the stuff done, I get a thing, and then Tom goes, "Hi, I'm Tom." It's the same thing in my relationship. I don't do anything. I don't know where to go. I don't know what flight I'm on. "Hi, I'm Tony," and I show up for that. So the wife does all that.
You use ChatGPT too.
I use ChatGPT and I throw a credit card at it, and then it gets done. That's it. We're going to catch the opening here, so we're going to take a quick 90-second break.
Yeah.
Give me some love. You did great.
Thank you so
Good seeing you.
much.
Thank you so much.
Good that you guys are here.
Yes, it was
Really
awesome.
excited.
We'll take a quick 90-second break and come back. We got the opening bell next. This is Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. The opening bell at moments away. Even the S&Ps have not moved. They're up $7. What do you have to say for yourself? Anticlimactic for you being out of the country. You're in the UK, so enough. Usually disaster or something happens or something to the upside, downside, some big move.
Well, nothing bad happened so far today.
No.
So,
not yet.
It is early, and it is going to be a little bit of a funky day with no markets open tomorrow. But we got
synthetic expiration Thursday, right?
Yeah, but we took a little bit of a hit on yesterday.
You were going to say on Friday, weren't you? You were going to say on Friday. I could hear it coming out of your mouth.
We took a little bit of a hit yesterday because, man, yesterday feels like it was a month ago.
So you're talking about on Tuesday, volatility expanding.
Yes.
Market a little bit lower.
Volatility expanded a lot, but it feels like it was about 3 days ago, but it was actually yesterday.
Well, volatility's not doing too much today either, Sadnov. It's down 9 right now, trading 21.36, but it is off of its highs.
Most of the volatility expansion that hurt me was in crude oil.
Yeah, crude oil up again, up 67 cents. That's going to probably keep volatility elevated. It's 101 right now, so volatility is going to stay elevated if crude oil continues to rally. If it goes down a little bit, volatility will get crushed in there. The S&P is flirting with the unchanged side. The Dow is already down with the Russell, joining the Russell. Russell's been weak all day. NASDAQ is up. It's up small, up 21. Even the S&Ps are up 1. Let's look at some of the movers in the market here. To the upside, you've got Netflix. Netflix and chill, still alive, sad enough. Up $12.77. Marvell, I don't know how that got up there. It's up $5. That's a huge move on Marvell, almost 7%. move on the opening there. Oracle up $3.70. Hims on Sosnov's vacation taking a little bit of a rally of about $2 or so. Let's see what the downside is doing. Downside, MSTR down 2 with Bitcoin down around 800 or so. Makes a little bit of sense there. Boeing down $1 and change. BABA down $1 and change. Sosnov, what stocks are lower that's making this market basically be unchanged here? Let's take a look at what Apple's doing. AAPL. Apple up 31 cents. What do you think, Thomas?
I am long little Apple, so
no dings from you.
Not yet. Not yet. I mean, I'm surprised a little by the we got caught a little bit in nat gas.
You got caught. You could see here what Tom was talking about, volatility expanding. This is the IVX 5-day change of all of these stocks. You can see that it's all, most of them, majority of them are green. Let's go even to the upside stocks, and you'll notice that even their volatility is higher. Now, some of them do have earnings coming in August. It's going to help volatility expand a little bit here, but you can see here they're expanding quite well. Airline stocks up small too. UAL up 56 cents.
I mean, they were down so big last week, and on everything else. We don't have that much. I'm really sick of Roblox. I'm playing it to the downside. It's not working. My shorts are not working. And yeah, my shorts are just not working.
Even though we are about 70 handles off the highs we made just about 2 days ago. RBLX up another $1.60. FSLR, which took a big hit yesterday, is up $3.80.
Yeah, well, ENPH wasn't up anything when I looked before.
Let's take a look now. ENPH.
It's up, actually, it's up a little bit.
$1.
Yeah. I need a little help here. I need a little help, please. A little help.
So what do you need the market to do?
The market?
I think you're pretty neutral on your.
No, my market deltas are pretty neutral.
You need volatility contract. You ain't getting that.
I need a little volatility contract.
You ain't getting that.
Not today, I don't think.
Not today. Not going into an extra long day. Markets aren't open on Thursday.
Yeah, I don't think so.
I don't think this is a great, you get those confirm and send questions where, here you have a known event, the holiday on Thursday. Is volatility going to contract or expand? Usually you can't tell, you can't say anything, but I'm going to say the volatility is going to stay bid today because it was bid yesterday so much. I think it's going to stay bid. You're not going to get paid for that data decay. So if you have positions that are short data decay, you got to have some conviction in them over the weekend.
It's just a weird day to be off tomorrow.
Yeah.
Just a weird day.
Middle of the week. It's not like a Friday. It's a long weekend or a Monday.
Huh? Yeah, I can see it. But I'm not sure how I want to position myself. Let's put it that way. I don't even know if I have to position myself.
Position yourself for success. I don't know if you have a choice. Try to position yourself for success. Okay.
Have you ever positioned yourself for failure?
No,
seriously. Have you ever positioned yourself for failure?
Don't believe so. No, I know. In hindsight, I did, but no, I didn't go into it. That way. Yeah.
Anyway,
all four indices are down for the first time. Sad enough that I've been able to see them. Dow just went up 4, but it was down just a moment ago. Trust me on this. Believe me, I wouldn't lie to you.
This is a pretty much
to do about nothing.
Pretty much to do about nothing so far. Which you know what? You're right. When we went away yesterday, I thought there's no way they're going to make this easy.
That's right.
Yeah.
And I don't think they are with volatility. I mean, volatility is up 15 cents right now with markets unchanged. So volatility, any hint of the market taking a little bit of a turn is catching a bit.
I mean, I'm just thinking about like kind of trades that we're going to make on Friday, and the richest
for the live show.
Yeah, the richest underlying is crude oil. Mm-hmm. Nothing else is even close.
The richest. See, but Angeline, that's what I meant. So he said the richest underlying is crude oil. Now it's not. Now it is high relative, but it's been higher. What he meant was the richest IV and implied volatility and the highest IV rank. Am I right, Sosnov?
No. What I meant is the richest underlying is crude oil. That's exactly what I meant.
No, you are not.
It's exactly what I meant.
No, you're not. You would say Roblox is the richest or Netflix is the richest.
I
would not say oil.
No.
You're not. No, now you're fudging it.
Talking about tradable stuff, I think.
What, Netflix is tradable? Roblox is tradable?
No, they're not. Roblox a little bit. Netflix not at all. Come on. And
Did you just trade
crude
it?
oil's no. Crude oil is the richest on wine.
You traded nat gas too.
I adjusted a position at gas. I didn't trade.
No, that's not true. So when you
Let me explain.
so you adjust something, it's not a trade.
My trading
Wait a
style.
minute. I thought you told me there's no such thing as adjustment.
My trading style is a little too sophisticated. If you don't try to figure out what I'm doing, just take it all in. Just take it all in. Learn from it.
I'm motivated now.
Just take it all in and learn from it. Let me see what we got here. I'll make some adjustments, but let's see, what time is it? I'm going to go. I want to keep the show moving today because there's nothing I have to do this morning. I don't.
You got an unchanged market. If you took care of everything on the close yesterday, then you're fine for today.
I took care of most stuff. Yeah. I mean, there's a little bit of a bounce, like you said, in natural gas, and I can probably make a couple. I bought back some short puts in bonds and notes, but I don't have a hell of a lot I have to do here on the opening today. Our deltas are.
What's your spidey sense tell you? 6,017, the low, 20 some odd handles lower than where we are right now. Does that hold?
Yeah, for today.
Oh, close all watertight doors, ladies and gentlemen. Be careful out there. You want to take a quick 90-second break?
And they are pumping in premium into
crude oil. Ivy ranks 107 now.
Yes.
It was 101 before the market opened. 107 now. Yeah, and into the overall market itself, volatility.
And so they're pumping in juice into that again. Doesn't stop. So I'll roll up some puts in there, neutralize the position, and try to salvage everything for later.
Try to live to fight another day.
That's all you do. You live to fight another day.
Understood. Understood.
All right. What else you got?
That's it, my friend. We can take a quick 90-second break if you want to.
Sure.
We'll take a quick 90-second break. We'll come back, get more Tasty Live. Me and found these messages. Be back in 90 seconds.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Stephen Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more. I'm ready. A little more Tasty Live. What's coming up now, Sadnov?
This is where I make trades and you kind of just look at me in shock.
Wonder and awe.
Shock and awe.
Wow.
You go like, how does he do it?
How do you do that? He's amazing.
Yeah. These are ideas that come to us from customers all over. And by the way, when this segment is done, we will take calls from customers all over. We would love you to ask Rich some questions. Then I'm going to bring Angie back on. Ask him questions about markets all over the world and or whatever. And nothing's off limits. Let's have some fun with those guys.
Yep.
But first things first, it's 2:42 and you know what I'm saying? What am I saying?
You're 20 minutes early, but I wasn't going to correct you.
It's 8:42 Central Time.
I wasn't going to correct you.
8:42 London time. Looking at my clock, got all the stuff going on.
Angie and the crew is not coming back till 9:30.
I gotta help.
It's okay. It's okay. I wasn't going to correct you.
Let's take a look and see what we got.
What's your assumption? FCX. I
hate this stock too. John from St. Louis Arch. Do you think John lives in the St. Louis Arch?
I think he's from St. Louis, yes.
All right. John from St. Louis, living near the Arch. Freeport focuses on copper. Utilization of new leaching technologies to exploit previously uneconomic tailings could increase production. This guy, John, you know way too much about this stuff.
He's deep into the weeds.
Are the markets too wide to trade? They're not great. Looking at the 40 call 2 times, looking at the 40, 45, 50 call fly. Well, we don't do a lot of flies on here.
Yeah, now, this is a normal fly, equal width, $5, 40, 45.
It's an upside call butter. And
well, you want on a butterfly, let me say it in English for everybody. Okay. You want the stock to expire at your short strike, which would be 45, which is above the present price of stock, which is 41 and change right now. So this would be a bullish strategy, neutral to bullish.
This is a very bullish strategy because the expected move on the stock for the entire month is only $3.30. This is
well, you should be going to August here. You should not be looking at July with 30 days to go.
Well, I want to win.
Well, then why
August is not going to move.
I mean.
August is not going to move. What are you talking about?
August has a $5 expected move, almost $5 expected move, $4 and change. It has earnings coming July 22nd. It's an upside play.
You know what, John? I'm going to do July, like you said in there, because this is your assumption, not Tony Batista's. And
since when do you listen to what the viewers say?
This is trading.
How is this neutral then?
What?
I said, how is this neutral then? How is this a neutral?
It's a little bit bullish.
You said it's upside. I said it was a little bit. You said no, it's definitely upside. So how is it? So John, I mean,
how is it? Because at the expected move, it's a max profit.
No, because the expected move is only $3.
Yeah, it takes it from 141.5, and the expected move is 3.5. Takes you right to 45. He's exactly right. John's got this thing, and he knows more about utilization of new leaching technologies than you do.
And he's an upside butterfly champion.
That's right. I'm going with it, John. I'm going with it. I think it trades about $1.60 something. The market's in here.
Oh, it's a lot of money for Tom to be spending on a butterfly. He likes to spend about 30 cents usually.
The markets in here are not good.
He must really like you, John.
I do like John. I paid up 164. I thought I could do it at 162. I paid 164. I like this trade, John. We're going with it. I think you're going to be right. Let's go next slide. Oh, Mike, man, everybody's going to kill me today. All the St. Louis guys, the Ithaca guys. Mike from Ithaca, New York. You ever been to Ithaca, New York?
I was going to ask you the same question. I have not.
Oh, I've been there many times.
Well, you lived in upstate New York. I'm sure you've been.
Yeah, I've been to Ithaca many times. Actually, Ithaca is a beautiful city. I mean, there's Ithaca College, Cornell. I mean, everything's right there. But beautiful little town. Hilly.
Did you visit all the places you couldn't go to school?
I always do. Yes. Yes. But I do like Ithaca. Cute little town. Costco, bullish, 45 days out. I'll grab some Costco whenever it drops. Did Costco drop?
It's up $1.05 today.
Yes, it has dropped a lot.
Well, it's under 1,000. The highs were closer to 1,100 or so. So yeah, I guess it's
okay. So here's my. I like your assumption here.
Ivy rank at 22. No earnings looming.
Yeah, no earnings looming. Still 30 days. So I'm going to stay in July. Oh, he said 45 days. I take it back. 45 days out. I personally think this is a short put spread. You can't. I'm going to sell naked puts in $1,000 stock. Just ties up too much capital.
So you like Mike, right? As much as you like John, right?
What?
You like? I'm saying, can you hear me? You like Mike just as much as you like John, right?
Maybe.
Okay, so you should be trading the August 1st options with 44 days because those are the closest to 45.
I don't really care about that.
So you're not going to do what Mike said, and you're going to go to August, 58 days?
Mike from Ithaca, New York. I'm going to go to August.
Wow.
Which is 58 days because I don't want the weeklies.
Wow.
And I'm going to sell.
You say you don't have any favorite children, but obviously you do.
I'm going to sell the 950, 945 put spread.
Wow. Mike, he doesn't like you much at all. A $5 wide put spread, 58 days away.
Well, the stock's up. Oh, the stock's down actually now.
Stocks are dynamic. They move.
Listen, I'll do more. 156. I think I can probably fill this at maybe. I'm just doing a little price discovery here to see what's going on. Oh, 156. About as good as I can do right now. Let's go to the next slide. Just getting some fills. It's not a lot of volume this morning. IWM.
2 for 2.
Brett from Athens, Georgia. VIX is sitting at 22. Maybe time to sell some index strangles. IWM premium looks pretty rich. Okay. It's higher than it's been.
Yeah. I mean, volatility has expanded the last couple of days.
Higher than it's been. He's right. Mm-hmm. There's 30 days to go in July. Oh, he's 30 to 60. Yeah, we'll go 30. And let's see. We'll go 20 deltas. What do you think? 20 delta IWM? That's what he wants to do.
That is correct.
Okay. So that takes us to about the...
Son of you say it's expanded a little. Do you know how much it's expanded? Of course you don't know how much it's expanded.
I didn't look, but you can tell me.
Because you never look at the IVX 5-day change. And if I look at that, it's up by about 1.5% over the last 5 days.
I'm going to go combination of get somewhere close to price, somewhere close to delta. I'm going to go 220, 195. 220, 195. Pretty neutral. It's going to trade 325. And that's probably on a... No, nothing done yet.
Oh, there you go.
There you go. 325. All right. I like that, Brett, from Athens, Georgia. Let's go to the next slide. Ryan from Denver, Colorado. Neutral. July, August timeframe. Just going to sell this high IV after the big price drop. Well, I'm long the ENPH. It is a PH It is a PHI pig.
Yeah.
Yes.
Up 35 cents this morning, though.
ENPH. Yeah, that's not too impressive. After the down move it had, what does he want to do here?
He's looking for a neutral play. He wants to sell high implied volatility. No, it's both sides then.
Well, we've got this play already on, dude.
Let's go to July with 30 days.
No, I already have July, so I got to go to August. I'm all over this stock. I have every.
So you really have no rules why you go to July or August or anything else like that.
No.
Stay disciplined, ladies and gentlemen. Stay like the bat. Be like the bat.
I'm going to go 30, 45. I just have too many positions on already.
Okay.
And maybe we get filled around, or we do at 440. Just keeping the dream alive.
That is a lot of premium.
Let's go. It is a lot of premium for a $35 stock.
Yeah.
Let's go to the next slide because I think it's going to open up $10 one of these days. Oh, here. We couldn't get away enough on ENPH. We're going to go to.
They're torturing you.
From Sleepy Hollow, New York.
You ever been to Sleepy Hollow?
Of course. It's right near where I grew up.
Oh, I didn't know that.
Sleepy Hollow's in Westchester County.
I didn't know that.
I think.
I never got out to the country.
Sleepy Hollow. First Solar.
I lived in the city.
Well, you never got out anywhere. SLR. I mean, who didn't?
21-day time frame, Sadnoff. I want to see you do this one.
21 time. Well, you got to go 30. Because I don't do 20.
So you just pick and choose your friends.
Well, I'm not doing this. What does he want to do? He's bullish. Fell too far, too fast. Short-term bounce. Put ratio spread. All right, that's something to do. Put ratio spread. Expected move to the downside. $20 to 145. Go to 125s. Blah blah blah. Perfect. And then we'll sell the.
You can do a $5 wide one. It's awful rich for a guy like you. Good high probability.
Buy the 125s. Sell the 120s and the 115s.
See now how much SLR's volatility is up over the last 5 days, sad enough? 9%.
Take a fill, Phil. I did a put ratio spread. Bought the 125s, which is at the expected move, $20 to the downside. Sold the 20s and the 15s for a 55-cent credit.
Synthetically, you sold the 17 and a half. Oh my God, 40 years.
Hold on, 117 and a half.
That's what I said. Okay. Those in the know, drop the one and just say 17 and a half. Would you agree?
If I'm saying it. Let's go to the next slide. Tony from LA doing a little 0 DTE wide iron condor, managed at 25% as the market measures show. What do we got here?
It's the time to do it, Sadnoff. It's right around that 9 o'clock
16
number.
handles.
Wow.
Yes, they did.
Mm-hmm.
All right, Tony. What do you got here? Tony from LA in the.
Hola, Tony.
He wants. Hola, Tony. Yes, we will go 59.60, 59.40.
SPX sitting right at 6,000, Sadnoff.
Yeah.
As foretold, by the way.
All right. What do we got here? Man, this thing's moving all over the place.
Markets are dynamic.
Markets are dynamic. I can't tell what the mid price is. So I'm just working it. Doesn't look good for the good kids here.
Go a nickel below and just sit.
Go a nickel below. We're moving around like 20 cents at a crack. Nickel below.
Obviously, you go nickel below where you are because you're not getting filled and relax. Sometimes shows a little test of fortitude.
I'm trying. I'm all over the place. I'm moving these things all over the place. I'm looking at doing $20 wide iron condor.
This is 4 legs. This is what they call a complex option strategy. Are you sure you're okay with this? Because like 2 legs triangle, you're okay with. So there you go.
I banged it just to get it done.
She banged.
Tony from LA. We did. Let's see. Strikes here. I'll give it to you in 1 second. Let me set it up for.
You got. That's. Yeah, well.
Let me just set it up for you.
Usually I can see quite easily. It's taking me a little.
60-30 is my short strike. 60-50 is my long strike on the put side. And 59-60, 59-40 on the put side.
It'll be in the follow page. Don't worry about it.
Right. So on the call side, 60-30, 60-50 on the put side, 59.60, 59.40.
We can see all of Tom's trades.
29. What was I going to say? No, that's it. We did it for $5.90. All right. We need a miracle. Let's go to the next slide. We'll see what happens, Tony. We're shooting for somewhere between 10 and 25%. We'll see what happens. Rick from Miami, Florida, looking at UAL, looking at selling some strangles. The setup looks favorable. UAL was, I don't know what it's doing.
Ivy rank of 44. It's got earnings coming before July expiration.
It's been a little bit of a pig lotto.
Up 64 cents today.
Yeah.
Volatility still expanding.
Yep. Let's take a look here.
You know how much it's expanded, Sonoff?
No.
13%. You can see it right there on the bottom of the screen there where it says IVX 5-day change. That's something I implemented while you were gone.
Thank God, you're the best. Okay, so he wants to do like a short string.
Why is the 5-day IVX change important to you, Sosnoff? Because you want that expanding when you're making trades. When you open,
I'm going to do 85.65.
I'm sorry.
I'm going to do 85.65 and see. I think if I can get filled a penny or two around mid-price, I'm hoping.
That was easy.
Got a partial.
Oh, no. Nothing worse in the world of sports than a partial.
I hate partial fills.
Yeah.
Working the balance. Let's go next slide. Thanks, Rick. We did the 65.85, and we got filled at...
you're not filled yet.
Well, we got a partial.
I know, but I can't put in partials against my...
Kevin from San Francisco, California is looking at XLE. What's Tom thinking about energy stocks right now, seeing high V across the board? It has been crazy. Let's see. Crude oil this morning.
What do you think about XLE?
Crude oil is up 91 cents. I have a ton of short strangles in crude oil. I have nothing in XLE.
I know, but how do you like it as a product?
I hate it. I hate it. I haven't traded it in a while. He wants to do August, but I'll put a position on.
XLE has a high correlation to the market. It's got about a 0.84.
It has very, very little volume.
Mm-hmm. Very little volume. How's the option width between the bid and the ask?
It's okay. It looks better on paper than it is in reality.
Mm-hmm.
I'm going to do the 82.97, $15 wide. It's going to trade around 245, 247.
Wow.
A miracle. I thought it would be worse. I actually got filled right at mid-price. I'll take it. All right, Kevin. We've done every single trade so far. Let's go to the next slide. Matt from Vegas. Man, we had no international clients today. It was all just all local from the U.S. TGT, bullish, 58 days. Great opportunity here. Quality retailer. Trading at a discount. Quality retailer.
Also known as Target. You're right, my friend.
I'm comfortable selling naked puts on this position. TGT.
32 cents.
We have no position on here today. All right, what do you like here? Naked puts. You're probably looking at the 90s.
The Ivy rank at 32 is okay.
Do you sell the calls with it?
Because you just looked at the July 90s and they're $1-ish.
I'm just looking. You know what? No.
I mean, it's a $95 stock. I mean,
yeah. You know what? I'm gonna go with the dude here, who says.
You're gonna go with the dude?
Yeah, Matt from Vegas is the dude. Matt, I just sold the puts. I'm on board. Okay, all we're doing is selling 90 puts. Let's go.
Okie dokie.
Next one. Sean from Hong Kong. Finally got me out of the U.S., Sean. But unfortunately...
I love it that they made a liar out of you because you had one more to go. You were 9 out of 10. You couldn't wait, but you had to say it, and then you get your international. I love it.
Okay, well, Lulu's been a problem child for me. I have no good positions in here. He's bullish in Lulu. I'm already... You want to sell those August 220 puts. Lulu has not popped at all.
No, it has not.
We are short the. We're short a June strangle, and yeah, we got nothing on in August.
So what are you gonna do? Jade Lizard.
I'm taking a look in Lulu. You know what? I think I'm going to go with Sean. Sell the Augie 220 puts. They're too expensive. They're $13. Let's go to...
Well, that would be good. I mean, if you're selling something and it's too expensive, you like a challenge. So you're going to find an underpriced option to sell? Is that what you're telling me? See what I mean, Ange?
I'm going to sell the naked puts. I'm going to sell the 180 puts. Sell the 180s and buy a Mercedes.
180 puts in August?
Yeah.
Okay.
Just to start off, $4 just to get something going, and then we'll see what happens.
180 puts are $4?
What did I say?
In Lulu?
Yeah.
You did September, my friend.
Oh, they don't have... Oh, God. See, it's hard to see on the screen.
No, they have August. Let me tell you about how options work here, okay? If you have a July month, you have to have an August month. That's just how it is, Sosnoff. That's how the pricing's always been.
I got a few problems here, but I'm going to go back. I'm going to do the 190 puts in August.
You thought with 58 days away, you were going to get $4 for that put? Honestly, this is why I was a market maker and you were just a carp.
I sold the 180 put in September and the 190 put in August.
And that's also how the pricing works there too, Sod.
And I'm also short some July puts.
Oh, you're going to get so screwed.
I'm ready.
All right. 10 out of 10. Look at you. How do you do it?
It's a gift, Mr. Batista. It's a gift.
By making mistakes. Listen, we're going to have to take a quick 90-second.
Before you do that, so quickly, we did a bullish... Go back, Beth, go back. We did a bullish butterfly in FCX, betting that copper would go up the expected move. In Costco, we sold a put spread. So we sold a put spread. It's a bullish play in Costco. IWM, we sold a naked strangle, short premium play. ENPH, we did a short strangle with a little bit of upside skew. $10 wide on the call side, $5 wide on the put side. First Solar, another bullish play. We're selling a put ratio spread. SPX, we did an iron condor. Let's take a look.
Oh, I don't know if you want to.
We are currently unchanged. SPX Iron Condor, UAL.
That's a gift, by the way.
We sold a strangle. XLE, we also sold a strangle. TGT, we sold a naked put. And in Lulu, we sold a naked put.
Good job out of you.
Could be. I'll let you know in a couple of weeks.
We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live. That's right. Immediately following these messages. We're back in 90 seconds with a market measure.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
McDonald's. No.
Tomas, we are back, my friend. You know what that means? We're joined by another special guest. Go ahead, Sadnov, introduce him. He is your Gumara.
Oh, well, don't say that in front of Dylan.
Yeah, Dylan's not going to be happy at that one.
That's right, in Milan. First of all, Rich, everybody. Rich, big wild hand for Rich. Rich, everybody. Rich. In Milan, when you're working with Dylan, because I will not be there, and you'll be handling Tom for me. There is going to be that Irish. What is that Irish ring that people wear?
The cladder ring.
Yes, exactly, exactly. So Sadnov is going to give one of you that ring, either you or Dylan Radigan.
It's like the Lord of the Rings across here.
Do I have to? You're going to have to, Sadnov. It's about time you have to choose. Can't be on the fence forever.
Are you
Rich is looking good to you? What's your
You are cranky today. I tell you what, it's
I'm
easy
tired.
seeing.
I'll tell you something. Rich brings food. Dylan's not.
Rich did bring food. He brought chocolate.
Dylan's not a good food
I love
bringer.
chocolate.
But yeah, it's easy seeing who flew in coach.
Mm-hmm.
I'm saying, one of you is throwing out some aggression here.
American has now in business class, they have people that give you massages when you're just, like when you get a little tight.
Deservedly so.
Yeah.
If you're going to achieve that kind of standard, then
You can get one.
How's the hotel, Tony?
My hotel is nice, really nice. Yeah, really nice. I like it a lot. I'm in the Soho area there. Walked around a little bit. Haven't been there in quite some years, probably about a decade or so.
And so you and your wife are in one room, son in the other?
Not in London. In Paris, we will be.
This is going to be
in
great.
London, we couldn't get.
It's going to be great.
So your
Dad, shut up! I can't take it. Dad, it's the worst begging I've ever heard.
I'm begging.
Dad, you're embarrassing me.
Your 15-year-old, 16-year-old son has to share a room with you and your wife.
In Londden, yes, that's the way it worked out. Yes.
Torture.
Yes.
For who? For him?
Yeah. And the room, I'll be honest with you, it has it only has it's kind of a cool avant-garde hotel. It only has like a curtain for the shower and stuff. So you can push the curtain back and you can see in.
Oh, that poor kid.
Très romantique.
Not this time.
He's going to be traumatized.
Yeah.
Tell him I've got a spare room.
You know what? I'm not going to do to him what I did to my first, Nick, Batista, who's on the show quite often, had the same type of scenario. We had to share a room when I was married the first time, and Nick was about his age, a little bit younger, probably around 8 or 9. I made them sleep in the bathroom. I did. I made them sleep
in the bath.
It was a big bathroom, like this one's a big bathroom too. So I said, you'd be more comfortable in there.
There's options.
Yeah.
Oh my God.
But I'm going to be very careful what I say here, because I know that it's up to you gents what I end up doing on Friday night at this event that we're going to. So I haven't heard what my role is yet.
So far, this is the best coffee I've ever had. So thank you very much for bringing in the coffee all day.
I mean, you're
excellent.
So far, you're doing a great job. We're thinking you might make a really good MC.
Yeah, no, but seriously, that's what we were talking about. You're going to MC the place. Yeah.
I have MC'd at about 4 weddings so far, because I'm, as you already told everybody earlier, I am always the bridesmaid, never the bride. So 4 MCs so far. And
who MCs a wedding? You mean you
best man?
No, that's not what you're saying. You mean you've given the talk?
So you introduce all the speeches. Maybe this is just Scottish weddings.
That's Scottish weddings.
So yeah. It's more of a party at a Scottish wedding.
Yeah.
So you've done this before. So you see now
you've never married anybody, have you?
No.
No, I mean you've never given the
ceremony. No.
Yeah, no. So you're talking about MC,
Usually the father gives away the bride.
No. Usually it's like, it could be like religious, it could be a friend, it could be whatever. The father doesn't usually.
Religious?
Well, the father, you could have like a priest or whatever, a rabbi.
Priest gives away, the rabbi gives away. How many of you been with a priest or a rabbi giving? Hey, I got a nice one for you. This one, you're gonna love this one.
Right now, the father usually doesn't do the ceremony.
No, but the father walks down.
That's not what we're talking about.
This is when they say never meet your heroes, right?
That's not what we're talking about. We're talking about, he's saying he MCs a wedding. Who MCs a wedding in the U.S.?
The best man usually gets up and says something.
No. He's talking about MCing it. He'd be the guy that introduces the best man to give the speech. Listen.
So because of the time difference here, when you guys do the closing bell, then it's about 8:30 in London, and I'm sitting having a nice glass of wine, relaxing into the evening, watching it. And, you two are nice and civil with each other. Now the desk is only 1.5 meters apart. These two are ready to go. They are.
Did you notice? See, I backed off. I backed off because I'm tired. But did you notice how he said, well, the priest or the rabbi gives them away? Then he turned it all around to the MC. But I let it go, because his name's on the door. I let it go. God. You don't realize it, but I let it go.
Did you see it as you came in the London office? It's up there.
It better not be. You better take that down real soon.
So I've had the pleasure of interviewing not only Tony and Tom, but also Dr. Jim.
You poor bastard.
Your very own son, and also Scott Sheridan. So we've done a series of get to know the Tasty crew. Yeah. But I don't know who to interview next. Julia? I'm kind of scared of Julia, I must admit.
Oh, Julia would be a good interview. Vanetta would be a good
clever
interview.
For me, though.
Vanetta?
You haven't done Vanetta yet? She'd be a great.
She's not too clever.
Interview. You can do Beth. Beth from behind the scenes. What did he say?
I would not repeat it. Yeah, Beth. We need to get Beth
behind
on.
The scenes would be good. So maybe Garrett. Garrett's from production. He's been around. I think he was number 1.
No, you need fun people. Garrett's not. There's fun to interview.
Garrett, that's 14 years down the drain.
That's not fun to interview. They don't give up any dirt.
They would.
There's been some great dirt discs so far.
They will now.
You want to interview fun people at Tasty? You got to interview like Todd McCarthy on the trade desk.
Oh, Todd would be. Great.
There's a couple people.
Would be great.
Boring. You got to get fun people.
TP.
No. You scare too many people. TP you don't want to do.
So TP and I had about a 30-minute call one day, and he was teaching me, some of the Tasty platform before you came to London last time. And he says, Sosnoff and I, we've got a great respect for each other. Our respect goes as far as we both know we don't like being in the same room at the same time.
That's pretty true.
It's funny because So another original TP story. So I hired TP in 1999. He was at a firm that was building option analytical software. Do you remember that name of that firm back then? It was the firm that May Brothers started.
Yeah.
I forgot the name. Anyways, option. A lot of traders on the floor used it. It was professional software. It wasn't retail stuff. Right. And he was there, and I was like, I talked him into moving from New York back to Chicago, where he went to grad school at University of Chicago. So I talked him back to coming here. So TP and I wrote a lot of stuff together, like a lot of stuff. Mm-hmm. So at one point,
was it O'Connor?
No. About one point, we're about 2 years into the whole Thinkorswim building it, and we decided, because we had already written some software, we're cranking. We're going to write a book. Him and I are going to write a book, and we're like, but he's a very good writer. And I had good stories.
He's an excellent writer.
He's a good writer. I had good stories. I thought we're going to have so much fun writing a book. We decided, you know what? It's going to be hard for the two of us because neither of us have ever written a book before. So we're going to hire a professional ghostwriter.
Yeah.
And so we searched for this. We got the name of some guy from Omaha, Nebraska, or somewhere in Nebraska. Flew him to Chicago and said, for the next 2 weeks, we put him up in a hotel. We said, for the next 2 weeks, you're going to sit here and we're going to tell you all our stories. You're going to write the book. Okay.
True story.
We locked ourselves in a conference room. We were there for 12 hours. At the end of 12 hours, we couldn't get through the first story on the first page. Okay. Oh, no. And we told the guy, go, listen, you're going back to Omaha tonight. And this book is over. It's never going to happen. We are not getting to 250 pages. We can't even get to one.
Wow.
And it was over.
Brilliant.
But TP did have the highlight of his writing career when he was the ghostwriter for an article that I used to write every week for a publication that we would throw out there. But it was really, I would give TP the idea and he would write the whole thing. Because you can see I can't even speak English, nevertheless, right? So TP, I got to give him a shout out. He really did a great job.
Fantastic.
So, yeah.
I still owe him
it was the highlight of his writing career. He always told me that. He always thanked me for allowing him.
So my favorite TP story is we're sitting around one day. It's a Friday, or it's like a Thursday or whatever, and we're sitting in the office and we were just building platform and all this stuff. And TP doesn't talk a lot about his personal life or any of this kind of stuff
at all.
So he goes. I said, well, we'll finish this up on Monday. He goes, I might be a little late on Monday. All right, whatever. So he comes back Monday and I go, and he comes, this is like 3 or 4 days later, and he comes back. I go, where were you this weekend? Because he doesn't usually come in late. He goes, TV. I went away. I go, what do you mean you went away? You don't go away. He goes, I went away and I went to Hawaii. I go, you went to Hawaii for like 4 days? You went to Hawaii on a Thursday, came back on a Monday? I go, why the hell did you go to Hawaii? I got married. I'm like,
oh, no way.
Do you
think he was dating anyone?
Didn't even know he had a girlfriend. Spent every minute of every day with him. Had no idea.
And no invites for you guys.
No.
I mean, he knows that. He knows, right? He knows not to do that.
He knows better than that.
We don't like to go to weddings.
Traders should never invite other traders to weddings. It's horrible.
No.
I did see the pictures of Beth's wedding, so you guys
went to that. Yeah, went to that.
Yeah, I had to go to Beth's wedding.
I think
had to go.
That was the picture that drew an F-bomb out of you, wasn't it? On air.
We did show it on air. Yeah, we showed it on air. Yeah. Beth's wedding was fun though. You had a good time.
It looked a lot of fun.
Yeah.
Yeah, you had a good time at Beth's wedding.
Tom hates weddings.
I mean, as good a time as you could have at a wedding. Yeah, I'm not a good wedding person. Weddings, bar mitzvahs. I mean,
Francis, who does the chat room, is in the picture.
Yeah, I mean, listen, it's still a wedding. Weddings are weddings.
Yeah, you're gonna have a few years to wait till you get the invite to mine, I think.
You?
It might be in Chicago. Who knows?
That's right.
The one thing you and Dylan have in common is
no, Dylan's been more inclined to.
No, Dylan's inclined to get married, but not stay married.
Right.
Like.
Okay. It's too expensive for a Scotsman.
Yeah, well, Dylan has this unique ability to find people that either don't speak the same language and don't live in the same country and can't travel across borders. So he's worked it out. Dylan's protected himself quite well. He's gonna kill me, Pete. He's gonna kill me.
The other story that came out was the.
Hold on, I got one more Dylan story because we're on the subject of marriage. First time Dylan gets married, we're sitting around and he said the same thing. He goes, you know what I did this weekend? I go, no, I have no idea. He goes, I got married. And we're like, you got married? I didn't even know you were dating somebody. Just met her. She's the best, blah, 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 blah,
Changed
blah.
my life.
Changed my life. Greatest thing ever. I go, how long have you known her? He goes, like a couple weeks, whatever. He goes, the whole thing. So we don't say a word, right? I mean, congratulations. I give you a week. I give you a month before it's over, whatever. But still, he goes, so we're on the road together. Remember, we're on the road together.
I remember that.
And so he just got married. So he decides he's going to take her on the road with us.
Right.
Because we were in Texas doing a show.
And at the time, we had a no spouse.
We had a no spouse rule. But
yeah.
we never take, he breaking all the rules this week. Anyway, so there's no spouses. It's Liz, Jenny, me, Tony, we're on the road with Dylan. And this woman, this new wife who shows up there. We were all curious to see who would marry Dylan. She didn't speak a word of English. Okay. He didn't speak a word of the language, whatever
Whatever it was. You didn't even find out.
They couldn't say a word to each other. We're like, oh, this makes sense now.
They spoke the language of love.
This makes sense.
Yes.
Oh, dear.
Next month, where is she? Oh, yeah, it didn't quite work out.
So Dylan does our London show every Wednesday morning, and it's a barrel of laughs. So I can't wait to meet him. I haven't met him in person. First time meeting Big Bat here in person.
Mm-hmm. No,
so it's face to face.
Okay, yeah, okay.
Yeah, Dylan does the show. Yeah, Dylan. Yeah, Milan's going to be great. Yeah. Yep, Milan is going to be just awesome.
And we're flying over Saturday. So what have you guys got in store tomorrow? Because Royal Ascot's on, which of course is where the King's horse racing. So I did wonder if you're off to that.
I didn't know anything about it. I am not.
Where's that?
It's only about an hour outside London.
Oh, that's too much work for me. Yeah. I am doing a TV show in the morning. And I'm doing a couple interviews during the day.
Right.
They don't.
I have to carry your bag again.
They don't get a lot of celebrities over here,
Especially ones with those stories to tell.
Yeah, right. Yeah. So we got to do some stuff, but it's gonna be fun. I mean, Friday's gonna be great. If anybody hasn't signed up yet, you can still sign up at tastylive.com/events.
Got a live trading show for you Friday. Got to think about what we're going to.
Yeah. tastylive.com/events for Friday night and tastylive.com/events for Monday night in Milan at Earth with an H. Have you been to this place?
No.
Oh,
never. No. I've heard good things.
And we'll be at Fabrique in Milan.
Beer? Did I hear beer being served?
Oh, yeah, we serve beer.
So the day that the tariffs came off and we had that huge rally, was it a 300-point rally, 400-point rally?
On the S&P, sure.
So on our London show in the morning, I had bought some 0 DT call options.
Sweet.
On the Spiders. But I said, if we close at 5,400 tonight, I'll buy you all drinks to all the viewers, right? Of course, they were never going to close at 5,400, right? But it was something like 100 times payoff. So, of course, next day I come in and feeling all, clever.
Puppy chested.
Sure. I'd said this thing. And so they're holding me to it. So, so I've invited them all along on Friday night and said that.
Look at you, man.
The bill
for you. Good for you. That's great.
Well, nice thing, when we did the show back in November, when we did it at smaller venues because we were doing some small cities.
I wasn't there.
We
weren't there, so the crowds weren't coming.
So the screens weren't as clear. They were digital, but they weren't as clear. They were harder to read. Mm-hmm. So we decided we'll serve as much alcohol as we can before, so people think it's them, not us. And it was a strategy that kind of worked.
So you're gonna stay with it. You rolling up some puts on your 0 day now?
I didn't, and I missed it. And Spoos rallied up 30.
They are up 30 handles. NASDAQ up 112. Russell up 21.
Yeah,
Dow up
I completely missed
volatility, making me look like a big liar. Down 80 cents.
I told you volatility was going to get killed today, but I missed the
making the necessary adjustments. And yeah, the 0 day, the zero trade, it's not going to work when you rally 30 handles. Not yet. Hasn't worked yet. It's a long day. Show some intestinal fortitude, Sadno. All right, you ready to take a quick 90-second break? We're going to keep you in the studio, right?
I think we got some phone calls.
Oh, good. We'll bring the real talent, Angelina, in also.
Hey, Beth, light up the phone lines. Let's get everybody to
855-238-2789 or 855-BE-TASTY. The number will be below in just a second. Please give us a buzz. We'd love to hear from you. I got 4 or 5 lines open. Light them up. Besides that, we'll take all your questions, comments, concerns, features you'd like to see on the platform. Let us know. Everything is open book. Go ahead. You want to say something?
Yeah, or jokes about the Brits.
No, never. Actually, Sadnov said I'm not allowed to, Vanetta said I'm not allowed to speak in a British accent.
Oh, because you know why? Here's the problem. His British accent
sounds just like my Italian accent.
Italian is Indian. Whatever you name it.
Japanese,
every
Taiwanese.
He is the exact same. You saw Oliver when he was young, and every single accent is the same.
Please, sir, can I have some more?
There is.
We'll take a quick 90-second break. Give us a buzz. 855-238-2789 or 855-BE-TASTY. We'll be back in 90 seconds. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show. I don't want you to buy me a Rico
Well,
Benny's.
that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's. I was going there when you were pooping yellow. Oh my God. I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You gotta stop.
No, you know that's true. Sadlov, you know that's true.
My God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken Parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom staying school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, well, thank you very much.
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She probably needed somebody to reach the top shelf to get something
and she picked Jim. There was nobody else in the store.
Exactly.
I mean, I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Damn.
Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend, and we're joined by Angie and Rich. Thank you so much for coming in the
look how
studio.
good that looks on the screen. I like it.
Very nice.
Yeah, I like it.
Crackerjack production team.
Yeah.
Yeah. We're here kind of making sure that we're kind of far apart in case these two get
No. Never. Tom's not.
You guys ever fight on air
like that?
we never fight in there, do we?
Oh, you guys are like
We've had a debate. We had a debate.
You debate.
Yeah.
Or she just winds me up.
I do. Yeah.
On purpose.
It's quite easy actually.
Yeah.
Tell him that his Links Africa is running out.
So that's Axe for you guys.
Oh, gotcha.
Yeah.
Vanessa said your 15-year-old son uses it. I still use it now.
Yeah.
Tell him he's got the wrong time on an economic print.
Mm-hmm. The one time they changed PCE inflation from 1:30 from 8:30 till 10 a.m.
They changed the time.
They changed the time.
With the announcement. Mm-hmm.
Then, I swore, I bet my whole life that, no, it's definitely 8:30. PC's always at 8:30. What are you talking about?
Mm-hmm.
And they went, no.
Mm-hmm. You got it wrong?
Yeah.
It happens. Don't worry. Tom gets corrected all day long on the show. It's fine. You'll be fine. Hey, 855-238-2789 or 855-BE-TASTY. That's the phone number below. I'd love to see the UK and the whole nation here represent by some phone calls. Of course, we'd love to hear from you from the U.S. and everywhere else.
No questions off limit anywhere in the world.
No questions off limit. No questions off limit. Give us a buzz. Still got 4 or 5 lines open. Love to hear from you. Sadly, you got a little bit of a rally here in the market. We were just talking about a moment ago. Even the S&Ps are up just under 30, I believe, right? 32. Sorry, just over 30. I apologize.
Man, you don't have a big screen?
I don't have a big screen. My eyes are tired.
Yeah. I think you guys must really miss your screens in Chicago because yours and Tom has this rule: no one sits at your desk when you're not there. No one touches your screen.
Nobody touches my stuff.
That's a bit too small for you.
What? Yeah, it's a little small. To do the show, it's a little small.
Yeah.
But I got LASIK a couple years ago, so my eyesight's perfect.
Ah. Yeah. And you have not. Yeah. I still remember.
You got LASIK on one eye, didn't you? Did you do both eyes? Oh, you did both of them, but you only paid for one, right?
No. What would I pay for one eye?
Buy one, get one free.
Yeah.
It didn't work. Yeah. Obviously, it didn't work.
I remember Scott saying he used your screens and then realized that he should never have been in the car with you driving because he's like, oh my God, if you can't see.
Horrible driver.
Oh my God. I'm probably...
Are you a bad driver?
No.
He's a horrible driver.
When I was a kid, I drove a truck in New York City, as most people know. And no, I'm an exceptional driver. I could be an Uber driver if I had to be.
Is this why you sold your Tesla?
No, I sold my Tesla because I hate Elon Musk. I didn't sell my Tesla.
You loved him, now you hate him.
I loved him a long time ago. Absolutely hate him now. You'll never see me buy another Tesla.
Oh, you'll change your mind.
Never in a million years.
Mm-hmm.
Okay. Nope. I am, once I make up my mind, done.
Are you recording this?
Let's go to, I'm not going to support him. I mean, not him and that's silly. Donnie and Doreen, Black Shoals, Florida. You better have a math equation for me. What's up?
These are your boys.
These are my boys?
Sure.
Florida.
Hello.
Donnie, Doreen. Oh, what's up, guys?
Hello, it's Donnie and Doreen calling in from Black Shoals, Florida. I cannot believe
I was wondering what happened. You haven't heard from you in a while.
Well, we've been busy. We got the new double wide, because we've done so good in Tasty. We just
There you
love
go.
watching
Good. We're
Andy and Rich.
downsizing, huh? We're downsizing.
It's been really early over there. What time is it in Florida?
Oh,
Well,
no.
in Black
Florida's only 5
Shoals-
hours difference.
Black Shoals, we got a little saying down here that says we got the formula for happiness in Black Shoals. But most importantly, I am so tickled pink to be talking to you folks over there in the UK. All I know about the European folks is what I read in My Fair Lady and Mary Poppins. And we sure would appreciate if we could hear you folks say the rain in Spain stays mainly in the plain.
Okay. Do you want me to go first?
Absolutely.
The rain in Spain falls mainly on the plain. How's that,
you just
Doreen
made my
and
day.
Donnie?
Donnie, I'll give you the Scottish version because I'm actually originally from north of the border. The rain in Spain falls mainly on the plain.
There you go.
Oh my God, Doreen just fainted. Doreen just fainted. Thanks a lot. You guys have a great show.
Bring out the whiskey.
Thank you, brother. Appreciate it. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. Love to hear from you. Still got 4 or 5 lines open. Side note, even the S&Ps are up 34. NASDAQ's up 120 and change. Oil's actually down $1.70 or so. Ivy rank is down to 89 as foretold. I told you if oil goes lower, Ivy rank is going to go lower.
Oh my God, you're gifted.
It's moved by almost
Gifted.
20 handles.
You're gifted.
Can I get
Prize.
shout out? Something? Is there anything?
You can get anything you want. Let's take a look at crude oil. Oh, yeah, we got...
Down $1.56, trading near its lows.
Yeah. Question, are we going to see some volatility on Friday afternoon when we're live on stage?
I hope so.
Yeah.
Going into off.
Yeah, but then it's a holiday on Thursday.
Yes, you have a holiday tomorrow in the
It's
US.
kind of tough around lunchtime. I will tell you that much.
Yeah.
It's kind of tough around lunchtime. So, but we'll see. We'll make it happen.
Yeah, but definitely we'll make it happen. I would think that you're going to get some movement. I don't know if you're going to get that in volatility though. Like the market, you might have some. If we get an up move, obviously volatility is going to get creamed. But if you get a downside going into after the holiday, I would even say volatility contracts a little bit there. I think volatility's got to contract into the weekend a little bit.
Yeah, it won't matter for what we want to do.
Yeah.
It won't matter.
For the show you made.
Have you got a few trades in mind?
40.
Nice.
Yeah. But we're going to tweak them a little bit tomorrow.
Okay.
So, yeah.
Because the ones last year worked really well.
I know. The best
Long
one
Euro.
was long Boeing.
Yeah.
And the contrarian Neo as well. You said it had fallen too far, and the Alibaba.
Oh, yeah.
Looking good.
All those worked. Yeah. All the contrarian plays from last November worked, but it took too long. Like it wasn't overnight. It took a month. Yeah.
It's still going.
Yeah,
Kind of like this SPX trade you have on. It's going to take a little bit longer than you anticipated.
That's your fault. I mean, I didn't like that trade to start with. I only like winning trades, Tony. Losing trades are something that
I'm familiar with.
Like his FX one today from the ATM. That one's going to take a long time.
That's right. That is right.
I mean, you'd think he's like a world traveler. Like, I mean, he's been all over the place, and he's
But he gets stopped at control. Gets stopped at every point.
I got stopped at the airport, but I got the money because my wife asked me to do it. It's happy wife, happy life. You know this better than anybody, Saz.
Because I'm going to Miami some point this year, so I could have given you dollars.
I'll give you cash right now.
Yeah,
We get that's like a crypto exchange. That's like we're doing.
OTC.
Yeah. Exactly.
Cut out the middle
I like it.
if you're going to go to Miami, now's the time to go.
Yeah,
because the British pound is rich.
Yeah,
relative to the U.S. dollar. Last time we were here, the British pound was like 112, 113.
Wow,
now it's like 135. I mean, it's a huge difference. Yeah,
and to stay in the Fontainebleau for that.
Yeah.
I've been to Fontainebleau. You like it? It's nice. They just redid it. Cocoa Beach, Florida. Mark the Trainer. What's up, my man?
Oh, guys, how you doing?
Doing good.
Hey.
Hey,
Oh
Mark.
my! Hey,
What's up?
now we're classing up the show.
Easy, Mark.
No, I'm just saying.
How's it going? What are you up to, Mark?
He's walking on the beach
You
right now
might have
looking
met
for
my
quarters.
Angelina. You might have met my son. My son is Quentin. I don't know if you met him when you went to Chicago or not.
We did, and he was so much fun. We went to the SIBO together. Please send him my regards.
Okay. Wait.
It was fabulous.
The apple falls very far.
Hey, Tony,
all I can tell you.
it must be nice.
The apple falls in a different state from this tree. All right.
How is he? All good?
I wouldn't know. It's not like Tony, who works with his son, who he gets to see every day. I get that phone call once a week. You know, Tony, uphill both ways in the snow. You give your life to your kid, and you end up getting a phone call once a week, man. I don't know.
Once a week ain't bad. I mean, from a distance,
Yeah, he seemed very happy when I.
Yeah, you did good. You did good. He did good.
Seemed very happy.
Yep.
Now, if you
And
guys
he said
ever
he'd
come
like to be
here,
on the other side of the glass.
well, I'll tell you what. We'll see how he does. Obviously, you guys are a little different than Tom and Tony, so I'll push them towards that end. Oh, since you got Tom and Tony over there, why don't you keep them so we can bring up these new tasty trade guys and really make the show classy?
Definitely a consideration.
Be careful what you ask for. You're gonna get this. You're gonna get that all next week. So yeah, you'll definitely have that for sure.
Careful what you wish for. All right, Mark, ready to go.
Okay, you guys be well, and great show, great meeting you guys. Hope
Thanks,
to
man.
see
Thanks,
you ever come this side.
Thanks.
Bye.
Cheers, Mark. Enjoy the beach.
Cheers.
Beaumont, Texas. I got Peanut.
One of those things, like
the metal detector.
metal detector.
One of those things.
I got a
things. One of those things. College educated.
So I really
Hey, Peanut.
weekly.
What's up, Peanut?
Oh wait. Nothing much. So I really trade weeklies and stuff. I'm getting in. I think I did a segment on this, but I don't know for sure. I think it might be in the archives. But on the weeklies, don't y'all be trying to roll them on Wednesday or Thursday? You don't want to let them.
If you're talking about rolling weeklies.
Yes, sir.
Yeah. You don't want to hold it to. You don't want to wait to the end. So if it's a weekly option, you want to roll at the middle of the week. It's the same logic that applies to 45 days, 21 days. It's the same thing, if it's 5 days, 2.5 days.
Okay.
Huh?
That's really my question.
5 days,
and
2.5 days.
You wouldn't be selling, not selling, but you wouldn't be selling into like a meeting because markets swing too much. I mean, the premium is good, but you wouldn't want to sell into a meeting or a big, decision with it.
That's up to you.
Remember, volatility is going to expand. Listen, volatility expands for a reason, right? It just doesn't do it because it's a Monday or the day ends in a Y. I mean, it expands because there's some known, like an announcement or something like that. I prefer to stay away from earnings announcements, but I don't shy away from Fed announcements or anything else like that, especially in indices. You got a Fed announcement in an SPY, a Qs, or an Apple. Not going to affect it as much. So for me, I don't shy away from that. Tom?
No.
Okay.
I stay with the position. I think you're good, Peanut.
Yeah. Okay. Thank you. That's
you
all.
got it, man.
All right, man.
Good luck
Take
to
care.
you. Yep, go ahead. Yep, you're welcome. Thanks. Welcome. 855-238-2789 or 855-BTASTY. That's phone number. Call. Give us a buzz. I know we have a little bit of a lag here in the connection, so I apologize. You have a smile on your face. Why? What do you want to say?
No smile.
Frank's wondering if you've had any crumpets yet.
Ooh, have I ever
had is airline food right now.
No, but are you asking if I've ever had a crumpet?
No, I think it's on this trip he's asking.
No, we just got here.
Yeah.
So no, we have not had a crumpet yet.
I thought maybe Business Lounge at Heathrow would have taken you in.
They might, but we weren't there yet because we were coming in. So you don't.
Yeah.
No. No, that's on the way out.
While other people were getting their bags, I thought you might get looked after especially well.
Well, when other people were getting their bags,
we also were getting our bags.
Yeah,
We had to sit there and
you're waiting for your bag.
Yes.
Yeah, it took about
my wife and my kids. Don't put all the blame on me. Yeah.
I'm very disappointed the two of you didn't do a second series of one of the funniest videos you've done recently. When a viewer asked, "Do you worry about your trades and getting hacked when you're on a plane?"
No.
And then you guys said, "No, we're worried about getting."
The hacker would trade better than him on the plane. He's the only person that hopes somebody hacks in there and just starts pushing buttons. Wow, look at this guy.
I've never seen or heard of that. Now I have had I have had people's computers get compromised from someplace else.
Or like Rich looking at your passport.
Something like that or anything else like that, but I have
yet to see one person on an airplane
know what you were doing?
Have any idea. I mean, you can see anything you want, but no idea what we're doing.
Mm-hmm.
Yeah.
People have asked, what is that ding? I don't mean to, I meant to turn it down, but I didn't, but that's it.
Yeah. Yes. We were getting a few looks at the train from Manchester to London, weren't we?
Oh, yeah. We did planes, trains, and automobiles last year.
Yeah, stuck in that taxi for about 2.5 hours for a 45-minute journey.
I came 3 miles and it was 35 minutes.
Well, welcome to London.
It's really, really busy. Yeah.
I didn't believe it when the Uber said, give you the time. I mean, I saw it was 3 miles.
Well, Chicago's kind of like that sometimes, but not as bad as London. Nothing's as bad as London. The weird thing about London is every street's 20 miles an hour speed limit.
It's crazy.
And it's crazy. So you can't do anything. There's nothing.
The Uber driver said they're talking about going to all autonomous cars and getting rid of the Ubers. I don't know how you're going to be able to do it in your streets with
the black cabs in the city. The black cabs are the worst.
Oh, I like that black cabs.
I'll tell you why.
Why do you hate them?
First of all, I like the space in them, okay? Here's what I hate.
All right.
Here's what I hate.
Okay.
They roll down the window and they ask you where you're going.
Yes.
Like when I was getting a cab to come here just to the show, the guy rolls down. I go, where are you going? I told him the address. He goes, I don't really think. He goes, I was going to go home after this, so I don't really want to go there. And then he goes, and then he checks his time, how long exactly, and he goes, all right, I'll take you. Favor.
Yeah.
I'm like, that drives me crazy. They won't let you in the cab until they roll down the window and ask you where you're going.
Yeah.
That's ridiculous.
Yeah.
Now, autonomous vehicles, they don't do that.
Yeah, but how are they going to do it in these streets? These streets are too narrow. They got bicycles everywhere. Like even the ones that are just like storage bicycles, like they're like
it's gonna be years off.
Yeah.
Got to be.
Totally.
Not going to be soon.
Said 2026 is what he was telling me. Guy was an Uber driver for 6 years.
Good luck with that. I mean, if you think this is bad, like country lanes, no, I mean,
I don't know how you can do it. I don't know.
There are some weird streets, including the street that this office is on. It's come a little, one way, narrow, all this kind of stuff.
Yeah.
The 20-mile-an-hour thing is not to slow people down, right?
I don't know what it is.
It's to get people like me. I've had to pay so many fines, and all my friends as well.
So it's all about collecting money?
Yes, it's a tax. It's all about, and some roads now it's like you cannot drive between 4 and 4:30 p.m. But by the time you see that sign, you've driven into the zone, into that one.
And they don't really actually. It's all electronic.
Yes.
They just send you the ticket.
Yeah.
I hate that.
Yeah, it's so bad.
Nobody likes that, Thomas. Nobody. You're not allowed. Nobody likes that. No.
We only have one.
Every time I go to
we only have
him at
one
his house, I get
in Chicago. It's near my house.
Yeah.
And every time I
get sneaked every time.
Every time. Every time.
Well, hopefully we can get you to this restaurant tomorrow night.
Oh, you will for sure. There's no doubt about it. I'll be there for sure. And I'll be with my family, so you get to meet them too. You can see all the horrible things Sadnov has been saying about them are untrue.
Never said anything bad about them.
And this is your favorite restaurant? Is Julia's favorite restaurant in London?
No, I've only been there once, but I'm not the one we're going to.
Yeah.
Who picked it?
The time I went, somebody recommended it to me that was one of our viewers. Somebody that lived in London recommended it to me.
Yeah.
So I went there. It was great.
And who's taking you to that posh one today, Palomar?
A buddy.
It's really expensive. Search it up and instantly. I saw lobsters. Are you invited?
No. But I'm staying right there, so I'm just going to show up.
Crash it.
I have a buddy that lives in London, so.
Hey, what happens in London stays in London, Southnuff. Hey, I got to take a quick 90-second break, Southnuff. You do you. It's okay. We're going to take a quick 90-second break. When we come back, we got Liz and Jenny. You know where they are. You actually, you've been to
I haven't been yet.
Oh, you haven't been. You've been to the floor of the SIBO, right?
Amazing, yeah.
Yeah, awesome. Well, you got to try it too. That's where we all started our careers. But they broadcast right from the floor of the SIBO, so you want to check that out right now. Where options really started. Check it out. Back in 90 seconds. Take the live.
Peace.
Thank you, guys.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for cases where all I knew what to do was
right together, spin it around. Yup. And you want to clap. And then like strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is
Oh, he's got the walk down. He's got it down.
Perfect. And you got the bed. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got
we didn't, wait a minute. So
when I got in this business,
we used to open it 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette to the left of me who's been holding down the fort for 2 days while I've been off partying in Kentucky is Miss Jenny Andrews.
Welcome back, Liz. Welcome back. Speaking of partying in Kentucky, did you do the Bourbon Trail?
No, we did not do the Bourbon Trail. I'm pretty sure I'm not going to be a bourbon drinker.
How was orientation?
It was awesome. It's a lot. I feel like I'm exhausted, but it was a lot.
Yeah, well, but now you've been there. You were there for a couple days. You feel good about where you're going to take JD and leave him.
Love the school. Love where I'm going to leave him. Still not going to handle it very well.
Oh, but you know, he's going to be in a good place.
He will.
He's going to be in a good place.
Yeah, all good things. All good things. Tell me about the 2 days that I missed. I heard we had Glenn Ross on yesterday with FX.
Yeah. So yesterday we had Glenn from Tasty FX on, which he was amazing. There's so much to it. The hour went by like that, and he's going to come on next Thursday. For anyone who was watching yesterday, the show with Glenn and myself, he's going to be on next Thursday, full hour, because there's a lot to it.
There is a lot to it, and we're learning as we go. So there's a real lot to it. But
yeah,
so
I'll show
take
you
a deep dive. We're at the SIBO today, so we're going to use SPX. Let's deep dive into it on Friday because we're off tomorrow.
Okay. So we are off tomorrow. I just keep hearing my son in my head. He is very upset about Juneteenth because he's in summer school and he had to take a test by Thursday. So when he went to sign up to take his test.
Oh, it's today instead of tomorrow?
Yeah. So yesterday he's like, I'm going to go sign up for my time slot for Thursday to take the test. Today was the deadline because Juneteenth school was closed. He didn't realize it. So he was not a happy camper when he left early this morning to go take his test.
Well, I'll tell you, it was the exact opposite for me because I forgot we were off tomorrow until my husband's like, are you off tomorrow? I was like, I am.
All right, I will. So we are at the SIBO. We have a lot going on. We're taking live tweets. If you want to send us a tweet, include the hashtag LIZJNY.
Hey, the boys did a great job. They are broadcasting live from London. Angeline, who is our London correspondent, for lack of a better term, posted something on Twitter. It was cute. They did a great job live from there today.
Yeah, so that's fun.
They're all going out drinking right now.
Are they?
What time is it there?
It's like 6 or 5 or 5. Yeah, 5 p.m.
It's 5 o'clock somewhere.
It's 5 o'clock in London. We have a great study from Jacob on the zero DTEs. The zero DTEs are hot, hot, hot. I see them everywhere.
Fuego.
I go on to whatever, it doesn't matter. TikTok, Facebook, Instagram, wherever I go, I'm getting zero DTE SPX info.
Well, the more you say it into your devices, the more info.
Zero DTE SPX. It's everywhere. Anything I open on my phone, a zero DTE SPX ad pops up.
It is.
Yeah.
It's crazy.
And it's not an ad from the SIBO. It's not an ad from us. It's like they're ads from other people who are, trying to show people how to make money using the zero DTEs.
Yeah, it's everywhere. Okay, so considering we have such a busy show today, Jenny, let's do the trade first. What do you think?
Oh, sure. Forgot about it. Forgot about it. Haven't done it in days. With the guests on, I haven't been doing it.
And we had TP. I want to say thank you to Gary and thank you to TP.
Yeah.
I called him Gary. Glenn.
Oh,
thank you to Glenn. Thank you to Glenn. Thank you to TP for filling in.
Poor Glenn.
Next week, do you have the same duo?
Next week, I have Glenn on Thursday and TP on Friday. Yeah. So here's the story. Glenn came on our show one day, and I said, every time I hear the name Glenn, I think of Glenn Glenn Ross. Then I accidentally called him Glenn. Gary. Yesterday, I promised him I would never call him Gary. I'd only call him Glenn, and you just called him Gary.
Just called him Gary. Sorry, Glenn. Sorry.
But he was great. Absolutely fantastic.
Yeah, I can't wait. I mean, I love having that on the platform. It's learning something new. Let's put the trade on. Okay, let's do order of operations. Let's put the SPX trade on. Then I want to see the FX positions you put on. Then we're going to Jacob study. Then we'll manage some things because we are off tomorrow because there is a big decision today, like 2 o'clock.
Yeah, there's a Fed announcement coming out 2 o'clock Eastern time, 1 o'clock our time. So I went into SPX to put this new trade on. I see 2 days from now we have a position. This is our upside broken butterfly, which is all out of the money. After today, who knows? We could be right smack in the middle of it.
But we're going to leave this. We said
we're going to leave it.
We're going to leave it. We're going to leave it. So
we're going to leave it. We're going to leave it. We're going to leave it. But today we're going to put on the.
Wait, that's not up any money.
We have been putting on just the at the money. What, $10 wide? I've refreshed my memory. Yeah.
Yeah, the at the money $10 wide.
What is this? Verify? I got it.
Just get out of it. There you go. At the money $10 wide.
Okay.
Yeah, you're getting $9 for it. Hit send.
How? Because that, you know what? That's because of the announcement. There's no way we're getting out of this today.
Dude, you're risking $1. You're risking 95 cents. Do it.
All right, $9. We're only risking $1. I mean, this could be just like taking $100 and lighting on fire, but who knows?
But every day we put this on. Not every day, but it's been pretty good. And all you need to do is to bounce back and forth between here.
The only reason we're saying, what are the chances? What are the chances we're going to be up $32 after the announcement? I'm not sure this will come off before the announcement.
Hey, these have been coming off at 12:40. I don't know if it's going to, and that's why we're getting so much for it. We put it in. You're not filled yet, though, right?
No, not filled yet. Not filled yet. Let me take a look. SPX.
Where's the VIX?
And so
the VIX is down. The VIX is only 19.80.
But
the reason I'm saying that is because this exact trade with these exact VIX parameters is in Jacob's study.
Oh, I can't wait to see it. Very exciting news.
$10 wide iron flies with these exact VIX parameters. I don't know.
All right, everyone watch in the background. There goes our celebrity.
Oh, there he is.
Oh, there he goes. There he goes.
Local celebrity. Local celebrity.
Okay, so I'm working it $9. I don't know if it's going to fill at $9.
No,
and I don't want to. It's really bouncing around. We'll see. Oh, and $8.90.
Great. The only risk in that is $1.10.
Yeah, sure. I'll put the GTC. Do you want me to lower the bar and take less?
Than 10%?
Oh, so $8.90. We'll get $89. Is 10%. 10%.
Jenny, I've been gone for 2 days. I want you to do whatever you want to. I'm not gonna give you any sass or lash out at you for anything that you do. If you want to put in 5%, you put in 5%.
10%. It's working. I know the commission's in and out. We better look for 10%. It's working. We'll see. We'll see what happens. $8.90 was a lot to get on that trade.
It was a lot.
So the other trade we have, the 2-day upside broken butterfly, we're not doing anything with it. We're gonna let the cards. What would we say? Let the cards fall where they may, or see where the
wind takes us.
All right. So SPX trade is on.
Show me FX. Show me your FX trade.
Oh, yeah, that's bringing flashbacks of when our first time on the road. And I hardly say on the road.
We were at a local library.
Yes. When we first started, someone asked us if we
15 years ago, we went to a local library.
Yeah. 15 years ago, a viewer asked us, would we come to meet their trading group and speak to their trading group at a local library. Now, we hadn't been on air maybe a few months.
Maybe a month.
It wasn't long. Well, I only say this because we started in December, and I know when we did the local library event, it was warm enough outside for us to go out, sit outside, and have a drink after it.
I think it could have been we could have been a polar vortex.
So we go to this local library, and we're talking to people, answering questions, whatever. And some guy just starts screaming out of the crowd, right?
Yeah, he goes, show us your real P&L.
I want to see your real P&L.
Uh-oh.
Oh, man.
I need some... What does that mean?
What's going on?
The way a guy laughs.
Oh, they're making fun of the way...
A guy laughs like that, they're making fun.
Funny.
Thank you. Thank you for the local stuff.
Funny. They're making fun of someone. They make fun of a lot of people around here. So.
It's pretty standard operating procedure.
Yeah.
Okay.
So anyway, you want me to show you my real FX?
I need to see the real FX. Press the button. I want to see your FX.
You want to see my real P&L and my real FX? All right, I'm going to go to TCFX. We have 3 different positions on.
Ooh.
I'm going to go to my positions. Now,
I would like you to say for the record, Jenny, I can't see if we're up or down.
oh, okay, so I'm going to show you right here. So funds originally deposited $1,500. Profit or loss, we're down $48.75.
Not bad.
Not terrible. Our equity, $14.50. That shows we're down $50. What are we down in?
We're using 50% of our equity. Well played on day one.
That's what I did, 50%. Okay, so we have this Euro USD trade, which is up $18. So I don't know what to think about that. We just leave it for now, right?
Yeah.
Then on our U.S. dollar shekel trade, we are down $57.
Well, that's pretty. You went into you probably the highest volatility on the board with the shekels.
You could see if I go to the watch list and go down to, and now I wish. Well, I'll scroll down and find it here.
And we can talk more in depth about this on Friday. Just
yeah.
because I'd like to be in front of.
Yeah, but just to take a look at, here we have USD ILS. And if you take a look at the chart, we put on a trade yesterday thinking we might go, bounce back up. And it hasn't, it's gone down. So what I wanted to look at to see, all right, we're down like $50 in this trade.
Yeah.
And so I wanted to look at the bar. How big of a move is this to be out $50 in the trade? So it's a pretty decent sized bar, and we're only out $50. So it doesn't seem that bad.
No, it's not that bad.
That's what I wanted to look at. How big of a move is costing us about $50?
It's a pretty big move.
It's a pretty big move. So if we just saw like a tiny bar and we were out $50, then I might say, maybe our position is too big.
And we're going to dive deep into this. None of those seem too crazy out of control.
No.
So that's good.
No. So I think for now we leave our positions. There's nothing that's saying to me like close this for a win or take a loss. I think we just leave them all.
I agree.
Okay.
Okay, so we saw those. We'll take a deeper dive into those on Friday. When we can see our screens. Nothing else needs to be really done. You have the GTC in. We're up $40 already.
No. We're up money on our other trade.
Oh, I was like, wow.
No. Yeah.
That vol really came in.
No, we're actually up money on our little Brooklyn butterfly, just a little bit.
Okay. I'm going to guess $25.
Yeah, exactly. Okay. Right, exactly. So just disregard that SPX. While you were gone, I did take off a couple trades. I can go back and take a look.
Yeah, let's see.
Rocket, we had a zebra. It was almost out of time. It was ending this week, and it was up. Rocket had gone up, so I closed that. Hims had a big run up too. We had short puts in there. I closed those.
Okay.
And we could take a look.
We can jump back into those at a later date. I'm not dying to get into.
You're not dying to get back into.
And it's up again.
I guess it's not a huge run up, but between the last few days, our puts were maybe 70%.
Oh, that's great.
Yeah, and then Rocket, the zebra, did pretty well. Rocket had, I don't know, the zebra was doing okay, so I took it off.
Perfect. Okay. Now, in the essence of time, let's jump into, just because it is 10:13, we will be taking live tweets as well. Let's jump into Jacob study.
Sure. Here we go.
Profit, it's a lot.
You know what? I'm going to be surprised I didn't even look at it.
I know you downloaded. There's a lot of information in here.
Jacob's study comes at like middle of the night, and I did not look at it.
I looked at it this morning. So let's go through this. I'll talk her through everything.
Profit targets for 0DTs by IVR. The novelty of active, liquid, 0DT option markets is giving us all a chance to learn how best to trade them together. Together.
Hold on, I gotta find it. I don't know why I don't have it up.
Well, I'll read it to you, Liz. I'll read it to you.
Okay, there we go.
Okay, you got it?
Volatility is incredibly central to options trading and a natural metric to look for determining what to trade and how to trade
it. When credits are higher, should we be satisfied with keeping smaller portions of them?
See, I'm telling you, it's in there. That's why I was like, I saw this. Let's look at the data and see how best to refine our profit taking. So now go to the first slide. Now I'm going to kind of explain a couple things here. Oh,
yeah, sure. Here's the study. Using 2 years of data in 0DT SPX options collected every 10 minutes.
Yes. I mean, these studies are pretty common. Considered selling 0DT premium at 9 a.m., give or take 5 minutes, every day, using a $20 wide iron condors with it's short 40 or 20 delta strikes, or a $10 wide iron
Which
fly.
is that's what we've been looking at. Those
Yes.
are the trades we've been looking at recently.
Yes.
Okay, examine closing winners at 10%, 20%, and 25% of max profit. Losers were allowed to expire.
Okay, and then the results, that's what I'm saying. It's a lot of information here. They
Okay.
They filtered the SPX IVR market at open. So it's IVRs. So they're giving you IVR of SPX. It's IVR, right, or VIX? We'll have to look at this.
Filtered result by SPX IVR.
I thought it was VIX when you look at that thing, but it's...
Well, it's all, if they're, the SPX volatility, the VIX is the volatility on SPX. So if IVR is high, the VIX is higher. If IVR is low, the VIX is lower. It's all one and the same.
It is one and the same. However, I was just looking and thinking that we could do comparable, and we
Oh.
can. But that's okay. So that's what we're looking at is the IVR and the SPX, and they filtered the results. So it's like 0 to 10, 15 to 25, yada, yada, yada. You'll see all those.
Okay, and all times are Chicago. All trades assumed to exercise at mid-price. Results are presented as win percent, mean P&L.
That's correct. Okay.
Okay, so this is what you're going to walk us through.
This is your iron fly. This is exactly what you did. $10 wide iron fly. Now his was at 9, ours is at 10. So keep that in mind.
Sure.
And then I'm going to just kind of go real
So
quickly.
when you see IVR,
I'm going to go to SPX
over
IVR.
25, which
it's not. Our IVR right now is 21 in SPX.
So we're in the IVR range 15 to 25.
Yeah,
That's
so,
where we are right now.
Yeah, so your profit is, and there's so much information in here. Your 75%, you hit the 10%, and your dollar amount, your average profit is 81.
So to show you what we collected $890, which
Correct.
our 10% would be $89, which is higher than the 10%.
But wrapped around.
Yeah,
I mean,
yeah.
So that's what I want you to look at here. Now he pulled off the bottom conditional value at risk, and he did this because it's just flooding the screen, is what he was saying. These are all defined risk.
Well,
So
when
you
it's
know-
all
you
defined
know what
risk, you know what your CVAR is.
You know what your conditional value at risk is. So just keep in mind that's why he pulled that off the screen.
I mean,
but
CVAR
this is pretty informative, don't you think?
CVAR is meaningful when you're looking at undefined risk versus defined risk, and you see, whoa, my risk is so much less with these defined risks. But when they're all defined risk, the CVAR is all, we know what it is.
So we are in the IVR of 15 to 25 range right now in SPX. So technically, if you wanted to, Jenny, I know you were going to lower your bar, you could take 20%. That's
But then my profit target, then my win rate is only 58%.
For every gimme, there's a little bit of a gotcha in there, right?
So 58%, I'm going to stay with the 10%.
I still kind of like, even if you look down that 10% column of all of them, IVR over 25, all these ranges.
Yeah, they're
it's
all
not
winners.
bad.
They're all
not
winners.
bad.
Yeah. Yeah.
That 10% profit target gives you over a 50-50 chance of success, and all the P&Ls are good.
And you see the loser, no management. No, and there's no management, they're all losers.
They're all losers. That's correct.
Yeah.
Okay, now let's keep going forward. So that's why I wanted to put this on. I knew we were going to be in one of these buckets with that, being like, okay, well, it's still okay.
But I think from those results, the highest percentage is 10%. Now today's a little unusual because there's an FOMC meeting later, and I don't know how that will affect it. Normally we get out of these trades around noon. I don't know if we'll get out of it. Maybe we will.
I say before 1, we usually get out. Like 1:15 is usually.
But
when
with the meeting at 1, the market might keep its
might
keep the
But
vol
we'll
up.
see. We shall see.
We might get out.
Okay, go to the next one.
I am.
And this is where I stopped. Like then I just looked at the iron fly, and then I didn't look at any of the others.
And then you see the no management. My eyes went right to no management. Those bigger losses because these are wider. 40 delta iron condors with $20 wide wings. So you've got more at risk. No management. You've got pretty big losses.
And all of them.
And this is one of those where people talked about flipping the cards and buying it instead of selling it.
This is the 40 delta $20 wide wings. If you look at that and you say no management, all of those would have been winners.
Right.
Yeah.
Okay, so
We're
if
just
you're
flipping
doing
the
the
cards
40
over.
delta iron condor $20 wide wings, 10% profit target, 94%, 91%, 89, all high. Maybe under 10 IVR, maybe you don't do it because you're not making that much. The win percents go down, and then at the 20%, it's a loser. So maybe when IVR is under 10, maybe we don't do these trades.
Look at the IVR 10. You don't manage it.
What?
So if all the no management is a loss, and you do them every single day, that's what I'm saying. It's kind of interesting to flip the cards over and kind of look at it from that perspective.
Like if IVR is under 10, you buy it.
You buy it.
You buy it and you don't manage it.
You buy it and you go sit on the beach and read a book.
I guess. That's a good takeaway.
But Jenny, it doesn't matter where the IVRs. If you wanted to buy this, all of those.
No management. But again, you could put them on and have like loser, 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 and then one big winner makes up for so many losers because you're.
Yeah, 100%, because these win rates are under 50%.
Right. Yeah, you're gonna. So you're going to lose more than you're going to win, but then your winner will offset the losses.
Yes.
Okay, 20 Delta Wide Iron Condor, $20 wide wings. And I don't want to confuse people because we keep talking about if we're actually selling them like we do versus buying them, looking at that no management column.
We're just talking about selling them. Jenny and I have a lot of very smart viewers who are the ones who were talking to us being like, it's the George Costanza. If every instinct you have is wrong.
If everything is telling you not to do it,
not
to
sell
it, then do the opposite.
Do the opposite. Costanza it.
Yeah.
Yep.
Okay, $20 Iron Condor, $20 wide wings, or 20 Delta Iron Condor, $20 wide wings. You look at this. The percent win rate
10%.
is huge. 10%, 20%, even 25%. But I think looking at these results, I don't know, maybe 20%. You're not collecting that much. When you're doing the 20 Delta, you're not collecting that much.
This is the 40 Delta.
No,
Oh,
I'm on the.
I'm sorry. I'm looking at different. I got to look at the same numbers with you.
Slide 5, please.
Slide 5, please. Got it. Yeah, you aren't collecting that
You're not collecting that much, so you might have to bump it up to the 20%.
But I do like that he's showing us all of these. But I'm landing on two things. I do like the 40 Delta, $20 wide, and I also like the Iron Fly. So I don't like this because I feel like your risk-reward scenario, your conditional value at risk, which isn't on here, is high.
But I don't mind these because you've got such a high win rate. 96, 94, 93, 91.
Yeah.
I don't know. I think some people, I saw on Twitter, I think Jack Tucker, he put his shorts pretty far out today. He wasn't going to be at his computer. He was going to be gone, so he put his shorts pretty far out today.
I thought he double tranched it because he's going to be gone.
I don't know. Let's take a look at what Jack Tucker did. I'm going to pop into Twitter.
And then we'll go to the takeaways.
So. Yeah, and then we'll go to the takeaways.
Yeah.
Let's see what he did.
Those are from yesterday. Oh, there we go.
Okay. Here it is. Oh, hold on. Here we go. Today's song, I'm off platform most of the day, so going with double tranche, 35 point wide Iron Condor, 19 Delta so on the short foot, and 17 Delta. So he went, this is the 20 Delta one. And his were probably, he's usually $25 wide. Yeah.
He went wider.
So that's that last scenario, and he's setting 40% GTC.
He's usually a 40% GTC though.
So what he did, he essentially did this 20 Delta Iron Condor, $25 wings, and he's looking for a 40%.
Jack Tucker, you're a
certified. If I had a card.
Do you have a card?
Well, I have 2 pockets full of Kleenex.
If we ever do see Jack Tucker, we're going to give him a certified badass options trading card.
Here it is, Jack. Here it is. Certified
badass
option trader. This should just say Jack Tucker.
We should get it printed on there.
All right, to the takeaways. As we look to refine our zero DT profit taking, we are leaving no stone unturned. Thank you, Jacob. How couldn't be more true.
We are beating a dead horse with this. But I like it. I don't want to leave a stone unturned, and I'm glad he's going down these rabbit holes.
Yeah, no, we get something from each study. We really do.
Or it edifies what you've been doing, right? Either way. So examining trade performance by IVR at open revealed a few things. All of the strategy and mechanics we considered did best in moderate IVR regimes.
What do you keep dinging on my computer?
I have no idea. So that was pretty interesting. Moderate IVR regimes, meaning not under 10 and not over 25.
Yeah.
In contrast to our longer-term studies on longer-term options, it seems like very high IVR was a bad sign for zero DTE options.
Seemed like very high was a bad sign. We didn't even notice that.
Well, it was kind of because the win rate was low.
Very high IVR.
IVR plus is lower than everything else.
Not in the 20 Delta.
Okay. Not really. I guess no management.
Maybe.
No. We disagree with your findings.
Jacob, maybe you should wrap these up around 10 p.m. instead of 2 a.m.
We disagree with your findings. But the takeaways can be, I want my takeaway to be different than your takeaway.
Yeah.
Because I might walk away being like, I'm an iron fly trader.
Maybe
And you
he
might
got
be
that somewhere. He had to have gotten that from somewhere.
I mean, no management. I don't know. Nonetheless, so in contrast to our longer-term studies, longer-term options, it seems like high IVR was a bad sign for zero DT options.
Okay, picking a profit target means balancing win rates and the size of winners with the relative merits, mostly consistent regardless of opening IVR.
Yeah.
But I think my takeaway is if IVR is under 10, I'm going to buy it, not sell it.
I think so too.
Yeah.
I mean, that's pretty standard though. That's
You look
usually,
so serious.
Yeah. It goes like this. Mind blown. Zero DT trading requires learning to act with speed, but there does not appear to be any need to complicate anything by changing mechanics in response to volatility.
I no longer wait for the 8:30. I used to 8:30 bell. Got to get this in right now. Not anymore. Not anymore. And this study was done at 9 a.m. At 9 a.m. Right when my phone turns 9 a.m. Get this right on.
Act with speed.
Okay.
I think act with speed means, when he's saying act with speed, I think it's the
take it off
exit.
Quickly. Put on a GTC.
Exit with speed, not entrance, because he even gave himself like a 5-minute lackadaisical window.
Yeah,
plus or minus 5
don't
minutes.
need to rush. Just put in a GTC. Then don't worry about
That's what the act with speed means. We'll translate Jacob.
Yeah. Okay, well, another wonderful study from Jacob. Speaking of, when is Burning Man? When are we going to lose Jacob? Did that happen already?
I don't know. It's in the summer, but it is the summer.
Yeah, but it is the summer.
No idea.
That's what I'm saying. We lose Jacob to Burning Man. It is the summer.
I hope we get studies from Burning Man. Those would be fantastic. Two things that I've been receiving texts on. Number one, I will get you those slides, John.
I'm the...
And number two, can you please push the SPX through? Because Frank the Great is not seeing it yet.
Let me get that trade out. I don't know.
You in trouble.
You know, when you're gone, I'm totally off my game. Yesterday, I never even tagged the show.
It happens.
Dun, dun, dun. I don't know. I was off my schedule. Okay. Now,
it happens.
10:26. Looking at our account, is there anything I would do? Let me take a look at Intel. We have two short puts in Intel. The 20 put, the 23. I don't know. I don't know that we need to do anything. Okay. I guess nothing. Let's look for new trades. We don't have much. We don't have scrolling positions. There's not a lot here.
Take a look. We were looking at this earlier, but we're going to take I know you talked about this with TP, CRCL, and the put skew.
Oh, well, that was CRWV, but
it's CRWV. It's not CRCL.
But look at CRCL, up $22 today.
And so it's CRWV that has the put skew,
right? And let's talk about this. Remember when CRWV came out and you could sell puts in it and use $800 in buying power, $1,000 in buying power. Even now, CRWV, not that much buying power. Take a look at Circle. Now, if I want to sell a put in Circle,
but it's always been more expensive.
Well, 79 started at 79. Now it's gone from 79 to 170 in a matter of 2 weeks. And if I go to July and look at selling a put, let's say I want to get $1,000 on this 135 put, $12,000 in buying power.
So, Jenny, you're in CRCL, right?
Yes.
And I just typed in CRWV when you were doing that. No, stay there. So I'm just telling you, I was looking at something different. And that's the one that has the 50 delta and the put that's right. Not 50 delta.
50 delta, and that's August. That's
so you take a look at CRWV, and the puts are double the price as well.
I know. It's crazy.
So I just opened it up. That's what I'm saying. I know we're talking about two different products right now and bouncing back and forth, but that's
we'll look
a
at
lot.
them both. Don't mind me, I have a cold.
You don't have to explain yourself when you're sitting in there blowing your nose.
Let me get some tea. Let me drink some tea and blow my nose.
So I think that's a lot.
Okay, so you go to Circle Puts, $170 product. At the money puts, you're getting almost $3,000, $2,800 using $14,000. $170 product. You go to CRWV, you go to July, you look at those at the money puts, they're more, but it's the same price. They're both $170.
Yeah.
And you get $30 and you use $3,000 instead of $12,000.
I know. That's what I'm saying. This is fascinating. Number one, the puts are double the price of the just out of the money puts are double the price of the just out of the money calls in CRWV.
Oh, that's insane. That's why TP was like, oh, this is going to go down. This is going to go down. And he didn't know for sure, but because of the put skew, because the puts are double the price of the calls, he assumed it was going to go down and wanted to sell a call spread in here.
Did you sell a call spread?
Do you see a call spread?
Were you like, yeah, I'll press that button?
I'll send that later, TV.
Sure.
But if I want to make more money in CRWV, if I'm not satisfied with what I've made in CRWV yet, I honestly, which seems so far, but 58 days, those August 170 puts are $50, meaning my break even would be 170 minus $50. Where does that take me to? 120. My break even would be 120. Let's look at it on the chart. 120. I don't know. But if it doesn't go down to, if it stays above it, I got a cool $5,000 in my pocket.
Hold on.
In August.
Hold on. Then go to, I'm just going to the 9-day. The 120 puts are 60 cents.
Yeah, but you want $60 in 9 days? I want $5,000 between now and August.
No, I'm saying
buy them.
Yes. You could protect yourself just in case. Because if it falls, it's clearly going to fall fast, right?
And at some point, these puts have got to come in.
If it falls, it's clearly going to fall fast.
So
there's no capital help here. We can't press this button.
So what you're saying is, if I sold the 170 puts for $51 in August, and then bought what month?
I just looked at.
It's just 9 day.
I went to the 9 day. I mean, this is a protection for 9 days.
Because our break even is 120. So at our break even, by the
you're getting $52.
And we have 9 days to get in or out of this trade.
Yeah.
Because let's say, well, I don't know.
It's not. I mean, it's not a great idea. it's just an idea. Because I don't think it's going to decay only 55 cents.
Right. If we stay here in 9 days, it's going to decay more than 55 cents.
Yeah.
I don't know. It's tempting.
I know. Now that's super far away.
That's only going to save you if we plummet. If CRVWV plummets to like 90, that's the only reason. The only reason to buy that 120 put is if we think CRV is going to drop down to like 100 or 90. That's the only reason I'll save you.
Volatility is saying if you can get $50 for a put, that means your break even is 120.
Okay, but let's just say, because to me there seems to still be a lot of opportunity in these products. Let's say,
and it's still only a 29 rank.
You by yourself, me by myself. I'm sitting at home. What trade am I going to do? What trade are you going to do? Let's find our own trade and then
I'm in CRWB.
No, I've been in puts, but I bought them back because they were worth very little.
And then I just bought the stock.
Oh, well, so like new trade. I like the volatility. I like the premium in these options.
Now that being said, if you are going to sell the puts there is so much premium in them, you really can't spread it off because they're all going to be the same price. If you look at those 170, even if you're going to do $10 wide, say you did the 170, 160, what are you getting? You're actually not getting bad.
I think, you know what, I'm going to give myself room. For me personally, I'm going to give myself room. I'm not going to get greedy. I'm not going to get $51 on the 170 puts. I'm going to go the 140. Let's see. Let's take a look at the difference here. The 140 puts for $30 gets me a break even of 110. Okay.
You're in which cycle?
I went out to August because the vol just seems crazy.
So the 140 puts for $30 will get you a break even of
110, or the 170 puts for $50 gets me a break even of 120.
That's
I'll take the 120 for $50.
I was just about to say that. I mean, honestly, when you look at this, you think you're being more conservative, but you're not.
Yeah, I'll take the 170 for $50. Yeah. When you look at break even to break even.
Yeah. I mean, it might take a little bit of heat, a lot faster on it, but you got $10 in break even.
Hey,
if it's going to move, it's going to move.
I'm no stranger to taking heat. You know? I mean, how many times is Reddit? Like, how many days do I have to wake up and be like, Reddit?
It's Reddit this year. Last year, what year was it? Boeing.
Boeing. That's short calls. Never again. Never again.
You learned your lesson.
Never again. 135 short calls. Boeing went to 410. Never again.
Never again. But if it goes down, what are you going to lose? You know, all you can do is it goes to zero.
Oh, here. If it goes down, then I own CRW at 120. And maybe I don't want it there since it IPO'd at 39.
It's a 300% Vanetta was talking about today.
I don't know. But I see your point of maybe defining your risk. Maybe you give yourself more than 9 days. Maybe what's the 30-day 120? Look, the 30-day 120 is $5. And
how much capital is it using?
The 30-day 120 is $5, and you're getting 51. So you get $46, and I've got my risk definition for 30 days. I think I'm going to do that. I think that is a clever idea.
Thank you. I'm not saying it's a great idea.
Do you see what I mean? Then for 30 days, I've got the, but then come 30 days, I've got to get out of it.
Now, my only question is, I don't remember how we were watching these and the puts didn't really come in. Okay, this is the one.
But they have now. They have now. Well, the more it's gone up, they have.
The more it's because
I'm out of all mine.
Yeah, it have. But I feel like those puts are now inflated again. I feel like we got a vol collapse in this. Remember, I was going crazy the other day before I left. We got out of our puts on a down day because that's when the vol would collapse.
I know, but then the move up, because I had the 100 puts. The 100 puts were $1,000. Now they're $180. But I think I'm going to do this. I'm going to do this. Buy the 120 put in the 30-day.
We're not going to do it in the show, though.
Why you don't think we can?
$3,000.
$3,600.
Yeah.
Sell the 170 puts in the 58-day or 58 day.
It's not, I think it's
that's kind of like the caution tape trade.
It's very much caution tape trade.
Yeah, where we sell the straddle. Like the caution tape would be. Let's look at both sides.
You're not getting margin relief when you're doing this because it's almost a reverse diagonal where your shorts are farther out than your longs. So it's protection for X amount of days,
but not margin relief.
But not margin relief.
But look at this. The 175 call for $16 doesn't look appealing at all. $16. You're only the 170 puts $51. No. The 175 calls $16.
No, wait. No, thank you.
Okay.
I just want to see something.
Okay.
So.
I don't know. We got a text, which looks exciting, but I don't. Did you see your text?
Hold on, I was listening to break.
Breaking news. Breaking news. Looks like we're going to be doing something exciting with Vanetta.
We are Monday and Wednesday.
Oh, we're doing the morning show. I thought we were hitting the road again. On the road again.
Monday and Wednesday. Jenny's on. Please excuse her cold medicine fog. Mondays and Wednesdays, we're going to be doing. The boys are in London, so we are taking over the morning show on Monday and Wednesday. And can we break the news about here?
I'm not sure what news you're going to. Oh, Tuesday, we're going to be live here on the for the opening bell.
Yes.
Yeah.
So the boys, Nick and Mike, are doing the show, the morning show, and then they're going to throw the opening bell to us. We're going to watch these guys eat breakfast behind us before.
I mean, I went to the office yesterday. It was like, Tom was gone, Tony was gone. There was a party going on in the office.
Oh, yeah.
So, it's going to be a party all week with us doing the morning show Monday and Wednesday. Coming in live from the opening bell Tuesday.
Wednesday morning show again.
Yeah.
Not from here. We won't have our show here. And then I leave for the Mayo Clinic.
And I can't wait for
I get on the road again for another 6-hour drive.
I can't wait for your results. I'm hoping you think they give you your results before you leave.
I think I'll have some. I don't know.
Some idea of like.
I'll have some more direction by the time I leave. Is my guess.
I hope so.
Or the direction will be like, sorry, Jet, you're gonna live like this.
When I asked TP, I said Liz is gonna be gone next Friday. Can you come on? He's like, all she does is take off. She's taking off again. Oh, that Liz, where's she going now? I was like, you're about to feel like a real asshole.
Did you do it live? Thank you, Jenny. Appreciate that.
All right. Okay. So for us, we have no position on. It just kills me to look at this premium and not do something. But that could be.
If we're selling puts, okay, I'm just gonna.
If they're paying you this much, there's a reason.
Okay. If we're willing,
there's a lot of risk.
If we're willing to sell puts, which we were both saying we want the juiciness of it. You know, it won't be expensive because the call skew and upside diagonal. Because there is no call skew.
Oh, but that's not. Well, Liz.
It shouldn't be, right? If I'm thinking about this correctly.
So when I said this August put is only $17, but in the 58-day, but then you're not going to get anything for the one you're selling in the 30-day. No, we don't need.
No, thank you.
Here's what I would say though. Someone wrote in. Were you on when they wrote in they lost $80,000?
No.
That TP was on. It's not funny. It is not funny.
I was like, you just casually. Was it an email or a tweet?
It was a tweet.
Okay.
So in one of our tweeters, and it was not funny, but he said, and I'm on puts. So let's look at APP up 11, and this could be a similar situation.
Okay.
So right up at the top, there was right at the,
There's tons of put skew.
Tons of put skew, tons of premium. Those puts look so juicy. He sold puts here in App 11, and he lost $80,000. Now, when we did the math, we realized he had to have many puts.
That's not a one lot.
That's not a one lot. So in my mind, if I go back to this and I look at, okay, if I sell the one semi put for $50 and my break even's $120, if it goes back to like 80, I'm out $4,000.
Yep.
I'm out $4,000. So I know, like, if I know, okay, if it goes down to 80, I'm out $4,000. That's in my mind kind of like the risk in something like this. So if I did this,
I mean, it could be more. Like it could go back to its IPO price.
But how would I lose 10,000 if my break even was 120 and it went to 20? Right? Every 100 points for a one short put is 10 grand. Every 100 points. So that's why when he wrote in that he lost, like, selling puts in APB, if he had a 10 lot, yeah.
I mean, that's some people's, when you look at this and the buying power is low and all that stuff happens, I mean, it's easy. I mean, you look at that. So you and I use a different metric, right? We're looking at this thing, that's super juicy. But it's at the top of its range.
No, but I'm going to do your style. I'm going to buy the June, I'm going to do your Liz's style, I'm going to buy the June 120, and I'm going to sell, and just leave it till June.
Yeah, hopefully. Who's coming on?
Would you like to come on as a guest today? I was looking for other microphones.
You're going to have to talk into this.
Talk right into the microphone.
This microphone, sir.
Do you want to get to what's your assumption?
I do, but we didn't get to any tweets yet. Let's do tweets first. A couple. What time is it?
Okay, so this is my favorite tweet. This came on the heels of our discussion on margin calls. And someone wrote in, margin call starring Kevin Spacey, a little known movie, but one of my top 10.
What was the discussion on margin calls?
Oh, when we were talking about FX and like what?
Oh, this is with
this is with Glengarry. So, but I love Elmo. So, spent many years watching Elmo, listening to Elmo.
You're absolutely right. But what?
And I remember when my son drew on our fireplace, like seeped right into the stone.
Elmo
would draw on the walls, Mom. Yeah, we have marker permanently for 14 years, as long as we lived in that house, in the fireplace.
Oh, you sold it
so
with
cute.
it.
I loved it.
You sold it with it.
Okay, so Frank, the economic calendar. Here's the big news: 2 p.m. FOMC rate meeting. That's 1 p.m. Chicago time.
Yes, and everybody will be watching for that, I'm sure.
Yeah. And we saw. Oh, here's Eric. Eric, Wild Wacky Wednesday, 2 tasty 5 lots today. Up to a sweet 90 points wide at the 17 Delta. So he's doing the 17 Delta shorts too. Similar.
17 Delta shorts. He's 90 points wide. Oh, 90 points wide in between his.
In between the two.
That's pretty good. And he's Jack Tuckering it. 40% GTC set.
And we're 60-60 right now.
Ooh,
what?
Look at this. He says, I will.
No. That's
I will exit before 11 like standard time, regardless. So he's going to get out before this.
60-35 is his short call, and we right now.
Yeah, you got to go to SPX.
We are 60-05, so he's in great shape.
Great shape.
But you look up there, it throws me off. I look up there, and it says ES 60-60. You know, it throws me off. We've got
SPX is right underneath it.
Someone's head is blocking it.
So it does go ES, and then it goes SPX, so you can look at both.
Okay. All right, earnings today. Kroger? ACN? CarMax? Friday before the open. Okay, must be trade today due to the closure. Thank you.
It is very bizarre that we're closed in the middle of the week on a Thursday.
It's not. I mean, it's Juneteenth, though.
I know. Why would? I mean, they're not even.
It's always going to be on.
They're not even saying the date, so why don't they just move it to either the Monday or the Friday?
Because it's just. I think it's Juneteenth, June 19th. I think it doesn't matter. Monday, Tuesday, Wednesday. It's always going to be June 19th. But if we don't have a leap year, and this year it's a Thursday, next year it'll be a Friday.
Yeah, and then the following year it'll be a Saturday, and if they're not going to change the date,
that's really going to stick.
That's what I'm saying. They're not moving that date around.
All right. Ketan, hey ladies, happy Wednesday. Happy Wednesday to you. I was wondering, when you sell puts in the weeklies, do you have a specific number of days before expiration in mind to take them off if they do not hit 50%, since you are knowingly breaking the 21-day rule?
specific number of days. No, because when I'm doing the weeklies, it's something that I'm probably going to keep rolling.
Yeah, when I'm doing the weeklies, I'm not closing at 50%. Since I'm breaking one rule, I might as well just break them all. If I'm doing the weeklies, it's something that I don't mind taking the stock or I don't mind being in.
Or just
and
keep
I'm not
rolling
going to buy them back until they're like 10 cents. Or I'm just moving to them next week.
Yeah, I mean, if it gets to 50, I
Yeah.
might take it. I might take it at 50 if I'm selling like dollar puts or whatever. But if it's not and it's going against me, I'm just rolling it out in time and collecting more.
Honestly, Keaton, right now, in my account right now, I don't even know if I have anything with weekly puts. I usually do have a lot of weekly puts, but right now, I don't even think I do. Because if I don't find opportunity, I just don't do it. Like, if you're not getting enough for them, you just don't do it.
Right. You're not going to open them up and just because it's a weekly sell it. Just kind of like, I know Intel used to have a lot of them and things like that, but you're not getting that much for it anymore.
No, in Intel,
you gotta just
hold on.
the SPX.
So Intel, you don't get enough for the weekly puts. You have to go further out in time. If I go to the 9-day puts, 40 cents, maybe. Yeah, I guess that's enough. But right now in Intel, I just have shares. At one point, I got put stock on all my puts, and I just have shares. I have nothing else right now. And I'm not going to sell a call for 59 cents, that's for sure. So now I'm just kind of... I'm like lock limit.
Now she's just in Intel. But that's just it is. There is no like rule for finding the weekly puts as if there's more credit in the weeklies than there are in the other ones.
SoFi. Oh, you know what? But it's kind of run up. A lot of these where I would sell weekly puts, they've run up so much. I'll take a break until they come back down.
Yeah.
But that's not bad either. 44 cents.
No, they're not bad. But like I said, we don't have like a certain if this then that for the weekly puts.
Right, and honestly, I have quite a few positions where I just have stock now that I was assigned on the puts, and I'm kind of maybe I don't know. I have to go through my account and take a look. I'll come back to you on Friday. Do you have any weekly puts in right now?
I'm not gonna lie to you. Yesterday, I had closed everything because I didn't really even get into my account yesterday at all.
Yeah, I closed a lot, and I think my DraftKings I closed. Those are gone because look, DraftKings has had a run up too. So I closed, and I might wait for a little bit of a pullback.
Yeah,
because I don't know that there was enough in them to make it worth it. Well, 98 cents, that doesn't look too bad. Maybe I'd go with the 38s. But with all these products having a little run up, maybe yesterday's like blip down brought back a little boost in vol.
It had to have. Well, I mean, yesterday we were over. Can we take a look at the VIX?
Yeah.
That's the one thing I did see is the VIX is 19 right now, but I think it was over. It was obviously over. Oh, it's 20 right now. It was 21, 22, almost 22 yesterday.
So I honestly think that helped because the day I might have been closing puts when stocks were up and the vol was like 16. I might have gotten out of a lot thinking I'll get back in. And yesterday with that drop, we probably got a bigger boost in vol, and now there's a little more premium. So good call. I'll take a look when I'm on the train on the way home. Maybe we'll see what we want to do.
For sure. All right, let's get to these last two tweets. The one that I put up because Angeline, she's so sweet.
Oh yeah, there she is.
There's the behind the scenes.
Cute.
With,
so cute. Look at their room; it's all green.
Well, that's what I was going to say.
Even the
and it looks very professional on when they're on with green everywhere.
Yes,
it looks really good.
Cool. I like it. Is
Tom getting makeup put on him?
It looked like it.
Liked. I think he's getting liked.
Oh. Makeup's a better story. All right, Florida 7. Computing buying power reduction on the recent IPO stocks is way above our pay grade.
Agreed.
Only Jacob, Julia, and the risk reduction team have what it takes to figure these out. And I think Scott said it's like set by. It's not set by us, right? Or
No. They have the ability. The minimum is set by.
Yeah.
The minimum is set by the standard.
Okay.
And
then they can adjust
They have the ability to adjust according to whatever they feel like doing.
Okay. So how about? Are you ready for it?
I'm ready. I'm ready.
What's your assumption?
I did not get a chance to take a look at these.
I looked at some. There's a lot. I don't know if you've heard what all the solar companies are way down.
Oh yeah. Well, so he's taking away all the tax credits.
Yeah. So I've seen there's a handful of those in here.
Okay.
FCX neutral. July Freeport focuses on copper utilization of new leaching technologies to exploit previously. I'm not going to read all of this, but this is from John from St. Louis. He's from the Arch. He's living in the Arch. FCX neutral.
Have you ever been up in the Arch?
Huh, no, never. I'm too claustrophobic.
Oh, I'm telling you, you would. If you're claustrophobic, do not get in that pod.
No, I would not.
Yeah.
Never.
The only solstice of it, though, I'm fine with it. I don't get claustrophobic, but I was put in with all the kids, and so I was like, okay, what am I going to do if this thing stops?
Is there open air?
No.
Because I'm okay if it's open air. Like, I'll get in a gondola, or I'll get in some like a Ferris wheel, or somewhere where there's open air. I don't want to be sealed in something where there's no open air.
No, there was no open air, but I don't believe so. But there was a door, and there was a staircase up next to you the whole time. But the staircase then looked into just concrete. So it was almost like you were in like a concrete
Oh, but
vault.
you could open the door and get out onto the staircase.
In my mind, I could open that door at any time.
Yeah, not interested.
Like if it stopped, I bet I could have gotten out and gotten on that staircase.
Yeah. Yeah, like I think, the Disney gondola, I can ride that, and I don't mind that, but I don't think I want to be sealed in a enclosed space.
It's like an egg, because it's
I don't. No thanks. No, thank you. No, thank you.
Okay, but I do like looking at Freeport. Their
Yeah, I
questioning
certainly do.
is, are their markets too wide? Now, we have not looked at Freeport in a while, and they're looking at the 40 calls, 45 calls, and 50 call flies. They're looking at flies.
Oh, really?
That's what it says, flies.
Okay. Well, if I'm going to look at an iron fly, it's a 19 rank, 41.
So he was asking if the markets are too wide to trade. I don't believe so. It's a very tight market.
This is, they made this, here, $6 wide and $6 wide. You're getting 318. You're kind of risking one to make one. That's usually how a fly will set up.
Fly sets up, yeah.
Risking one to make one. FCX.
Yeah.
Let's take a look. What is it? Sure. I don't know.
Yeah,
I'll do it.
go for it. Pop it in. Neutral. You're in July, right?
318. Yeah. No. Oh, yeah, July. I stuck with July. I didn't go out to August.
Okay, good.
All right, I'm working that. Then Costco bullish, 45 days. I'll grab some Costco whenever it drops. Mike from Ithaca. So
okay. Did it drop yet? Because I don't think Costco's dropped yet.
Let's take a look. Costco, it has. Look at this move down. You can't. The camera's probably blocking
Can't
it.
see it.
It has fallen from about 1,060 to 977.
That's a drop. That's a drop, Mike from Ithaca.
That's a drop. It's expensive. We'd probably have to just sell put spread. Maybe the 940, 935 put spread.
And the IV rank is 20, so it's not bad. You're getting
$93.
Now, if I was Mike from Ithaca, you could probably get a little bit more aggressive.
I mean, if I was Mike, well, if I really wanted to get into Costco,
I'd just be selling the put.
Yeah, like this 85 put is $3, but it's $10,000 in buying power.
Yeah, it's a lot of buying power.
It's a lot
of buying power.
So, I don't know. We could sell a put spread. I'm going to Costco today. All right, do you need to go to Costco after the show?
I have to go pick up my dog, otherwise I would.
Oh, I almost forgot to remind you.
Yes, Will Ferrell is in.
Poor Will Ferrell. He's going to be forgotten at the kennel.
I know. He's. So I
one day we got to the train, and then you started to get in your car, and like, oh, I got to pick
go
up
get my dog. We do not leave him home when we are out of town, just because. So he goes to camp, as we like to call it. I got to pick him up from
he's
camp.
not just alone in the house while you're out of town. Yes. Poor Will. He has fun at his little camp.
We think so. In my mind, he does.
Yeah. Here, 90 cents on a $5 wide filled.
Sure. And then ship it out.
Oh, and FCX was filled. So let me push this through. So we did. No, FCX did not fill.
What did we get filled on? Oh, the Costco got filled right away. Okay, push those
filled
through.
in Costco. Next, I think we have a couple of these coming up where we have. Oh no, this is IWM neutral.
Okay.
VIX is sitting at 22. Yeah, I'll sell a strangle in IWM.
I don't mind strangles. I do like jade lizards better though.
So strangle in IWM, if I'm just going to look for $1 and $1, it's kind of like 15 delta. Let's see, 15 delta, 15 delta. Basically close to $1 and $1. You're getting $238 using only $2,800. Not a bad return.
It's not a bad return.
It's not bad.
It's not a bad return.
Now,
you'd be sitting on this for a while. So you're in
no,
July.
it's only 30
July.
days.
That's
we're
good.
Not going to be
in
on this for a while.
It's not bad.
No, it's not bad.
So IWM is a 22 IVR.
How much buying power do we have?
I think we have
That's
12.
What I see. Oh, so we do have $11,500 in buying power.
You could put that in, but it's going to be the first thing we close if we need buying power.
I know. That's the problem.
I know.
What do you think?
Ship it. I mean, who cares? Well, maybe not for tonight.
You know what? Here's what I'll do. I'll bring it up $5. 2,090. I'm making $10 wide. I'm going to see. And bring it in $5. Well, then I'm almost at the expected move. 22.32. $10 wide for 233. Still collecting about the same amount.
Yeah, you are. You can ship that.
Now it's a $10 wide.
You can ship that.
That's working. Okay. 10:53. I think we're gonna do it. So here we have Enphase Energy.
That's it.
ENPH.
Is that one of those?
Yes, and then next is First Solar. So fell too far too fast, short-term bounce, put ratio. This is Ichabod from Sleepy Hollow. And Brian from Denver, just neutral in Enphase, just going to sell this high IV after the big price drop. So let's take a look. We haven't traded those.
So you don't want to put all the solar ones on. You can do different, different solar ones.
So ENPH is down to $36, 73 rank. $36, 73 rank.
It's getting a little pop today.
That July 35 put is $250, but it's using $1,500 buying power, which is a lot for a $30 product.
That's a lot. That's almost as if it's you're buying the stock. It's a $30 product.
I know.
Yeah, it's using 50%.
I don't love that. Let's look at First Solar.
Okay.
FSLR.
I wonder if they're all holding up a lot of buying power.
$144. I can go to the 19 Delta, get $3, and that's using $1,200.
Yeah, I mean, this makes zero sense to me.
I know.
First Solar has, all these stocks are hot right now. The IV rank of Enphase Energy was higher.
Higher rank, but using a lot more buying
What
power.
about, can you look at Sun, S-U-N? Because that's Sunrun, right? Isn't that it? No.
I don't know.
I know there's the company that's.
I don't remember. But I actually liked First Solar better.
I do
but
too.
I have not made any plays in any of these products that have the solar companies. Have you?
No, I haven't. I haven't yet.
Stayed away from them.
Okay, so what else we got?
Okay. SPX neutral. We already have ours on.
Well, how's it going?
SPX is up 20. No, that's VIX. VIX is 21. SPX is up 27. So it's close to where we put it on.
Yes. Are we? How is our trade doing?
I'll take a look, and I'll also look at neutral and U-All from Rick from Miami, looking at selling strangles and U-All.
Okay.
Okay.
And they're picking up.
Yeah. All right. So our SPX trade, we are sitting right. It's
there.
right there. It's right there. And what's it worth?
You have the GTC
yeah,
in for
the GTC in 885, right where we put it on.
Right where we put it on. I mean, that's pretty common. We'll see that a lot during our show.
It's right where we put it on an hour later.
Yeah.
I just think
No, but we usually see that during our show. You're not seeing a lot of a big profit on these iron condors. You usually have to wait until like 10
o'clock. I just don't know what
o'clock.
will happen today with the meeting.
Yeah. We don't know what's going to happen any day, but the meeting does throw it up.
All right, U-All neutral. They do have earnings on July 16th, which is kind of right around the corner.
No.
So I think I would wait.
How are all the airlines doing with the big spike in oil? Because I think they got pummeled, didn't they?
I mean, U-All had a drop from 83 to 72.
And so most of the airlines got pummeled with the oil, with the up oil move, right?
Yeah, it did fall, and now it's kind of been sitting there.
Okay.
But 43 rank. So I get it. It has a high rank. If I sold a strangle in there, I might go as short as the 23-day because of earnings.
I would.
But it's not bad. I mean, you could go, although if you go to U-All and you go the 23-day, and I know it's a weekly, it's not a monthly, some of the markets are pretty wide.
Yeah. I mean, U-All is pretty liquid, though. I mean, you're looking at a 43 rank, $75 product. Those do seem very wide.
But it's the weekly, not the monthly.
Yeah.
But I hesitate to go all the way to July monthly because then you're crossing earnings.
Yeah.
Okay. U-All, XLE neutral.
I mean,
and
I think we're out of time, Jenny.
I know, I think we are. I think we are.
I thought we were just going to stop at U-All. Let's make sure you got to everybody on Twitter. Run, thank you very much, Uncle B2. It's Run, not Sun.
We'll take a look at that. Jack Tucker, thanks for the certified badass option trader card. I'll be at the August 15th at Work by 11 in Chicago.
Oh, yay! That's
good,
awesome.
Jack. Hopefully we'll be there. I don't know when you're taking JD to college.
It's that Tuesday.
Right.
Tuesday and Wednesday.
Yeah, so we'll try to be, if we can be there, we'll be there.
Yeah.
But I'm not sure exactly on the schedule.
His move-in date is Tuesday.
He's moving in that week. I know he's moving in that week.
Darn it!
I don't know. I just know he's moving in that week. And this came from YouTube. Fabio, hello. What do you think to search for opportunity looking at minimum 52 weeks with high IVR? I love it. I do love it.
If you can find the high IVR with 52 weeks, it's not bad.
And And I don't know if you're talking about, because I will look at this, like watch list, go to Tasty 52-week near low, and then search IVR. So here we've got a list of products
that have a high IVR
and are at their 52-week low.
Yeah.
Those I like for selling puts in, certainly.
And I believe, and double check with TP next week when you talk to him. But the IVR, I believe it doesn't go back for 52 weeks. It's not for a year.
Oh, the IVR, no. But I thought when he meant minimum 52 weeks, maybe he thought like low.
Yeah, possibly.
And here's Run.
So this is the one. Yeah, take a look at this.
It had a big drop, too.
And it's only $6. So that's why, and there's an 80 rank. I mean, I don't think you're going to get anything.
Are there points in there? Are there options?
I don't know, but this is the one that I would look at.
Oh, yeah, look at that. You can get $1 on the 6 puts.
Which is, like, to me, that risk-reward scenario makes a little bit more sense.
Let's do that. $264 for $1.
Okay.
Break-even's right
Then we're
around
in. You know, we're using a proxy for Enphase Energy and for solar.
Then we're in, and we're going to send that.
Oh, you're filled.
Before we go, I just want to see if any of our Tasty FX positions have moved in the right direction.
And you are filled on that, so push that out, too.
Okay, no. Not looking good today.
No, that's okay. It's day one.
That's all right. I'm going to make sure everything's out.
You just have to hit Run, and I think Costco.
And we never... Oh, did I get Costco out?
Yeah, Costco's out. Just hit Run.
Okay, I did. And we're still working IWM and FCX.
Well, if they get pushed out, we will. If they are filled, we'll push them out.
Yeah.
Everybody, enjoy their day off tomorrow.
Oh, yeah. Enjoy your holiday, if you get a holiday. Not everyone does.
I know.
Many people have to work. But
and everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you all on Friday.
See you Friday, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple, and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May, and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a Meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with the one and only Glenn from Tasty FX. And this is Options Trading Concepts Live. Nick is gallivanting, playing golf.
That guy, man.
Yeah.
That guy.
Yeah.
Is he a better golfer than you? You've played together.
Yeah. My volatility is very high.
Okay. Nice.
I'm due for a birdie. Like I get a birdie once a round on a good day, but I also get some others.
I'd hate to be in that position. I'm consistently bad. So we know exactly what to expect. We get out there and we just try not to get too discouraged.
Yeah.
We come with a lot of balls, try to lose less than 10.
That's perfect.
and then
Keep
we're
the
okay.
vibes high.
Exactly. But yeah, I think he's just upset. Maybe his brother-in-law, better golfer than him. So hopefully he comes out ahead.
Yeah. But yeah, he his playing partner won a free tee time for 2 at Whistling Straits.
No way.
Yeah. So he's actually teeing off in like 25 minutes.
We get a GoPro or something on that.
I know. I texted him this morning. I said, allow yourself to be great. And that I would be tracking his every move on the 18 Birdies app.
Good. Yeah. No, I'd love to just even get a Find My Friends of him.
Mm-hmm.
Just constantly track. Oh, he's in the woods.
Yeah. What's this GPS?
That's pretty
Yeah,
far.
you're off the fairway. What are you doing? Oh, man. But yes, good for him. Having a day. Other things having a day. The market up 25 points.
Man, yeah. Where do you look first when
I wake up?
On a day like today, from yesterday, we've got some war situation. Don't know if it's escalated or de-escalated overnight.
A lot of tweets.
A lot of variability there, as well as FOMC today. Does that matter for you when you're waking up today? What do you look for first? Obviously, you have positions on.
Yeah,
that's key.
I mean, I would say first and foremost, I always just check the E-minis and the NASDAQ and Bitcoin, see what like the general market. For me, that's the general market.
Okay.
I also looked at oil this morning just to see how that was moving in relation to the potential war situation we've got going on. And yeah, I mean, I'm actually surprised to see the market up today.
Surprised by every piece today.
Yeah, nothing really makes sense.
Oil down. Gold, where's gold now? That one back and forth, down still.
Yeah, it's actually up a little bit. Silver's down.
Yeah.
But I think the big thing is, we're it feels like we're in this holding pattern where we're just waiting for something to happen.
Waiting, but I mean, we could be sliding a lot more while waiting. So I guess a reassuring sign that geopolitical tensions, even if our involvement is increasing, not hammering this too hard.
Yeah, it's definitely an interesting time. But yeah, the last 2 weeks we've chopped in this 100-point range between 6,000 and 6,100 in the E-minis. And speaking to the CME FedWatch tool, I look at that for the probabilities for interest rate cuts, hikes, what have you.
Yep.
Not looking like anything's going to change. 99.9% chance that we stay at the current rate.
Absolutely. That one pretty telegraphed, but I'm seeing December still, for the rest of the year, still 2 cuts.
I guess.
That's a little bit surprising.
Yeah.
None so far. Running out of dates. We've got today, July, September, October, December. 5 meetings, 4 meetings without today, and 2 cuts. You believe it?
No.
You buy it? No.
Absolutely not.
Okay.
I think we get 1, maybe.
1 cut.
It's very similar to last year. We had projected 7 cuts.
Right. Not even close.
Didn't even happen.
But what we did get, a jumbo cut. Nobody saw that coming. Jumbo cuts. Maybe we just go for it.
Long cuts. Yeah, I mean, right now, September projecting a cut and December projecting a cut. But yeah, I think the rise in oil price, the swift rise in oil price, can maybe help them along in terms of not doing anything, but we'll see. We'll see. And yeah, I think today, no cut projected, but what is the narrative? What is said from, what is J-Pow's narrative, really? I think that's how people are going to be looking at this. But when you take that a step further, so to answer your initial question, how am I looking at the markets for potential movement from this news event we have where he's taking the stand in 2 hours? I just look at the expected move in the E-minis, and for today, we're looking at a 30-point expected move in the E-minis for the rest of the day, which is extremely low for something like this. So yeah, market's telling us we shouldn't expect anything crazy. We could see something crazy happen though. We could see a narrative shift. We could see these probabilities shift around. I think it's always interesting to look at the probabilities today before the meeting, and then look at it after and see if anything's moved. But yeah, 30 points for a Fed announcement, I think, is the lowest I remember seeing this year.
For sure. I think everyone expecting more of the same. Jay Powell, love the guy, but doesn't really want to stir the pot. I love the purple ties.
Yeah.
Great purple ties. Go Cats.
Yeah. Red and blue together is purple.
One nation.
That's what I'm saying.
Maybe we should just change our whole flag color.
Yeah.
Just a straight purple. But yeah, I think everyone kind of over the whole wait and see. Everyone thinking they're not going to do anything, that they maybe are handcuffed into doing nothing for the moment. But what we will get today is more numbers. It's what every other Fed meeting or quarterly, we get more data projections from them, more dot plots, a lot more numbers to scrutinize over. What it all means, who knows? Not my job to sift through that. But in my mind, maybe the opportunity for a sharper reaction on the actual release of all those, then we'll see what his actual commentary says. That usually 30 minutes later tends to be, could be a nothing burger. Just people bored of his he's very good at navigating the line. I'll give him that.
Yeah.
But doesn't always stir markets. So today I'd be curious what the snap reaction is, as opposed to what Jay Powell is actually going to say.
Yeah. I think especially now with so much uncertainty globally, stirring the pot is not what you want to do.
Who knows? Maybe he's feeling crazy today.
Yeah. But yeah, they know that. We know that. And I think that just compounds to why we are seeing such a narrow expected move for something where we normally see a much bigger range. So yeah, markets are up a little bit. E-mini's up 25, NASDAQ up 100, Bitcoin flat at 105. The futures are. But yeah, oil selling off a little bit. We've been looking at that. We've been looking for, oil rallies signaling escalation, oil sell-off signaling de-escalation. But implied volatility of the oil markets is through the roof.
Yeah.
So we should still expect to see some big ranges there. I have an iron condor on in the oil futures between 60 and 70. So breached through the upper bound, but we'll see if we can come back through that range over the next couple weeks.
What is the time horizon on that? Are you trying to long game?
29 days.
Okay, longer game. Is there any, that's what the August contract. You doing anything crazy in oil with this backwardation? Anything in July? Is that worth doing?
We talked about it yesterday. I think it's important to understand how this kind of move really just pumps up that premium on the call side. So any strategy, whether you're bullish, bearish, neutral, with a short option on the call side, takes advantage of that. I had a covered call in the micro contract, but I took it off before this move.
Okay.
So that's fun. But yeah, I think if you think it's going to continue higher, there's a lot of people calling for 100.
100.
In crude oil futures, which would be wild.
That would be we're just in the 50 handle.
Yeah.
And that's the pressure
for a cool double.
For some people, 100 colloquially the pressure for buyers.
And this is why I love my little Honda Civic. It affects me very in a very small way.
Good.
Yeah.
Is it hybrid?
No.
Oh, so you're still all gas all the time?
All gas, no brakes.
So you would feel it.
A little bit. Maybe $5-6 more. Well, I guess if it doubles, then that's not going to be the case. But we'll see. We'll cross that bridge when we come to it. How about that?
Sure.
Rest of the market, not really doing much. I like to look at the watch list, the futures watch list, and just sort by percentage change. Anything within 1%, I don't really look at because that's kind of expected day to day. But to the downside, we're seeing volatility come in a little bit, which is interesting. Again, very weird given the global situation we're working with. But yeah, crude oil is second in terms of the percentage move to the downside. To the upside, wheat.
There you go.
Yeah. Thomas, we had Thomas on yesterday. We were talking about some trade ideas in those futures, the agriculture products. Wheat seeing a big bounce. Natty gas seeing a big bounce. Platinum futures seeing a big bounce. I mean, platinum futures have been
pull up that chart.
like, what is this? I guess it's
a good run is what it is.
Yeah, that's true. But yeah, everything else kind of within 1%. So
it is worth calling out. I mean, I take the same approach in scanning the markets and net change, but especially with where the geopolitical risk is taking place, this causes gold to be unchanged on this rolling 24-hour clock, but doesn't always tell the full story for overnight, whipsaws. But yeah, nice to see a stable market considering all the tweets. Are you out there tweeting? Are you contributing to the headlines?
I am tweeting.
Parentheses kill.
I have quote. Yeah, I mean, I'm just retweeting stuff from the London Tasty Live show. That's actually the last thing I did.
They're pretty good.
They're out there.
I like jet lagged.
Yeah. Oh,
Tony.
yes. Yeah.
Funny guy.
But yeah, London show, Milan show coming up. tastylive.com/events if you want to join. But it will be certainly a grand old time.
Where are you next? You have a headline tour now.
We're doing it. We're doing the thing. Yes, Fabrique Milan.
Mike and
June 23rd is the next one with Dylan Radigan, Tom, and Rich. But yeah, they're doing London. What is that? 2 days from now?
Yep.
Friday. Doors at 5. Show starts at 6. The nice thing about that is they have the ability to trade markets live.
Right.
Because 5, 6 that time is 11, 12 here. So
perfect.
Love to see it. But yeah, tastylive.com/events if you want to check out the other ones. We are going to Seattle next.
Okay.
Yeah.
You went there pretty recently, right? Last year?
I think 2 years ago.
With the other show?
Mm-hmm. Yep.
You a fan? You pro Seattle?
I do like Seattle a lot.
I've never been. So.
Yeah.
Right.
Seattle's fun. Fish market's fun. And
the Crocodile. You ever been to the Crocodile?
I think that's where we were last time.
All right.
I'll confirm with you.
Okay, thank you.
But yeah, August 10th, Seattle show. Seats are filling up. Sign up sooner than later. But yeah, it's always fun. So yeah, it's me, Nick, and Katie. Ryan is having a child, so he's out for the rest of the year.
That gets him out of it?
It does.
What the heck?
Yeah. If you have a child.
I'll factor that in.
Yeah. Yeah. But yeah, congrats to him. He's
Absolutely.
excited. It was a fun time hanging out with him in DC. We just did DC last week. But yeah, sign up, tastylive.com/events. There you go. There's the whole kit and caboodle. Dallas after Seattle, and then San Diego, November 2nd. That rounds out our tour. But we also have Options Crash Course Live with Dr. Jim. July 13th in Boston. I think that might be his favorite city ever.
Really?
Yeah. He's a big Red Sox fan. Massive.
That hurts.
I don't know why, actually.
I was going to say, there's no good answer. I don't even know if it's worth asking.
Yeah. His Florida team just won the Stanley Cup.
Right. We've got someone in office, full gear.
Really?
Yeah.
Wow.
David Sapia rocking the...
Really?
Yep. Yeah.
I guess he's
the
a
long
Florida State
sleeve.
boy.
Yeah.
Yeah. I'm going to have
Looks
to...
good. Clean white.
Yeah. I was talking to my friends. I'm like, should we just move to Florida? Because they just win every year.
Turns out. Who knew?
If you're seeking a Stanley Cup, that might be the move. Might be
just live squarely between Tampa and wherever the hell
precisely
Panthers play.
But yeah, if you want to join us on the YouTube channel, we're going to take a look at the FX markets. I have some burning questions for Glenn here.
Do you?
I do.
Oh.
But yeah, Tasty Live YouTube channel. We're streaming live. You can throw in your trade ideas questions along the right-hand side chat. I've got the Forex page for tastytrade.com pinned to the top of the YouTube chat. You can check it out. All right. So I actually have some positions on.
Uh-oh.
And by some, I mean one. I'm long. No, I'm actually, I'm long the Aussie dollar. So.
I believe you're short.
I'm short the Aussie dollar.
Yeah.
I'm short the Aussie dollar.
Yeah.
Yes.
So the in between the symbol and the profit loss, that negative 0.02 means you are short 0.02 lots, which equates to 2,000 Australian dollars. You're short 2,000 Australian dollars.
Hasn't really moved.
Yeah, I mean, if you took it off overnight, you would have been scratch or perhaps even profitable. But that at least is one of the trending markets. What we're seeing today, pretty interesting picture. Dollar down overall, but we're seeing a bit of consolidation in the euro market, the pound market, but seeing some trending markets in Australian dollar, getting a big bid tone. That one has some correlations to U.S. equities, Chinese equities especially. So that one overnight got hit hard, bouncing back now. U.S. dollar, Swiss franc, definitely the most interesting pair to me since the onset of this Iran-Israeli conflict. But that one is holding in today as we're not seeing the risk-off sentiment that we have, or you and I might have expected from all the tweet headlines, but not playing through into that market. So that one holding firm. Euro dollar dipped below 115 for the first time in a while, but now that is back above it. So yeah, we tend to see this kind of consolidation into something like a Fed event, but it's nice to see. Most surprising thing to me is this dollar yen market. That one trending down right now from overnight, now sitting around 144.5. This one, in recent months, had some stronger correlations to U.S. rates since the whole bond market started making headlines on more supply-demand factors. Hasn't moved with it as much, but this will be definitely one to watch around a Fed meeting. Japanese yen getting a lot of safe haven demand over the weekend, bounced back to about 145. So this one, definitely curious where it'll go. What kind of questions you got for me?
Well, the first one was, which currency pairs are you focusing on if things were to escalate or de-escalate?
Yeah, absolutely.
You mentioned a few, but...
Yeah, so the U.S. dollar Swiss franc, which our good friend Nick had trouble finding, and rightly so, because it's USD CHF. Nice, one shot, one kill. That one, I think that is the Latin name for the Swiss Confederation. Interesting. Everything else more self-explanatory, but this one is definitely one to watch near 10-year lows, just bouncing off of it in recent days, and was trading above that 82 level prior to the onset of the Israeli-Iran conflict, the outbreak of that. Hasn't quite recovered yet, but now building some strong tape action in recent days. And like I said, not necessarily falling today as the panic alarms across markets not really going off.
So is this one that so we're at 10-year lows. Mm-hmm. I've got the cross axis here, for lack of better terms. Jan 1, 2015.
Yep.
Is the last time we hit this level. Are you just trading this just purely based on price extreme, regardless of what's going on globally?
So, yeah, that 2015 level was when the franc depegged from the euro. So that one caused quite the whipsaw there. Mm-hmm. But yeah, there's definitely a lot of strategies around this market swirling. It tends to be a less volatile market, but right now you have a lot more components at play. You have this 10-year extreme where in currency markets over a long period, you tend to see way more mean reversion than something like U.S. equities. So if you're taking a long-term position trade, that would be the strategy there. That historic precedent says this will revert to its longer-term mean. You also have the carry trade dynamic. If you look up at the top there, where you see the bid, the ask, the spread, and the swap bid and swap ask, those are quoted in pips, and that is the indicative overnight funding charge. So like you saw in headlines probably last summer with the dollar-yen carry trade, this market, given the margin requirements, how you could structure, how much you could put on in this market compared to a yen trade, this market, a long US dollar Swiss franc position would get you more overnight positive carry than a dollar yen. So that's another strategy going into the long side of this. But then you can also, in the short term, you could argue that if war breaks out, that US dollar has not gotten the typical safe haven demand that it usually gets when there's something like this geopolitical risk. And that on Thursday went all to the Swiss franc and the Japanese yen. So room for both sides here, depending on your time horizon and your underlying bias. But it's definitely interesting that it hasn't bounced back thus far, but is staying pat today.
Yeah, I think I'm going to smash this to the long side. The way that I size this, so the nice thing about this feature, if you just click the minus button here next to size, it'll bring you to the smallest possible tick size. So I'm looking at the notional $800. I think I like to live in that $2,000 range.
Yeah.
I feel like that's very manageable.
So if you scroll, we're fixing the kind of how this shows up, but if you scroll down in the trade ticket, there now you can see you've picked your direction. Now you can see your size and your margin all on one screen. So now you can make a better estimate without doing the math just from the notional. So this pair margined at 3%, so leverage of 33 to 1. You can command 2,400 Swiss francs with just $90.
Love it.
There you go.
Place, trade, smash.
Now you're in.
There we go. Deal confirmed instantly. I don't know if I like the instant fills. I feel like it means that I've done something wrong.
It's definitely quick. But yeah, you'll have on that trade ticket, you'll see in between the buy and the sell price, you'll see the spread right there while you're placing the trade. And so that's really the cost of entry that will reflect immediately in your P&L. Because if you're setting a market order, these are liquid markets, you'll get filled fairly quickly. And so that your immediate profit and loss will ding you a little bit on whatever that spread is. But you could also put in, if you felt more strongly about a certain price level, you could put in a limit order, and then you'd get your weight to fill. If that's, the feeling you're after.
Yeah.
Just waiting for it.
I mean, that's why we trade these things, so we can feel something, especially in the overnight session.
And Tom's feedback, no ding. He said you need a ding. He said filled too fast, no ding. Too slick, too easy to use, filled too fast, no ding.
That's amazing. All right, so we're in on this. I like it. I mean, I'll always bite on a 10-year trade extreme, regardless of what's happening. Especially if you trade small enough to where you can just withstand any variance. That's really the key.
Right.
So, different question. Similar thing though. Let's say J-Pow comes out and he's feeling a little loopy today. Says some wild things. Market goes crazy. What currencies do you think would react the most? You said the Japanese yen versus the US dollar. Any other ones?
Yeah, so there's some historic correlation in that dollar-yen pair to U.S. rates, but a decision like this will affect the U.S. dollar as a whole, and so you can look to the euro-dollar market, Euro-USD, as one of the most liquid proxies to trade just U.S. dollar exposure. So that tends to move on any of these FOMC events. definitely on the gut reaction. What is harder to tell is kind of how this plays out over a longer time horizon. Maybe there's more geopolitical risk in that euro dollar that doesn't necessarily mean one Fed announcement will categorically change the trading range. But Australian dollar, US dollar has been also a more of a risk on currency. So if you're not seeing the sensitivity to the risk off side in that Swiss franc right now, the other side of the risk spectrum, we tend to see Australian dollar on the risk on side. So we're seeing an uptick in that market today with U.S. equities. And so if there's a similar price swing in those markets, you could expect some similar sensitivity in that market. And that also, in terms of minimum trade size, even though Australian dollars margined at 3%, and euro dollars margined at 2%, because of the actual exchange rate, how cheap the Australian dollar is compared to the US dollar, you can actually enter this market for around $20, which I think is one of the cheapest from a margin perspective to get in right now. So this is one of the more volatile pairs. And so around a volatility event like this, I'd expect that to swing. But in terms of what the outlook is, who's to say if it has a more material impact on rates across the curve? Maybe look to that dollar-yen market. But you can stick to the popular U.S. dollar pairs for today's event, for liquidity reasons and because it is such a US dollar story. Otherwise, if you're feeling super crazy, you can go all the way down to emerging US dollar and you can directly trade US dollar Israeli shekel. Not to add any commentary on, whether profiting from such a traumatic event or outbreak of war. But this is a market you can trade to speculate on the strength of the Israeli shekel, and could surprise you that the Israeli shekel is picking up here. You're on the monthly chart. Let's flip it to the daily. And you'll see that we're right back where we were in this market pre-last Thursday. So we saw a big jump up, big rally in U.S. dollar prior to the weekend. Since then, we're seeing it come all the way back down, and the Israeli shekel actually now through however long this price extreme is, if you can zoom out, it looks like we're at the low in this market, all the way back to 2023. So this is a wider market. If you'll note, the spread there is 30, so perhaps a greater barrier to entry, but you'll still get filled very quickly, and this market is definitely more volatile than more liquid, popular U.S. dollar pairs. So,
yeah, I mean, even the last couple of days, you've seen 10% rip.
Yeah.
Also, yeah, big moves there. It is interesting to see this kind of consolidation near this level, though.
Mm-hmm.
So, yeah, crazy times. This is the really nice thing about the inclusion of this into the platform is you can trade all these different things that you really can't trade directly unless you have access to this.
Right.
Like, how else would you trade this in the equity world unless you had some kind of like wild stitched together?
Exactly. And at that point, you'd think that the closest proxy would just be watching crude oil.
Yeah.
Right. But yeah, surprisingly, among popular U.S. dollar pairs, the correlation to crude oil, not really there. Pretty uncorrelated. Now, of course, when we have something like this geopolitical event or ongoing events, those correlations tend to rise just because of the greater risk on, risk off nature. But in a day-to-day over the past 3 months, crude oil pretty uncorrelated to even U.S. dollar, Canadian dollar, which is thought to be historically a commodity currency on the heels of crude oil prices. But so that's been interesting.
Love it. I think I'm going to get involved in the Japanese yen. I feel like that is speaking to me right now. I'm short the Aussie dollar. And
so you are long U.S. dollar in both of these pairs.
So if I wanted to hedge, maybe I short.
You could short the U.S. dollar, Japanese yen, and that would be bullish on the Japanese yen. There's also the dynamic here is a very popular trading strategy around an FOMC event is to wait for the event itself, just because there will be likely increased volatility. And so you look at a chart like USD JPY here, and if you don't have a ton of conviction, I mean, just looking at these trading ranges, it looks like we're kind of in the middle of no man's land. We had strong support at 142. We've bounced against 145 a couple times in recent weeks. And so now closer to the upside, but pretty squarely in the middle. If you wanted to wait for the event itself, that's a popular trading strategy that gives traders, unique price points regardless, where you could look at this. If it goes how you thought it would, and that gives you a better entry, or if it goes not how you thought it would, and you have a longer term perspective on it, like take that U.S. dollar, Swiss franc, for example. If you were getting into it just for the historic price extreme, waiting for an event like the FOMC, you could see it flash even lower if the sentiment around the meeting itself is bearish for U.S. dollar, and that would give you the opportunity to get perhaps a better entry point for something you're already considering right now. Or, you miss out and you only miss out on a few pips while you're waiting for a lot more room to run there. So a lot of ways to play it. But you're thinking of getting in here before?
I think so. I mean, my sizing is so small that I still have the ability to layer into another tranche of the same idea. So I think I'm going to throw it on now. I'm going to tune in at 1 o'clock, 1:30, see if anything's flying around, and then I'll just layer into more of the same idea if something is moving against me in a big way.
Gotcha. And now when you're considering your time horizon for something like this, I would also note the swap bid and the swap ask. So getting short in this market and holding it overnight, so past 5 p.m. Eastern time, today, because it's Wednesday, a 3-day roll on the majority of U.S. dollar pairs, you're going to be paying an indicative value of 5 pips overnight. So at 20 yen per pip, not the biggest deal, but something to note that the other side of this market, that would be a positive value. But
20 yen is like...
That's nothing?
Yeah.
That's nothing?
I mean, 1,000 yen is like $5, $3, something like that. So
pretty close.
Yeah. I mean, 300,000 yen seems like a lot, but
and you're riding
like $500.
You're riding this thing to 100, so
yeah.
That's all going to be.
But yeah, I'm gonna go with the 0.02. That's a fun size. And we'll see what happens. And I'll just keep my eye on the positions tab, see if anything's moving against me in a big way, and I'll just layer in more. All right. What happens. All right, so we're in. Instant fill, no audio. No
ding. Sorry, damn it. So late.
Oh man. All right, good stuff. So we're in a bunch of stuff. I'm gonna pop over to the YouTube chat now, see if we got anything going on here. Jimmy, SMR trade strat is a go. So how do you feel about nuclear energy?
it's been a fun one to watch recently. You know, like anyone who's not in it, now is a good time to say, should have thought about that 2 months ago.
Yeah. I was actually talking to him yesterday, and he was like, yeah, at 10 a.m., for whatever reason, you see this rip in the price, and then it just trails off throughout the day.
Interesting.
And it's pretty consistent. It's actually pretty funny. Like, here's another one. Ding.
I've been seeing the same thing with a couple space stocks I've been watching, where open, it'll just rip and then kind of fades away. But yeah, I have no intuition as to the granularity of which nuclear stocks. I've heard of Oklo.
Yep.
Know some people in that. But the difference between them beats me.
Yeah. But
it's go.
We have a continued demand for AI. We have to power AI with something, and nuclear energy is at the forefront of sustainable, predictable, green energy.
It's beating windmills right now.
Yeah, the problem with windmills is you need wind.
Need wind.
What if you don't have wind? What if you don't have the sun?
I don't know. We're here in Chicago. There's always wind.
True.
Surprised there's no windmills. Can we? Those things are massive. Is there any scaling down there? I'd put a windmill on my roof that charges my phone or something.
That'd be amazing. If you can rig that up, let me know.
Solar panels, not so hot here.
Yeah.
But wind, we can do wind.
It's tougher. But yeah, solar and wind, fine, but they're just not predictable. Nuclear energy, though,
predictable.
I believe you're getting some energy out of that. Let's see. Nothing de-escalated. Vol sellers, FOMO as usual. Buy the dip. See what happens. Yeah. I mean, I'm shocked that we have a 30-point range today.
Yeah.
Feels very wrong. Feels low.
It does.
But maybe it's... And also, we have the holiday tomorrow, so that also plays a role. Half the office here is going to be out Friday, from what I hear.
I'm out. Yep.
There you go.
One half right here.
Yeah.
Small sample size.
There you go. So yeah, I think holiday week paired with no movement on interest rates, paired with let's wait and see. Probably that's what the narrative is going to be from Jay Powell. Is just let's wait and see.
Classic.
Yeah, it's
God. That guy never misses.
Frustrates me. Bullish Google call diagonal. Are you trading any of these Mag 7 stocks?
No. The opportunity in April was a good one for Mag 7.
For sure.
Just on long trade entry. So that was a play there, but day to day, it's tough for me. How do you delineate between them in terms of price action?
Don't really.
Okay. Liquidity, is that?
Yeah, I mean,
implied vol.
Implied vol for sure. It depends on your strategy. So like, if I wanted to get long Google and I look and it's got a 36% IV, like that's fine.
Okay.
In terms of like longer term leaps or diagonal spreads, because the lower the IV is, the cheaper it is to get that delta. But another way to look at it is like into the tariff information that was flying around.
Right.
You saw a lot of these stocks reach multi-year lows. So yes, the sell-off was likely emphasized by the fact that a lot of these Mag 7 stocks make up a huge chunk of ETFs, like the NASDAQ, QQQ, and even SPY. So the fact that all these stocks were projected to be impacted by tariffs, you see big sell-offs overall. But then at a certain point, you look at it again, you're like, oh, I can get Apple at 3-year lows.
Right.
Smash. So, I mean, it's. I think that also compounds why we've seen such a big rip to the upside. But you can look at the Mag 7 stocks and be like, okay, I want to get long one of these. Which one has not participated yet?
Right.
So Apple is kind of on the lower end of the range, where Microsoft is reaching highs, new all-time highs. So Microsoft's at 480. It's crazy.
Yeah.
So, like, would I get long Microsoft here? Probably not. Am I more comfortable getting along Apple here? Absolutely. So that's kind of how I look at it.
Yeah.
Because a lot of these stocks have a similar implied volatility. But Colin's looking at a Google diagonal, long August 175, short the July 190. So yeah, I like these setups because when you're buying the earnings cycle or buying in the cycle that contains earnings, you're paying more extrinsic value, but you also assume that that extrinsic value is going to stay bid because the premium will stay bid until the earnings announcement happens. So if you're selling July against that for $1, you're reducing basis a little bit, but you're going to get all that premium in July because it's projected to be before the earnings announcement. So you're kind of getting the best of both situations where you're short a faster decaying option and you're long an option that's going to stay bid. And if you get this move, you're paying $9 for a 15-point wide diagonal. I might have to smash this.
And in terms of trade management, you let it play through earnings, or you're looking for the move before?
Just the move. Yeah. The nice thing about if you're wrong and Google stays here or sells off, you can roll from the July 18th into July 25 and pick up a ton of premium because now you're rolling into the earnings cycle. But if you're right, this is a 15-point wide diagonal that you're paying $9 for. So if Google goes from 175 to 180, this will be a $200 winner and you can take it off. I'll dabble. Let's do it.
There you go.
920. Do we have 920? I'm going to leave it there.
No ding. Ding.
James Bond, happy hump day. Indeed. What are you guys doing before the Fed announcement? I'm not doing anything because there's really nothing to do. If this was a 100-point expected move, I would do like an Iron Condor or something in SPX. But 30-point move, I'm not touching it.
Nothing there.
Yeah.
Fair.
Yeah. Glenn, what do you think about a short USD JPY play for FOMC at 1 o'clock?
Well, you got it right there with your man Mike. He went through the whole thing, and he's in.
Yeah. I think it's interesting. But yeah, again, I think you can just do it small if you want to do it before. And then if it moves against you and you still have the same opinion, you can throw on another layer, and that moves your basis. Dollar cost averaging.
Exactly right.
In those FX markets.
Easier to do than futures from a trade sizing perspective. So Will is he's doubting your judgment. Why wouldn't you be long Switzerland during a war, Mike?
You tell me. Yeah, I mean,
and there's no war.
What's the narrative?
I mean,
they do make good watches. True.
I like it.
Yeah, and this is the beauty of it. You can take any side you want, and you can trade it so small to where, you know, like I could be right, you could be wrong, but I could take mine off, and then you're right 2 weeks from now. That's the nice thing about the ability to trade super small is you can just hold it forever.
And here you're able to have multiple U.S. dollar plays. You have 2 long U.S. dollar plays, 1 short, and able to layer those in and out as your perspective changes or your bias.
Yep.
Kyle, what about cable? Cable, British pound, U.S. dollar, sterling. That market is definitely one to watch off its highs for sure. Got a big move yesterday, down below 135. This is one to watch because not only do you have the Fed announcement today, overnight you have the Bank of England meeting tomorrow morning.
So we call it double whammy?
We would categorize that under double whammy for sure. And FX markets, spot FX markets, not closed tomorrow. So those are trading all day long. We'll probably see less liquidity without U.S. markets participating.
Yeah.
But when you're trading these European currencies that are open, it's definitely non-zero. So that you'll have market participants across these pairs. So that's one to watch. You also have, I forgot about it, the Swiss National Bank also meeting tomorrow. And that is less of a headline because the nature or the perceived nature of Swiss currency is that it's, less volatile and has less reliance on its own economic conditions. But it is important to note that they're expected to cut rates down to 0%. And like we talked about with the carry trade dynamic, that opens up the interest rate differential in that long US dollar short Swiss franc trade. And so the interest rate differential, the main driver behind the overnight carry, the ability to get positive carry overnight because you're holding US dollars at 4.5, maybe 4.25 today, most likely still 4.5. And that you're financing that position with Swiss francs that will now drop to 0% or in theory free to finance with, right? So that definitely plays into that dynamic. We'll see how it plays into the price action part of it, if that overwhelms any of the geopolitical stuff. A lot of factors with these currency markets.
Yeah.
You know, it's a whole country. And in the Euro's case, a whole group of countries. A lot at play.
So yeah, all these banks are watching what the other does ultimately.
Right.
Do you think at this point, obviously, U.S. is coming up in an hour here. Do you think you see movement or narrative shifts based on what happens here first, since they're...
You could. Bank of England definitely has been closer tied to what the Fed has been doing, but at the same time hasn't been necessarily handcuffed by the Fed not cutting. They've cut a couple times, and the European Central Bank absolutely not tied to what the Fed is doing. They've been continuing their cutting cycle. They're down, their deposit rate's down to 2% now. They've said that their cutting cycle is likely coming to an end. So we'll see how that plays out. But I wouldn't be surprised if something substantial comes of this Fed event, that the Bank of England doesn't address it in some way, or try and take a similar sentiment. But at the end of the day, if that's expected, then the only move in the price action would be a deviation from that, right? So we could see a move that's at 2 a.m. Eastern time, I believe. Actually, let's look. It might be later. No, I think it is too.
Scott's saying bank rate vote at 6 a.m. tomorrow.
6 a.m.
So that's
nice.
6 a.m. here.
Yeah, let me just confirm. We've got
these damn time changes. They're
so many of them.
They're hard. They're hard to keep track of.
Yeah, 7 a.m. Eastern time. So this one of the few events from Europe that will be during, our trading hours. Only Chris Vecchio and Ilya are up at 2 a.m. for the normal.
That's true. I hear you're joining them today. Is that?
Yeah, overtime. Let's do
3
it.
to 4.
I
think you actually said that in the chat. Let's do it. I think you literally said that.
Yeah, for their, it's nice to have a front row seat to listen to their expert opinions on post-Fed events, and we'll probably hop back into these spot FX markets to validate or see what's moved since then. And I'll be thinking of you first and foremost.
Thank you.
And your positions, and
I'll be sweating.
Hopefully a lot of hopefully a lot of green for you, my friend.
Thank you. Appreciate it.
That short Aussie dollar trade turn around for you.
It needs to happen.
Yeah. Well, I mean that one's been.
It's been simmering.
It's had a nice range, but that's the tough thing about these markets never closing, is without putting in something like a take profit limit order there,
which you would think someone might do. But
you don't have to, but if something's trading in a range to actively get kind of whatever profit target you're looking for, that move could very well happen overnight and come back before you wake up. So that's kind of the value add for putting in one of those conditional orders there. But best of luck to you.
Appreciate it. Popping back to the equity markets real quick. Netflix, Larry has a 1100 strike short call expiring in July. When does it end? That's a great question. I've been bullish on Netflix pretty much all year, simply because I think they will take over the live sports space. They've already done that with a few trials last year. They almost broke their servers with the Mayweather.
I was going to say, I too thought they were dabbling in it, but I didn't think those experiments went all that smoothly.
I was like, what is happening here? Like, this is Netflix. Come on. But yeah, I think that's the future of these streaming companies. They're going to eventually have a lot more exposure to football games. They had multiple games on the holidays last year. And it was a totally different experience. I think it was a better experience for those games specifically. But yeah, that's the future. And specifically for Netflix, you have these docuseries out like Receiver, and you have soccer ones too, where like you have the ability to hype yourself up before a season starts, and then they start taking over the games. It's like, it's a nice pairing there. But yeah, Netflix ripping higher, $1,200, crazy to see. But yeah, for your position, you have the 1100 short call. It still has some premium in there, $1,500, so nothing too crazy. You're at the expected move. If you wanted to hedge a position, you could throw on the short put. It's not going to hurt you. If it comes back down, you'd pick up another $1,500 in premium. But you are in the earning cycle as it stands. So if you're looking for the ability to get out quickly, then I would leave it as a short call, because just like the trade we talked about before, if you're in the earning cycle, it's going to hold on to extrinsic value until the earnings announcement happens. So if you have risk on both sides, that's not going to really help you as much if you get a big sell-off, because now all of a sudden your $1,500 turns into $5,000 if you get a at-the-money move. You'll still be losing less for sure, but if you're looking for the fastest way to get out, staying directional if you have a short option in the earnings cycle is likely the best way to do that. And my United Airlines position, I've been battling this for many moons. 85.90. I have the 85.90 inversion. I've rolled it a ton of times, plenty of times here.
Nice.
Is it a good time to uninvert to an 80, 87.5, or rolling to an 80, 87.5 to the 58-day cycle? We can check it out. It's pretty close here, but let's see. Rolling from July to August to the 80, 87.5. 80 call, 87.5 put for $1.68. So yeah, this would ultimately bring the delta down. So yeah, if you want to bring the delta down and bring the trade closer to the current market price, you're still picking up premium, and this will help you get out sooner than later. You are widening the spread. So mine's a 5-point wide inversion. This is a 7.5-point wide inversion. So keep that in mind. But yeah, I don't mind this as an adjustment. I'm just going to lean long though. I think UAL still has some room to climb to the upside, and I want to be positioned for that. So yeah.
I'm flying tonight, so I'll let you know.
United?
Yeah. If they can't, they've already sent, the warning flare. There's rain somewhere between here and Denver. Free change if you don't want to fly. We might cancel. So if they cancel,
sure,
you'll be the first to know.
Perfect. Yeah, I'm trying to game the system here, and they have the United Club credit card.
Right.
Extra 90,000 bonus miles.
90,000?
90,000 if
the
you
heck?
open the card and you spend $5,000.
But like the good card?
The top one, which
card.
gets you the United Club access, which is a whole nother thing where you save $100 every time you go to the airport. But
I got the middle card.
Okay.
And I didn't get all that. I think I got 50,000 points.
Dang. At least that's something.
But I'm going to Denver with the points, so.
There you go. But yeah, I have to buy tickets to Japan, Alaska, Jamaica, all United.
Let me guess. That's more than $5,000.
Yeah. Yes.
Instantly.
So you get the points for buying the flights.
Yep, like 2x or something.
Yeah, I think it's even more. Then you get the 90,000 bonus points. So then basically, all of a sudden, I've got 6 million United points that I can use on whatever.
Anything.
Yeah.
It's pretty
good. That's my grand plan. We'll see if I can make it happen. But
pretty good grand plan. I got to talk to you more.
Yeah.
You got better ideas than where I'm sitting.
Yeah. Well, I try. But Some of my ideas are not working well, like staying in end phase, for example. I've been hammered twice with these big moves here to the downside.
Yeah.
So
wow.
They're not all great, but that's the name of the game. If you're trading consistently, you will have moves that do not make you smile. What does make us smile, though, is we have Panda Express for lunch today.
Yeah.
So we got to get out of here, go have some of that. But thank you so much for tuning in. If you've got any questions, you can find us on the Twitters. I'm at Trader Mikey B. Glenn's at Glenn Freibarger.
There you go. With an A.
With an A. You can follow him, tweet at him, see how his flight is going tonight.
live tweeting in the thunderstorm.
Yes. Oh, man. But yeah, thanks for tuning in. If you got any further questions, you can find us on Twitter. You can also shoot us a note at support@tastylive if you got any further questions. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Catch Glenn on overtime today at 3 o'clock Central. And yeah, we'll see what happens with the J-Pow stuff. I think 30 points is a little light. I think we see maybe 50, 60 points from where we're at right now.
Okay.
We'll see if it happens. But yeah, join us same time, same place, 11 a.m. Central tomorrow. We'll see you then. And by tomorrow, I mean Friday. Because tomorrow's a holiday. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on 1 second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
There's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody.
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. I'm listening to, and I hear your voice.
Why didn't you go knock on the door and say?
He's taking a shit. All right.
I know. Well, why didn't you knock on the door and say, "Hey, Tony Batista here"?
I mean, what am I doing? Hey.
Right, autograph session happening right now.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We are back. It's Wednesday, June 18th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater, back for day number 2. Thomas, some might say it's one of the 8 best days of the year today.
Is that what they say?
That's what people are saying. They're saying that the Fed meeting day is one of the 8 best days of the year. At least the voices in my head.
Okay. All right.
I don't think anyone else is feeling that way about today, though, because this market is, quite frankly, quiet going into the meeting. Fed rate decision for June is due out at the top of the hour. We'll get a policy statement this month, of course, because it's one of the 4 meetings during the year in which they produce a new summary of economic projections. We'll get new growth, inflation, unemployment forecasts from the Fed as well at the top of the hour. At 2:30 Eastern, 1:30 Central, Fed Chair Powell will take the podium. He'll be sure to answer all the questions, including those aimed at him from reporters curious about what President Trump had to say about him today when, before the rate decision was even announced, Thomas, President Trump, in a little gaggle this morning, said Powell's stupid. So I think we know where the White House lies on the issue of no cut coming today. But I think that's really the story here. There is no cut coming today. The question is whether or not we have a reason to see no cuts for the rest of the summer because of what's happening in the Middle East. Josh, we can go to the slides here. It feels like there's a bit of a standoff right now between monetary doves and, well, war hawks, if you will, Thomas. I went back and looked at the pricing and the comments that Fed officials made around the April 24, October 24 Israeli-Iranian missile exchanges, as well as the start of the Russia-Ukraine war. Now, when Israel and Iran exchanged those missiles back in April and October of last year, the Fed, in its official communiques, in the policy statement, right, in Powell's remarks, unless he was pressed by a reporter, there was nothing actually communicated by the Fed. But in March 2020, just a few weeks after, actually, about a week after Russia invaded Ukraine, Powell did come out unprovoked and said that this is going to cause problems for inflation. So that's really the whole ball game here, I think, for the Fed. If we're going to have any geopolitical bent to today's statement or today's press conference, the question is whether or not it impacts their inflation outlook. A week into this is day 6 of the Israel-Iran war. I don't know if the Fed is going to walk away and think that this is going to be some protracted supply chain damaging standoff like the Russia-Ukraine war was. But that's really where we stand right now. We're not seeing many cuts come in to the equation in the short term. In fact, over the next few months, we don't see anything for June or July. There's an interesting disparity growing here, though, Mr. Westwater. The market's getting very aggressive for next year. The chart on the right-hand side of the screen right now, it's the difference between the SR3Z5 and the SR3Z6 contracts. Where will the Fed's rate be at the end of this year and next year? And on April 1st, that was roughly 20 basis points, right? Now here, it's about 66. We've nearly seen 2 cuts added on by the end of next year. And I think that's just a commentary in the market thinking that Powell's not going to do anything up front. And when Fed's new appointed chair comes in, that's when we finally get all the cuts that the White House has been clamoring for. So, Thomas, with all this in the background today, what are you expecting from Fed Chair Powell policy statement? Do you think they mention Israel-Iran?
I'm not expecting much, and I don't think they mention it until the press conference when he's asked. I'm certain he'll be asked about it. He'll say something like there's a potential for supply disruptions in oil. It ultimately doesn't, change the calculus for inflation, but they'll be keeping an eye on it, et cetera, something like that.
This is one of the 4 meetings per year where we get that new summary of economic projections. The last meeting, it had a stagflationary flavor to it. They reduced growth expectations. They lifted unemployment and inflation. And at the margins, it's stagflationary. Of course, if growth is still positive and the unemployment rate's still below 5%, that's not stagflation. Inflation right around 3% isn't stagflation, but that's the scent. That was the waft. And I think that's one of the questions that we have today when we look at the summary of economic projections, the SEP. Is the Fed going to have a more optimistic view on growth, a less optimistic view? Do we see a hint of recession coming into their forecast? Is it more stagflation? The fact of the matter is that while Q1 growth was bad, Q2 growth actually has been holding up fairly well right now. The Atlanta Fed GDP Now growth tracker that was released yesterday still pegs U.S. growth for the second quarter at 3.4%. And Thomas, the second quarter is getting real late now. There's less than 2 weeks left. At a certain point in time, we can no longer look for these as directional cues and just have to say we're not heading into back-to-back quarters of recession. So as the calendar runs thin for the year, the Fed might not be as pessimistic about growth moving forward. The stock market probably not going to be upset about that, right?
No. I mean, employment's been, the jobs report, it was fine. Jobless claims are still not showing any serious signs of, underlying labor weakness. I think today is going to be easily digested by the market, and then the focus is going to remain on this conflict. We get news that there's a delegation of negotiators headed out of Iran. So, we'll quickly shift focus back to the war headlines.
I think we will too. Volatility right now is pretty low. The VIX is sitting at 20.39, as it were. Volatility today, not really moving much of anywhere, although I do suppose we gap open lower, and we've been staying lower for the most part. Thomas, when we look at the calendar here this week, we obviously run into the problem of this being a week where we have a fractured schedule thanks to the federal holiday tomorrow. Unlike other federal holidays where usually it's a Monday off or Friday off, Juneteenth sticks to, June 19th, as the namesake suggests. So we have no market trading tomorrow. Futures are going to close at 5 p.m. today. Tomorrow we'll start to get quotes again midday. The trading resumes as usual Thursday night at 6 p.m. Eastern time. So we're going to have a full 24 hours where the market usually likes to give its true feelings for a Fed rate decision, and it has to stare down the barrel of these Israel-Iran headlines. Do you think this leaves the market susceptible to a potential late-day sell-off today where people kind of de-risk, if only temporarily?
Yeah, one thing, you're right, the market's off tomorrow. The volume is quite light right now.
That is very true. 721K is not where we want to be this time of day.
Yeah, so of course, a lot of people already leaving for their extended weekend trips, things like that. It's not too surprising when you're going into these holiday events. But buying a move on light volume, then you get a day off where you can't, get out of your positions. I'm not buying into this move right here. I think Friday's going to be a light volume day as well. And then we come back Monday and really find what the direction is. And by that time, you're going to have 4 more days of developing headlines of what's happening with Iran, Israel. So perhaps we come back over the weekend with more clarity, a better picture of what the equity market wants to do. But for now, it's pretty light volume. We haven't really, we've been holding a slight gain. It's low conviction. I wouldn't be surprised if we sold off into the afternoon session.
One thing that has evolved here over the past few weeks as stocks have moved sideways and shuffled around, the shape of the term structures evolved. We could see here today that the difference between the front month and the back month on the CBOE's VIX term structure is just under 3 points right now. It's like we'll call it 288. Okay. If we go back to June 4th, for example, 2 weeks ago, we would see here that the spread between the front month and the back month is 620. So the vol term structure has flattened out. Okay. We haven't seen that front end spike up right now, which is usually indicative of that immediate fear. But we're becoming a little less certain, a little less optimistic about the future, if you will, than we were just a few weeks ago. And I think one takeaway here, though, Thomas, is that during this period of time, the market's just shuffled sideways, right? It hasn't really given it up yet. It hasn't keeled over and collapsed. We're entering a second half of the month, though, that once we get through the expiration and the Fed meeting and options expiration, things can get a little unglued. For those that track this kind of stuff, we are in a little bit of a share buyback blackout window for companies. We just entered that at the start of this week, and that runs up until through the first week of July. So there's maybe some less buying pressure in this market, and a few of these headlines could shake things up. For the life of me, I'm still leaning long here in stocks because the patterns haven't broken yet. In the NASDAQ and the Russell, there's still this upside potential, and I'm not one to sell a bull flag, if that's how I'm interpreting it. Likewise with the Russell, up 1% today. It continues to hug that 1-month moving average, something that we haven't seen a close below. You have to find the last close there, April 23rd. So the tenets of the momentum are there. The uptrend is still in place. It's flagging, perhaps. But I think, unless things really go sideways here, Thomas, with Israel-Iran, the market's already benchmarked and discounted this. And July 4th is coming up around the corner. I think we're going to get some tariff pauses announced soon. And we kick the can down the road. One less thing for the market to worry about through the summer months.
Yeah, absolutely. I mean, the Russell holding that 3-week EMA there, that's, it's done that multiple times, going back into early May. So that's pretty positive there. I was actually thinking about taking a long stab in the Russell. But like I said, I'm not going to do it today, maybe Friday, but come back Monday. I'm also looking into that long bias, but I think we got to get through the next few days here.
I think it's worth reminding people the seasonality here for June. For the S&P 500, it's actually been negative for the month of June over the past 2 decades, minus 0.07%, whereas July has been higher by 2.48%, 85% of the time. Over the past decade, you have not seen a red month of July. Maybe that's going to happen again here, right? How often have you, in your professional working career, doesn't it seem like the market rallies through the summer, halfway through the summer, August is rocky, September kind of sucks, things bottom out in October, early November, it rips then into the end of the year, almost like clockwork.
That's pretty much how it's been, for the 7 years I've been doing this.
I think that's, I heard sell in May and go away when I first started working, but realistically, we haven't had a 12 of the last 13 Mays have been green for stocks. How actually valid of a claim is that? I don't know.
It sounds nice.
Right, so it sounds nice. It likes to rhyme, but that's why I say buy through July. Okay, so stocks are holding up right now. We have this Fed meeting coming down the pipeline. I don't think the reaction is going to be in stocks if it's anywhere. I think it's going to be more of a dollar story, more of a bond story today. And I don't necessarily think that the stock market is catering to, much of anything here. Give me below 21,700 in the NASDAQ. Give me above 22,350. And we're outside of the multi-week range that has basically defined the entire month of June. For the S&P 500, it's a very similar situation. We can call it 59.80 all the way up to 61.30. You're above there, you're looking at all-time highs. You're below there, you look for the swing low that we had back on May 23rd, 58.11. Probably get a little bit of a bump in vol to work with. But it's very much a holding pattern here. Nothing has changed in the past week. I suppose the only consideration folks would have is expiration. If you are looking at rolling this week, just keep in mind, again, tomorrow the market's closed. If you have a play on the board for the Fed, I suppose that's one thing. But if you don't care about the Fed and you're agnostic to it, you're going to roll on Friday, why not roll today?
Yeah.
Some things for consideration. Minor management to make sure that we keep our heads above water.
Yeah, I mean, there's a range here. We haven't gotten much in terms of price action recently. So, I mean, we're floating around. The market's waiting for something to happen, the next signal. And You get tariff pauses extending. I don't know if that's it. The war resolving, I don't think that would really, maybe that gives it, a short-term boost to market sentiment a little bit, but I don't really think that that would be the driving force in the equity market.
The sector performance here today, Mr. Westwater, it's looking pretty good. Of the 25 sector ETFs that we track here, 5 are in the red, so 20 in the green. The 5 in the red are all energy or metals related. OIH is the worst performer, down 0.42%. But among the 20 that are in the positive, telecoms here are leading the way higher right now. Then we could hop over to the banks, banking ETFs, both KBE and KRE. Those are looking pretty nice on today's session. A lot of the rate sensitive stuff is perking up too, despite some of this morning's absolutely awful data. We see here that housing starts crash. Right? We're expecting 1.36 million. We got 1.25 million. That's a 9.8% decline month over month. That's really dramatic. Building permits also fall off. They're down 2% month over month. Yet the home builders are holding in here, Mr. Westwater. So it's a rates day. Bonds are up across the curve. I suppose that's the real news, and I suppose that's the place we're going to look for stocks. I asked this of Dylan and Ilya yesterday on overtime, so perhaps I could get your take on this as well. We are obviously engulfed by what's happening in the Middle East, and it's taking up a lot of our attention. But surely there's a theme that we should be paying attention to that actually has some bearing on the market besides these flash in the pans, barring this becoming a world war. This is a temporary distraction for the market. What should traders really be paying attention to otherwise? Is it the fact that vol is meandering, hence we shouldn't overreact? Is it AI? Is it the Fed? Is it the Senate bill?
I think the Senate bill is concerning for the bond market, but if this war is going on, excuse me, energy prices are going up, or there's fears that they're going to stay elevated. The Fed's not going to cut rates, so are bonds really going to rally? If this Iran thing wasn't happening right now, I'd probably be long ZB, and that's not to say it can't go up, but there's risk there. I mean, Iran says a lot of stuff. If the U.S. gets involved, they're going to start targeting shipping lanes. That's, threatening language. What's the capability of them actually doing that? Is threats alone going to actually divert a lot of, or hold back a lot of cargo? How is that going to implicate Fed bets? Oh no, the tax and spending bill, it's an overhang, but I don't think it's going to be the main thing holding the market back. Maybe it could sap some foreign demand and, the auctions for a while. But overall, we're seeing that, foreign nations are diversifying their FX reserves. That's supported gold in a way. So I think, really the bond market, I think it's eventually going to take off higher. There's multiple things like we talked about holding it back right now. So, I've been wanting to get long ZB for quite a while here. It's just, I don't think it's time to pull the trigger yet. Yesterday we had energy was the only thing up. Today we're seeing, rotation back to traditional risk on rotation in the market. But again, light volume. So, I think it's, you stay light right now, which is what I'm doing. I don't have any equity exposure. My exposure is in energy products, some, livestock like lean hogs, things like that, corn, currencies. I think that's a good place to play here. But yeah, I don't know. I think it's, there's a lot of things, but I don't think one thing is, over encapsulating the market.
We have these, deglobalization, the supply chain realignment. There's, of course, the tariff talk. There's AI. Geopolitical tensions are in play, whether or not central banks have defeated inflation. We haven't heard about China's economy in a while as a potential issue, right? Their disinflation, deflation, their property sector. I'm just piecing together where's the wall of worry. One of my overarching theses is that it's really good to have a story to fight against if you want to be a bull. So you can prove the naysayers wrong, right? There are people who are able to provide liquidity because they have to close out their shorts. And once you get past Israel, Iran, the most potent thing in my mind then becomes, as like an albatross around the market's proverbial neck, becomes something like the tariffs. Then again, the tariffs really don't seem like they're actually going into effect in the manner with which they were threatened. So I guess we're going back to AI as the focal point.
Yeah, I mean, tariffs, even if you look at China, you know, they've seen some slowdown in industrial growth, but the consumer there is still quite strong. Retail sales came out a few days ago. That was above estimates, are still strong. So, you know, their economy is weathering these tariffs quite well. The U.S. economy is weathering these tariffs quite well, at least versus some of the more gloomy expectations that were put out earlier this year. I mean, of course, we've had these pauses come in, we've had exemptions, et cetera. So it isn't the full-blown tariff war that we've expected.
Right.
But even with, you know, some measures of it in place, China, U.S., which makes up a bulk of the world economy, is still chugging along.
Chugging along for now. Thomas, let's turn our attention here to the bond market at this point in time, just because I feel like we've covered the ground in stocks, which are chopping around. Bonds are here up across the curve again for a second consecutive day. Thomas, let's start with ZB, where you mentioned you were looking for, you know, potential long opportunities. The past few sessions, we've been kind of rounding up around that 1 month moving average. We're holding the uptrend here off of the May and earlier June swing lows, as it were. Volatility staying constrained at a 23.7 IVR. I've been leaning short put spread and long call spread combo. Short put spread simply because volatility was a bit higher when we were coming out of this bottoming effort, right? We had this bullish engulfing candle down here back on May 27th. And then once we break out into potential bullish falling wedge, I want the upside convexity of that play too. So I'm comfortable leaning long right now in these long deltas. You mentioned that you're looking to get long though. Is there a specific trigger, volatility condition, treasury auction that's going to tip the balance? Is it a price in the chart that you're waiting for?
I think if we clear, you know, 114.10 around this earlier June swing high, I'll just get long and stop fighting myself, holding myself back. So perhaps there, if, you know, we come into this June swing high, we get some selling, then I'll probably wait for the next pullback, go back to that moving average, and, you know, take a bet there.
You know, the bond market right now, because obviously the further you get away from the short end of the curve, the less impact that you have on Fed rate cut odds filtering through into what's happening. Okay, so when we think about the implication here, it's whether or not Fed policy is shifting in a more growth-friendly, inflation-friendly, growth-negative, inflation-negative type of posture. One of my working theses, and it has been proven correct thus far, I wouldn't say, although I don't know if it's been proven incorrect either. Back in September, when the Fed gave us a 50 basis point rate cut, the bond market ended up falling apart. Yields started shooting up, particularly at the long end of the curve. Spreads start widening out. Of course, you have the month of October where that trade is buffeted by the market pricing in a Trump presidency. But really the story there is you see higher stock prices, you see higher bond yields, you see a stronger US dollar. You have a reflation trade making its way through the market. And that makes sense because at the time in September, the unemployment rate's still below 5% and inflation, it's coming in, but it's still above 2%, and growth is positive. So the economy's running warm already, and you're adding some fuel to the fire. Conversely, then, if the economy right now is a little janky, and we're seeing consumer spending begin to suffer a little bit, if we're seeing that inflation readings, as we saw last week, are missing expectations, a Federal Reserve that doesn't provide easing is not reinflating anything. It may be deflating things. It actually may be a headwind for growth and inflation in the short term because rates could be too high. Trump may be right about that, but that's the nature of the Fed. The the Fed is always late. They're not proactive. They are reactive. They don't skate to where the puck's going to be. They're always fighting the last war. You've heard those snippets on Futures Power Hour many times over the past few years. But that's ever true. So I think leaning long bonds in the Fed meeting is more interesting than stocks because, quite frankly, the Fed is kind of hamstrung right now. And the bond market has a wall of worry to climb. It has an Israel-Iran war that could disrupt supply chains and push up energy prices. And that's just another incremental reason, at least at the margin, for the Fed to say, you know what? We got to sit tight right now. I don't know if they name check Israel-Iran today, but it's certainly in the back of their mind.
Yeah, I mean, I don't think they'll name check it either. We're about 30 minutes away. It's going to be interesting to see the initial reaction. And then, of course, we've seen times where the initial reaction is faded once Powell starts speaking. You know, the market starts to decipher his language, what he's saying, his tone, etc. This is just going to be one thing out of the way, but it's unique because the market's off tomorrow. There's light volume today. Are traders waiting? Are we going to start seeing volume, increase after the FOMC? I'm not sure. The one thing is the Treasury auctions. We've seen this, overall weak demand from foreign buyers. But there's been one-off auctions where, demand has come in stronger than expected. However, we get this weak dollar, and weaker dollar environments usually encourage foreign buying of treasuries because they could get it cheaper. And then when they're taking those payments back, they're, if the dollar appreciates, that's helpful. So that's one thing holding me back from being, too bullish on treasuries. But also I think you can balance that with being long gold because there is a reshuffling in the balance sheets if you're looking at China and other countries and what they've been doing the past 6 months. So kind of hedging, if you're doing a long bond trade with, being long gold, does that take out some of the risk of the trade? I think it does a little bit. But the bond market, we need this energy scare to come off for bonds to really, if the predetermined course is to go higher, which it looks like it is on the chart, it's probably energy holding it back right now in terms of how it relates to rate cut expectations.
So we have ZB moving up. ZN here, likewise, a touch firmer today, back above 111. This continues to chop around. I think we've been fairly consistent with this for weeks, where you have this tug and pull with what's happening in the Senate and the Federal Reserve and globally, where it creates a condition for a lot of balanced forces right now for notes. Notes in long and bonds, ZN and ZB a little bit different. But for ZN right now, it's chop. It's been chopped for several weeks, several months. And so the trading idea in general here has been, as long as we're in between what I suppose would be the 618 and 38.2 Fibonacci retracements of the yearly high-low range, basically wrapped around the midpoint. Okay, 110.5, 112.5. If you're somewhere in there, it's a decent place to look for a range-bound trade. And so right now for me, I still have that range-bound trade on Thomas, still short that iron condor, the 108, 109, 113, 114. One question that I always like to ask myself, and granted I'm not near a roll date, it's 37 DTE, but if I was 23 DTE today, would I be rolling this because of the Fed meeting, because of tomorrow's holiday? The answer is yes. Would I put the position back on again? Absolutely. Because the conditions for this trade to work out are effectively still in place, right? At 23 DTE, let's say this is the trade I had on, right? You're probably doing pretty well. You could ride it out for a few more days, but you could always extend it. And if we go out to, say, 65, we can look 109, 108, and maybe 112, 113. It's tight, but it's really just around the yearly the range here around this midpoint. And as long as we hold the midpoint, we're doing well. We could kick it out even further if we wanted to be a little bit less aggressive even so, Thomas, you're looking at something in the neighborhood of 50%, 60% probability of profit, risking 2 to make 1, 3 to make 1. They're not bad setups. The volatility is not fantastic, but directionally neutral and notes has been working. I ride trades that work into the ground until they kick me in the teeth. So I think this is the one place that you have to continue to do. Even if it's boring, it's not fun, it's worthwhile.
Yeah, I agree. I like the Iron Condor and Xeon. ZB leaning a little bit more bullish. Xeon, you have this really nice range carved out. I think I was trying to put it on last week when you were talking about it. I didn't get filled, and then I didn't revisit it after that. So maybe after FOMC, I'll look at that, putting on an Iron Condor for ZN. I like that trade. It's something where I'm just trying to, everything going on, I'm staying a little light right now. Definitely lighter than I've stayed most of the year.
Well, it's a good time to stay light, because if we do see a pop in volatility, given everything that's going on, vol is low, and as the typical rule is, forget the headlines and the noise for a quick moment. If you're looking at an environment where it's quiet and vol is low, that's when you take profits. You begin to wait. The tasty methodology is wait for high vol periods to get in there and put capital in play. With the holiday tomorrow and all these events, you mentioned, like, you're taking off Friday. I am pretty certain that you're not the only person who's taking off Friday to make a 4-day weekend of this thing.
No.
So you mentioned low trading volumes, right? And that kind of extends to everyone. So if there's a lot of people on vacation, why do you see outsized moves sometimes in late August or between Christmas and New Year's, like randomly? Because it's a thin market. Right. It doesn't take a lot to push things around. You can kind of get that situation on Friday. So bringing down beta-weighted deltas, neutralizing positioning, having some dry powder will not hurt. You mentioned slight volume today, though. And I think one of the perfect demonstrations of that is how quiet metals are, all things considered. Gold is down by 0.03%. It's a doji for a second consecutive session. Silver is off by 0.72, but obviously that pales in comparison to yesterday's surge. Copper prices here, they're up actually a little bit, 0.81%, but basically back to where we closed on Monday. Metals outside of silver really haven't done much the past few sessions, Thomas. Vol is coming in, though, and you know what's really nice here? We've officially passed a year mark of having copper contracts on the platform, which you can finally get the IBRs coming back in here the right way. So with that said, SI, gold, copper, 3 unique metals, 3 different stories. Break each down for us.
Yeah, I have an order working for that Iron Condor. I think we talked about it yesterday, or was that last week for copper?
Yesterday.
I got that on because like you said yesterday, you could go pretty wide right now in copper. So hopefully that order fills pretty soon for me. I think there's a lot of, there's not a clear direction for industrial metals right now. So copper being one. We've seen this pretty tight range. We have good swing lows and swing highs to carve out of it. The option structure, it's giving you that width that you can go out and contain that price action. So I'm getting in that trade. I'm actually looking at getting long gold again. We've pulled back, but today and yesterday, we've really held like the 9-day EMA. We've seen some buying under there. We got a lot of price confliction around between 33.50 and where we're at now. I think the uptrend, remains in place for gold. If we're getting, it's moved up even though the rate cut bets have been pushed back. So, that's not scaring the gold market. It's been a lot of, hedging against economic uncertainty. That's going to continue without trade deals worked out in the next couple months. Like you said, kicking the can down the road, doing more pauses. It's just going to keep that uncertainty there. It's not going to really relieve it. It's not going to really increase it. We have a weak dollar. Even if you get a dollar rebound, is that going to hurt gold too much right now when there's a lot of people seeking out diversification from equities and things like that. The most interesting thing is silver with the move it's had.
Sure.
It's brought the gold-silver ratio down quite substantially. The silver catch-up trade, whatever you want to call it, has been a really big focus of the market. We have a slight pullback. We're retracing about a third of yesterday's move, but we're remaining near that swing high from June 10th, right around 37, right there, 39.8 or 36.8. So I like getting long silver here too. I'm probably going to try to put that on. And is this move like this big breakout we've had in June in silver? Is this just going to disappear, or was it done for some reason? Gold having put in a lot of the legwork earlier in the year, and now silver, if you're expecting some industrial demand to come back, eventually trade deals get worked out, you're trying to get ahead of that. So silver is a good place to be there.
You mentioned the gold-silver ratio, and I know that was a highlight or spotlight and a cherry picks a few weeks back when it first crossed the 100 mark. We crossed the 100 mark. The gold-silver ratio hits a high here in 2025 of 105.584 the week of April 21st. It's come back into 91.901 right now, according to the spot market. So that's a little bit in a long way. But the point is that when you see these trades at extremes, this is why having patience and having proper structure, proper duration matters so much. Because if you went out there the first time we cross 100 and you say, okay, I'm just going to jump in and this is going to rubber band back towards 90, you waited 2 months. Now, granted, we didn't advance much more than there, right? The gold-silver ratio, again, it goes across 100. It hits a high north of 105, and then it meanders around 100 for a number of weeks. So if you were able to hold the position and say, no, gold is not going to outperform silver for much longer, it worked out well enough. It really worked out well in the past 2 or 3 weeks. So structure, timing is important. You can be right, but if you don't have the trade timing down, you're not going to make money. And I would encourage particularly newer viewers or people whose memory may not be jogged. John Corzine is a perfect example of this. His firm, MF Global, when it goes bust in the 2010s, it's because he's making all these bets on European sovereign debt. That European sovereign debt was undervalued and that yield shouldn't be near 7% for the pigs, as it was called at the time, the Portugal, Italy, Ireland, Greece, and Spain. But his position was over leveraged, so he collapsed. So the position went under, and obviously MF Global is a whole story that deserves its own podcast or a series of podcasts, Thomas. But he was ultimately right. If he didn't have the leverage he had on, then the positions wouldn't have been broken. And then when those bond markets rebound, MF Global doesn't have these liquidity issues, the rehypothecation issues from back in the day. So timing matters in all this stuff. Position sizing matters. Duration of your trade matters. If you're going to play ratio spreads, you got to give them a lot of time to breathe, is my point I'm getting at. So silver here looks poised. I'm a buyer on dips. I really like silver. It's been a modus operandi around here. I'm a metals guy apparently now. The only thing is I do have that short position on in copper still today, obviously not working out. It's a short call spread against the pivot high that we had here on June 5th. Assuming that we hold those pivot highs, I'm going to hang tight in this position. But as we noted yesterday, putting on something like a short iron condor here, there's enough vol on the board to do something basically wrapped around the yearly high low, carved out around Liberation Day. And we can be directionally neutral for a market that has been relatively unscathed by any of the geopolitical headlines in over the past 6 days.
Yeah, I mean, one thing too, I know we don't trade it, but platinum, kind of similar to how it behaves to silver, a mix between a precious and an industrial metal. There's the gold platinum ratio, which has really fallen. In April, it was trading, multi-year highs. Now it's fallen about somewhere around 30%, just since April. So
well, spot gold is up 29.05% year to date, Thomas. Platinum is up 46.53%.
Yeah. So
crazy.
It's kind of similar to silver. Silver and platinum have a decent correlation. So you're kind of seeing, that play out the same way it is for industrial demand coming from China. So platinum industrial demand in China expected to rise, deficits over the next couple of years. So
you said that it was I thought you meant 30% year to date. I didn't mean to correct you. It's been 30% this quarter for platinum.
Yeah. It's
silver's up 8%. Platinum's having a crazy quarter right now.
Yeah, it's I was talking about the gold platinum ratio since the swing high in April.
Mm-hmm.
So that has come down all the way from 3.6 to 2.5.
Yeah. Wow, that's a big correction in quick order. We wiped out the entire advantage that gold had relative to platinum going back to last August in the span of like 2 months.
Yeah.
Jeez. Well, that's a sign people are just looking to get their hands on these shiny rocks. And you've heard from a number of prominent people in recent days. I think it was Jeff Gundlach last week when he said that gold isn't just for the crazies anymore. And then there was someone else of notable importance who said something similar yesterday about how gold is now the new safe haven currency. Either way, our view here, longstanding, has been that in a defractured or fracturing, balkanized world of trade and deglobalization, you're going to want to have more of the hard assets because getting your hands on them becomes more difficult over time. Metals, gold in particular, will be in focus for the Fed meeting, but if stocks are contained in bonds, 99% chance. Thomas, find me a time going back since the beginning of available recorded data for Fed funds futures where the Fed has surprised the market when it's been priced for a 99% chance. You will not.
Yeah.
They don't like to do that. You need 55% chance. But at these levels, we're not there. Okay. I saw that there could be a third carrier strike group moving into the CENTCOM region, Thomas, but apparently that's a pre-scheduled deployment. Oil prices were trading lower earlier because President Trump in his morning gaggle said that the Iranians have been begging to come talk to him at the White House. That's impressive. The Iranian consulate, however, has a different story to tell, according to my Chicago-based source and producer, Josh. The Iran mission to the UN has said no Iranian official has, italicized ever, asked to grovel at the gates of the White House. I don't need to read the rest. That kind of captures the whole spirit there, Thomas. I don't think it sounds like they're talking that much, although you made mention of something earlier, that Iranian government planes are flying to Oman. Oman, a place where U.S. and Iranian officials have met in recent weeks to negotiate around the nuclear deal. So who do we believe? Do we believe the Iranian embassy or do we believe the flight tracker photos that you and I were exchanging over Teams earlier?
Yeah, there's planes moving, and these are government planes, so they've previously carried these delegations. And one thing is people are saying is, why are 3 planes going, at a time? That's pretty obvious when you have a major military conflict and there's missiles flying all across the sky. You're dividing the people up in case one plane gets shot down, which I'm sure the Iranians, don't, they're going to be hesitant right now to all fly on one plane. So 3 planes makes sense. People said they're evacuating families of high-level officials to get out of the country. Also possible. You can't know for sure because all we see is the flight tracker data and what we're hearing from both sides, which is conflicting information. But I think the most likely scenario is these are negotiators going to talk.
Negotiators going to talk would be a good thing. Talking's a good thing. It's always a positive step forward. Oil prices are only off by 0.33% here, although volatility has certainly come in a bit. We had a high IVR of 142.31 yesterday. It's now back to 95.6. So perhaps the signs of a top being carved out. It's very choppy. It's obviously based around a lot of this news flow, if you will, but you can see here swing high, swing low right around 68. I would say the fever is officially broken when we're down below 68. But at that point in time, oil will already have moved $5 and volatility will probably already have collapsed. So, I think the prudent thing to do right now, if you're not already doing it, going out into actually the U5 contract already for the September expiry, if we're thinking about looking for opportunities to sell the vol, there are ways to do this. You're not going to collect a ton. It's an 80% probability of profit, but selling a call spread up against the one standard deviation move right now, you're selling the $88 call here in oil, Thomas. That's a long ways away from where we are. So you're not going to, listen, there's no such thing as free lunch. There's no free money in the market. And that's not what I'm suggesting here. But the fact that we could sell calls and puts so far away from where we currently are at these levels, you can't look away. I don't think you can look away.
Yeah, no, it's really enticing.
What makes this interesting is if we really wanted to be brave and bold, top callers, we would head over to not the 88.90 call spread. We'd pull this all the way back in and we say, did we get above 75, 76? No. But this is actually more of a typical tasty trade for the trade setup that I like. Why? Because it's basically 3-to-1. Well, it is 3-to-1 risk to reward, 61% probability of profit. The flip of the coin here is that we are going to be looking for the high that we had on June 16th to hold. This will not spiral out of control more than it already has. We can't do this before it's too late, Thomas. So while the market is doing what it wants to do, we're going to have to take a stab here. We're going to watch this like a hawk, of course, which means tonight's another night where we'll be monitoring situations like those people being made fun of on Twitter. But if you're trading oil, you have no choice but to do that.
Yeah, I like that. I'm putting on something similar right now. A world where, oil spikes to 80, that means negotiations have completely fallen apart. Proxy groups are targeting vessels in the Red Sea and the Strait of Hormuz. And is that going to happen? Low likelihood, but in war, things can happen in the blink of an eye. But right now, I think, this trade's giving you good numbers right here. So like you said, it's definitely worth taking a stab at.
Natural gas is the other thing that's been working, I think, for both of us here. You and I are both short put spreads against that right around that 340 level. You got in at the end of May. I popped in last week when we had that sell-off once more. How are you feeling about natural gas here right now? It seems like we may be breaking out to a certain extent.
Yeah, it's a breakout. I actually sold a call spread, so I still have my short put spread on, both in the 40-day out contract. I sold the call spread 4.5, 4.6, so gave myself plenty of room if we get more upside. Still 40 days, so a good amount of time. So I'm just playing for, to stay between essentially 3.3 and 4.5. We got the EIA numbers out today. I think it was around 100 billion cubic feet draw, or build, excuse me. So it was pretty much in line with estimates. We got this heat wave coming up for the eastern U.S., so prices have been rising into that. There's a few gas disruptions with Iran, nothing too significant, but I really don't see us going up to like 4.4, 4.5. I think we could get a couple more days, maybe 4.2 is the max, but I'm playing to contain the price action within those levels.
Alaska has a heat warning today for the first time ever. You mentioned this heat wave that's coming in for us on the East Coast. Next Monday, Tuesday, Wednesday, 97, 98, 95. Going to be warm.
Yeah, the Penguins are not going to like that.
No, they will not. So natural gas here is still working. It's a 66.3 IVR. Maybe this is a short-term bump, maybe not, but it feels like after watching this triangle coalesce for a number of weeks and months, it's finally getting some lift here right now. This isn't the exact downtrend, but to the high it wasn't really a clean technical read, whereas this makes a lot more sense. There are multiple touches against this downtrend. So, Thomas, long deltas here remain appropriate. It's just about timing and structure. If there's a pullback into 385, for those that weren't looking at this, if I hadn't been in this position already, would I be willing to adjust? Yes, in fact. This is one of my hopes. I'm hoping that the market pulls back into 385, so I'm not a position that doesn't have so much upside convexity. I can make an adjustment to get a better way to get upside exposure here, because right now, every penny that we go higher, we're basically maxing out our gain at this point in time. So we'll see how this adjusts, but a pullback here to reassess, reestablish, extend duration, get a little bit more convexity wouldn't be a bad thing. Ahead of this Fed meeting today, a Fed meeting where apparently there's juxtaposition growing between the Fed and every other central bank because other central banks are continuing to signal their dovish intentions. The Fed does not. We are not seeing the dollar perform that well. Dollar down across the board except for the Canadian dollar today. Although, Thomas, I can't shake those two things we talked about yesterday. What we've been looking at, I think, in terms of positioning for the yen, which has been that this is a market that is extremely short the US dollar right now. Yen positioning is effectively the most net long the yen has ever been. According to the Bank of America Fund Manager Survey, we see that global fund managers are the least bullish, the most bearish on the US dollar since January 2005. If this isn't a sentiment extreme, I don't know what it is. I'm looking for the dollar to ultimately roll over, at least, well, these charts to roll over in favor of dollar strength, 6E to go down, 6B to go down, yada, yada. I'm looking at 51 days to expiration here, Thomas, against the recent highs that we have. It's close to 117. I think this is a decent enough place where we have to consider looking to sell a call spread. It's a 40.3 IVR. And we're getting something inside that 3-to-1 risk to reward above a 61% pop. We tried to put this on yesterday. It didn't get filled. Hopefully it gets filled today. I think tactically in the short term, we should be looking for a dollar bounce.
Yeah, I think you're right. Like you said, it's a really, really crowded trade. The first half of the year was certainly conducive to being dollar short. We did have that rebound in May. It was pretty short-lived. It was sold off fairly aggressively. And just all the geopolitical factors happening, the trade stuff, it's really caused a flight out of the dollars. And now are we at that point where those, dollar shorts are going to capitulate? And they do have to at some point. We just need that catalyst.
We just need that catalyst. Maybe that catalyst is coming because the Fed meeting, the policy statement is going to be released in a few minutes. The yen continues to coil. The British pound here, you can see it's starting to break its uptrend over recent months. As Ilya might say, you go down to that 4-hour time frame and you look at where recent swing levels are worked out, and you can see how just here, right, we're kind of failing below recent support in this market. The exact closing levels right around 134.80 back at the beginning part of June. Not quite climbing through. So maybe the dollar's making a turn here, right? The pound has been a leader this year so far. It's cracking. The euro obviously has been a leader so far. It's almost ready to crack. Even the Canadian dollar, which was surprisingly strong on the other side of the tariffs, we're beginning to see its uptrend off the lows come under a bit more stress and strain. Canadian dollar tends to be a leader for the broader US dollar complex because of the tight trade relationship between US and Canada. So let's just gander. If 6C breaks down from here, Q for the euro, Q for the pound, Q for everything else. And that dollar strength, maybe we're due for a tactical bounce. That's how I'll be trading it, though, because positioning to me is the most important thing to watch. When you have a crowded trade, you do not want to be the last person on that bus. What's next on the calendar? There are things due out tomorrow. Keep in mind it is a U.S. holiday, so futures market closes at 5 Eastern tonight for its usual batch order processing. We don't resume trading. Tomorrow's an off day. Think of it like a Sunday open, if you will. Okay, but we do have other events coming out. So if you're trading 6B, you're trading 6E. You have an ECB president's speech. You have a Bank of England governor's remarks. Why? Because we're going to have a Bank of England rate decision as well tomorrow morning. There's no cut expected. The desire to cut again is expected to shrink. 7 people were in favor of it last time, only 2 this time. We had an inflation report today that's not doing anything to hurt the pound whatsoever. So, Thomas, I think that's really the play here. If you're trading 6E, 6B, I should say, the euro or the pound through the futures market, be mindful of the gap. If you're trading spot effects, you have a different story. No problem. Pound dollar, euro dollar rates, that will be fine. But just keep in mind your structure of your trades. With that said, you and I need to get going because it's a Fed meeting day. It's one of our 8 favorite days of the year. We have to see what Powell and Cole have to say. Look for that policy statement, that summary of economic projections. I suppose more importantly, Truth or Skepticism is coming up next. Radigan and Sosnoff joining you here at the top of the hour. Of course, Tom, Dylan are both over in Europe, so it should be a fun conversation. And be sure to catch them. They'll be together this weekend in Italy for the events they're doing abroad. Go to tastylive.com/events to find out more. But we're going to head over there now. We're done. Thomas, see you after the Fed. Good luck trading.
Hello, everybody. We're back. And I'm Tom Sosnoff. It's time for Truth or Skepticism. I'm here with Dylan Radigan. Mr. Radigan.
So when I was a little boy.
Oh, no. Oh, no. Okay.
The Americans played the Russians in Lake Placid in hockey in 1980 in the Olympics. It was quite a thrilling event in my childhood.
I was there.
You know, good for you. Okay. This is about me. It was a very thrilling event. And it was, as you know, it was politically symbolic on many levels. The Cold War, all this and that, Russians, the kids versus the Russians, all these things.
Yeah.
But at the essence of sort of my indoctrination as a young fellow,
yeah,
was the indoctrination, propagandization, in whatever you want to call it, that the American way, that truth, justice in the American way was the best way or was a better way than the Russian way or the Chinese way. And the critical, I would say the key distinction, there's obviously one key distinction was the American way was presented as a more free way of freedom, more flexibility, more liberty, truth, liberty and justice for all that jazz. And one of the other core principles of the American way was a strong separation between church and state, but also a strong separation between the private industry and state. And up to the extent to which where the Russian society and the Chinese society was ridiculed for what was deemed at the time a centrally planned economy, and that the idea of central planning was a disastrous way to operate any economy, let alone a massive economy, because the further the distance between the executives and the capital and the customer, the worse the decision-making gets. So if you consolidate all the decision-making in a central Politburo, that the Politburo is so detached from whatever's going on the customer level, it slows down innovation, it reduces customer service, it makes for a weaker product. It basically, the reason America has more variety, more innovative, more product, more resilience, more flexibility, more productive, and the reason America won, so to speak, as an economy relative to the Chinese or the Russians is because it was not a centrally planned economy, but in fact, it was a distributed economy where capital flows freely among small groups of people who are able to experiment and compete and try to invent better mousetraps, whether it's a better brokerage firm or a better coffee shop or whatever it is. This was like the central principle of what made America different from the other sort of towering economies and powerhouses of the world, specifically Russia and China. So I was honestly somewhat confused, befuddled, and even a tad bit disturbed when I recently read that the U.S. Commerce Secretary recently negotiated a new class of stock. As you know, in the shareholder world, you have different classes of shareholder where people have preference. So if you have an A share, you get this, and you get to vote, and you get the money first, or you get to decide things. And if you have a B share, you get whatever money's left over. And if you get the C share, you get no voting rights. You can create all these different classes of shares as a way to sort of govern an entity. And for the first time ever, I believe in American history, a new class of stock was recently invented by the Commerce Secretary that they're calling a G share, Class G. And there's only one. You get one. It's just one share. Everybody else got A shares, B shares, preferred shares, subordinated shares. In fact, my first internship was at Merrill Lynch, I'll have you know, and this is pre-internet. And my job, I worked I was an intern in the compliance department at Merrill Lynch at the World Financial Center. Very exciting building to work in as a young fellow, but brutally, horribly, horrible job. Oh my God. Anyway, and so the job was to go through all of the new issue prospectuses, all the bond prospectuses, all the equity prospectuses, and organize them by preference. So like this would be the senior subordinate, this is the senior, this is the subordinated, this is the convertible, this is whatever. And you have to arrange all the prospectuses for AT&T and arrange all the prospectuses for General Motors, whatever. And so I'm a longtime aficionado, if you will, of the various classes of stock. But I would even venture to assert that I'm an expert in this particular area. And I will say, despite my various expertise and training, I've never before heard of a G share. And so I took it upon myself to do a little research. And the G share, while it's only one measly little share, the rights assigned to the G shareholder, first and foremost, are veto power. And as you know, having built and run many businesses, that the ultimate power inside of the governance structure is not the power to do things, but rather the power to prevent others from doing things, right? So it kicks up. So the CEO can do this, but the board can say you can't do this, and the board can say this, but the shareholder can do this. And so the G shareholder apparently holds the ultimate veto power and has a specific list of, a specific list of mandated best practices in terms of where the jobs must be located, or sort of how labor and capital must be managed. So there's a mandate for how labor and capital must be managed, and failure to comply with the mandate for how labor and capital must be managed can be met with the veto power of the G share. And the deeper I got into it, I was like, well, who's the G shareholder? Who has this G share? And lo and behold, the G share is negotiated to be held, and all the voting rights of the G share are negotiated to be held by none other than the President of the United States of America, who is not a private sector individual, who is not a member of the board, who is not an investor in the company in any way, shape, or form, as a matter of fact, who maybe probably knows nothing about the business whatsoever. And or it could be someone that the president designates, apparently, a designee, if you will. I think they call it in the court of law. And so then I was reflecting on this G share, and I was trying to understand, well, what's the difference between a G share, which assigns the president of the United States ultimate veto power over all governance and operations at a private sector corporation, and a centrally planned economy at the Politburo in Beijing or Moscow. And quite honestly, I couldn't find a distinction. So for a couple questions before we get into the weeds on this, but I am curious, am I wrong to see this G share as a modern equivalent of a centrally planned sort of, it's a mechanism to exercise power by way of central planning in the government? Yes.
Yeah, it's not the same thing. I'm not defending it, validating it, or any of that yet.
I mean, wouldn't the G share be the government share even? It probably stands for government.
Probably. I assume it does. But the idea, the difference is that this is a foreign company that is trying to buy a U.S. company. So this is not a U.S. company that the government is demanding to participate in controlling or having veto power, controlling the board and doing whatever.
It's not the G share taking over Tasty Trade.
It's not the G share taking over Tasty Trade. It's not the G share taking over Apple or Amazon or anything like that. This is the G share stepping in to facilitate a multinational deal in an area that there are monopolistic risks. And so what the G share is, the objective of the G share here is to, I believe it's to essentially level the playing field and protect the interests of other companies in that space. So it's essentially saying that and this is, I think, the thinking. I'm not saying that this is right. What I'm saying, the thinking behind this is a deal where there is advantages to scale for both U.S. Steel and Nippon Steel. And because of that, this is a deal that actually makes sense. But it's also a deal that creates some monopolistic risk in the steel industry in this country. So in order to facilitate this deal and keep everybody else at least to take some of the risk and fear off of the away from the industry, away from the steel industry, is to say we'll create this other class of stock, and because we've created this class of stock, we protect the integrity of the free markets in the world of steel, so they cannot create a monopolistic, price. They can't basically force price. They can't force different things, from regulation to price, to innovation, to sales practices and everything else. So I think that's some of the rationale behind it. Here's my issues with it, because there are a lot of issues. First and foremost, why is the president of the United States involved? Like, it'd be one thing if there was a domain expert that was involved, but the president of the United States cannot be, on the one hand, managing his own businesses, on the other hand, managing the country, on the third hand, managing all the culture in this country, if it's the Kennedy Center or something else, and then on the fourth hand, which managing an industry that he doesn't understand one bit. That all is scary in itself. So I don't understand how that directs up to the executive branch. But
just not to flip it over, but so what about this? What if the G share is a way to allow foreign capital to inject foreign capital, in this case Japanese money, but it could be German money or Canadian money or whoever? What if the G share is an active? What if the G share stands for genius, and it's a way to actually allow for foreign capital to more easily flow into investment in the United States while managing the risk of foreign control of core U.S. industry?
I mean, there's another side to this too. That's a very fair point, Dylan, but there's another side to this too. U.S. Steel is a publicly traded U.S. company. Nippon Steel this is not necessarily a hostile deal.
Yeah.
Not at all. And so U.S. Steel could have easily said, we have no interest. I mean,
Well, I understand, like that this is a mutually agreed to
this is a mutually
this is basically a government. This would be like the same way that antitrust might say, well, listen, Tasty Trade can't merge with Schwab, can't merge with E-Trade, can't merge with whatever.
I mean, the government,
it's like an antitrust action.
The government is facilitating this deal because both these companies, U.S. Steel and Nippon Steel, think they're a 1 + 1 = 3 or 4 or 5. I mean, that's the whole reason for this. So they both agree to this. So they see there's obviously a lot of positives. I mean, we're just outsiders looking in saying, oh my God, this is a really bad, precedent being set. But the reality is, I mean, both these companies obviously want it, and they looked to the executive branch to make something happen. And so, so the question then becomes, is this what's going to happen to here's a better, let me put it this way. The risk is that we do not want the executive branch to get involved in free market deals, free market enterprise, the whole concept of corporate action, everything else. In this case, it might be a one-off to facilitate a transaction that was not allowed to otherwise go through. And so the question is, is this just good negotiation, or is this a way to get something done so it just the optics are better, or is it this is what both companies wanted, so this is the way to facilitate it, or is this something that the executive branch can use in the future to kind of control all deals? And that's the scary thing. And domestically, I don't think that's even possible. Internationally, that's different because you can it's like throwing the franchise tag on every single international company that wants to buy a U.S. company, or maybe vice versa if other countries get into the act. So the dangerous thing is that this kind of control spreads, and it doesn't line up with what we consider to be true free markets. The positive side is that they helped to facilitate a deal that wanted to get done.
Yeah, and I'm just sort of reflecting on it as this discussion is influencing me a little bit. So a couple of things occur to me. The government's always involved in business, whether we like it or not, primarily through tax policy, but also through permitting and blah, 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 blah.
Yeah.
Two, the government always has at its disposal the ability to interject itself into business by way of antitrust law using the Department of Justice. What I find the most concerning about this, let's assume that the G-share is well-intended and that it's meant to protect U.S. industry while at the same time facilitate the flow of foreign capital into U.S. markets.
Okay.
The road to hell is paved with good intentions, as they say, because the risk with the G-share is that the G-share does not reside with the Congress, which sets tax policy, or does not reside with the DOJ, which controls antitrust, but rather it's a single voting share controlled by the President of the United States in a unilateral manner. And it introduces the implied threat or possibility that a G-share could be assigned to any company at any time. Right. I mean, I think that on the one hand, you can say, listen, I guess that the whole issue with the Trump administration and the way it does business, in my opinion, and my biggest objection to it, is that and we had this discussion last week or 2 weeks ago, it eliminates any dialogue or adversarialism about decision making. So as opposed to it being either through the DOJ, which then has to go through a court of law, and there's an opportunity for a prosecution and a defense and an appeal and blah, 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 or a legislative process, which requires, hundreds of votes and all the legislative process. This becomes a singular executive function with a unilateral control residing with one individual, which in this case may be used for a relatively positive intention to facilitate a mutually desirable deal, both by the domestic target and the foreign buyer. But it introduces a mechanism of power that has there's no appeal, there's no debate, there's no court of law, there's no legislative process. It's a simple restructuring of the operating agreement of any company to introduce a unilateral vote, which I think is probably terrifying for everybody. I mean, I guess the question is, especially when you see Trump using the National Guard, when you see Trump using the Marines, when you see sort of the Trump's attitude towards the use of power relative to the existing legal infrastructure.
I think you can take it a step further when you see him go back to using, executive orders and statutes from the 1800s. I mean, that's the scary part is, how broad, if this was narrow, that's fine. If it's broad and he can, get involved in everything because he likes to be involved in everything, from putting out forest fires to whatever it is.
To redirecting hurricanes.
Yeah, to redirecting hurricanes. This is the scary part. You have a man with severe mental decline, and trying to get his fingers into every single decision that's being made.
So a centrally planned economy would be, so if it was Russia or China, they would say every company that operates in country needs to have a G share.
Yeah. Right.
Like that would be the end game, right? Where it's like, if you have a new co or an old co, any co, in order to have permits to operate your brokerage, your coffee shop, your tech, your Amazon, your whatever, you must amend your operating agreement to install a G share.
Yeah, right.
If something like that were to happen, I would think there must be an uprising at that point.
So the strange thing about this, I shouldn't say strange, but the interesting thing about this discussion today on truth is that everybody thought we were going to go the direction of, the direction of this specific deal, U.S. Steel and Nippon Steel, and I don't think that is the risk. I think the risk is, what you just discussed is how deep does this get, and is this open to some kind of executive branch abuse down the road? Is this going to be, I'm not saying blackmail, but are we going to hold this over every single deal?
And is it a move towards is it incrementally a move towards a centrally planned economy? But I could also argue, well, the DOJ going after Microsoft 20 years ago was central planning. I mean, because you can argue.
Because in today's world, Dylan, any company, we have companies that are bigger than the GDP of most countries. And so you have companies like, Apple with, $500 billion in cash. And you have companies like, just NVIDIA with $500 billion in cash. The argument can be made that any one of those companies is close enough to a mega tech monopoly that any deal can be fit under this classification, that it's a monopolistic, it has the risk of monopolistic underpinnings. So now what do we do? And that's the whole risk to this thing. Now, the other side of it, if it's used correctly and it helps to facilitate deals that normally wouldn't get done, that are beneficial to the companies, and the companies ask for it, which it might have been what they did in this case. Yeah. It
could create a huge flow of foreign capital.
That's right.
I mean, it could be amazing.
I mean, if I was a foreign company, this would be a very difficult decision to make. But obviously, there's not too many companies like U.S. Steel, and a company like Nippon Steel says, okay, well, I'm going to give up the extra draft pick to get this deal done. And that's essentially what it is. So I'm not going to complain about that particular deal. I think it's just important that we point out the risks.
You just raise it's like, okay, good, but also like yellow card. It's not a red flag.
Yeah, exactly.
It's a yellow flag.
Exactly. I mean, we don't want to create what I can't stand is like what happened, just to give an example, like a company. What's the company I'm thinking? Oh, like a Spirit Airlines. I know it's a crappy example, but JetBlue wanted to do a deal with Spirit Airlines. I think it was JetBlue. I'm pretty sure it was JetBlue and Spirit. So you have Spirit, basically an airline that can't survive on its own. And you have JetBlue, an airline that hasn't done anything in 100 years. It's a $5, $7, $10 stock, whatever it is. And so JetBlue figures, okay, economies of scale, we take over Spirit. We pay a couple $2 billion for Spirit and blah, blah, blah. So the government comes in and says, no. This deal, too many gates, too monopolistic risk, the routes, fares for customers, blah, 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 blah. You can't get the deal done. So then Spirit files for bankruptcy and JetBlue goes down the toilet. How does that benefit anybody?
Well, then you could easily argue central planning again. You could say, what is this, Russia? I mean, it's the same. The same rhetoric is applicable.
Yeah. But now you lose two companies, now you have companies, and you see this all the time. these are not the only companies. You see it, in the restaurant business, even when, companies like, just as an example, I have Red Lobster. I can't remember who the other companies are, but you see this happen in virtually every industry, and they get blocked for monopolistic reasons and questionable at best because they're only a few billion-dollar companies. And yet at the same time, you start to wonder, okay, there's got to be a better way.
Mm-hmm.
And I'm not saying that the government needs to be involved in every one of these deals, but there easily can be a better way than watching a company go out of business. Nobody benefits from a company going out of business. Nobody would benefit from U.S. Steel going out of business.
Well, what it reminds me of? I mean, just to sort of pile on to your point, which because the government has acted in the opposite way. I think it was Enron, and I think it was Anderson Consulting. One of the big four accounting firms or whatever was sort of tangled in the middle of that Enron situation.
Yeah, I don't remember. You could be right. I don't remember who it was.
And they basically went in and they said, we're not. The big thing was, are they going to bring down an indictment on the accounting firm for their certification of the Enron books, which then facilitated all the things, all the downstream negative effects. And I believe the decision was made not to do it because the decision was made, if we come with the indictment, it's a death sentence for the company. And then the world is as bad as it is that the accounting firm has facilitated the fraud, that the world is worse off if we kill, not if Enron goes away, but also if the big accounting firm. The point is, or even the bailouts in 2008, the basic logic was, this is morally reprehensible, this is a theft, this is all the things. I said lots of things, lots of people said lots of things, but the final decision was made, well, we're better to allow all these horrible things to happen than to go the other way, and which is to have all the entire banking infrastructure liquidated and have to start from zero. So the point is, the government makes decisions regularly to allow for unsavory structures, i.e. this one airline has too many gates, or this bank made too much money, or this accounting firm certified fraudulent books, because the alternative is a death sentence for the company. And the decision is made that allowing the moral rot of the decision to be the permission of the moral rot is a superior alternative to the death sentence. All of it's central planning at the end of the day, by the way. I mean, it kind of brings up the idea that maybe no company should be so big, that maybe the world should be dominated by smaller enterprises, which is an entirely different philosophical debate, because so much of what we benefit from now is based on scale, right? A bunch of small Amazon.
And I don't think we could have, I don't think when a lot of the original, when a lot of logic and rules went into place, I don't think anybody could envision companies being multi-trillion-dollar companies that are literally bigger than the GDP of most of the nations in the world. So I think it's it's challenging to go back and so on the one hand, I don't hate the decision of what they did with I don't hate the whole thing what they did with U.S. Steel and Nippon Steel. On the other hand, we have to make sure that it's checked.
So, this whole thing kind of brings up the second thing, which is fascinating to me, and honestly, it's encouraging to me, even though it's bizarre in its own way, which is whether it's the Trump tariff policies or this sort of G-share discussion, which either way still is assigning tremendous power to the President of the United States uniquely, not the DOJ, not the Congress, et cetera, or the horrifying events we're all seeing in the Middle East, sort of spiraling a bit. That the market seems indifferent, stock market especially. It's expressing little to no concern about Trump's economic policies, whether it's the legislative proposals, whether it's the tariff proposals, or whether it's things like this. And it's similarly indifferent to, obvious geopolitical issues that even, caused one of the biggest oil spikes we've seen all year. And I'm just kind of curious whether it's geopolitics or whether it's presidential economic policy. I find it very encouraging. Because I think sometimes I'm like, oh man, this is terrible. And then I'll look at the stock market, and the stock market is utterly indifferent, which actually then gives me some reassurance that my perception is obviously wrong, because obviously the stock market has a much greater understanding of the consequences and status of the various economic policies or geopolitical events than I do from flipping headlines on a computer. But I'm interested in sort of your perspective on the market's apparent indifference to both geopolitical and economic policies at this point. I mean, is this how it's always been?
It's not how it's always been, but it's how it's always been recent. Like it's how it's always been recently. As news gets disseminated faster, and as we internalize / commoditize things at a much faster rate. What's happened is that, and I talked a little bit about this morning, portfolio managers, hedge fund managers, traders, prop firms, they have underperformed and they've gotten burnt time after time after time trying to analyze, geopolitical events, economic events. It's what we've said at Tasty for 14 straight years. Nobody really knows anything or how the market's going to react to something. Sometimes there are extreme critical circumstances and things that we really don't know how to process. A pandemic, for example, tariffs for the first time in, however many decades, that kind of stuff. But for the majority of things, specifically war, as sick as that sounds, we kind of know, in this day and age, we kind of know what that means. We've seen enough wars. And so what happens is the money manager, the portfolio manager who tries to address the risk or what they perceive the risk to be, or what they perceive the geopolitical risk to be, has not only not been rewarded, they've essentially lost their jobs. So if you liquidate and if you reduce the size of your position, which obviously this is another situation like that, you underperform the rest of the industry, you're out of a job. It doesn't, and with nobody liquidating now, unless it's a different kind of extreme, then you're better off doing nothing. And that's what's happening.
And does that same thing apply with the, do you think that same thing applies like with the tariff madness, for instance?
No, the tariff madness was something that was, there are certain things that catch us by surprise. I said the pandemic was one. The whole meme stock thing was another a little bit, but the tariff thing was another. It's very hard to judge the magnitude of certain things, especially things that we haven't seen before. Tariffs were new to us. The pandemic was new to us. Our inability.
I see what you're saying, but the war at this point is no longer new, which is a horrible thing to comment on the world.
War is second nature.
Right. You're like, sure.
Yeah.
Another one.
And it's a war between two countries that have,
they've been itching for this from day one. I mean, this is what they do.
They've basically been at war for
50 years.
Yeah. I mean, and carefully, it's smart because nobody else has gotten involved. It's isolated, just like Russia and
Ukraine.
Yeah, Russia and Ukraine. If North Korea had sent troops into Ukraine on day one, it could have been something ugly for the markets, but it wasn't. And so it's isolated. They put it to the side. The market internalized it. Now we go on to this war. Crude oil volatility goes up. Okay, great. But everything else internalized. We move on. That's it. I mean, it's on the one hand, it's good to see that the markets can price everything almost instantaneously. It's also good to see how news is really it's really for show, and it's not really for making money. On the other hand, it's a little bit scary how numb we've become to human kind of catastrophes and to some of the inhumanity that's out there right now.
Well, I just want to do a quick plug because I'm excited. So this is obviously, Aaron, this is a Wednesday event here. And so we're getting through this, which means that tomorrow you're going to be in London Thursday morning.
Yes.
And I believe
Wednesday morning.
But Thursday morning, I believe I am going to be on air with you and Tony and Angeline and Rich.
Oh, Thursday morning. Yes.
Thursday morning UK time. It'll be a historical event. where you'll have the two big kahunas out of Chicago.
No,
TNT.
Friday morning. The market's closed on Thursday morning.
All right. Then I don't know if that's a debatable issue.
No, the U.S. market's closed.
We're in Europe. You're coming to Europe, pal. And the London market is open Thursday morning.
Oh my God, you're going to put me under the gun for the London market?
And my schedule has me on air live with none other than Rich, Angeline, Tom, and Tony. And I am happy about it. Maybe you're not in the loop. Maybe you're too far up the food chain now. They don't tell you these things. You got too many other more important affairs. So we'll save it.
I'm simply going to London to find the best fish and chips. Okay.
Well, that will be easily accomplished.
I know. Yes, I messed up my dates. Friday, we will be doing the morning show from London, but Thursday, the market's closed. So I got to check my schedule, but we'll figure it out.
Well, listen, I wish you the most pleasant journey. We're excited that you're coming to London. I know that the Brits go crazy for you. You yourself are basically half British by virtue of your indoctrination as a parliamentarian when you were an intern. And then Italy.
I was a tour guide, Dylan. I was a tour guide.
Whatever. I'm sure you were the best tour guide they ever saw. I'm sure you've been doing a good job from day one.
You know how I learned how to be a tour guide by listening to real tour guides.
Listen, that's how you learn anything. It's like it's a proper apprenticeship.
I would sit there and listen to these guys tell stories, and I would try to make up the story in my own words. I feel like Kramer and Seinfeld when he would go through Central Park and make up stories about, whatever happened there. I think I was the same way.
England is easy. You just have to talk about Churchill, and they're happy. Anything about Churchill.
Exactly.
And they're satisfied.
Exactly. All right, Dylan. And by the way, Lake Placid in 1980, I saw the U.S. play Romania, not the Russians.
Okay.
But I was there for the game. I think it was Romania. It was either Romania or Czechoslovakia. I think it was Romania. And it was awesome.
It was awesome. It was one of the most awesome things that has happened. So it was pretty awesome.
Ticket price?
$20.
25.
Yeah. Modern. Oh, by the way, one last thing, because I know you're flying.
Yeah.
Make sure you request seat 11A.
I've already got that, Dylan. It's the most requested seat in America now. You have to wait 17 years to get a seat 11A, no matter what on any airline. Seat 11A is the #1 requested seat from now until the end of time. Okay.
Did you see they found a second guy? There was some guy apparently 20 years ago who also lived through one of these crashes.
I don't know if I believe that.
He was also in 11A.
I don't know if I believe
twice.
that.
11A,
I heard that. I'm not believing it. I'm not believing it.
Fake news on the second guy?
I think so. I'm not believing it.
I mean, I question the first guy. How could that plane do what that plane did? And that guy walks out of there with a scratch on his cheek and everybody else is dead. 11B's dead. 12A.
I don't know.
What's going on?
All I could think of is that he fell asleep and he missed it. Like he just,
He walked away.
I know. It's unbelievable.
11A, bro.
Unbelievable. Send that guy out to buy some lotto tickets this week. Okay.
All right. Safe travels.
All right. See you soon.
All right. Bye.
Bye.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten. run down with quickness and sweetness, like Lord Walter of Peyton? Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Welcome in Tasty CEO Tom Sosnoff, also found at Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
What is going on, everybody, and welcome back to today's assignment. We did just have FOMC here at 2 o'clock Eastern, so that was about 46 minutes ago. We'll get into all of that. We got some slides today on entries or exits, a topic that will never go away, so we'll get into that too. But before we do, Dr. Jim, how we doing? We survived the meeting today.
Man, I mean, so far. I mean,
so
right
far,
now.
Yeah.
I mean, I'll tell you what. I actually saw Powell walk out like right before our show started at 2:30. I was like, all right, obviously he's going to go purple tie, right? But right. I don't know. Have you seen him yet today? Like, do you see what he's wearing?
I know you've been tracking the ties. I don't know what's going on.
Well, that's the only thing you need to track. Like, people get lost in the weeds with like economic projections.
All the noise,
yeah. No. You don't need it. Like SEP reports, forget all that. All you need to know is the tie color. Well, anyway, when he was walking up from like behind the, wherever he comes out from, it's a very dark tie. And so I looked at that and I'm like, wow, did he really go black?
Yeah.
Like, did he go Mr. Wonderful? Like, is he just pulling a power move on all of us? And then when he rolled up to the podium and like they zoomed in on him, I'm like, no, I'm pretty sure that's dark purple, and it is indeed dark purple. So
it was a dark purple.
Man, he had us all kind of guessing there for a second. Like, he actually mixed it up, but he didn't.
I mean, the thing is, Jerome Powell himself, I'm not sure if he's made comments on it before, but he probably knows people are paying attention to the color of his tie. One thing I've noticed, especially with like NBA players, NFL players, or athletes, or any type of celebrity that's on the internet, I noticed that they even start to catch on to like the trends and memes that are being made about them. So I just wonder if Jerome Powell's like, yeah, this one's a little bit darker. Let's see how they react just by seeing this right off the bat. But once it zooms in, they're going to see it's purple. So I wonder if he has that on his mind every time he hops up there too.
Well, I'm sure he does. And I mean, this is something you yourself can relate to as a celebrity on the internet. Like, you know what this feels like, right? Like, you understand when everybody's hanging on your every word. It's difficult, man. It's tough.
Yeah, right. Yeah, right. I'm glad we survived the meeting today, though, Dr. Jim. I was looking forward to it. I don't know how you felt about the market the last couple weeks, but it almost feels like the market's broken. And when I say broken, the market's not operating in the way that I would like it to work in or to operate in. So I don't know.
Exactly, right. That is the perfect definition.
Yeah.
The perfect trader's definition of a broken market. It's broken. It's manipulated. Like, all my stops are getting run by the algorithm. Like, you fill in the blank. It's just not doing what I want it to do. That's right.
Yeah, it's not personal. It's absolutely personal, actually. No,
we'll go ahead. It couldn't be more personal.
Exactly.
Yeah.
They're targeting me. They're out. That's how you know you need to take a break. If you ever feel like the market is just targeting you specifically, that is the one sign like you need to take a little bit of time off. So
I agree. Like, if you really feel like, man, those two MNQs I got sitting out there, like, they're coming for them.
Yes,
they're
they saw my
100%
orders.
coming for them.
Exactly why I don't use limit orders. They saw my orders in the book. And they targeted it. That's why I always use market orders. So,
dude, you're playing 4D chess, bro. You're 6 moves ahead. Like, yeah.
Exactly. Enter right or exit tight. Option traders need to know this. Dr. Jim and I have talked about this topic before. Are entries more important? Are exits more important? This is a topic that's been around for decades in the trading community. And I don't doubt we're going to see this comment circle back around here soon on social media. But what is more important? Are exits more important? Are exits more important? I mean, when you see this right off the bat, Dr. Jim, before you give any logical thinking and critical thinking to this, when you were first getting into the market, what was your natural inclination to whether or not exits or entries are more important? What did you see in your own behavior that you were really trying to get down more? I know sometimes when we're trading in the market, I know that subconscious ego and pride sometimes want us to, we want to bottom tick and top tick everything. So like, which direction did you feel yourself gravitate towards initially getting into the market?
You mean as far as risk direction, do you mean like long or short, or do you mean like
did you ever find yourself trying to bottom tick moves, top tick, like trying to find the best entry or exit? Did you have any beliefs that you had in your mind before getting into the market that you thought you could, try and get the best entry or try and get the best exit?
Yeah, I absolutely felt like entry was by far and away the most important thing. That's what I felt.
You don't have to give us why.
I don't feel that way anymore, but that is how I felt. That is absolutely how I felt. I really felt like, man, you've got to nail this entry. Otherwise, like, everything is just going to fall apart. Like, I did feel like, getting the bottom of the move, getting the top of the move, getting the entirety of the move, like if, you are correct directionally or whatever. Like, I felt like all of these things were so important, not really understanding that, man, trade entry is only one variable in the whole puzzle. And in my opinion, like, if we're talking trade entry, trade exit, and trade management, which is critically important, I would actually put trade entry as being the third most important on that list. I put it on the bottom.
Okay. I love that. I love the context that we have, and we're kind of where you're at before we get into these slides. We're probably going to circle back around to, I know you said when you first got into the market, you were a little bit more fixated on entries and getting the better entry down. So we'll circle back around to that conversation too. Context, define risk strategies and options. I know.
But hold on.
Yeah.
But what about you? Like what? I mean, where were you at when you first started?
It's one of the reasons why I asked you, because I want to know, is this something that is natural for people that come across the market, for them to naturally lean as if entries are going to be most important? And I guess that's already me saying my answer. When I first got into the market, I was very fixated on trying to get the best entries. I mean, now I still consider the entries. I still think the entries are very important, but the question here today is, which is more important? So we'll get into that, but I was leaning the same direction. I thought entries were everything. I was trying to get the best entry on every trade. So We've spoke about this before, but we never talked about it or spoke about it within the context of, well, are we talking about defined risk, undefined risk? Does it matter? Is it going to be the same answer for both? So I wanted to get a little bit more nuanced with that question today. But with defined risk, some things we want to point out is, we do know our max entry on order entry. We do know our max loss on order entry, right? Iron condors, spreads, some of the most popular positions that I use. Entry and exits priorities shift depending on whether you're buying or selling premium, which we're going to get into on the third slide here today. And then the goal is to manage the risk reward and probability of profit. And at the end of the day, I believe that's the only thing that does matter. What is the risk to reward and what is the probabilities? Because the risk to reward and the probabilities is going to give you your EV, your expected value. Are you going to come out on top in the long run or not? If I keep trading this strategy that gives me a 25% probability of profit, and I have a 1-to-1 risk to reward on every trade that I take, I might make money on one of the trades. But in the long run, am I going to be able to make money after 20 or 30 or 40 trades? Whenever the law of averages or the law of big numbers, Dr. Jim, you can correct me on that one, whenever that plays out. Is it the law of averages or the law of big numbers? I forget.
Well, it's both. I mean, those are two separate.
Okay.
Yeah, those are two separate laws. Law of averages and the law of large numbers. Yeah.
Got you. But no, I just wanted to throw some bullet points out that we're going to be, because it's more of a conversation. It's more of a discussion that we're having right now. So I wanted to throw some of those bullet points out on some things that we consider whenever we're using a defined risk strategy so that you can come to the conclusion on whether or not entries or exits is more important. But defined risk, we do know our entries and exits on order entry, Dr. Jim. So I got to say with defined risk, man, that entry is going to be so important because you kind of lock yourself into some golden handcuffs a little bit there. Because, I mean, if we put that trade on and it's a $5 wide, we collect $1 worth of credit, I have $400 worth of risk on that trade. And there's really not much I can do to adjust that later on into the trade. So defined risk, I'm definitely going to have to go entry. I might have to lean entries are more important on the defined risk one on this one, Dr. Jim. That's where I'm gonna go here. That's a little bit more of my reasoning. Curious to see what you have to say. Curious to hear if you're gonna challenge that too, but I want to hear your point of view.
No, I think that's a great point. And I really didn't think about that when I first answered the question. And I think some nuance here is required because defined risk and undefined risk are so different when it comes to the risk return profiles and when it comes to which stage of the trade is the most important, entry, exit, management. Because you're 100% correct. When you do a defined risk strategy, vertical spread, iron condor, or whatever, there's not too much that you can do once the trade is on. Like there might be some things that you can do. Like there might be a couple of things like rolling for a credit, maybe rolling the untested side of an iron condor, whatever. But you're not going to have the flexibility and the wiggle room that you would have with an undefined risk spread. So because of that, yes, trade entry on defined risk is crucial. And so that's why on something like a $5 wide vertical or $5 wide iron condor, if you're only collecting $1 and risking $4, I think that's a little bit too lopsided in terms of, the risk return relationship. I really like to collect closer to maybe $2. So I'm only risking 3 to make 2 on a $5 wide or, risking 10 to make 4 on a $10 wide. I think that's going to make a lot more sense simply because of what you said. There's not much more that you can do from a management standpoint. So I would say for defined risks, just to be very clear, trade entry is number 1, trade exit is number 2, and trade management is number 3 simply because the options are so limited.
Dr. Jim got crystal clear with us on that one, even gave us the 3 bullet points at the end. No, 100%. I couldn't agree more. I know that was something that I started to focus on a little bit more. As you know, I do primarily define risk strategies. So I'm very keen and very excited whenever I do see that vol spike. Like, as we know, it pumps some of those premiums. So I love when I can collect $2, $2.20, $2.30, $2.40, because in the market, we just want the opportunity. At the end of the day, the outcome is going to be the outcome that'll play out after 20, 30, 40 trades, whatever it is. But I mean, if I can collect $2.50 on order entry on a $5 wide, I just love taking that opportunity. I love having $250 of risk on something where I could have easily had $300 worth of risk. And I think those extra 50 points matter, or that extra 50, because I mean, when we start scaling here, if you're using Tom's size account, that extra credit that you can collect might not seem like a big deal in your $5,000, $10,000, $15,000, $20,000 account, but in a bigger account, it might matter to you a little bit more. And then we'll go ahead and go over to the second
No,
slide.
that's 100% right. But don't forget,
Yeah,
if you have a smaller size account, you've got, 10,000, 12,000, 15, whatever. It's so important right now to learn like the proper way to do things and to make sure that you're comfortable with whatever your own personal style is going to be. Because the reality is this: if you don't like build up a solid foundation now, that is 100% going to, it's going to rear its ugly head later on down the road when now you've got 60,000 or 90,000 or 125 or whatever, which is that's the road that everybody's on. That's the pathway that we're all trying to follow. And so by taking it seriously now and building up, good habits, good principles, you're going to be much better equipped to handle the larger account when it comes.
100%. And I mean, to your point, Dr. Jim, when I was in college, I'm like 20 years old. I'm 19, I'm 20. I'm over here sitting thinking, man, if I had 20,000, man, if I had 25,000 to get past that PDT road, man, if I had 30,000 in my account, that's the only thing holding me back. I promise you that's the only thing holding me back. Man, at that time especially, if I would have had access to $20,000, $30,000, it would have been ugly. And there were a lot of things that I was doing with the smaller account, my life savings, right? $1,000, $2,000 at that time. That would have been pretty damaging if I kept those same habits into a larger account or that same experience level. I'll leave it at. So when selling,
that is so true. And I mean, that's what so many of us experience. Like, you are not alone. Like, there are so many traders out there that are in a similar situation where they really feel like, they've got 12,000 and they're like, man, I'm so limited in what I can do.
At the time,
100%,
especially
dude.
As a young kid, my ego is high too. I'm like, I just need the capital. Yeah,
that's right. You want to get after it. Like, you're ready to go. You think you've got all the answers. You think you've got the bulletproof strategy. And I mean, that's just kind of a natural way to start, especially if, you start building up some success in the beginning and you start building up some confidence. You start collecting some winners, like things like that. But the thing you need to understand is, yes, at 12,000, 15,000, whatever, you are limited. Like, I'm not going to sugarcoat this and say that you're not. Yes, there are some limitations. There are some concessions that are not going to be there when you have more capital. But you are not ready for that yet. I can tell you with certainty you're not ready for that yet. You don't have the skill. You don't have the experience. And I mean, all of these things matter a lot because when you do have more capital, you just have to understand, right? I mean, you can just do the basic math on it. If I've got 10 grand, just to keep it really simple, a 10% move in my account is only $1,000, right? And so you go 10,000 to 9,000, even if it is, your whole life savings, whatever, it's still only $1,000. So you're gonna be like, okay, that's tough. But man, you've got 100,000. Now the 10% move, the same 10% move, now it's 10 grand. Right? You've got 200,000. Now it's 20 grand. And so all of a sudden things have multiplied for the same type of move. Right. And if you're not equipped to handle that with the right skills and abilities, it's going to be nasty.
Right. 100%. And especially with, lower risk relative to the reward, 10% on $100,000 is going to be $10,000, whereas, $10,000 on $10,000 is 100% return. You don't have to over leverage, so it's a good idea to keep in mind, these same habits, these same principles and habits that I'm deploying right now is going to be the same habits where when I have the capital to do so that you're probably going to be implementing. So I think you said it perfectly there, Dr. Jim. When selling defined risk. So we're switching it up a little bit. Same conversation, same topic. What's more important, entry or exit? But this time we're going to be talking about when selling defined risk. I'm sorry. Let me see. What was the exact title? Defined risk, selling defined risk. And then last one, we'll get into buying defined risk, which is a little bit different again. So why entries matter more. You want to sell high implied volatility for maximum premium. You're going to be locked into whatever you sell on that position again. And I know this one's going to be very similar to our last one, but the better entry, the higher credit and lower break even, or the lower your break even is going to be. And directional edge is helpful, but time decay is your main ally. And a poor entry reduces your risk reward, and it makes adjusting a lot more difficult. Like, again, I know there are some trades where I would really try and force that third of a width on the strikes, Dr. Jim. Sometimes I would come at 140, 145. It's like not $1.66, which is exactly a third, but I would really just force those when I really could have just been a little bit more patient. Because one thing I wasn't thinking about is that additional risk that I put on the trade whenever I'm not collecting enough premium on order entry. So this one's a little bit more similar to this last one, and things will pivot a little bit more, Dr. Jim, on our third slide here. But anything you wanted to add to this one right off the bat?
Well, I think that, you talked about forcing, kind of forcing the 1/3 the width of the strikes. I mean,
yeah,
and this is one of the limitations and one of the potentially struggles with defined risk. You're looking to get about 1/3 the width of the strikes. We just talked about, the importance of trying to collect as much as you can because your adjustments are limited. All of that is true, but sometimes in the market, because of the put, pricing dynamics, the call pricing dynamics, the implied volatility rank, whatever, the spread just doesn't work for that stock at that time. And so you're trying to make it work. You're trying to adjust the strikes and move them up, move them down, whatever. But it's just like, man, because of the skew or lack of skew in the marketplace, the price is just not there. And so that's where just walking away from that stock and be like, man, it's not here today in Starbucks, Chipotle, Pepsi, whatever. Let me go find something else to do somewhere else. And so that's where kind of having the market awareness to just say, man, the pricing dynamics are just not setting up in this stock at this time. I think that's a critically important skill that really takes some time to develop. So that's one example of kind of something I referenced a couple of minutes ago, which was, you're at 12,000, 15,000. You're just not ready yet. You're just not ready yet. And it's recognizing things like that, I think, that just come with experience.
Yeah, and it's like sometimes, Dr. Jim, it can be tough. It's like, I don't want to marry this stock, but UNH doesn't sell off like this every day. I got to force this one a little bit. I know we can deploy the capital elsewhere, but UNH doesn't do this every day. I got to take it for a lower amount. So that's what my mind goes to as well. Is like, am I married to this stock? Am I married to this position? Do I really want to get in? And maybe that's where some of those forced trades come through.
Yeah, I think so. And that's just – it's very hard to remember that whether it's a UNH, whether it's a market, whether it's, the FOMC, whatever, it's very hard to remember that, man, this is all going to be here tomorrow. Like, I promise you it's all going to be here tomorrow. Now, I know we really dodged a bullet today because I really genuinely thought like that was the final FOMC print. Like, I was pretty convinced that the apocalypse was indeed going to arrive.
Yeah, right.
So the fact that it didn't,
yeah, right. I know
you
you have 20 more drafts in that Twitter drafts.
I am genuinely shocked.
This
right
is
now.
it.
Shocked.
I know there's 20 drafts talking about.
But
this
we
is
have
it, guys.
to. No, there's no drafts because I figured this was it.
Okay.
We have to remember though. We have to trade as if there is going to be a tomorrow, and I think that that's the only way to do it.
No, I completely agree. Last page here, Dr. Jim. Why exits might matter a little bit more. I do want to throw in even undefined risks on this one because we're talking about buying options, very directional. Let's say we're buying a call, buying a vertical spread, whatever it might be. But I believe exits are going to be – I think exits create a better argument when buying and trading a little bit more directional. That's going to be my stance for this one. But you're paying for a position that needs movement in your favor, and entry is key for me at least. But timing the exit is critical to avoid full losses. So it's like, okay, that entry is important. But that exit is almost going to be most important to myself, especially if I'm not even thinking about I want a green trade or I want a red trade. I want to get out where I need to get out, whether that's to the upside and taking profit, whether that's to the downside and managing my risk. I want to have the best exit. Profit targets and stop losses become vital because of those things. And I mean, that's really the point that I want to make on this slide, Dr. Jim. So what are your thoughts on that stance? What are your thoughts on the things that I just said?
Yeah, that's pretty interesting. So now we're buying defined risk. So now maybe I'm buying a vertical spread. I could even potentially be just buying like a deep in the money call, deep in the money put, something to kind of simulate stock. Yeah, sure.
Yeah.
Taking a directional shot, right? That's totally fine.
Futures contracts, whatever it might be.
Futures contracts. So, that's not going to be. I'm not including that because
we are talking about time.
That's
element.
that's not defined
Absolutely.
risk, right? So we have to be careful about that. And so I mean, a futures is kind of a different thing. And so here I'm thinking specifically verticals and like in the money calls, in the money puts. I do think that exit is more important than entry now. So again, I think the management is going to be the least important because there's not that much you can do. I do think, though, the exit is going to be more important than the entry. I 100% agree with that.
Right.
And a big reason why I feel that way is simply because, whether you're buying verticals or buying in the money calls, in the money puts, whatever, you could actually include futures in what I'm going to say next. Because the markets are so random And because we really don't know what's going to happen next, I genuinely feel like if you went into the market on any given day and you went in and you just went sight unseen, didn't look at a single thing, whether you buy or sell at that moment, if it's a directional trade, I genuinely don't think it matters. I really don't. And I know that that's crazy for people to hear, but I really don't think it matters. I think all the other things that come next are what's going to matter. So this is going to be, what type of exit strategy do you have? What type of, basis reduction strategy do you have? Like those kinds of things, that's what really matters. And so I totally agree that exit is more important here.
You know why I love this conversation, Dr. Jim? This is a conversation that we've had before, that the trading community has had before, right? But when we have the topic of are entries more important or are exits more important, right? We might hear a lot of great opinions and cases for why somebody believes what they believe. And I think that whenever we have that discussion in the trading community online, when I say the trading community, I mean wherever that's at, Reddit, YouTube, Twitter, whatever, the trading community as a whole. But what I love about this conversation specifically is somebody might make the point and argue, entries are more important through the perspective of, selling defined risk. Someone might be arguing their point through the perspective of buying defined risk. At the end of the day, now we have two people arguing, or we have a discussion going on when they're looking at when they're looking at it from a different angle, but we're talking about the same subject. I think that's such a testament to even what goes on today. A lot of the times, I know even when my partner and I will argue, a lot of the time it's just because we're not on the same page. We're both just looking for understanding, but we're really not trying to be right. You know what I'm saying? So I think these conversations are really cool because, it can be the same topic, but we might just be looking at it at a different angle. And I think all we need to find is understanding and finding that middle ground. So I love these conversations. One of the reasons why I wanted to go back and forth with it or with you today, Dr. Jim.
No, that's a great point. And that's why I think I like what you've done today, where you've actually you framed it up like very clearly, like, hey, here we're talking about selling defined risk. Okay, let's have that discussion. Here we're talking about buying defined risk. Okay, let's have that discussion. Because just listening to you talk, man, it's 100% true. It's 100% right that, if we're going to talk about selling premium, that's one thing. If we're going to talk about buying premium, that's one thing. If we're going to talk about futures trading, that's a whole nother thing. And so you need to make sure that you understand, what you're signing up for. I say that on my show almost every single day, because the gimmies and the gotchas for these three different things, they might overlap a lot, like, around, in terms of the core principles, but then some of the actual functions and some of the actual specific characteristics of that product or of a given strategy are not going to be the same. Right. And the differences are going to be, critically important. I've actually heard this. I've heard this illustration used before that's really, really good. And I might be butchering it, but I think I'll get it right. Both Advil and arsenic come in a pill and they come in a bottle, but their differences are what make them so different. They both start with A, they're both pills, they're both in a bottle, so they share a lot of similar characteristics. But man, those differences are what going to ultimately lead to where you're going next, whether you take one or the other. And so it's kind of the same thing here, right? It's like, high probability and volatility, like it's all, these core principles are all there, but the differences are critical.
Oh, absolutely. And I mean, I think we can wrap that up into saying context matters. It really does. And I think a lack of context in the trading community can be, can start a lot of conversation because general statements, it's like, that might be true, but for this case. And it's like, at the end of the day, context matters. And that statement, I believe, is just so true, especially for the trading industry and investing industry as a whole. But other than that, no, just wanted to present this to you, Dr. Jim. Love hearing your thoughts on it, going back and forth. And I know we have a couple minutes here. Just going to give you a quick rundown on some of the positions that we have on right now. I did get into an oil position, Dr. Jim. Sold a call on oil.
Man, look at you.
Wait, what do you mean?
You sold the naked call on USO?
Did sell the naked call.
Man, look at you.
Man, something light. I had to do it.
Light. Yeah.
I was looking at oil as a whole. Oil's been booming to the upside. I know we got a lot of conversations with geopolitical events going on right now. Oil having a lot of headlines right now too. So sold an out of money call on oil, it was up a decent amount today. So I think as I sold it unintentionally, I mean, we sold off a lot right after I sold it, and then we've recovered a little bit more since then. But did that in USO. SPY still tied down in SPY, 2 days left. Honestly, I can't wait for this one to expire and just get up out of the account at this point. So SPY expires in about 2 days. QQQ, this was an out of the money call spread that I had sold earlier in the week because I had more of a bearish bias for that time being. So I did that. That's working pretty well right now. The NVIDIA trade, this one's, again, been in the account just as long as the SPY position has been. 2 days left to expiration. Honestly, can't wait for this just to get up out of the account at this point. Disney bought a put on Disney. Disney just kept rallying against me. I don't know what went on there. I don't know. You continue to buy Dr. Jim, whatever it was. I don't know what was going on in Disney, but Disney can't stop, won't stop. That's what we talked about last time. And then we had the micro NASDAQ. Got chopped up in a little bit of the micro NASDAQ today. There was a few opportunities that I'd seen, wanted to try. I really do like the risk to reward on these trades because I know it just says 132 down on the day, but that was like 3-4 trades. You know what I'm saying? Like 132 down on the day. I'm fine with that after 3-4 opportunities. I like the risk to reward on that. So these are the few things that we got going on in the portfolio, but I think honorable mention is just the USO. Glad to be getting involved in have a little exposure to the oil markets because it's not something that I'm in all the time. I guess I say that now because I'm in we're sitting out of the money. So I say that now, come check back up on me by the end of this week and I'll see how I feel about
yeah.
I see how I feel about
everybody's
oil
a hero
again.
when you're 10 minutes out of the money.
Exactly.
Like, that's not really
exactly.
Yeah.
I'm like, what am I saying right now? Like, no, check back tomorrow or 2 days. But that's what we got here, Dr. Jim. Cool.
No, it's looking good. And I mean, most of your trades, I mean, they're going to be, they're basically done and dusted here in the next couple of days. And that's the way it goes, man. Sometimes
we have
that's
time.
the way it goes.
We got time still, Dr. Jim. No, don't say that.
Hey, you're the one that you kind of said that yourself.
I know.
And so, but USO, that's interesting. So USO, I got to give you credit, man. You put yourself out there on a limb, selling a naked call in USO. That's something. Yeah.
Yeah. You just got to do it sometimes. Sometimes you just got to pull those pants up and pull the trigger. So that's what we're doing today. But anything to add before we hop on out of here today, Dr. Jim?
No, I think it's good. We survived FOMC. I'm shocked. Absolutely shocked, I tell you. And so yeah.
Yeah, no, we'll see what we get. We'll see how the market digests FOMC as we get into the rest of this week. But that's going to do it for today's segment. I hope you enjoyed. Thanks for hanging out with us today. Be sure to stay tuned for Tim Knight coming on next, and we'll catch you guys next time. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're gonna be in Pilsen. I'm gonna buy you a Rico Benny's. after the show. I don't want your buy me a Rico.
Well, that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's.
I was going there when you were pooping yellow.
Oh my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God,
sorry, SIBO.
You gotta stop.
No, you know that's true, Sadnov. You know that's true.
My God. There's not a chance.
My guys that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Hey everybody, well, we got another FOMC out of the way. I guess we're halfway done with them this year. As expected, universally expected, there was no change in rates. The only little bit of a change is that the anticipated rate cuts that the Board of Governors is looking for is more modest than before. A little bit hawkish, I suppose. I got a real jump scare from the whole thing because the most important position to me is there's a Russell 2000. I've got a bunch of IWM puts. And the key line for me, from a charting perspective, is the Fibonacci at 2150 on the RTY futures. And they did their announcement, and we spiked almost to the penny at that level. And I was going to hold my breath, and it just spiked up there, gave it a little kiss, and then went back down. At the moment, we're green across the board. ES is green, NQ is green, RTY is green, is by far the strongest of the day. But at least we didn't get above that fib. So far, so good. And we got the Fed behind us. Like I said yesterday, it's going to be a little bit of a weird week because typically tomorrow, Thursday, we could kind of like see how people are really regarding, in this case, the Fed's indecision. But tomorrow's a holiday. And so we'll need to wait till Friday for that to suss out. And of course, who knows what's going to happen in the Mideast in all that time. Got a lot of charts, not much time. So let's dive in and go at a brisk pace. We look at the spider here, which I've dragged this line down to anchor to last Wednesday's peak, which is an important peak. We have been lingering there for a couple of weeks at this point. That general vicinity, the market's been really stuck. The just sort of blasting higher stopped back here in mid-May. And it fell a little, lifted some more, and we just, like I said, 2 weeks just been kind of just hanging out, doing very little of anything. The IWM, as I said, is strong today relative to the other indices. It's up about a couple of thirds of a percent. On the IWM itself, a slightly important resistance is around 212, and much more important resistance would be this peak at 215.34. The cubes also up just a little bitty bit, and we have been persistently below this broken trend line for about 3 months now, and we got quite close to it last Wednesday. We'll just put a horizontal line there too to mark that, but we did not violate it, so that's good. And over in China, weak. FXI has been just a mess. We fell hard, recovered, and seemed to have pooped out last week as well, and we just been slip sliding away on that one. Ethereum, kind of the number 2 crypto coin out there, is down about 1.5%. Sorry to keep harping on this, but this trend line I think is very important and has done a good job at least lining up the fact that the cubes also haven't violated their own broken trend line. And over in semiconductor land, SMH, jury's still very much out on this. On the one hand, we have broken above the trend line. On the other hand, we're still below this lower high. So lifetime high, lower high, lower high. The bulls would need to get it above this level. And well, that's a more useful level, I think, to mark right there. Got to beat that level to really consider extending the rally. Well, bonds by way of TLT is just about unchanged. Looking at the ZB, yeah, it's up 0.05%. So just considering this is Fed day, very little activity. So we'll see how it pieces out for the rest of the week. But yeah, it was kind of a non-event. I think I saw like 133 out of 135 economists said there'd be no rate change, and they were right. And IEF, which is the 7 to 10 year Treasury bond ETF, it's also barely changed. It's down a few hundredths of percent. So pretty much just stuck in the muck. On the bullish side of things, I'd made mention of Comstock Resources, CRK, a few days back, based on this cup with handle pattern. Looking good. Nice zip higher here. Another good gain today on Creek. JBL, lifetime high on this semiconductor maker, over 4% gain on this. It broke out of a huge pattern way back in 2021, and it has added many hundreds of percent ever since then. This pattern was in formation for a couple of decades. So just tremendous performance there from JBL. Here's a younger one, but we've talked about as well, the metals company, TMC. It had a false breakout here. This failed. Well, it wasn't really a false breakout, but it was a failed breakout. It burst higher and then slipped right back in, formed another similar pattern. This one seems to have stuck. And so this has been moving higher in this kind of sawtooth pattern, series of higher highs and higher lows with growing volume on that one. And one last bullish looking critter. I mentioned this earlier in the week, ARQQ. This is another quantum company. Another big day here, up almost another 25%. Now it's got a long way to go. It did nothing but fall for years. Well, not years, but many, many months, from split adjusted 1,000 down to just a few dollars. But it's undoing some of that pain in recent weeks. Now, no matter what your political disposition, it can't really be argued that the president isn't involved in a lot of business ventures, whether it's real estate developments around the world, including places like Qatar, the Trump mobile phone network forthcoming, crypto galore. I will say a handful of his ventures do have symbols related with them, and it's kind of interesting to peek at those just to kind of see what's cooking. And there's just 3 related ones to share because a lot of the stuff isn't chartable. But yeah, here's DJT, which is the Truth Social platform, and on the whole, not a very stellar performance. And in kind of a classic buy the rumor, sell the news event, the last really major peak on this was just before Inauguration Day. Literally the last trading day before Inauguration Day. And it was around $44. And now it's about a third of that, in spite of all the ostensibly positive things that have happened since that day to his benefit. So that's interesting. Coin, of course, the Trump coin, this peaked around in the lower 70s. It bottomed here at about 90% loss, thanks to the buy a lot of crypto and have dinner with the president contest. It had a spike, but since then it's been kind of slumping lower, and we're starting to tease around those lows again. And well, the poor first lady, this has just been nothing but a dog. There was no dinner auction for her, so this one's just total wipeout. So don't show these much, but from time to time, this one's down. Went from over $10 down to, I guess, about 25 cents right now. So 98% decrease on that. Not so good. Interestingly, some of the politically related companies continue to do well. Axon is a good example. This is the maker of Taser and the body cam. And it's right near lifetime highs, and it has been crunched along this long, just multi-decade ascending channel. It seems pretty lofty to me, but it certainly hasn't broken down yet. But over its long history, it's definitely on the high side. I think we can all agree on that. Miners, as I suspected, continue to be weak. Here's GDX down not quite 1% today, and I fully expect this to keep slipping. As do I feel that the same way for the juniors GDXJ. Over in oil land, kind of an interesting move here. On the one hand, we were higher at one point earlier, but regard this line here. Just take a look. Now this line goes all the way back a good 3 years. Peak, 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 and looks like maybe another peak. So this line for USO seems to have some power, even after this tremendous rise and the really terrifying messages that have been coming out. I think Iran's been taking oratory lessons from the president, because they tweeted out something like, this will be an event's coming tonight that will be talked about for centuries. So nothing happened, so I'm not sure what we're going to talk about, but a lot of saber rattling back and forth. With all of that, oil's down, and the long-term history of USO certainly suggests this as an exhaustion point. XLE down about 0.5%, very messy chart, but it's kind of up there relative to its own price history. XOP, a cleaner chart, but my lovely little top here has been badly violated. It doesn't mean it won't fall and fall hard, because let's keep in mind, we still have a peak here, lower high, lower high, lower high, lower high. It's just like a bouncing ball losing energy down the stairs. We've had a big bounce higher. So tempting to short it. I'm not, because I got kind of burned by it when this whole work kicked off last week. But I have been shorting selected energy issues, like COP as an example. I've got 2 or 3 of them, HAL, that kind of thing. Okay, got a few moments left. Let's just wrap up with a few indexes as we head toward some slippity, sliding prices here. Generally speaking, it's all about last week's peak, I beg your pardon. On Wednesday, the post-CPI zip we had higher. That marked an important top and a lower high for a lot of indices. We have it here with the CompQ. We have it here with the NDX. You get the idea. I could show you index and after index. They tend to show the same thing. What I'm most fixated on, though, again, just to come full circle, is the Russell, which is when you and I started talking, it was up more than twice as much as it is now. The ES is red now, the NQ is red now, the RS is hopefully heading there. But we've still got the face-off. Bearish pattern, bullish pattern in this no man's land war zone. If we can slip below today's low, that will affirm, I think, the failed bullish breakout. And then we can look toward those big Fibonacci ranges as a more realistic, longer-term target for maybe how low we can get by September. Okay, well, always glad the Fed's out of the way, and in spite of the 2150 jump scare, which probably took a few years off of my life, it worked out. So I think we're going to be all right. Enjoy your day off tomorrow, and we will wrap up the week on Friday, and that'll be it. I'll see you on Friday then. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
Don't say it. No.
Fingers through your hair.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We are back. It's time for Last Call. Tom and Tony are abroad, so you're with me and Ilya today. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to take you through the market close for this Wednesday afternoon session. Ilya, we are finally seeing a little bit of uptick in trading volume here as the day goes on. We got through that Fed rate decision. We had Powell speak at the podium for a good while. Stocks here are basically unchanged on the day. They gave up the little bit of gains they had going into the meeting. Bonds are a bit flat now. Overall, we're walking away from this Wednesday, perhaps really just unched market.
Yeah, I mean, the most interesting thing that you see on the board here is a little bit of a wiggle in gold prices, a little bit of a wiggle in the dollar, but not a whole lot else on the board here. It's looking pretty quiet. Now, of course, Powell didn't do anything that you wouldn't expect. He did the usual song and dance, and I wrote out, I think, almost 600 words yesterday for the Tasty Live blog about how this is exactly what would happen, because the main sort of moving parts as far as the Fed's concerned really haven't changed. The unemployment rate at 4.2%, the inflation rate 2.4%, so they're a hair off the inflation objective, but it's certainly not racing in the wrong direction. The unemployment rate is low by any historical measure, even though it's a little bit up from where it was at the COVID lows, which obviously was a crazy aberration. We had unemployment surge, then everybody came back to work all at once, and we had labor shortages, and 4.2% is, by any historical stretch, an excellent labor market. So you have every reason from the Fed's perspective to sit down, not do a whole lot of anything, and let the economy tell you which way to jump while you have this uncertainty around the tariffs, especially with the cliffhangers for reciprocal tariff pauses expiring next month and then in mid-August for China. So Powell did a familiar dance. It seemed like the market expected as much. Forecasts for growth and inflation went the way that they signaled they would in May. So growth a little bit weaker, inflation a little bit higher, uncertainty a whole lot wider. All of that they basically hinted at in May, and all of that we got here.
Sure.
No surprises. So the markets seem to be relatively well priced for the outcome, and now they're just kind of fiddling into the close.
Fiddling into the close. Maybe people should be doing some fiddling here today. I think it's a worthy reminder before we get too late into this last call that markets are closed tomorrow. So if you have positions in companies that have dividends on Friday, the in calls might have to be adjusted today before the close. The biggest one's probably Broadcom. The point being is that we're not going to have that luxury. We have to treat today as like the Thursday of the market. So if you want to make your adjustments, make them now. Review everything that you have in your book now before you get stuck in this 24-hour window where futures close at 5 Eastern today. They're not going to reopen until 6 tomorrow. And given the headlines and how they've been impacting the market, chances are that something could happen. So now's a good time to make the adjustments while there's still time on the board. It's 3:38 p.m. Eastern time, so you can still do that if you may. I'm surprised by the volumes today, though, here, Ilya. I want to go back over to ES because ES is kind of my North Star. 1 million contracts traded is the threshold that we like to talk about halfway through the day on Futures Power Hour. We've just climbed through 1.15 million contracts traded here today. Between Vixpiration, the OPEX, the holiday tomorrow, the news that we're seeing out of the Middle East, are you surprised as I am that there hasn't been much activity here?
Seems like the market is kind of locked in wait and see mode to kind of try to benchmark what actually to make of all of this. I think on the issue of the Israel-Iran and maybe Iran-US conflict, depending on which reading of the president's tweets you like, I think they've kind of figured out that Israel has had a tremendous amount of success, and in so much as their objectives remain just the nuclear program, and they'll leave any kind of desire for regime change, which of course they desire, most Western powers desire, the U.S. desires, but it's one thing to desire versus act. If they keep it to the nuclear program as far as strikes go, and they have so far, and they let the Iranian people decide whether they want to rise up or they don't for the regime change, then this whole thing stays relatively insulated. I think calls for World War III are kind of funny. Iran is not a superpower. It is a minor regional power with that power contested by countries like Turkey, Saudi Arabia, Israel. So there's not really the kind of thing here that some of the more loud headlines make it out to be. Indeed, they're not a nuclear power yet, which is kind of the point. So when we're looking at what's going on here, I think as far as kind of whether the U.S. gets involved or not, that obviously spooked the markets yesterday after some of the president's remarks. Whether the markets ultimately end up with something that has U.S. involvement or it doesn't, that's really more of a longer-term question, whether we're going to walk ourselves into another Iraq-like commitment or Afghanistan-like commitment or not. But from a near-term market perspective, that's not really a clear and present thing to bake into valuations. So when we look at this, then what exactly is the spillover from this thing to the broader global economy? I think the markets figure it's relatively modest, and that looks like it's probably right for now.
It's probably right for now. I would draw our attention here that there's a meeting coming up. News announcement just hit the wire. 4 ministers of Germany, France, Britain, and top EU diplomat to hold nuclear talks with Iran on Friday in Geneva. Okay, that's of interest. I think that's the point that I'm watching most today, what's happening with crude. For everything that Powell said, there were 2 paths he could take, right? If you look at what happened in April 24, October 24, you don't really see Powell or the Fed board discuss things suggesting that Israel-Iran would have a significant impact on their policy making. Whereas in March 2020, basically a week after Russia invaded Ukraine, Powell was out warning about potential supply chain disruptions and a knock-on impact to inflation.
Yeah.
That was more or less talked around today when he said that trade's happening and tariffs are happening and geopolitics and, we're going to keep doing our job. Monetary policy, that hasn't changed.
Right.
So the market today, does it get what it wants? Yes and no. A Powell that seems confident is probably good for people's confidence. We'd obviously like rate cuts, but then again, rate cuts too early could fuel more inflation. So best bet here, we just stand pat. And that's kind of where the market settles in now. There's only about 16 minutes left in today's session, 16 and a half minutes left in today's session. Our leadership board here, not exactly split down the middle, but 9 ETFs that I like to track, now 10 ETFs that I like to track are in the red, 15 are in the green. The notable underperformers would be gold and oil. The notable outperformers would be ETFs tied to the banks and maybe even some of the home builders. What do you take about the action in the bond market here today? Because there's no volatility really popping up in the wake of any of this. We can go over to, say, a ZB, for example. It's only at 21.7 IBR. Are there still opportunities in bonds as we look to, relatively speaking, low equity market vol?
I think so. I think when you look at what's going on with the bond market here, obviously the bonds are just a touch off here, and I do mean a touch. They're pretty much flat, but they're nominally lower on the day, having basically gone nowhere after yesterday's rally. So I don't know that you can make anything of the price action today other than the markets are basically in a holding pattern, but the larger trajectory from the lows in May has been higher. It's been a begrudging sort of thing, but nevertheless, the market keeps inching up. So I don't see a reason to second guess the price action as it presents itself. So I think the path of least resistance until otherwise shown is higher. It might be a very slow go. And I've actually just termed out duration in my TLT exposure by yet another 60 days because the trade has basically gone nowhere. So I just re-upped because it's progressing, but very, 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 very slowly. I think one of the most interesting parts of what the Fed just told us versus market expectations is that actually the Fed is kind of inverted now relative to what Fed funds futures show. The Fed made one change in its outlook for rates. It reduced the number of cuts on the menu for 2026 by 1 cut. So now we're looking at 2 cuts this year and only 1 cut in 2026. But when you look at what the markets themselves are pricing in, it's actually the flip of that.
More than that.
Yeah. They're looking for 43 basis points this year. So let's say the 2 are pretty much there. The second one is a little bit fuzzy, but for the most part, it's there. Only 7 basis points off gives you a fairly high level of conviction that you're going to get a cut in September, October, probably September, and then another in December. But then for next year, you're looking at 58 basis points in cuts, looking at Fed funds futures right now. And that's not what the Fed is saying. The market is saying the Fed is going to get more dovish. The Fed is saying they're going to get less dovish going into next year. So this is, I think, the most.
As Trump said today, Fed's always late. He called them
By
always
design.
late. Always late Powell, I think, was the nickname he gave him today, which is really rolls off the tongue.
He called them too late last week, which I thought was maybe a little bit better because it was shorter, but maybe the president's losing his touch on
that's by design though. The Fed never skates to where the puck's going.
Of course.
So,
and they said today, Powell said today, look, we have to be forward looking, but that doesn't mean that we have any kind of great conviction about what the future is. It just means that we have to anticipate what might be and balance it. So I think that's maybe the most convincing thing if you want to see bonds continue to go higher at the longer end. If the markets continue to judge that the Fed is wrong to be wasting all this time, as they seem to think, because if you look at break-evens in the bond market, there is no inflation concern there. In fact, they've been falling break-even rates to tell you that the market thinks that the outlook for inflation is actually diminishing. Mm-hmm. So if the Fed is spooked by maybe incoming goods inflation, and that's why it doesn't want to cut, the market is telling them, you're off sides. You need to be cutting. And at this point, if the Fed is so resistant as to actually take a cut away, then the market reasonably would reckon, you know what, that just means that you're going to have to be more aggressive when there's a catch-up. So when you cut, you'll have to cut more than you would have if you'd started earlier, because you're going to let the economy weaken further than you otherwise would. And so what that means is the cumulative tally for rate cuts in markets this year and next might actually grow. Mm-hmm. And that's a very positive tailwind for the bond market if that's the way it goes.
There is an interesting move here in the market today. Some legislation passed the Senate, the Genius Act, which sets up the boundaries, the guardrails for stablecoins here in the U.S., which just effectively stores of value. They need to be backed 1-to-1 by an asset. So we'll see how far this goes. But it's good news for Coinbase, which is ultimately the point here. That may be the catalyst, but Coinbase shares, they've seen a huge surge in volume over the course of today's session. Right now, 800,000 options going across almost 5 times their average. Calls are being bought, thanks to most being in between the bid-ask, according to Frank over here. Yeah, I mean, this is just a huge day. Everyone is buying hand over fist. The guys that are selling those calls are going to have to buy back the stock eventually or immediately, so you're getting a little bit of a squeeze to the upside. 16.9% higher. I couldn't help but notice that you're not necessarily seeing the same type of enthusiasm out of the crypto assets themselves, either BTC or ETH, though Bitcoin and Ethereum have by and large been tracking broader risk appetite the past few days. What's your feel on crypto? I know that you're not a big crypto guy, but in terms of this lack of movement, if it's because of the Fed, Israel, like, what's your take here? I would look at Bitcoin's IVR and say nothing's doing, but I don't even think that's a stretch. It's an 11.5. It's lower than what we're seeing in most other asset classes right now.
Yeah, I think we're pretty much asleep here in crypto because we're trying to figure out whether what this thing is going to do is be a high beta reflection of some kind of risk on, risk off dynamic. And I think in some ways this really speaks to what's going on in equities, which are listless as well, and basically drifting sideways, and basically have been drifting sideways since late May. I think when you look at the S&P, there's a lot of similarity with what crypto looks like here, although crypto is a little bit soggier. The digestion here has a little bit more of a bearish tilt. The digestion in the S&P has a little bit more of a bullish tilt. So whereas here it looks more like a symmetrical triangle, let's say, something along those lines. In the S&P, it looks more like a rising wedge type of something. But the story is basically the same. You have a similarly digestive tone in gold. If you wanted to look at this as a kind of anti-dollar, which sometimes works and sometimes doesn't. So I think really what you're waiting for in all of these things, and crypto is just a kind of higher beta reflection of this question, is what's going to happen to overall appetite for risk taking? Have we arrived at a place where maybe that's going to be challenged? And that's a question for stocks. It's a question for the dollar. It's a question for all of the inputs into what crypto is. I don't think the legislation moved today. I mean, we can clearly see it hasn't had much of an impact on the underlying commodity here. And that's probably because the outcome was long since expected. So you get a pop in Coinbase, sure, but I don't think anybody that's holding crypto exposure was really going to change where they were going to go one way or another. One of the more frustrating things about crypto, as a matter of fact, is that it's not really a two-way asset. The people that buy tend to hold, and selling is a very dangerous proposition given the volatility and also just how expensive it is to sell. So this seems more, in my mind, this is more about like if you're a believer in this thing, in Bitcoin the token, I would add, not crypto the technology, because Bitcoin the token doesn't necessarily have to succeed in order for the technology to succeed. So if you're bullish on the technology that is crypto, that there's arguments for how you express that. If you're bullish on Bitcoin the token, then you're probably holding and you probably don't care about any of this. But what you will eventually become subjected to is the markets picking a risk direction, and then crypto will just kind of fall in along the risk spectrum. It's the same stalling in that sort of indecision elsewhere in markets.
Yeah, you could see it in stocks here, which stocks are kind of stalling right now. 5+ minutes left until the close, 6 minutes left until the close. S&P's up by 0.03, NASDAQ by 0.04, Dow's Dow by 0.06. Ryan, I think we should remind people what's coming up. Although there's a market holiday tomorrow, of course, you're wondering why are Chris and Ilya here. Overtime doesn't start until 4 Eastern. It's because Tom and Tony are overseas. They're overseas right now because they're doing a bunch of events in Europe. This Friday, June 20th at 1800 British Standard Time, they're going to be there in London. You can go to tastylive.com/events to get more information. Of course, Radigan's not here today because he's getting ready to entertain Tom in Milan on Monday night. That's going to be 1800 Central European Time, Monday, June 23rd. If you're in Milan, go meet the Tasty folks. Tom, Rich McDonald, Dylan Radigan. They'll be there for a conversation. Live trading. It's totally free. There are a few tickets left, so be sure to get yours now. Ryan, I think we can go back to the charts. I wish I was in Milan with Dylan. I didn't get an invite, Ilya.
I can just quietly make knockoff espresso in my kitchen and shed one single tear of disappointment into the cup.
Okay, he has said to us, though, we are welcome at any time on more than one occasion on camera. So when we show up,
we have evidence. And in texts, we have evidence.
Frequently. All right, so metals today.
You and I should get on a conference call with our wives and make this happen.
Gold here today is pinned. Silver's off a little bit. Copper's a bit higher. Metals are twisting. Do we give the Fed credit for anything today? I know that stocks and bonds are in a bit here, but as we look to the close, there's no volume. There was no move expected. They did what was anticipated, I suppose, with the forecasts. Are we shocked?
No. I don't think there's any shock here. I think the more interesting thing is what the dollar does into the close, because we had a pretty significant dollar rally yesterday. It looks to be holding on by the skin of its teeth to the down trend bounds that have been established basically since early April, and seems to not want to continue to rally, but it's really settling at some key resistance. So I think that's about the only thing to watch here. Otherwise, it's pretty quiet. The dollar got a little bit of a pop. The yen got pushed back a little. Gold got a little bit of a pushback. The long end of the curve got a little bit of a nudge, but nothing has really moved very much here at all. perhaps the only real thing here seems to be that there's a little bit of a dovish shift in the immediate rates outlook for this year, but man, is it minor. We went from basically something on the order of 3.92 was the forecast for the year-end rates, now to 390. So a big 2 basis point swing in Fed funds futures for year-end. There's nothing going on here. Interestingly, yields spiked a little bit when the Fed initially came out. They spiked down, but none of that has held. So it makes you think that the algos were reading the SEP and doing things, and then ultimately none of it came to much of anything. So no, I don't think the Fed's immediate impact was anything beyond what you might expect today. I think the larger issue is what all of this will mean going forward. Because if the market's divergence with what the Fed is saying continues to grow, and if the market continues to scream at the Fed, you're wrong, you need to be cutting, much as last year, you'll have that show up in the bond market. The bond market rallied 13% between the second quarter lows and into the September meeting when the Fed finally cut rates, because the market was screaming at them, you need to get moving now, and the Fed was resisting. And all of that speculation went into a weaker dollar, went into a stronger ZB. I mean, 13% rally in ZB, which is slow, that's a significant thing. So I'm looking for that, but that's not a intraday kind of a thing. This is the kind of thing that markets are going to digest, and maybe we'll see it show up over the course of the next 24 to 48 hours as a start.
Well, we're coming into the close here. It's the final minute of trading right now. Stocks are softening up. We go from about 60, 50, 15 minutes ago in ES. We're off about 15 points right now, closer to 60, 32. It kind of reminds me of what happened last Friday, where going into the close, did people really want to hold risk into the weekend? You saw vol pop up a little bit here, and vol, for what it's worth, it's held up here today. It was a little bit lower. It's still down somewhat, but you see going into the close, back from under 20 now to 20.35. Just a general observation on the condition of volatility right now. In this market, we've seen that the term structure has more or less flattened out. This is the current index value. The spread between the front month and the back month is just over 3 points, about 3.14 points. If we go back to where we were on, say, June 4th, 2 weeks ago, the spread between, you're not going to give me any time here, we did this on Futures Power Hour. It worked, I promise. The spread was about 6 points between the front month and the back month volatility futures. So vol's flattened out here. Point is, while futures markets are still open, if you have time to adjust positions, they are closed tomorrow. Now's the time to do it. But Ilya, you and I are back for overtime. We're going to have to kick the tires with Glenn here in a little bit. We're going to take a quick break. We'll be back in 2 or 3 minutes. You're watching Tasty Live.
See you soon, everybody.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Global markets never sleep. Explore them with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The Fed holds, and so do markets. It's Wednesday, June 18th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Glenn Freiberger in Chicago. Welcome. Thanks for stepping in for Dylan today. He's getting ready to take Tom and Tony around Europe, which should be a lot of fun. We're here for the next hour as we take you through the futures market close, 5 p.m. Eastern, 4 Central. If you're joining us on the platform, tastylive.com. Welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading today, what you think of this market action. Before we get there, of course, I think it's worthy to remind everyone the futures market is still open right now. And if you have any last-minute trades you like to get across the board, now is the time to do them, or you hold your peace through tomorrow because, of course, the market's closed tomorrow for Juneteenth federal holiday. When we see the futures close today at 5 p.m., it's basically like a Friday close, and then tomorrow is effectively a Sunday open where we'll be back again trading at 6 p.m. It's why we warned that if you had dividend-affected positions today or for Friday, you should roll them today. Okay, so that's all off the board, guys. The Fed kept rates on hold. That was not a surprise. 99+% chance of them doing so, according to Fed funds futures spreads. Going into today's meeting, the policy statement itself did not change either, outside of the date and maybe changing a name here or there. The red line was the same we saw in May. Very boring. But what we did see was a change in that summary of economic projections. We see that the Fed is cutting their growth forecast. They're boosting their inflation forecast. They're telling us that we're still going to get 2 cuts for this year, but ultimately maybe not so much more in the future. They are forecasting a higher structural Fed funds rate, a higher for longer, if you will. Stocks don't love it, nor do they hate it. Neither do bonds. It's a flat day right now. S&P is now flat for the session, 0%. NASDAQ's off by 0.01. Russell is the only significant outperformer, up by 0.56% here. Ilya, because you and I just had a chance to talk on last call for a bit, I just want to kick it over to Glenn here for some thoughts. Please. Glenn, you know, this is a big day for us, particularly for FX people like yourself.
Oh, yeah.
We care about the central banks, and I don't know if this one left much of an impression. How are you seeing things from your side of the desk?
Yeah, I mean,
what's happened today?
I mean, if you set the backdrop for me this morning, war, FOMC, random holiday coming into the middle of the week, I would have expected things to be a lot more exciting. And even so, my one of my predictions for this day, how it would unfold, is with getting the summary of economic projections, getting a lot more numbers on the release of the meeting. I would have thought the move, and knowing how cautious Powell tends to be, and everyone kind of expecting what he's going to say at this point, would have thought the move would have been at the 2 p.m. Eastern time, at the release of all of those economic projections, all those new numbers. And we saw kind of a muted reaction there, and the slide coming actually during Powell's commentary, which I thought for this occasion would have been reversed. So that surprised me a little bit. But inside moves all around, tracking dollar prices, we did see a little bit of dollar strength come back. The snap reaction was dollar weakness, as you know, the two cuts taking the headline there. A lot of people thought that they would edit the dot plot to perhaps just one cut this year, and so an initial dovish reaction. But once Powell got on the mic and started saying, the rhetoric around the inflation costs will be passed to someone. We don't know who. We all know who. But then we saw the dollar start to get bid up. A lot of that tension release in pairs like the euro dollar and pound dollar that were pretty wound up beforehand, and even some more back and forth in the Australian dollar and Japanese yen, who were moving, trending in the dollar's favor, or not in the dollar's favor leading up to the meeting, and now coming back a little bit. So a little bit of diverse price action from a charts perspective, but pretty unanimous across the board. Dollar story starting to get a little dollar bid.
Ilya, it seems like the dollar is coming back here a little bit. I'm just flipping through some of the spot FX positions on the chart, and you could see that once you get that initial shakeout where the dollar softens up a touch with the release of the policy statement, and realistically, it's the summary of economic projections that get it moving, given the lack of changes. The dollar does make its comeback as Powell begins to speak. And, you get the sense right now that at the margins, the news flow, the tariffs, the geopolitics of it all, it puts the Fed in a position where it does need to continue to wait to see if the timing is right. Ilya, I can't help but reconcile the fact that 2Q GDP, even if it's just for accounting purposes, is going to be much stronger than what we saw than in Q1. And so the Fed is probably not going to have the ammunition in its back pocket of a recession by July, right? Because the July meeting, right, to say whether or not they should start cutting. It seems like the Fed is going to be sticking around in its current location for a while longer than probably people want it to, than it would like to, but its hands are tied right now.
Yeah, and I don't think currency markets are particularly surprised by that, or we'd see the dollar strengthen more considerably. I think when you look at really what's happened, if we can just zoom back here, this is a 5-minute chart that we're looking at. If we go to a daily for the yen, if we go to anything a little bit longer term, we can see that the dollar has been facing relentless selling since the beginning of the year. We saw that, of course, in April. We had the whole scare at the beginning of the month with Liberation Day. And against that backdrop, once that sort of normalized a little, we saw the dollar strengthen a tad and then come right back in and establish a kind of sideways consolidation. If we look at the yen, similar story in the euro, similar story in the pound, really stubborn consolidation with almost no motion at all in the Aussie. But whereas stocks have clearly recovered off those April lows, the dollar has not really managed it. And so one of the more interesting things here has been this sort of relentless bearishness on the dollar in markets. It doesn't really seem like that bearishness has a very concrete argument to unravel on the basis of what the Fed said today because, as we were just saying on last call, the only kind of notable change in the SCP, everything else was very predictable, right? The Fed signaled already as recently as May, we're going to increase the unemployment rate forecast. We're going to lower the growth forecast. We're going to increase the inflation forecast. That's exactly what happened here. We're going to widen the bands around those forecasts because uncertainty has increased. We really have no idea what's going on. All we're saying is we know tariffs historically are going to have these effects.
Did you find that to be, I saw that uncertainty, and we measure uncertainty as the bands around the forecast widening out. The Fed says here, uncertainty about the economic outlook has diminished.
Yeah, what the heck?
But remains.
I mean, I think you look at the S&P 500 and you hear what Powell says, and he goes, well, since April, it's diminished. Well, yeah. yeah. Since April, it's diminished.
Thank goodness.
Can I say that I just sat and listened to the whole meeting? And then halfway through, I started playing it back from the beginning while I was listening in one channel, and then I had it on mute on the other because I think watching Powell's body language is an interesting enough exercise. Yeah. I walked away thinking that the Fed has no clue what's going on right now.
They're saying as much. They are loudly saying, hey, look, with an unemployment rate at 4.2 and an inflation rate at 2.4, why in the world would we try to make up our mind now? Well, it's going to take time for the tariffs to work their way through the economy. But the upshot, again, dollar-wise, yields-wise, I think is the market is very much not on the Fed's page when it comes to this change in the rates forecast, where they went and dropped the rate cut from 2026. The market is flipped the other way. They think we get the 2 this year, and then we get more easing next year, not less. As that speculation builds, it'll be tough for the dollar to go up in a lasting way. It'll be tough for bonds to stay anchored.
I just realized this is not the correct. That's the correct one. Not sure why I pulled up last year's. Okay, so one thing that I noted here in the language too, the unemployment rate remains low. They changed from has stabilized at a low level in recent months. So low to the Fed is basically below 5%. But what we should be aware of is in the most recent non-farm payrolls report, the unemployment rate was technically 4.244%, which means if it was 4.245%, it would have been rounded up to 4.25%, which means it would have been rounded up to 4.3%. So just by the skin of our teeth did we miss seeing an unemployment rate miss last time. So if there is something the Fed's getting ahead of right now, there is this slight adjustment in my read through that the uncertainty persists because the situation's degrading. It's not falling off a cliff right now, but we're kind of gliding into a less comfortable economic environment moving forward because growth is revised lower again, unemployment's higher, inflation's higher. That's not stagflation itself, but it smells stagflationary. You don't technically have high unemployment. You don't have negative growth. You don't have high inflation, but lower growth, higher unemployment, higher inflation. That's not a fantastic mix right now for sentiment. But sentiment's really bad in this market already, Ilya. I want to stick with the dollar here for a second because the dollar sentiment just kind of drives me up the wall for the most part. The action today, the dollar was lower. It does resolve itself to the upside. You can see that we're now testing the downtrend from the February, March, May, and perhaps now June swing highs here. The Bank of America Global Fund Manager Survey, which was released yesterday, shows that fund managers have not been this bearish on the US dollar since January 2005. We know from the futures market, the euro positioning is the most net long it's been over the past year. We know that the yen positioning is basically the most net long that it's ever been. We can just go down the list. The pound's in a similar situation. The Canadian dollar's in a similar situation. The dollar is really stretched. Glenn, how are you feeling about the greenback here? Because it feels like it's the most hated asset in the world right now.
I know, what the heck?
But that's probably a good opportunity for contrarians like ourselves to look long.
I agree. And the one thing you're pulling up here, DXY, to me, what screams out in the spot forex market is if you're stuck looking at a chart like this, where you're saying it might break out of its bearish trend, you have a lot of unique chart patterns in these markets and a lot of opportunity to catch the dollar, regardless of if you are continually bearish or are betting on a dollar comeback. You have a lot of different charts to try and get in here on, and a lot of unique price points. So that's, in terms of unpacking the dollar story right now for me, I think that's the most interesting angle. I mean, you have the euro dollar at coming off of 4-year highs. You have dollar Swiss franc seemingly pinned at 10-year lows, but now starting to build some positive price action there. Just now in the hour after the Fed meeting, now returning to levels in that market that we saw last Thursday. That had been a significant laggard, a lot of pressure getting relieved in that market. And so I think maybe it's just me who's looking at these markets a little more than the average trader, but there's a lot more granularity and potential opportunity when looking at the spot dollar markets than the dollar index, because that's a pretty disheartening story overall, just putting the dollar in a basket and checking the year-to-date performance. So that's what I'm looking at. I've got some client sentiment from tastyfx, IG group clients, and that shows us that this dollar Swiss franc market, let's get in here in my, just hitting a refresh for you so I can get the most recent numbers. This dollar Swiss franc market, we've got client sentiment of 82% long. So that aggregates IG group exposure across the whole globe, and traders positioned. And what you're seeing is traders in the dollar yen market now split 50-50 at this 145 level. You're seeing euro dollar and pound dollar both net short to the tune of 60% net short, and then Australian dollar and US dollar, Canadian dollar, both net long. So you're seeing a little bit of mixed positioning when you get that granular, as opposed to just one of the what did you say, the Bank of America the fund managers. So it's
actually
just
very, very interesting, very interesting numbers, because to your point, Chris, and yours, Glenn, the 80-20 split net long in a dollar Swiss would tell you you're getting to the kind of a place. And by the way, we should kind of preface this by saying retail sentiment tends to be a contrarian indicator. So what you tend to see is when a market builds net long, that market tends to be going down. That tends to be a bearish signal.
Can we explain? Do you mind if I explain why that's the case? Because it's not
very
that
important to explain why that's the case. Because it's not that people are wrong. That isn't what that's telling you.
Yes, right. So when we look to sentiment figures for retail traders, right, just as we would look for positioning for the COT report. So let's go backfill here a layer further. The COT report, the CFTC's Commitment of Traders report, is released once a week on Fridays at 3:30 p.m. Eastern. It covers the trading week from a Wednesday to a Tuesday. So the next COT report that we see will be the week through yesterday's close, for example. But that leads to a little bit of a problem, because you get the COT report on Friday and the data window closes on Tuesday. So market action Wednesday, Thursday, Friday morning, it's not accounted for in these positioning updates. Okay, then you have to wait another week. So what happens around the Fed today, for example, what happened with the positioning in the market with the Israel war starting with Iran, we're not going to actually see that until this Friday, even though the war's been going on for basically 6, now almost 7 days. So years ago it was contrived. We got to find a more timely positioning indicator. We got to come up with a way to mimic the CFTC COT report, and we got to do it on a real-time basis, right? So we can look to our own client positioning to do so. And in doing these data studies, something interesting occurred. We've talked about this on air before, Ilya, but for the most part, if we were to just do a binary Were you right or were you wrong? Retail traders themselves are actually correct more than they are incorrect. The problem comes because of scaling with risk management, where if you're right 55% of the time, but your average loss is twice the size of your winner, you're going to actually lose money because you need to have a break-even rate of 2 to 1 if you're going to be wrong. Excuse me, if you're going to let your losers run twice as long as your winners. So you need to be right 67% of the time if you're going to let your losers be twice the size of your winners. And that obviously is not what happens here. So why do we look to the sentiment figures? Because when you see these extremes in sentiment, you could trade off of them. Granted, retail traders are usually right. Okay? They're usually directionally correct. It's because of the risk management and the inability to cut losers and let winners run that you see that they're offsides. And what makes this all the more interesting is when you look at the sentiment data and put it next to something like the COT report itself, you could see that retail traders behave specifically like speculators in the futures market, right? Which is to say that they follow trends, and at the tops, they try to fade them, and at the bottoms, they try to pick the bottom. So there's something to work with here. It's a tool that we use to help fill in the gap because the COT report and other positioning data available in the market isn't updated on a day-to-day or even a minute-to-minute basis. My spiel's over.
Right, but so what, and a very important spiel it is, because first of all, it illustrates why all of us, when we start in trading, have to overcome, most importantly, the risk management side of things, because that really is what makes you successful or not. There's a gazillion ways to analyze markets across different time frames, but if you can't manage risk, then you can't make money over time. But it also illustrates how to read these numbers in the context of sort of their directional implication. You see in reading like 80-20 net long in dollar Swiss, and you go, okay, well, that's getting kind of high. That's getting to the point where you're getting near a positioning extreme. And although on the way into 80%, from 60, from 50, as you're growing net long, the implication would be that the bias is in the opposite direction, that a trend would continue to build in the opposite direction. So if retail is increasingly becoming net long, then the price is increasingly going down. At 80, you're getting to a place where sentiment might be at enough of an extreme where it actually flips. And at that point of exhaustion, people would start getting less net long. But of course, then the price would also be signaling that it's likely to go higher. You interestingly don't have that split, to Glenn's point about the diversity of what the dollar is doing. You don't have similar splits in the yen where you're at 50-50. It's not nearly as extreme in the euro where you're at 50-60, something like that. So the dollar here isn't obviously screaming that it's at a point of exhaustion on the down move. And when you look at the levels, I mean, just look at the pound here ahead of the Bank of England policy announcement here coming up in just a matter of hours. We're sitting squarely at former resistance turn support, and we will not clear it. It's a similar story in the euro. It's a similar story in the yen. The Aussie has basically been stuck in the mud for ages now, so it's difficult to even put levels on it. But all of this basically lines up to we've gotten to the bottom of the range, we've gotten to the deciding line, and we're going to either crack or bounce here. We've been in a sideways range for quite a while now, and that can relieve positioning all by itself. So when you look at something like the Bank of America numbers, and if you then end up saying, you know what, people have sold off some of their short exposure, but the price has only moved sideways and not up on that basis, that's very much a possibility to relieve some of these oversold levels without the dollar necessarily rallying.
I would look to today's candlestick in the pound as perhaps a sign that this thing is rolling over and the dollar's getting ready to rebound before we move off of FX and go back to the broader market. But you can see that the high today bumps into the 5 and the 21 EMAs, the 1 week and the 1 month respectively. We kind of break the downside of the trading range here. I go to that 4 hour, right? We clear out the lowest close.
Very possible.
So that's the lowest close on the 4 hour on the 10th. We try to rally back into there, rejection, and then ultimately set a new low. The point is that the dollar has been beaten down. Everyone hates it. The founder of this network fashions himself a contrarian, and for the life of me, I am not that person. I'm a momentum guy. I'm the kind of guy who likes to look at a trend and go fishing and not think. Okay? It's very the kiss method. Keep it simple, stupid. But
you're starting to see that here?
The momentum looks like it's turned. And I think that's the prevailing point, if only as a point of interest. Look at MACD. MACD has not set itself down below its signal line with a sell signal going back to the start of April. And that was a temporary blip. Otherwise, for the majority of this uptrend that the pound's been in, that the Aussie's been in, that the Euro's been in, you've seen these indicators stay in bullish territory. And they're starting to give indications that maybe those characteristics that have defined the past several months of trading, they're evolving. We do need to go, Glenn, I do want you to have the last word here on FX before we change the channel and go back over into equity markets.
Yeah, I mean, you nailed it there with the nice part about this dollar story is you had such an extreme run-up that if you're looking and possibly think that things are turning over and a dollar comeback is underway, you have time to and a lot of room to run to wait for confirmation if you see it, because it's not like a typical year where within a year you only have 5% to work with. I mean, especially against European currencies, these are up 10% already. So I think as much as these markets are wait and see, just like the Fed, if you are a dollar bull, you've got a lot of room to run. So I'd say no need to necessarily try to step in front of it, but it's nice to see a little more two-sided action.
Ryan, why don't we pull up, or Paul, why don't we pull up the slide here? Before we get off of FX, I think it's a timely reminder for everyone that Tasty FX is now on the platform. You saw us tinkering down there when we moved through the tabs, but you can trade spot FX now in the same place as everything else. If you go to Tasty FX or you head over to the watch list on the platform and you go over to Forex, you have the ability to sign up from there directly. Head over to tastylive.com, tastytrade.com, Glenn, Tasty FX to find out more, right?
And there you go. You nailed it.
We nailed it. All right, let's go back to the charts here. Let's talk about what's happening broadly in the markets. We haven't looked at the sector performance here today as we got into the close. It is a mixed day by and large. 5, 10, 13 are in the red, 12 are in the green. So you have an S&P 500 that's up by 0.02. It's basically a clean split between winners and losers. Top performer today, Telecom, XTL. That's up 1.44%. You have the banks that are performing well as well. Too many wells. KBE, KRE are the best of the bank bunch. Otherwise, some rate-sensitive items like home builders were higher. Although, Ilya, today's economic data that came out, the home data was pretty god-awful, which, as someone who has a very particular pet peeve about housing and wants to see more of it built, basically wherever it can be built, building permits are down by 2% from 1.43 million to 1.39 million. Housing starts are off from 1.39 million to 1.25 million. That's a 9.8% decrease month over month.
Yeah.
That's horrible. Okay. But we have home builders rallying today. What's happening with U.S. housing right now? I saw a report this week that there are 5 times as many sellers right now in the market as buyers, a level with which we have not seen since the global financial crisis.
Well, I mean, obviously, we've talked at very extensive length for months and months and months about what the 2022 rate hike cycle did to the housing market, which was basically lock it up for both sellers and buyers. It locked it up for sellers because if you have locked in a mortgage rate somewhere near the national average of 4-ish% or lower, 3.5 to 4 or so, then why in the world would you be cavalier about refinancing at rates twice and 3 times what you may have locked in as your cost of money? So sellers haven't been enthusiastic about selling. That, of course, has kept inventories very, very low because U.S. housing supply is about 4-to-1 existing homes versus new. And we can have a tremendous conversation about all the many ills that can be addressed if we built more housing. But that aside, if you consider for the home builders calculus here, obviously mortgage rates have unclenched a little, and people have kind of acclimated to where they've been hovering recently. And so more people are selling, more supply is coming on. The prices will adjust eventually. Housing markets are notoriously very, very slow, and the price adjustment has kind of already started. So now, if you're looking at the home builders, on average, it takes about a year, about 12 months to complete a single housing unit. So if you're a home builder and you say, okay, well, whatever's happening here, we probably get a surge of interest from buyers, and we're going to have inventory for that in about a year's time. So, okay, let's go build it. And if the market is looking at that and that's what they're anticipating, then what we see in ITB starts to kind of make sense, because the markets go, okay, well, it's not like we're at the end of a price adjustment in housing. We're in the beginning stages, and it takes a long time. So for home builders to get ready for what buyers will want to do once they notice, they should be starting to get inventory together right about here.
Yeah, the housing story is not really a national housing story right now. This comes from Resi Club, Lance Lambert. It's using the Zillow Home Value Index through May 2025, which was published earlier this month. Glenn, you and I, people are feeling the squeeze up here still. House prices keep going up in the New York and Chicago metro areas. In fact, in my area, quite dramatically, which I'm not shocked about. My wife works in real estate. Pre-pandemic, May 2019, there were 6,400 active listings in Westchester County, just north of New York City. Currently, they're about 1,600 for this time of the year, which is really odd because everyone puts their homes up for sale in the spring, so they move during the summer and their kids can start September, the new school year. Everyone's settled in, right? So you can see in New York, housing inventory is just non-existent, so prices keep going up. It's going up in Chicago. It's all the places that really built up a lot. Feels like an echo of the financial crisis, Ilya. Las Vegas, Phoenix, Austin, Portland.
Yeah.
Parts of Los Angeles, parts of San Francisco. Right? So look at lower Florida, southern Florida. Anyway, it's not a one size fits all, and that's what's so interesting about how the Fed proceeds here. Because unlike in 2007, 2008, where it was the opposite of a rising tide lifts all boats, it was a falling tide sinks all boats. Everything came down, right? This time it's not like that. It's the areas that saw the significant overbuild post pandemic. Those are the ones that are getting hit hardest. It seems like it's just going to go on. You said that the bill is going to come due at some point down the line once the rate hike cycle started. It feels like it's coming due for large portions of the country in the areas where you have the most significant housing market activity.
Yeah, it's starting.
Well, why are Austin home prices falling so much? Why are rental prices falling so much? Because they built so much supply. So here in New York, in Chicago, Glenn, got a very different calculus. There was no overbuild. So where's the excess supply to get rid of? Just doesn't exist right now.
Or build. Never mind overbuild. Just build.
I would like to say that my town is doing a great job on this. They've just approved a lot more housing, and 100 new units are coming into town. Taking the steps. After when I moved here, up until at some point of October last year, only 2 units had been permitted in town in the 2.5 years since I moved back home. So things are changing.
Has changed as well. Our new mayor, Daniel Lurie, has been really pushing this subject. And frankly, his predecessor, London Breed, likewise. There's been a consensus that's emerged that the way you bring down housing costs is gasp, shock, build more supply. Because more abundant things cost less. It's an incredible realization. But here we are.
Impressive.
Better late than never, I suppose. And so we're starting to see that here as well. The tide is shifting.
And you brought up one interesting point, Ilya, that you don't think mortgage rates have all that much to do with it now, just because a function of time, because it wasn't expected for a couple years, and now it's looking like the new normal. So change in
and
that regard
they've come
doesn't
down off the high highs.
Mm-hmm. But I'm saying there doesn't necessarily have to be such a dramatic spark there anymore. It lies in other. Okay, interesting.
Yeah, I mean, I think you have to remember how slowly the housing market evolves. So if we consider the sort of the extreme example, stocks bottomed by March of 2009. Housing wouldn't bottom by late 2011, early 2012. It takes a long time to clear the housing market. And it is frothy here by any stretch of the imagination. So we've had mortgage rates come in. I mean, obviously, they're a little bit lower. The Fed cut rates by 100 basis points last year. It's not surprising. They're expecting to keep cutting. We're quibbling as market participants about 25 basis points here or there. But from a mortgage rates perspective, rates are going to be lower, and you've had the benefit of time. So if they're settling a little bit higher than they were, or than really they would have if the Fed kept cutting, there is sort of the dual thing of we've seen mortgage rates higher in the past 2 years, and they're sort of anchoring in a way that people are getting acclimated to seeing. And we're seeing that, I think, in relatively equal measure, get some of these sellers off the fence.
You can see it's a total tale of two cities. Real estate isn't created equally. For example, the Schwab REIT ETF, the Real Estate Investment Trust ETF, it's been chopping around sideways here for the past few weeks, whereas the home builders themselves, they've kind of keeled back over and started rolling back over again. I'm thinking about this just for myself from like a personal, a little bit, not necessarily a trade, but like a longer term portfolio construction perspective. Housing is historically one of the best places to hide if you're going through a period of inflation. Housing that's built, in fact, not housing that needs to be built. And so these real estate investment trusts, they can get very regional specific. I can go and find a REIT that is just about New York City. I can find a REIT that's just for Nashville, or a Southern Sunbelt REIT, right? So where you choose matters. And that's why I bring up those charts, because as I think about some of the allocation for housing plays, the home builders don't look like they're getting any love right now. And in this environment where labor supply is in question, where the tariffs for the supplies for aluminum, for copper, like all this is in question, and mortgage rates are near 7%, what are the home builders going to do right now? So I would think that if I want to have a housing plan on the board, housing that's already existing, party that's already built, that would probably be the one to look at instead, as opposed to the home builders. Unfortunately, that's just where we are right now in the cycle. I don't see it getting better. You can see JRE, the Janus Real Estate Investment Trust ETF. This too, similar pattern. This looks like a big, all sorts of a flag to me, Ilya. I see everything as a bull flag, though, given my my delusions of being a bull. So,
if it's a bear market, then it's sideways consolidation. If it's a bull market, then it's a flag.
Yes.
And
stocks.
Easy playbook.
Got it.
Could do this all day.
Yes. Yeah, right. Yeah.
Show me another
the Captain
chart.
America trade. Okay, so more consolidation here, Ilya. We haven't touched on metals yet. Actually, Glenn, let's go to you first. If we're talking about the potential dollar bottoming, it is worth discussing the positioning in gold. In that same global fund manager survey that showed fund managers are the most bearish on the US dollar since January 2005, long gold is the second most popular, is the most popular trade on the board right now. It's long gold, long Mag 7, short USD. And so if the dollar is going to rebound, these dollar-denominated assets probably have a little bit more of a difficult time rallying. What's your view on gold, on silver? Do you see a difference between the two of them? How do you approach these markets as a more of an FX person, considering it as a dollar-denominated instrument?
Yeah, I think it's been quite a run. And so on the backdrop of a Fed announcement like this and seeing the knee-jerk reaction here, and especially in cryptocurrencies, it's coming front of mind again that, a high interest rate environment, really not good for crypto. And so in my mind, you could argue that even though it might be a crowded trade, all these long gold positions, not really any indication that anyone needs to, mass liquidate and go somewhere else. I mean, you still have all the fundamental storylines behind why you'd want to keep this on. And so it's hard for me to find momentum to the downside in this market unless something really falls apart. And you start to see kind of an unwind, because I feel like there's definitely, given how this asset can be leveraged, there's definitely an unwind risk here, but also very hard to make the case that this could keep running. So, I mean, the market structure over the past now over a month, really speaking to, we have settled in here. It isn't like we're in uncharted territory anymore, and that 3,400 is a ridiculous price. And so a sideways market here isn't ridiculous to expect. That's how I'm treating it. Metals in general, I feel like you have to have a lot of conviction to play them, and it's hard. It's been hard at these levels. And you've gotten an opportunity in something like silver or platinum to play the catch-up game. Those ratios definitely have been interesting. But other than that, not too sure. What are you guys thinking?
Hey, platinum's been wild. Westwater pointed this out to me today. I saw that it was doing really well this year because it's up like 49% or 46% right now. Actually, I want to just double check that. I don't want to. This is not the forum to spread fake news. There's other forums for us to spread fake
Vecchio
news.
said.
Yeah, right.
What Chris said.
Dangerous. 46.18% higher year to date for platinum, but on a 3-month basis, it's up 29.99% this quarter.
Yeah.
So a lot of these miners have had a really, really, really good run, which gold, for what it's worth, it wasn't really down that much today. Then it flips, and now it is off by 0.64%, dips back below 3,400. Some of these gold miners right now, perhaps bad news for one Victor Jones, who I'll be speaking with later today on The Price of Truth. These look like they just ran into significant highs as gold looks like it's having trouble rallying. The dollar looks like it's bottoming. And now the miners are up at levels where we've previously had significant resistance and we're failing around them. Maybe that's the short-term play here, right? Why do you want to hold on to the miners if gold's going down, if silver's going down? You really don't. It's a high beta thing.
I wouldn't go so far as to say silver is going down or gold is going down. I would say both appear to be consolidating. Silver has a breakout here through the range around 36 or so, and it's holding that very firmly here. In fact, on the test today, after yesterday's rally, you're kind of narrowly holding yesterday's resistance as support. So this does not look like anything that's rolling over. The situation in gold is not very different in the sense that while gold is relatively more staid here than silver, it is still in a very well-defined up move. Even sort of the most recent up move, if we look at just the low from mid-May, you're holding former resistance as support here again. Now, you are starting to test a little bit deeper under it here today, not dissimilar from some of the deeper testing higher in the dollar, but just like that testing higher in the dollar, I would argue hasn't produced a conclusive breakout, neither has the testing in gold. So I think at this point, it's tempting to want to draw a narrative here, but I don't know that you have one yet. I think so far you still have a similar set of circumstances, which is the trend is up. Nothing is telling you that it's turned. It does make sense, certainly, to be on the lookout for a turn because you're at very significant barriers. I mean, obviously, 3,500 is a very key line in the sand here for gold, which makes it all the more logical that the market is stalling here, but also possible that it ultimately does more than that. So, as with the dollar, I don't see a reason to get long. I don't see a reason to get short gold, but I do see a reason to be very, very vigilant about making those adjustments because they really could be here. They're just not confirmed in my mind. So I'm still long gold. I'm still short dollars, but my trigger finger is itchy, and I might very quickly flip the other way.
So no metals, no metals catch-up play for you. In my mind, that's been the narrative in recent weeks. Is all these other metals exploding? Has that run its course?
I don't know. I'm of the mindset that there could still be catch-up towards gold, right? Because I mean, look what's happened at platinum here. Platinum's gone. It's unfortunate. I guess I can do this. Platinum's gone absolutely nuts. XPT, USD. We'll just.
It does have a tendency to do that every now and again.
Right. This is.
Every now and again, platinum just goes completely haywire. There we go.
Right. You're talking about this huge. Let's get the seasonality off there. This has been a huge advance over the past few weeks. We were below $900 an ounce. Now above $1,300 an ounce. But that's the catch-up play here, where everyone is saying, okay, gold's run up. It's too expensive for me to buy gold at these levels. I'll buy other hard assets. I'll buy the other things that I can get my hands on that have tangible value as opposed to being digital ones and zeros. Which I suppose it should be the last thing we talk about today. We briefly touched on coin earlier during last call. It had a really nice performance today as the Senate passes the Genius Act, 16.3% higher here, outlines regulations around stable coins, which has been a promise of the Trump administration going back to the campaign. So promises made, promises kept, I suppose. Interestingly enough, as this passes, right, what's getting hit the hardest? Visa is getting hit pretty hard. MasterCard is getting hit pretty hard. What's Amex? Why am I forgetting Amex's stock ticker right now? Someone throw me a bone. Amex stock ticker.
Isn't it
AXP? Yeah. Okay. Why am I thinking Amex? Just totally lost my mind there. Amex different group. Amex is a different group here because, well, it's a different client base. Stable coins really impact everything else. Stable coins are really more about what happens with lower income consumers. It's one of the concerns that actually around Walmart right now. Walmart's announced intention to have its own stable coin come out. And it's seen as competition for potentially, regional or community banks, for some credit unions. But you see the stablecoin news passed today, or stablecoin legislation passed today, and Visa and MasterCards are the one that are hit the hardest. So why am I rating this out? Ilya, we talked Bitcoin briefly on last call. So Glenn, we haven't seen anything in Bitcoin here today as a result of this legislation passing, but it is, again, a dollar-denominated asset. So if the dollar is going to bottom, then Bitcoin may struggle here some. What's your take on the crypto market these days?
Yeah, I mean, I touched on it before. I think around Fed announcements, I don't know why it feels like there is just more of the sentiment around, higher rates. When we really see a bullish cycle in crypto, it is in a low rate environment. And so I think that may be hampering things today. Definitely hasn't gotten any sort of safe haven demand around these events as an uncorrelated asset. I would have expected this good news to be good news for Bitcoin, but again, it's so early in my mind, especially around. I think it's a very simple math equation to say stablecoin approved directly impacts Visa, directly impacts MasterCard. But I am a little bit surprised because none of this has actually played out yet. And so I think it's very early on, and you don't necessarily know who the winners will be. This move in anticipation that stablecoins will crowd out those companies, but I think there's still room for everyone to adjust, and you don't know from a corporate level who will come out ahead as a result of this technological advancement.
Oh yeah, I'm still real bullish. I know I flashed this chart up earlier on last call with all these Fibonacci lines drawn. I know I can't help myself sometimes, but tactically, this looks like a really interesting trade if we're able to punch through 110. Where you've had this just basically 70, we'll call it 74 up to 110 range. Since November, it's been a 6-month trading range. The extension
got nowhere for 5 weeks here at the top of this thing.
But if we start to get moving, the measured move is up to over 135,000, which is why I'm so fascinated with what's happening in this consolidation, because there is that little voice in my head that says we just had a rally off of some low.
Is it a bull flag, or is it a triangle?
Like, what's going on up here?
Yeah,
is that continuation? Bottom left to top right?
We'll see.
Certainly looks like it.
I think I wouldn't be surprised if as psychological as it sounds, the 100,000 level to me right now is really interesting. In a bullish environment, I still wouldn't be surprised if we saw it flash there. I mean, the inclination is if it goes through that, then maybe we enter a different environment. But I still think from a unique price point perspective, I agree with you that we could see anything from 100,000 to 110 and nothing fundamentally changing. That's just the way it's been moving with so many other asset classes at the front of the picture. So
I've said this before. Perhaps the chat wants to chime in here too. Does it feel different this time? I just do not see the people cheerleading crypto in the same manner with which they did in the fall, winter of last year. Right? I'm not seeing the obnoxious videos of people on their boats in Miami. I'm not seeing people at clubs. I'm not seeing ridiculous fundraising rounds. This is the quietest rally in crypto so far.
That's because, all the smart people that may or may not be myself are trying to play Ethereum, and that is not near its highs. Those unnamed traders couldn't go to the club or get a yacht.
Okay.
based on this price action. So, Chris, maybe they just don't have it this time.
That's true. I mean, whereas Bitcoin is sitting right just below all-time highs, we're not quite at the halfway mark, but at near $2,500 ETH, you're still well a ways away from $4,200 an ounce.
Yeah. And the fall, which you called out before. I mean, that a remarkable run.
Certainly seems
here a run as well, but definitely more consolidation and not remotely to the levels we saw 6 months ago.
No. It sort of seems like the idea that the rising tide lifts all boats in crypto is out the window as the asset class matures. I suppose that's good news, but because it tells you the market is getting deeper and more liquid and more differentiated, as opposed to just blindly hodling everything. But
blindly hodling on a long enough timeline has worked out, Ilya.
It has. It has, and
I think it's 2 years now. I think if you hold Bitcoin for a minimum of 2 years, at any point in time, you've been guaranteed to make money.
Completes the cycle.
Yeah, I mean, I maintain that digital tulips will eventually turn out to be as such. And by the way, I'm quite bullish on the technology. I just don't see any reason to be bullish on the token itself.
I know you like the ideas of cars. You don't like the Model T.
Yeah. I think the grand application here is CBDCs, and
which Trump spoke about favorably today, by the way.
Yes, and that will be the great triumph of crypto. I think it's a disruptor to the banks and the credit card companies and other kind of payment infrastructure names, not so much to currencies.
That was mentioned that the U.S. needs to beat China in the realm of digital currencies moving forward. And that when they say the U.S. needs to beat China, this isn't like our American private companies need to beat the private Chinese companies. It's the United States government needs to have control over the digital asset space before the Chinese government gains that leverage and control over the digital asset space. So
unconditional surrender.
Parentheses.
Speaking of unconditional surrender, we have done a pretty darn good job not getting too far in Israel-Iran here today. But it is worth mentioning because this is the big elephant in the room here for the next, we'll call it 25 hours and 2 minutes until the futures market opens tomorrow.
Yeah.
95.5 IVR. We gap open higher. We close a little bit lower from the open, but we are still above yesterday's closing level. We are well off the lows, in part because Trump said that he was getting calls from Iran to come to visit the White House to negotiate, which the Iranian consulate for the UN came out and said that they will never grovel at the gates of the White House. And there was a whole bunch more, but I think that first sentence really captures the mood.
Yeah.
So for the sake of timing here, are there negotiators in Oman right now? Perhaps. We did have a news headline earlier today that Iranian negotiators are heading to Geneva to meet with European counterparts on Friday this week. So signs of off-ramps persisting, they still exist. If the bombs don't go off tomorrow, you probably see a little bit of a vol crush. Once the market opens up, people are relaxed. They can unload their positions that they held as a hedge. And then we get to a Friday where, all things considered, if there was no volume today with the FOMC ahead of a holiday, of expiration, OPEX around the corner, Friday might be a pretty dead day too. So position management, maintenance, that's the plan.
Spot FX still open tomorrow too, though. So if you're looking to monitor something.
Is where I wanted to end here, Glenn, which is perfect for having you on, because spot FX markets, unlike even the currency futures, they will remain open. And so you can look to things like dollar yen or Aussie yen or the euro to kind of interpolate how equities or bonds may be behaving, broadly speaking. Because if Japanese yields are up, but the dollar yen rate's trading higher, then what does that mean about U.S. treasuries in the futures market? They're probably going to open up weaker, higher yields, right? In any event, watch the market open tomorrow, 6 p.m. Eastern, 5 Central, of course. I'll be back later today for the Price of Truth with Victor in about an hour's time. Ilya will be back right after this for Macro Money, so stick around. I want to thank Glenn Freiberger for coming back on again here, joining us in Overtime.
Thank you, guys.
We'll see you again soon. So for Glenn and Ilya, I've been Chris. Good luck trading. Catch you on the other side of a quick break. You're watching Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes! So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
I'm AJ Rudolph. I'm a senior product manager here at Tasty Trade, and I just qualified for the World Poker Tour $5 million free roll in Las Vegas on Friday. So I've been playing poker for about 20 years, actually. I started just with friends.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Well, the Fed has come and gone, and doesn't look like we're very much wiser for it. No major changes here as expected, not only for the Fed's overall stance on policy, that was very widely expected to turn up a goose egg, but the situation for the forecasting that the Fed offered pretty much as you might suspect, and as we discussed on the show here yesterday. But some interesting things showing up in the expectations, and of course, a very interesting path forward now that this is out of the way. This is Macro Money. I'm Ilya Spivak, head of Global Macro here on Tasty Live. And we are going to go through all of this here, taking a look at what the Fed did, how that fits into the overall story for investors here, and what is on the menu next. So first, just to look at how the day finishes here for financial markets, it is quiet to say the least. Stocks ultimately go nowhere, neither do rates. The situation for gold is a little bit spicier. It is a little bit lower here alongside crude oil, so perhaps a little bit of a moderating geopolitical take here emerging in markets. But the dollar, steady. Even Bitcoin hasn't gone very far. So the situation fairly stayed. Now, of course, we do have a U.S. market holiday tomorrow, and the closure of the futures markets here is through a 24-hour period, basically, from here until things reopen in the PM Thursday U.S., Friday a.m. In GMT terms after the holiday. But of course, global markets remain open. So we'll see what happens here in the wake of this Fed announcement for how it is onboarded in Asia Pacific markets and then, of course, in Europe. That's not necessarily going to move U.S. assets because they will be closed, but currency markets will be on the move. So perhaps we'll get a sense from the likes of the euro and the yen what all of it might still mean. Looking at the statement from the Fed, very little has changed here. But what is interesting is this little bit in the second paragraph where it says uncertainty about the economic outlook has diminished but remains elevated. Anybody that might look at the S&P 500 since the lows of Liberation Day in early April might agree that indeed uncertainty has diminished. In fact, we see that show up in survey data as well. The PMIs have slightly improved. The story in consumer confidence, as we noted yesterday, has very clearly improved looking at the latest University of Michigan numbers. So indeed, worries about the uncertain economic outlook have somewhat eased, but the overall uncertainty still remains and still is significant. So very much in line with what the Fed has outlined here. What's interesting is also that they strike the bit about risks of higher unemployment and higher inflation rising, suggesting that that is a backward-looking statement as of May. But of course, when you look at the summary of economic projections here from the Fed, you do see that sort of a tilt. And of course, as we discussed yesterday, we anticipated as much because in May, the Fed said exactly this. that it has now taken out. And so you have from March, the adjustment in projections giving you lower economic growth from 1.7 to 1.4 for this year, from 1.8 to 1.6. Next year, we can see right alongside that unemployment marked up versus March, and inflation marked up as well. So this seems to suggest that things haven't become worse in the Fed's thinking between May and June, but they have become more so concerning between March and June. Because, of course, in May, there was no update of the summary of economic projections here. So for inflation, higher inflation across the board, across the entire 3-year view here, both headline and core. But perhaps the most interesting part of this story, the part that we didn't necessarily anticipate, because, of course, all of these changes were very clearly marked, if not necessarily in their magnitude, then certainly in their direction, in what the Fed has been saying, both in the policy statement in May as well as the minutes from that meeting that came out sometime later. This is a little bit different. What we see is that for 2026 and for 2027, the stock of rate cuts has significantly diminished. And what we now see is that while we, in March, we're still looking at 100 basis points between this year and next, and then further easing, another 25 basis point cut in 2027, we now see the timeline elongate. So we still get the 50 basis points this year from 4.4 to 3.9, but then for next year, it's 3.6, so one cut instead of two. And then you get to 3.4, one more cut in 2027. So you get to 3.4 as you were anticipating, but you get there later. Get there a year later, as a matter of fact. And so the Fed here is signaling that actually after this year, scope for rate cuts is diminished, not increased, which is certainly quite a bit different than what you find in the market's own expectations for what is likely going to occur here, and actually marks what is probably the most interesting sort of upshot from the Fed announcement here writ large. So you have here the path for this year, and not surprising, it hasn't really changed very much. We have standstill through July. You start to kind of flirt with the idea of a cut in September, October, and then another one in December, and that's how you see the markets basically lining up with that 50 basis point forecast that the Fed is giving us. But when you consider what's going on for next year, the easing is actually expected to get more intense, not less. So whereas the markets are now at 100 basis points, the Fed has gone down to 75 over this same time period. And this now makes for a very interesting dichotomy. Because if the market is in fact going to say that, look, the Fed is worried about all of this uncertainty, they're worried that the cutting of rates now would be premature in the event that tariffs, as they work their way into inflation, do end up inflationary, and growth is impacted negatively. And through all that, the Fed has competing objectives, so it doesn't want to jump the gun. It really wants to make sure it's doing the right thing and focusing in the right area of the economy, whether it's focusing on inflation or focusing on growth, and justifying the standstill by saying, well, look, inflation is 2.4%, looking at the latest CPI numbers, and the unemployment rate is at 4.2%, which by historical standards is very low. So inflation is within a hair of target. Unemployment is very healthy, historically speaking. And so Why would the Fed want to try to reconcile what the tariffs are going to do before they have evidence? Why would they guess? What is the impetus for them to do that? Why not just say thank you for the relatively well-positioned economy, and as they have, invoke that you have the benefit of time to wait for things to really tell you which way to jump without a need to rush it? Well, the markets don't have that ambiguity. They don't share that kind of confusion. They actually seem to have decided that they know which side of the coin this is going to land. And we've talked about this before, but we'll bring it up here again. This is the look at inflation expectations baked into the bond market, which we can see from mid-February were falling with stocks as the rollout of the White House's tariff efforts stoked concerns about economic growth and those efforts' consequences, negative as the markets judge them to be. And you see that come April, when you get that kind of back and forth, you get Liberation Day and then shortly thereafter a 90-day pause on its worst, most economically damaging aspects. You get a very rapid recovery in sentiment. This is, of course, that diminishing uncertainty that the Fed is talking about. This is the S&P, and it's going higher here very clearly. But inflation expectations don't follow suit. They diverge. They are saying that having fallen here, this is the place to be. And that, of course, suggests that there isn't a great inflation scare downwind, and that the markets are much more concerned with the growth implications of what's going on and expect those implications to be more powerful than any read-through into inflation, because the demand destruction from the slowdown that the markets are envisioning will overwhelm inflationary forces from higher tariff rates and actually result in inflation being net lower. And that's the story that we've seen here really since mid-May, evolving after this larger move since the beginning of the year. So it's no surprise here that the markets are at 100 basis points, even as the Fed goes to 75. And so what this does is it opens up a very interesting sort of possibility for a revaluation in markets where they become convinced that the Fed is behind the curve and move forward with pricing out more aggressive rate cuts downwind, expecting the Fed is going to have to play catch-up. A similar outcome last year gave us a dramatic rally in the bonds from April into September and a parallel sell-off in the dollar, too. Now, beyond the Fed here, which was limited to this little bit in terms of its kind of practical deviation from expectations, we have a monetary policy announcement coming up from the Bank of England. No changes expected here. We can see rates seen steady in June, but the markets do anticipate that the bias will remain dovish. You can see here there's still 44 basis points on the menu for rate cuts this year and another 27 basis points next year. So the markets are very much still looking for the Bank of England to be cutting. In fact, you can see here when you have a cut on the menu somewhere by September and then a further one in December. So if we take a look at the pricing here, it's not impossible that we may go as soon as August, but certainly by September. And so that's really the market moving component here. We just had UK CPI data. It came in a little bit from the 15-month high, largely as expected. And if we look at the breakdown, a nice swing lower in transport inflation, most things still stuck in this energy component. But as we have talked about before, this is mainly a change in vehicle excise taxes, not necessarily a lasting sort of thing. This is more a function of policy, not of economic dynamics. Probably the biggest bit there is food and the increase there, But of course, that move really is outside the purview of what the Bank of England has agency over. It can't mandate global food prices or energy prices. And what it's dealing with then is seemingly the kind of thing where they have mostly a fiscal policy shock and just need time to work through that shock, filtering out of the data. That likely is how you end up with the dovish perspective in markets, because of course the growth story in the UK is pointing toward deceleration basically since the middle of last year. Things have perked up just a little bit here in May, but the economy is basically at standstill when you look at it in these S&P Global PMI terms. As ever, of course, these numbers are centered around 50, which is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And at 50.3, you're essentially idling, with manufacturing in contraction mode and services growing by a hair. And the trend, as we can see here, has been toward increasingly slower economic activity growth. So with that in mind, that dovish bias of the Bank of England seems to make sense, even as they pause this time. So the key risk then becomes that the Bank of England decides that actually, with the surging cost of oil around conflict in the Middle East and all manner of other potential influences here, the bias might be less dovish than market pricing suggests. That maybe they have less room to think about rate cuts for the rest of this year and maybe next. And so if that's the case, if the Bank of England seems to sound a little bit less dovish, if the voting tally is a little bit more hawkish of a hold than what's anticipated, so the markets are looking for a 7-2 vote on the 9-member Monetary Policy Committee in favor of a hold. If it's, let's say, 8-1, where only one person calls for a cut rather than two, that would clash with market expectations. And against that backdrop, the British pound could have itself a little bit of an upside run. Most other markets, of course, closed, so not much to see outside of spot currency markets and, of course, local European equities. But in this environment, it's really spot British pound where you'd see kind of the meat of the impact of something like this. And then looking ahead, because we don't really have much in the way of event risk beyond that this week, first thing next week, as we come back from whatever diminishing volumes after the holiday, we get S&P Global PMI data for June, the first look there. And immediately you get a sense of a familiar divergence. So the composite index taking in both services and manufacturing for Japan, expected at standstill, just a hair above 50. For the Eurozone, standstill, just a hair above 50. For the UK, standstill, just a hair above 50. For the US, clearly stronger growth. And so once again, you have this resumption of a world where it's the US or bust as far as global economic growth is concerned. We have, of course, pointed out repeatedly that global growth is basically made up and is basically driven by three major economies: the US, the Eurozone, and China, with the US being the biggest piece. The rest of the world, the remaining 42% outside of the 58% made up of the big three, they're mainly vendors to those big three and depend on their demand to have demand of their own. So it's really those big three setting the course of where things go. And if we look at what that's meant, it is been a slowdown in global growth, really going back to the middle of last year. These are global PMI numbers here, and there's 50. So we can see manufacturing is back in contraction mode, where it's been flirting for quite a while. But the overall story here, the composite index in the blue line here, it's been steadily decelerating now for almost a year. And so we're at this point here where in May there was a little bit of a pop, but off a 17-month low here. So the story is of weakening overall, and the disparity, the duality of what the expectations suggest has really been how that's occurred. So we can see here the U.S. economy over that same period has been relatively strong, but the other drivers, both China and the Eurozone, have stagnated toward standstill at best, and in the case of the Eurozone, a mild recession at the end of last year and going into this one. But both are now basically standing still. And the U.S. is outperforming again after diverging down here, but that may not continue. And if it doesn't, then there's really a single point of failure here. There is no safety net. If the U.S. slows, then so does the global economy, and then global recession risk returns, which makes these PMI numbers early next week very interesting indeed, because as it happens, U.S. economic data has increasingly disappointed relative to expectations over the past 4 weeks or so. We can see that the City Economic Surprise Index here, the global one, is being pulled lower. The G10 one is being pulled lower. Meanwhile, the Eurozone's data is steady. And of course, in emerging markets, things are steady also. So the pull down here on the global and on the G10 readings clearly seem to be coming from weakness in the US. If that is going to foreshadow a disappointment on these PMI numbers, then global recession worries may well return in spades, even as the Fed gets an ever-widening wedge between its view and the markets, where the markets are more dovish and the Fed is less so. Not exactly the most encouraging setup for risk-taking and stock markets, of course, if this plays out as it might. That is macro money for today. As ever, we are here Monday through Thursday, taking, of course, the holiday off here on Thursday with markets closed. So this will be our last show for this week, back to our regular schedule next week. And back on Futures Power Hour Mondays and Fridays, back with Victor Jones for The Price of Truth on Tuesdays, on with Tom and Victor for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, fellow Crypto Cave member, Dan Cecilia. Dan, what's going on, my friend?
Nothing much. Happy to be here. Market's taking a little bit of a breather. Crypto market specifically, I think.
Yeah, what the hell?
A little bit of a breather, yeah. I don't know what's going on here. I thought we'd be at a 200K by now.
I was hoping the same. We're going to talk about that in just a second. We've got a performance dashboard. We'll talk expected moves, kind of go around the horn here, take a look at some headlines. We had a Fed day. I don't pay attention to much of any of that anymore. I think the probabilities were basically zero of any interest rate cut, at least for right now. I think there's still 2 cuts priced in. I suppose maybe I do kind of pay attention. 2 cuts priced in for the rest of the year. I didn't see anything, and my internet connection doesn't work over here either. So I don't know what's going on, man. Did you see anything? We had, some legislation passed, possibly? The chat's blowing up.
Genius Act passed. So
okay.
Stable coins are now, there's some regulatory framework for US dollar stable coins. So now all these kind of representatives, Sachs, Besant, they're saying that stablecoins can reduce debt costs. Besant, I don't know, Scott Besant. Stablecoins are a $3.7 trillion market opportunity by 2030, Scott Besant. And then Genius Act extends dollar dominance. So those are some quotes from representatives.
Well, it's good when you have the U.S. Treasury Secretary or the Secretary of the Treasury. I don't know what the exact formal term is, but when he's pumping it.
Right.
That's
good.
We
want that. We want that.
Absolutely. Yeah, I'm excited about that. Look, we thought that, and I don't know if that's been signed yet or kind of what stage that's in, but passing in the Senate, is that right? Very, very close.
I got a ton of stuff on stablecoins now. JP Morgan piloting stablecoin on Coinbase's blockchain. They're going to call it JPMD. Let's see here. And then Coinbase or JD.com applying for stablecoin licenses globally.
Okay.
And then Coinbase is seeking approval for tokenized equities. So those are some news items, I guess, that.
Yeah, that's huge. I mean, look, you're going to see this everywhere in terms of financial institutions looking to participate. Clearly today we have some first movers, Tether, Circle with USDC. I'm sure the stock price is up as well on this news here.
Yeah, I mean,
Circle Internet Group straight up, Dan, $200 a share, just shy of it. And so, yeah, this is huge for the industry, right? It's going to pull in more liquidity, capital that's on the sideline. I think this is big for treasuries, real world assets, right? There's this narrative in the market where, you know, people are concerned. Who's going to buy the debt? Who is going to buy all this issuance from the U.S. Treasury? The Japanese are dumping, my friends. The Chinese are dumping. Nobody wants this debt. I think when you look around the world, emerging and frontier markets, dollar-based assets, and if you make it a lot easier to access these assets via blockchain networks, via stablecoins, which clearly stablecoin regulation here in the U.S. and presumably the global harmony that follows that regulation, that will bring a lot more liquidity and a lot more participation on chain in terms of treasury investors.
Yeah, for sure. I think that's why everyone's behind it, right? I think they know that. So, have you looked at the stablecoin market cap dashboard?
The last I checked on DeFi Llama, which is a great source for this, and we can pull it up in just a second, but I believe that we had a total market cap of close to 250 billion. I think about 70% of that is probably Tether, though the market cap of USDC has recovered quite a bit post that 2023 peg when we had the whole regional banking crisis.
Right.
But I don't know exactly where we are. Let me try to pull that up here. Yeah, 251.686 billion USDT. That's Tether, 62% of the total market cap, or the Tether dominance there. So here's DeFi Llama. If anybody watching is new to this space and you're interested in monitoring some of these DeFi protocols, seeing what's happening on chain from a more fundamental perspective, this is a great source. Token Terminal, Dune Analytics. There's a lot of dashboards out there.
Yeah, for sure. How about Coinbase stock? I got some people in the chat asking about that. That was up 17% today.
Yeah, I don't have my Tasty Trade platform up here just yet. Let me get it on. Boom. I wasn't watching, haven't had a position in this. Presumably, this is on the heels of the positive news around stablecoin legislation. I think this opens the door to a broader crypto markets structure bill at some point. But yeah, I don't know. Have you seen anything else here around this massive move? They didn't have earnings or anything like that.
I don't think so.
This was intraday.
This has got to be around the news of the tokenized equities.
Yeah, I did see that earlier today. Coinbase announced that you can use stablecoins as collateral for their futures. And when you think about Coinbase, a lot of times we look at this as possibly a brokerage sort of competitor, right? When you interact with it as a retail user, but this is an exchange,
right?
And hopefully at some point we'll be able to offer some of the products that are available on that exchange through the Tasty Trade platform. When I think about some of the perpetual futures that they've spun up or some of the other derivatives that they're offering, we don't have regulatory clarity in all areas, but Coinbase did just buy Deribit a month or so ago. So on the options front, there's some interesting developments as well. And assuming you get some regulation, that might open the door to a lot more participation on the exchange and a lot more that we might be able to do.
For sure. Yeah, definitely. I just Googled this quickly. I guess they launched stablecoin payments for Shopify. They partnered with Shopify.
Okay, I saw that on the Base Network the other day.
I guess like this news for the stablecoin act passing was the catalyst for this, I guess.
Well, and Coinbase has a huge partnership with Circle, as I think everyone's aware if you're following Circle or the IPO. USDC has been supported by Coinbase, and you can use that on the exchange. I use that at times myself. I don't want to make any big announcements just yet, but as we've talked about, and we were in New York just a couple of weeks ago at the StableCon conference, we're working on stablecoins in other parts of this market. It's readily available today. So to me, this is clearly the direction that things are going in. It's the future. It's instantaneous, 24/7 settlement. You look at the existing payment rails today, ACH wire, and I think arguably they're antiquated. You'll be able to eventually on a Saturday, you want to trade crypto, fund your account with stablecoin, you want to buy futures on the Sunday night open, you don't have to wait a couple of days for your ACH deposit to clear or your wire to clear in some cases. You'll be able to fund that, and that money will be readily available instantly.
Yeah, right. Yeah, that'll be a huge unlock for account funding. Velocity of money in 24/7 markets eventually.
Absolutely. As we're talking about kind of the future of markets of trading, and I think what that really relates to is blockchain infrastructure that facilitates this, right? You think about it as a security layer, more so a settlement layer, a little bit more efficient, faster, transparent. You're seeing a ton of announcements around the tokenization of securities. Less relevant, I would argue, for people in the US that can very quickly open a brokerage account with tastytrade, for example, fund that account and trade right away. But in terms of access by global traders or users to financial assets, US listed stocks, options, et cetera, the tokenization of some of these securities really starts to open up the gateways or the floodgates possibly.
Yeah. I think it's a total upgrade to markets globally, market structure globally, obviously allowing more participants access to US markets, U.S. listed companies. The U.S. has the largest, obviously, market in the world, most liquid, most active. I think it's all a good thing, right? Because to your point, U.S. citizens don't necessarily, have an issue with opening up a brokerage account and accessing these markets, but globally, people don't have access. So I think this type of innovation and tokenized stocks or 24/7 markets is the future, right? It's where everything's going, and I think it'll be interesting to see kind of what shakes out here over the next couple months. That Circle, you're looking at Circle right now. That Circle stock is interesting because
and shout out to Katana in the chat, said it's up $50 here, and we've got that on the screen. We just had Coinbase up there a second ago.
So what's crazy about that is the market cap of the Circle stock is like $48 billion, and there's only like $50 billion worth of US dollar coin. So it's like, it's getting to a level where potentially might be a little overvalued if you're just looking at kind of, market cap and what they're issuing on chain as far as US dollar coin.
Yeah, absolutely. I haven't paid that close of attention to the fundamentals here. I didn't look at the S1. I'm not an investor in Circle or a trader or anything like that in it yet. But clearly there's demand for access. There's demand to participate in this. And you, up to this point, really haven't had a lot of ways from the traditional side of things to invest in, or there really haven't been US-based crypto companies, right?
Right.
Coinbase, I think Galaxy just went public in the US previously on the Toronto Stock Exchange. You have a bunch of different miners that you can invest in. It's kind of like a BTC proxy, though not always even correlated. Coinbase stock, as we mentioned, but you're probably going to see a Kraken IPO. You got the Circle IPO, presumably more are coming. It's a new day for crypto, or at least it has been for a few months here in the US. Dan, we got the chat fired up. We've got, they're all here. So shout out to everybody. Lone Sophos, Gregor, Katana. Who else is up in here?
Edward.
Dav, Edward, Emmett.
What's up, Emmett?
If you're not streaming on YouTube, get over there and type some crazy shit into the chat for us. Let's talk about markets, kind of go around the horn here. We sent out our midweek market update email this morning. If you don't get the Tasty Crypto emails, get on the list at tastycrypto.com. little sign up box there. We send out 2 per day. Sometimes they're jam packed. Other times we're busy, but we try to get the signals and the trading ranges and the correlations out a couple times each week with a bit of commentary. I personally enjoy writing some of these emails, but just taking a look at the performance dashboard, you called this out earlier, a bit of weakness. While there's excitement in the market, stablecoin legislation making its way through, crypto company stock prices exploding higher, seeing a bit of weakness when we look at some of the underlying cryptocurrencies, the tokens themselves. What do you make of that?
So I think it's just general pullback from the recent run we had, but I think if I'm looking at headlines here, the Fed left rates alone today, expects weaker growth, sticky inflation. That kind of is a headline that came across. I think we have the global conflict. Iran, Israel could throw some type of, pause on risk assets here.
Yeah, to that point really quickly, let's just jump over to the correlation so everybody can see kind of how things have shifted in the short term. And that's a great point. If you get, well, long term, it might be completely unrelated. I would argue doesn't really, say, the price of Bitcoin on the margin, the events themselves. If you get those risk-off headlines, we've had rising tensions, which have now evolved into tit-for-tat kind of escalation, missiles being lobbed back and forth. You've got Trump now weighing in, of course, on Truth Social or Twitter. I mean, it's ramping up. Don't get me wrong. We thought earlier in the week there might be a bit of a de-escalation, and then quickly that was proven incorrect. You're seeing a strengthening in correlations here. So if we do get that kind of risk-off move for one reason or another, I don't think crypto is immune.
Right. Yeah, exactly. I definitely think that if we get a broader risk-off move in the markets, crypto is going to be affected, right? So I guess just pay attention to that. And I just think it's a little bit of a pause. I think we're still in a pretty bullish environment.
Yeah, absolutely.
Broadly.
Structurally bullish. We look at price momentum. We measure that through exponential moving averages and the crossovers. It's a simple way to look at it. It's somewhat backward looking, but keeps you on the right side of the trend, in my opinion. You've seen things go from bullish to neutral for Bitcoin and ETH. Everything else has been somewhat bearish from a momentum perspective for a while. But when I look at the structural trend in place, I want to look at weekly and monthly timeframes. And for Bitcoin, still, it's been bullish. Bitcoin market cap dominance, 65%. Bitcoin volatility is near the lows. In a more bullish environment, I want to see volatility pick up because it tends to rise with price at times, at least when price is really ripping. But we've been range bound. We're well off of those levels from early April, about 75,000. Took a shot at new all-time highs, and we've been, consolidating within that 1 week expected one standard deviation move, given the spot price and the implied volatility. So to kind of set expectations here, your upside is, you could probably call it 112. That's been the recent high that we came off of. But when you look at the current implied vol of 41%, you use a price of, let's call it 104.5, you're going to get about a $6,000 move. It's going to give you 98 on the downside, 110 on the upside, give or take. So well within reason, within the statistical probabilities as implied by the options market right now. It's not uncharacteristic in terms of what we're seeing.
For sure, yeah. I think just pay attention to the ranges. At some point, we'll get a little bit oversold here, and it might be a good spot to go back in and scoop some up. I still think ETH has a good bid on it, maybe.
Yeah, let's jump over to the browser really quickly. Take a look at our price chart for Ethereum. There you go. Yeah, just a big move to the upside to start the month of May. And it just seems like we're building that energy, Dan. We're going to go higher or possibly break lower here. But you're just not going to trade sideways forever.
Right.
I'm hoping for the break higher. You got to take out 2,800 and then, maybe the move's back to 3. Maybe it's ultimately to new all-time highs. You look at it this way, which is interesting, and you're seeing the same thing if we go down to ETH BTC. Also looks like, you're kind of priming for a move. This has been, as I like to call it, a very trashy trend over the last year. But let's say that you do run here, the narrative shifts. We know that the real world asset narrative is primarily related to Ethereum. Institutions are building. Stablecoins should start to influence some of that as well, or support the idea. And do you get back to 500ths of a Bitcoin? That's going to, at the current prices, imply a $5,000 ETH price. Basically, 100% higher from where we are here today. Now, it's not the 10x that some of us are playing for in other areas of the market, but it's a pretty good return if you get it.
Yeah, for sure. I mean, I think looking at that ETH Bitcoin trend, it's been down only for over a year. And
yeah, look at the 5-year in here.
Yeah, I mean, that's
2022. Really, this time a few years ago was the top, and it's been Bitcoin up, ETH down in terms of that ratio.
Yeah. So, I mean, I think you've been saying this for a number of months now. It's like, might be a good time. So we'll see. It looks like that initial move has happened. Like, it looks like we've bottomed based on that chart, but still a long way to go. I still do think ETH is undervalued based on, like you said, all of the development happening on it. But there's a lot more competition too. There's a lot more stuff that has been developed. It's not the only place to develop smart contracts, trade on chain. So we'll see.
Yeah, the way that I like to look at things at times is to price them either in Bitcoin, and you can kind of find these relative value trades. But when you do that up to today, really, it's been Bitcoin over everything. So on a relative basis, Bitcoin has outperformed, up about 12% year to date. Everything against that is down pretty substantially. But you can look at Solana priced in ETH. And let's just throw our indicators on here for a second. We're starting to see some signs of weakness there too, which to me also signals maybe there's some room for ETH to run here. I look at Solana priced in Bitcoin. That's been bearish for some time. Not saying it goes lower, but that worked until it didn't. And so there's some signs here on a relative basis of weakness in Solana, strength in Bitcoin, some strength in Ethereum. Recently, when we look at the daily here, we were, if I zoom in a little bit, we had that bullish momentum signal, and you can see that it's now shifted to neutral. So keep an eye on that. But ETH definitely trading a lot better. Solana for now trading worse. I think these narratives just kind of ping pong around. But Bitcoin has held up and has been pretty resilient, even though we're whipping around within a $10,000 range. The local low in there over the last couple of weeks have been about 101 for reference. But you're just not seeing any signs in the option market that there's a big move one way or the other that traders are starting to position for. I think that the Fed and interest rate decision, monetary policy does matter, but we knew coming into this that there was no expectation for any cut.
Right. What are you looking for in the options market? Like, I guess if we take a look at IBIT, is it some big? Is it IV? Like what
Yeah, I'm just kind of looking at IV, right? So if IV is going to increase or decrease depending on whether we have a lot of options buyers or sellers, right? And you think about a market like this where, yeah, sure, the bottom is zero. I don't think we go to zero, but there's typically more upside than downside. You often see this positive correlation with volatility and price action. And because there's that FOMO element and there's a speculative nature to it, you have people that come in, traders that buy up a ton of options on the tail. If it's IBIT, maybe that's in the 90s, it's 100 strike, whatever it might be. And you're playing for that big move and you're playing for that expansion of volatility. Same thing on the downside, right? If we were to start to see a lot of concern in the market and there's some fear, hedging activity, a bunch of traders coming in and buying put options, that's going to drive up put option premiums, put option prices. That's going to subsequently drive up implied volatilities on a per strike basis, as well as our kind of VIX style smoothed calculation when you look at 30-day. You're just not seeing that. What are you seeing? Well, you're seeing the opposite. Here is Bitcoin implied volatility. We're looking at this derived from Deribit. We've got to pull up the Volmex numbers here too. We had those guys on the show. That was awesome. Got to have them back. Let's just look at 30-day implied. Pretty much the same thing, right?
Right.
41%. If you look at this on a kind of IV rank basis, well, your 1 year high is closer to, let's zoom out a little bit. Let's call it about 70. and you're at the low. So your range is 70-40. You're at 40. IV rank of 0. If you're looking for a move in vol terms, maybe you get back up into the 60s, maybe you get to 70 or higher, those options would be a lot more expensive than they are today. So you're not seeing many signs in the options market that traders are positioning one way or the other for a big move, at least today.
Gotcha. Okay.
Now, sometimes that's reactive, and so you need realized volatility to then catalyze implied volatility. There aren't earnings announcements. Obviously, there's event risk at times in crypto, but there aren't earnings announcements where you would see premiums bid up ahead of them. I think it's typically kind of more of a reaction to news. But even with some of the recent weakness, it's not like everyone's rushing to hedge downside.
Right, exactly. Okay, interesting. Yeah, that the Volmex and DVol indices are good to take a look at too, just to give us an indication of, I guess, positioning and some of that in the price.
Yeah, here's on the other side though. Here's Ethereum, a little bit different. We'll put our indicators on there. So Ethereum volatility, kind of a little bit more of a bullish trend here at the moment. Another reason why I think, okay, maybe you could see, nothing's guaranteed, but maybe you could see a bit of upside in ETH on a relative basis here. We'd see that ETH BTC ratio move higher as a function of that too. But ETH vol is trending a little bit higher over the last couple of weeks, while Bitcoin volatility is at its yearly low.
Right.
You see that with realized as well. Just kind of going around here, Dan, real quick look at, here's Bitcoin market cap dominance stuck at the mid 60s. No signs that it's altcoin season just yet. A couple tokens that have been a bit of a bright spot. I don't know if you have any insight into what's going on with Bitcoin Cash, man, but Bitcoin Cash just ripping. Bullish.
I have no idea. I've never looked at that before.
You know, you could have bought it at 380 a couple weeks ago. It's $100 just about higher.
Yeah.
We're talking about Coinbase is up $40. Who cares?
Yeah. Yeah, Bitcoin Cash. Buy Bitcoin Cash, apparently.
Another one that's been on my radar here, Aave DeFi lending platform here. We'll just use the Coinbase price. It's pulled back, but another nice move where you got that signal just a few weeks ago back in May. Could have bought this, I think when we first saw the momentum flip, you were closer to about 250 and just caught, a nice rip there up to about, 320 or so. So that's another one that has shown some resilience in the face of, when we look at the weekly returns here for most alts that I track or that we offer through tastytrade, we're down double digits on the week, and it's been kind of bloody on the 1 month and 3 month basis too. What else are you trading? You buying any NFTs? Like everybody that I talk to is like, what's going on with the NFT market? You're in that space. You got a couple minutes on NFTs before we wrap up?
Yeah, I mean, I am just looking. Well, NFT NYC is next week.
Okay.
So I feel like there's always people that launch projects around that because they'll want to go and promote it in New York. That's when, for anyone that doesn't know, that's the largest NFT conference in the world, New York City next week. So couple projects have launched. I'm collecting a few things, nothing major, but yeah, I mean, I don't know. It's kind of quiet out there. It depends on what chain, right? So I think ETH mainnet typically is reserved for artists, generative art, stuff that's a little bit higher value, people that have, they got rich in ETH, so there's that wealth effect.
Yep.
Base, Solana, that I would say is a little bit more, I guess, lower value NFTs, stuff that's tied to a product launch or tied to a game or community or some type of token gated content type thing. Just internet memes, things like that. I look at NFT floor price if you want to ever bring up the major collections and just see how they're doing. But
so you kind of track, so as a way to get a sense of the NFT market, you track blue chip prices of things like Bored Apes, CryptoPunks.
Yeah.
Okay.
CryptoPunks, Bored Apes, Pudgy Penguins, Chromie Squiggle. Those are top 4.
Are they moving higher? Haven't looked recently.
Just kind of sitting in the same spot.
What's a CryptoPunk cost?
$100,000
in current ETH price.
40 ETH.
Okay, so but given, so it's $100,000, given ETH's 2,500 or whatever,
Right.
so ETH goes to 5, and
Yeah.
maybe that per ETH price comes down, because I think a lot of people still look at things in dollar terms.
Right. But this is like
It's expensive. I mean, maybe it's not expensive. Maybe that's cheap. But
I think it's cheap.
Okay.
Considering
you heard it here first.
Yeah. I mean, I don't want it to be skewed like it's not cheap in fiat terms if you're like,
Right, but from a trading perspective, I mean, what's the high in there for CryptoPunks?
like 80 ETH, 100 ETH.
Okay, some of these have sold for over $1 million, right?
Right. Yeah. 80 ETH, 107 ETH was the top in 2021.
Okay. Well, Dan, we got to jump off. Unfortunately, we've run out of time, but I do want to talk a little bit more about NFT trading and more so like the digital art market, because there's some massive opportunities there. I think people have been asleep. Everybody thinks it's about profile pictures, and they're still stuck in the kind of 2021 bubble post FTX collapse. But interesting opportunities abound. So we'll talk about that when you're on the show next.
Wealth effect's huge there.
Yes. Yeah, I want to dig into that a bit more. But that's going to do it for our show. Thank you all for watching and tuning in on YouTube, joining us in the chat. We will be back on Monday. Until then, I'm Ryan.
I'm Dan.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, Jamal. All right, Nick. All right, Mike, do you have a long-term trading goal for this year from a dollar percentage standpoint, or do you have any personal development goals, anything new you'd like to learn?
No, I think that's kind of hard to do. I just try to identify good opportunities for the long term. I have a whole separate account for long-term trades, so I just try to make those trades, whether they're leap calls or whether it's just long stock, and just hold out. I never really put a percentage on it.
That's a great question. Longer term goals would be to get into more futures, building into a core portfolio of futures. I think I've got the options down. I think adding in a little bit more futures trading.
It's a good one. I think everything's always compared to the alternative, which is passive investing or the S&P 500. In really turbulent years like this year, I think if you can beat the S&P, even if you're losing money, if you're down 5% and the S&P is down 10, you're doing better than the alternatives. I think it's a little bit of a different way of thinking of it, but I think if you can beat the S&P this year, if you're making money at a scratch or a small loss and the S&P ends up down on the year, you're doing just fine.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, and go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show. I don't want you to buy me a Rico
Well,
Benny's.
that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's.
I was going there when you were pooping yellow.
Oh my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You got to stop.
No, you know that's true. Sadlov, you know that's true.
God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken Parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny, since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And
to.
she picked you, Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Oh, yeah, it's Wednesday, June 19th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast, Gibber, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. And we're getting our money's worth today. More on that in just a bit. But first, let's introduce our wacky Wednesday guest. We've got the one, the only Chris Revecchio. Chris, how you doing, my friend?
Open the markets. Why are we having a holiday on Thursday? I know it's an important holiday, but come on. Open the
How
markets.
How is this going to work? How's this work again? I forgot how it did. We shut down, futures shut down after 5. And
Supposedly.
then what happens?
They
Or
reopen
futures
tomorrow.
are open, but cash is closed. Do you know
Something
the
like that.
logistics?
Yeah, I was looking at the CME Group website today, and it you know, Victor, I guess we're going to be watching some things tonight.
Yeah, I don't know if I'm looking at it. Sometimes I get caught, and I'm like, I don't know if I'm looking at a live price or if these things haven't moved in 12 hours. I'm not exactly sure. And I've just been checking my phone for no reason. Shout out to everybody watching. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. If you don't already have both, you should go get them. Make your life just a little bit better. But there's only one place if you want to be part of the conversation. Bing, in the middle of your screen. Did we get it? Did we get it? There's only one place to do that. That's on the evil Google YouTube. So head on over to Tasty Live's YouTube channel. Subscribe to the channel, and all of your thoughts will be streamed on screen, both appropriate and otherwise. Chris Vecchio.
So just, Victor, before we start.
Sure.
Futures market, regular open, trading halt at 12, resuming at 5 Central Time. So we have some things to watch tonight. Tomorrow, cash is closed, half day for futures-ish. Not half day, most of the day. But the market's effectively closed.
Yeah, that's always a weird one. When you get the half day and then you open up back at night. So weird. I mean, I don't
kind of like a Sunday. Listen, I think the market we should have 24/7 trading. That's what I think. But
we should. And the only reason we don't is because they haven't figured out how to monetize it on each and every individual trade. SPX down 3 basis points, NASDAQ down nothing. The Dow Jones down 10 basis points, and the Russell, the little engine that could, up 0.5%. Vol got crushed a bit today, I suppose, if I could say it, down $1.50, but still above 20. Fixed futures still at 20.5. Chris Vecchio, what say you, man? Still hanging around 60.33.
You know, I took off Thursday, Friday last week. And when I left work, the S&P was like, 6,000, 60.50. And I came back on Monday and it was 6,000, 60.50. So I assume it was a pretty quiet few days, which is not atypical because running up into the Fed meeting, things are pretty quiet and it's been a pretty quiet week, right? Everything's priced in. Isn't that what the market's telling us? So
it would have been, I think for most people, it would have been better to just fall asleep and come back a couple of days later.
That's not what I did. No, I unfortunately, I'm one of those meme people, Victor. When you see those, memes of folks who are monitoring the situation, Trung Phane had a good one out today. It was like, this is what someone's eyes will look like who's drinking alcohol and different drugs, and it goes all the way down, monitoring the situation, and their eyes are just bloodshot red. But that actually overlaps very neatly with my natural sleep cycle. So the fact that I'm up watching my Mets get their teeth kicked in for a 4th straight game. I went to 2 of those games they lost, and this is their longest losing streak of the season. So is it my fault? Maybe. But I would point out that this is very interesting from a market perspective. We can talk about the philosophical and the human reality of this, which is obviously terrible. But the fact that oil vol is so high and oil has exploded to the upside in such a significant manner, way more than it did in the April or October 2024 episodes of the missile salvos being exchanged between Israel and Iran, yet stocks are reacting the least concerned throughout this entire episode. April was the biggest drawdown. It took us a month to return to where we were before the Israel-Iran tensions. October was like 6 days. We took one trading session, right? We're down Friday. Monday, we basically get back to where we were on Wednesday's close before I went on my little 2-day trip away. Stocks just don't care about this. Maybe it's because, for what it's worth, the earnings profile of our business with Iran for S&P 500 companies is pretty low. Nil, in fact. Also, are we going to really see global oil supplies disrupted? Is that a problem for the U.S. this time around, Victor? 10 years ago, U.S. and Western Europe were right, and that's a huge part of the equation here. Iran threatening to close off the Strait of Hormuz mattered 10 or 15 years ago because Western Europe and the United States were the biggest purchasers of Iranian oil. And these days, Iranian oil basically goes to one place, China. So shut down the Strait of Hormuz, you're hurting China. China doesn't want to see it shut down. So Iran's not going to sabotage the Strait of Hormuz anytime soon. It doesn't impact the people who are waging this war against them. I think this is a very interesting exercise in seeing whether or not the macro matters. Supply chain disruptions are obviously the thing that we're keeping our eye on, because an immense amount of natural gas fuel moves its way through the Strait of Hormuz and then ultimately into the Persian Gulf. But right now, it's a good story. In terms of market impact outside of oil, you would not know it's occurring whatsoever.
Some part of me wonders if we just have to get to the other side of expiration here, because like I mean, either people got so burned in April, like they're so out of position, they're so jockeying for performance into this end of the month, end of the quarter. Either that's what's happening here, or none of this. I can't imagine none of this matters. Like, I looked at the S&P and I'm like, bro, that is, I mean, they are screaming at you what they think is coming. And I think if you believe them, see, the problem with the Federal Reserve is, like, they've said so much shit that's been so far off that, like, when they start to put SEPs in front of you that effectively say growth is slowing, we can't maintain inflation's it's out of control, and our Fed funds rate is going to be meaningless to do anything about it for a few years. How do you not flinch at that? And I get that 40 points is a move. We did move 40 points, first up and then down, but there's an accumulation of negative news here, and I just don't understand it, Chris. I don't understand the price action yet.
It's just another brick in the wall of worry, Mr. Jones. And that's what a good bull market needs. Right? I mean, look at the VIX term structure over the past 2 weeks from June 4th to today. The spread between the front month and the back month contracts, 6 points or so. And now we're sitting closer to 3. So it's not like you've seen a big bump in vol, right? It's just that the curve is flattened out. Collectively, the market has been telling us that the past 2 weeks is basically digestion, and we're handling this geopolitical risk fairly well, all things considered, right? You're not seeing gold shoot up to 3,800 and stocks dump 10% and, just an immense amount of volatility in treasuries, but no real direction because, hey, is it growth going down or inflation going up or safe haven demand right? This has been exceptionally orderly. There was a part of me last week when I woke up to the news because Thursday morning's my daughter's graduation. And I say, oh my God, I can't believe I'm taking off of work today. But what a good day, right? Like, or 2 weeks ago for Elon Musk and Trump. And then last week, like I'm out Thursday, Friday for just my vacation. It's like, oh my gosh, I'm missing this again. And yet the prudent thing to do on the other side of it was just to ignore it. In both occasions, if you didn't get panicked at a Tesla or you just bought the dip and said it was nonsense, you were fine. If you bought the dip in equities after the news broke, you were fine. I don't know that the lesson here is that nothing matters. And I know a lot of people want to take the nihilistic path and say, well, World War III is coming and stocks are still rallying. One, if you ever see a scare in the market because of World War III, you must buy the dip. It's like a Pascal's wager kind of thing, right? You know Pascal's wager, Victor, the mathematician. Why do you believe in God, right? You do your little pundit square, right? You believe in God and there's heaven. Well, a lifetime of eternity in heaven. If you believe in God and there's no heaven, then you just spend an hour or two a week praying, going to church, whatever. If you don't believe in God and there's a heaven, it's a lifetime in hell. So like the reasoning works out that you should roll the dice and be a religious person. And I don't want to say it's like kind of the same thing here, but kind of seems like it's a Pascal's wager situation. So you were talking about the Fed though, and with respect to the Federal Reserve, they could have just thrown up their hands, given us one of those emojis today.
It's the same thing as last one. It's so embarrassing. It's
more so than last one, right?
They
tell us in their policy statement that the negative impact of growth isn't necessarily there, and uncertainty around growth has declined since the last meeting. But then when they give you these forecasts, everything is getting hit, and then the expectation bands are widening out.
Yeah.
Powell said twice today, at least, that no FOMC member is tied to their rate path. These aren't even strong convictions held loosely. These are weak convictions held loosely right now. So all of this can change on a dime. You get a few more, you see further labor market deterioration, a few more inflation reports miss. Powell probably is going to act, but it could really go one way or the other right now.
Yeah, I feel like we're at the wrong price. Some part of me thinks like elevated vol right now, 2021 at this 60-30 makes sense because it's not the right price. But we should be a ways away from here. But I too can't figure out, do you unclench to the upside and this is a funny money 7,000 market, or do we unclench to the downside and go retest like 5,200 and things are still real and we still got a chance? The world's not, we're not going to live in some Terminator hell. All right, so outside the E-mini
we will,
S&P,
just not this week.
What do you make of the Russell outperforming? Is it like, I keep making fun of this trade because you'll get like, I say Russell's here for a good time, not a long time. Every time it outperforms, maybe you get, at best, you get a 3 to 5 day streak and then it falls apart. Is there ever going to be a time when you can bet value over growth, or do you just keep buying 1 to 2% dips in the Mag 7s?
Mag 7's a real credit trade. We've referenced this on air the past few days, but Bank of America Fund Manager Survey came out. Top 3 credit trades right now: long gold, long Mag 7, short US dollar. Okay. Incidentally, 4 of the 7 Mag 7 names are not green year to date. So it's a crowded trade, but it feels like it's legacy crowded trade. A lot of people have just been holding on because the past 2 years, what was the best? Right?
Maybe.
Mag 7.
They just gave you a 35% discount over scaries, though. So even though it feels like we haven't moved that much on few of these, in the last 2 months, these things have given you 40%. The biggest names in the market gave you like a 30 to 40% return just to get back to Unch.
Just to get back to Unch, right? So, but I feel like it's people riding it out because if you look at the Fund Manager Survey, it's been in favor around the same levels as the past several months. So regardless, though, could there be some catch up? 4 of the 7 names are down. Sure, that's certainly possible. Is it crowded, though? Yeah, it is crowded. But you say that this could be a funny money market. Why wouldn't it be? Haven't we seen that movie before, Victor, where you get past OPEX in June, you go through your little window of corporates buying being suspended, and then all of a sudden you enter that sharp seasonality window at the beginning of July where the first half of the month you just go crazy for some reason. And then ultimately August is choppy, September, October you fall off, and then face ripper into the end of the year. We're kind of setting up for that again, it feels like. And so that's how I plan on trading this market, where right now there's still a week and a half left in the quarter. We have half a day tomorrow, we'll call it, but Friday, next week, and then Monday, June 30th. People are still in the hole after missing the market rebound in April when we look at positioning. And so I still think there's an incentive to chase short term. And you can probably get a squeeze. I think you could get a squeeze up here over the next few weeks, absent World War III starting. Although China and, what's the linchpin for World War III arguments around Israel and the U.S. attacking Iran? That Russia is going to come in and provide support, and China has their own interests, so they're going to provide support. There is no indication that China or Russia are coming in to save the Ayatollah's neck at all. Right? Putin has said publicly, we cannot help you. They have their own war going on. They're sending mules to the front line in Ukraine. Do you think that Russia has personnel or armament to spare for Iran? Come on. So if there is regime change, we have to talk about the tailors of that. I'm curious if you had a chance to listen to the Ted Cruz interview yet.
No, I just saw the clip you sent me, which I was, my mouth fell open. What a brilliant, here's the thing. I just sat down before you, it was so well timed that you sent this to me. Maybe hours before you sent that to me, I was talking about the escalation with my wife, and our son overheard. And I said, okay, I'm going to explain a few things to him. And I explained war. And then I got to this point where I had to explain bomb. And I was like, should I do this? You know, our son's only 5 years old. It's like, all right, I'm going to try it here. Try it this way. And I explained the word bomb, and he asked a follow-up question, and my wife was like, okay, that's enough. The point is, in this discussion, he asked me, how many people are in Israel? And I said, 9 million. He goes, how many people are in Iran? I said, 92 million. Then he asked, how big are the countries, you know, like the landmass? So I explained to him. So the wildest thing is that when you sent me this clip of Tucker Carlson and Ted Cruz having this conversation, is my 5-year-old son could have told you how many people were in Iran. My 5-year-old son could have told you at that moment, which is ironic. A U.S. senator is completely unable to do so while hawking the same things we were hawking early 2000s.
Are you going to make me defend Ted Cruz here? Okay, so it's April 2013. I'm doing a segment with Fox News and Tucker's producing team about Bitcoin.
But he's
hold on.
Okay.
This is about the production. Okay, you and I have done enough media over the years where you know that when you do stuff with TV and you know radio, okay, it could be CNBC, NPR, Bloomberg, even Fox Business, quite frankly, most of the time you go back and forth with the producers to get a set of questions, right? So that way when you go on air, there's no gotcha moments. That's not, if you're doing business television, it's not really like that. It's not a comedy show. So you want to be able to have that guest convey the information correctly. So they inform the viewers, give the viewers a reason to tune back in. When I did that segment with Tucker's team at the time, I recall them asking general outlines. And then when we actually sat down to do the interview, the questions were a lot more incisive. And they weren't like gotcha questions, but they were like, oh, this is really specific. I wish we had talked about this beforehand because I would have specifically got into this piece of legislation as opposed to saying like what's going on in Capitol Hill, right? And so to me, it feels like Ted Cruz's team, and Ted Cruz was told like, hey, you're going to talk about Iran, why we're getting into the war, you know, just for the audience. And so he obviously doesn't do a lot of prep. He's going to talk about like big philosophical things. And Tucker's like, yeah, what's the specific religious sect of the Shia population in Iran? And it's like, this isn't Jeopardy, man. You know, so there's a balancing act between the two, but I do agree with the view. Like if you're going to go after a country, if I'm going to talk about a country's monetary policy, I want to know their GDP. I want to know their labor market situation, workforce employment, inflation outlook, you know, what the demographics look like. And so then at that point, you kind of know about so you would think a U.S. senator would know, hey, we're trying to topple a regime here. What kind of people live there? How many people live there? Probably should be something you should ask.
Okay. I suppose the way I think about it, and the reason I think my mouth fell open on that clip is because if we, you know, when we go on family vacations, you know, I ain't had much learning, but that's one of the first things that I do is I sit down and I go, where are we going? What's the population? How far away from the equator are we? Like simple, very simple, interesting facts about the place that I'm going. And we all kind of do that as a family. So the lack of intellectual curiosity, I don't, if we're invading a country, bro, and I'm a U.S. senator, that's like 101. I don't expect you to need to sit down and do the prep for a Tucker interview where you had to look over the population of the place that we are mulling over going to war with. And I think the follow-up question, which was sort of like the religious makeup of the country, was, okay, you don't know this, and you're pretending like it was a guy. Yeah, what do you know? What about this? Yeah. It was sort of a throw-out question. So I look at that and I go, I don't think you should have had to do a bunch of prep for that level of question. I think that should be like top-of-mind information. I mean, the potential of going to war with Iran has been floated for a very long time, and the population hasn't changed. So the fact that you don't know that after how many decades in Washington, that's crazy. It is crazy, Chris. It's crazy town.
It is, yes.
What do you do with it? Is there anything, I guess, outside of the Mag 7? Is there anything that you do like?
Victor, let's just be clear here. Hold on, let's be clear here. If Ted Cruz, Harvard educated attorney from the great state of Texas, if he doesn't have his hands around this issue, I have very low confidence in Donald Trump having a strong grasp on this issue either. And then so like the knock-on effects of we're just going to bomb the hell out of this place and like we're not going to deal with boots on the ground and regime change. I know that's not what they want, but also what happens there. China has a vested interest in making sure those ports stay open. The regime falls. Do we think that we're just going to roll in there, or China might come in and say, you know what, we'll help with the regime change? The wars are not linear. It's like recessions. Recessions are not linear. Right? I cannot possibly predict how this is going to unfold next. So it's best not to go to war.
I agree with that. And I feel like some part of me so drained mentally on this issue in particular, because.
Well, have you tried adrenochrome? That helps.
It's been floated for a long time, Matt. We were just looking for the pretense, We're just looking for the pretense for war with Iran, and it feels like we found it, and it feels like there wasn't an option on the ballot to not get ourselves into a new war. And
that's the funniest thing about this.
Yeah, go ahead.
Who convinced Trump to rip up the Iran nuclear deal? The neocons. Who left the Republican Party to become never Trumpers? The neocons. Who is giving the neocons exactly what they've been yearning for since the late 1980s? I mean, didn't we arm Iraq to fight against Iran after the Shah fell?
Mm-hmm.
So this has been something in our minds since 1979, perhaps. And the neocons have been pining for this for my entire life, your entire life. And Trump's going to be the person to give it to them, even though they've worked the hardest to make sure the Republican Party wasn't united behind him. It's really fascinating.
No, sickening. It's sickening, bro. Do you think we're in this? I asked Ilya the same question. Like the whole peace through strength promise of the current administration, it becomes really hard without credible deterrence. And I think you sort of made this tongue-in-cheek joke one time when President Trump responded to Putin with that tweet. Stop, Vladimir. It's like, bro, that is not credible deterrence.
Yeah.
So some part of me wonders.
This is credible deterrence. We've moved 24 Stratotankers, which are our major refueling planes.
That's my point.
Into the region. Right. Yeah.
This is the thing that you have to use as your credible deterrence.
This is the red line that I wanted. This is when President Obama said, this is a red line for me. This is what you do to back up the red line. You move a carrier strike group into the region. You move a third carrier strike group into the region. Wasn't it crazy a few weeks ago when I said, how come we're moving all these B-52s, these B-2s out to Diego Garcia in the middle of the Indian Ocean? Remember that? It's a staging ground for when you attack things in the Middle East. And sure enough, the dots were there, right? It was kind of like those blood tents that Russia was setting up on the Ukraine front line for their drills in December 2021 and January 2022. If they're drills, why are you setting up hospital tents with all this blood being transported to the front line? What? So the breadcrumbs are out there for people to follow. This is if this is a peace through strength, escalate to de-escalate, this is the most credible way that you could do it. Because otherwise saying like, hey, if you do this, we're going to come get you. Okay. You keep saying that to me. Okay, but now we've moved all these assets into the region. So maybe it's just a bluff, but the threat looks a lot more credible than it's ever looked, as far as I'm concerned. So maybe that is what happens here. There have been available public reporting, Wall Street Journal, what have you. The Trump administration sent a proposal to the Iranian regime yesterday. The Iranian regime rejected the proposal, but according to the sources in the White House, the rejection was done for, quote, a good reason. Okay, So if that's the view from Washington, forget the bluster of Trump's tweets of unconditional surrender and, kill him, parenthesis, or whatever. If there are any off-ramps here, right, that's the most positive view for the market, because an off-ramp would mean the nuclear threat is deterred. I mean, I would imagine part of the deal would be like, we're going to bomb the hell out of Fordow and Isfahan and all these other sites in Iran that have been part of the uranium enrichment process, the ballistic missile process. The military is going to be gutted. The energy infrastructure will remain in place. Okay, like that's in everyone's vested interest. So there's still a path here. The images are ugly, but there's a reason why the market's so copacetic about this, and we need to respect the fact that the price action in the riskiest things is telling us right now we should stay cool and calm about this.
Why wouldn't you anyway? Like, what would be the reason?
Yeah, if I get really bared up, I get vaporized. If I'm right and World War III starts, I get vaporized. Who's my counterparty? How would I collect on this?
Not even that. just generally speaking, war is something you got to pay for, and anything that it increases the deficit nominally is probably bullish for asset prices. Maybe not on a real basis, but nominally, unless treasuries get to some level that we're all going to get vaporized anyway through high debt costs. Like, I wouldn't understand why you would panic.
Vaporized by high debt costs, or as another inimitable senator might say, everyone dies.
Mm-hmm. What do you think about bonds here? 113.21. They're just magnet. They're getting sucked back into 114 land with almost no vol. I almost want to stop asking this question because it's the least interesting asset, even though for a long time it's been driving all the price action. It's like I want to get a Snickers, say not going anywhere for a while. We're going to be at 114 plus or minus 3 points. So who the hell cares about bonds anymore?
Yeah, who cares? I think that's a good point. The trade was more interesting a few weeks ago when you had higher volatility and there were some of those candlesticks flashing signs of bottoming. And I think those candlesticks ultimately in hindsight were valid. Bonds have kind of turned higher here, although they gave up some of their upside today. Nonetheless, I think the notes are probably just the more typical tasty trader kind of way to approach the market. It's not, the vol isn't thrilling, but you do have a very clear range over the past 6 months that's been well respected. So being directionally neutral in there, it's not the trade you post to Wall Street bets about or write home about, but it's the kind of thing that's a step. It's not going to be the thing like, oh my God, look how much money I made, or oh God, I blew up my account, like I can't, no more chicken tendies for me, right? But it's one of those little things you put in the work. No one likes blowing their nose, Victor, but you got to blow your nose. Okay. There's some maintenance things you got to do. It feels like a maintenance trade, just kind of to do something, but it's enough. And so we're at close enough to the midpoint of the 6-month trading range. Stay directionally neutral if you can. That's what I'm doing. ZB, I have short put spreads on, also some long out of the money calls if the technical interpretation of a bullish falling wedge is correct. Otherwise, you're right. It's not interesting right now because the Fed's not interesting right now.
2 years ago or a year and a half ago, I take you back to the sentiment in the market back then. And I tell you, Israel and Iran are firing missiles back and forth, and our president is talking as if we're going to get involved. And we're
bullish LMT.
How would you have thought about the demand for treasuries in that world versus what is happening in real life?
That's a really good question. So if we lean on history here as a guide, when the market has judged wars to be something that are going to be, there's like a really interesting pendulum here. So work with me on this. And it's not just kind of one or the other. It's almost like an XYZ axis.
Okay.
If wars look, yeah. So what makes me think of this? There's a lot of thoughts I have to unpack here. Go back to the Civil War, for example. When the Union won battles, treasury yields would fall, gold would fall, because it was assumed then that the U.S. government would have to issue less debt to finance war efforts moving forward, right? It's going to be a shorter war. We're winning the battles. when the U.S. lost battles, when the Union lost battles in the Civil War, gold prices rallied, Treasury yields went up. The Union's going to have to print more money to finance a longer war effort. Okay. So there's that in our pocket. There's also the fact that when wars are deemed to be really, really short, you're not going to see any disruption of growth. So when we bomb Iraq in March 2003, for example, the initial reaction is higher stocks, higher Treasury yields. And if you look at how the markets reacted this time around, you're kind of seeing a similar situation where we're not projecting a long-term demand for safe haven assets here. Gold prices have certainly stepped back. Treasury yields, they've bandied around back and forth, but they haven't made any significant progress as if there was a haven bid in this market. So you could almost glean, Civil War is a long time ago, okay? But if we think about this in the more contemporary sense, an equity market that's up and yields that are moving sideways to slightly higher suggests that we're not expecting any significant negative growth effect, knock-on effect from this. No impact to corporate earnings, no impact to consumer spending. And that then necessitates the view that what we're seeing in oil would thus be temporary, because if you have a 10 or 15 or 20% rise in oil, forget over the span of a week, which we just saw, or 2 weeks, but really over the span of like a month or two, that's going to negatively impact consumer spending. So right now, the market's bets are that this is going to be contained, and because it's contained, there's no reason to reach for safety.
I agree with that. I don't know if it's if then though. I agree that in the short run, that ZT, like the short end of the curve, is not really budging to the extent that they believe that crude oil will be meaningfully higher, will stay meaningfully higher, and will create a cause for a change in inflation expectations. I do agree with that part. And then independently, I do agree that there is not really a demand for long end treasuries, but I don't know if it's, I think there's room for those to be independent. I'm not saying that that's inaccurate. I'm just saying there's room for those two things to be independent. I do think the market can see this as short term, but still be unwilling to buy U.S. debt. Or I could see they think it as long term and still be unwilling to buy U.S. debt. Like I think those things are both possible.
If Iran falls, what are the implications for BRICS and a competing system for a Western-led world? Russia and Iran have a defense pact signed together. Russia has said they can't support Iran.
I don't know that it's binary like that though, because if Ukraine falls,
sure,
what does that mean about the U.S.'s ability to protect those that are under its?
Yeah.
So it's like just because we're going to get to this place where we're not going to call it a loss, we're going to save face in some way, shape, or form. But all the propaganda that we spewed to get ourselves into this was inaccurate, and we're going to back our way out. And so the same way you're talking about Iran, the world could be talking about us with Ukraine.
No, I think we have been, though. I kind of think of this as like a pendulum, right? Mm-hmm. And I would think that since COVID, the pendulum has been swinging away from a U.S.-led world. And part of that is the Russian war in Ukraine. Part of it's our political dysfunction here. But and it looks like, China is elbowing everyone out now, right? Like, are they going to make a move on Taiwan? They have their own aircraft carrier. They're at the front of the curve for AI tech as well. They managed to pop their property bubble without killing their economy. And hate to say it, but people under the age of 40 in China have a higher percentage of homeownership than Americans under the age of 40.
What's the percentage there?
68% now.
For under 40.
People under the age of 40 in China, 68% own homes.
Our entire home ownership is like 63%. That's crazy.
Yeah. And under the age of 40 here in America, it's somewhere closer to like 32%.
No way.
I swear.
68% for everybody under 40?
I will source the figure. I don't have them in front of me right now. It's going to take me time to find. I was reading this literally last night. That's why this figure's on the top of my mind. And that kind of blew my mind. Right?
That's insane.
So there's a world here where the pendulum's been swinging against America, cost of living, the K-shaped recovery post-COVID, right? The vibes are all off. Maybe this is a turning point. Okay, hold on. These countries did set out against America. They've been set out against America for decades, and it ended up like every other totalitarian regime that has gone against America. If it was a Gaddafi or a Saddam Hussein, or now it's an Ayatollah. We again, there are lots of negative externalities there. Gaddafi and Saddam Hussein were pretty bad dudes, but what sprung up in their wake? You don't have ISIS without Saddam falling. Saddam was a counterweight as a Sunni Muslim to the Shia regime in Iran, right? So again, wars unfold in nonlinear paths, suggesting that we're just going to wipe out Fordo and the Iranian regime collapses, and we could all go home, and we reach Francis Fukuyama's end of history. That's just not how the story is written.
It's almost always not as quick as the markets nor the people and pundits pontificate for a little alliteration.
How long did the Iraq and Afghanistan wars weigh on markets, Victor?
Fair. I'm just saying, like, the way people thought about Ukraine was not as if we would be 2.5 years later still talking about how to negotiate to a peace deal. The way people framed that up for the public and thought about it, communicated it, was going to be sort of a quick resolution, and it was anything.
Kyiv would be down in 3 days, right? That was the Russian,
Exactly.
And it's now Putin came out tonight and said that he's ready. He's finally ready to negotiate a exact words, substantive talks with Ukraine on principles of peaceful settlement, and that's purely because Israel just wiped out Iran's S-300 surface-to-air missile launchers, which is basically the defense architecture that Russia has, because these are all old USSR equipment, right? And if the Israeli military can take out Iran's defenses like that, and now Iran, who's been supplying Russia all these Shahed drones to terrorize Ukraine with these unarmed aerial vehicles just dive bombing into buildings, blowing up, they're losing one of the very significant piece of their arsenal if the Iranian regime falls. So Iran falls, there are implications for Eastern Europe. There are implications for the EU. Do you think the EU feels more confident that it can stand up to Russia in the East moving forward? Hell yeah. They're definitely going to plow forward with all that defense spending, right? If they could stand up to Russia without that spending, imagine the force they'll be thereafter. So this is the most important event that's occurring right now. And by the way, Victor, can we say what a horrible calculation again October 7th was? Think about the dominoes from that event. Hezbollah falling, the Assad regime in Syria falling, Gaza is flattened, Iran may fall now, all because of October 7th.
Mm-hmm.
Things don't move linearly. I don't think the Ayatollah was thinking on October 7th that he would be watching his capital city be bombed 2 years later, right? So,
yeah.
Can we get out of these interesting times of history? This timeline sucks. I think I've said that 3 episodes in a row. This timeline sucks.
Yeah, let's get out of bonds too. Let's talk about something fun. What do you think about Bitcoin at 105? There's a lot of news flow here. The stablecoin bill, institutions snapping these things up like Tic Tacs, everybody copying Michael Saylor. Why buy any other asset? Why not just buy the Apex asset, Chris Vecchio?
I don't know. You don't see me. Not that I would say one way or the other, but I'm not hodling Ethereum or strategy these days.
Yeah, but I'm saying why hold Nvidia? Why even hold Amazon? just hold the Apex asset with all your money.
The stablecoins are really. Oh gosh, you got to own real estate now. You saw those building permits and housing starts figures today, right? Who's buying any properties at these levels? Mortgage rates are still 7%. Home builders are watching their supply chains get into disarray because of all the tariffs. we could talk about the labor argument here. And I know, and I see it here frequently in the chat. So I do want to take a quick moment to clarify my view on this. I don't think.
Don't worry about those psychopaths.
I do. I think intellectual honesty is a very important characteristic in this modern world.
But you need to know, this chat is a special one. They'll give everybody shit. Everyone, they throw elbows at everybody.
I'm aware.
So you get in here, you just gotta.
Oh, it's not just this
move.
chat.
That's it.
Right. One of the claims I've seen is that people are saying you can't get rid of all this labor supply, all these undocumented immigrants, because it's going to upend so many key industries. And then the retort is, okay, well, you're bringing in all these people that are basically glorified slave labor, right? Okay. I agree that's a problem. I'm not saying we should be paying people livable wages. I think it's a total joke that the federal minimum wage is $7.25, and here in New York it's $15 an hour. And if you look at how productivity has moved with the economy since the late 1970s versus wages, the minimum wage today should be north of 30 if it tracked productivity the way that, say, CEO pay has risen. I'm all there. I'm there, okay? But the reality is that if you remove a people who make X dollars in your labor pool, and you have to replace them with people who make Y dollars, it's going to cost more. It's going to push up prices. It's not rooting for a permanent class of subservient people in the country. It's just the understanding that if you remove the people who are willing to work at these wages, the work is not going to get done, or you're going to see massive cost spikes along the supply chain.
It doesn't have to work like that. It can also
maybe not.
It could squeeze profit margins. But we pretend like that's not possible.
When has a business ever said, I'm gonna in the grocery industry? It's one of the reasons why, for all the things going on with Zoran here in the New York City mayoral race, the talk of the groceries, the publicly funded groceries, kind of throw me for a little. Have you ever looked at the math behind it? Groceries chains margins are 2%.
2. Mm-hmm.
Yeah, it's nothing. They are the ones who make it up on the volume. So if you're going to get involved in something, you go for a high margin business, something with a 20% margin. But at 2%, where's the possible improvement there? So when I say how come they could always just sacrifice profits? Yeah, they could, but are they going to do that? Right? Just like the answer is we could always raise taxes, but is Congress going to raise taxes on the wealthy? No. Mm-hmm. So it's just the real politics of the world, not what we want to occur idealistically, but what are the constraints we're currently operating within, and how do we get around them, work within them, overcome them?
I agree. You brought it up. What do you think about the mayoral race in NYC? I've been following it sort of loosely, as much as you can from the outside.
I'm going to take a lap here. Last September, when Eric Adams was indicted, I said everyone should keep an eye on Andrew Cuomo.
Yeah, you did call it.
Right. Not because I'm a Cuomo fan, but just understanding the politics of the area. I'm entertained right now. The Democratic primary basically means nothing. So if you're following the New York City mayoral race, understand that we have ranked choice voting here in New York City. You can put up to 5 people on a ballot. And so you go round by round, and the lowest vote getter each round gets knocked out, and then their votes are redistributed to the remaining candidates. Because of all the party lines here in New York, Andrew Cuomo has an independent party line that is already secured. Zoran Mamdi, I keep tripping over those words, his last name, I apologize for that. He has secured the Working Families Party line. Eric Adams is running it.
You and Cuomo and that
debate. It's the Italians.
Didn't he correct him? Didn't Zoran correct him?
Yeah.
I hate when people do that stupid thing. I hate it when Kamala did it, and I hate it. Some people.
No, I get it. It's your last name is Jones.
Your name's
Your name is Jones. No one gets that wrong. I've heard Vecchio.
So you have an affinity. You have an affinity to when people get your name wrong, getting pissed off.
Okay. There's a bridge named
Aaron.
Yeah, exactly. Great reference. So you have Eric Adams running on an independent line. You have Cuomo, who's already secured his own independent line. Zoran's already secured the Working Families Party line. And then Republican Carlos Silva, Angels guy who always wears the red beret. He's like New York's Tom Sosnoff. He's going to run as a Republican. So no matter who wins the Democratic primary, you may have a 4-person mayoral race no matter what. And that is the most entertaining outcome.
The
Because
most entertaining outcome is Eric Adams wins.
because that's the world where you get Eric Adams winning, or you get a Republican mayor of New York City. And like,
How crazy would that be?
If Cuomo doesn't win the Democratic primary, I think he's going to back off. I think Zoran's going to run no matter what.
What do you think about Zoran?
He's interesting.
He makes me very uncomfortable. My spidey senses go up. He's too polished. He's too good.
He has his mother's a famous film director, and so someone said this to me recently, like, oh, you're very sharp with your tongue. It's like, well, I grew up in a household with 2 attorneys. I had to be. That's how you fight for a word in edgewise at the dinner table. Okay,
Yeah,
otherwise you're getting cross-examined.
You can be sharp, but you can be polished, or you can be practiced and rehearsed. And when I listen to him,
You don't think I'm polished and rehearsed? Every time before Teapot, I stand in the mirror and go, adrenochrome.
I'm telling you, every time it works. No, that won't give me the laugh. That'll get me to cry. Ivermectin will get me to cry. But he's very like, I just feel at that age, you usually don't have like that level of just political polish. You're a little bit messy, you're a little bit angry, you're a little bit emotional. You don't have the ability, any question he knows that will be controversial. He has this way of dancing around it. I'm not being sympathetic. I know some of his ideas, some people on this network might not like, or vice versa. I'm watching from the outside in. All I'm speaking to is his authenticity. Something feels off. It's like the Men in Black, the alien in a human's body thing. I get that impression with Zoran. Even though I think Cuomo's the worst.
One thing that he's done very well is he understands the media environment, which is that we're post-literate, and so you need to have people's attention. And I think a lot of Democrats are allergic to media because they, again, the voting coalition for Harris versus Trump, right? College-educated folk, they're going Harris's way. Trump has the largest multicultural working class coalition since Obama's 2008 win. All right.
There's no way he holds that together, by the way.
No.
It's falling apart already.
Of course, right. So I would then turn around and suggest Cuomo has a certain group of people that like him. Zoran understands that he can get to more people by being in media. Cuomo is older. He is from the older generation of Democrats that think that you need to be studied, that you communicate in long form, you write things out. This is the old party of the lawyers. Okay. And so these candidates just aren't cut for the information environment that we're in right now.
Mm-hmm.
And that was Biden's problem too. Once Biden got in front of camera, you're like, holy crap, this guy is much older than I remember. And I think that's a lot of people's perception of Cuomo. Personal issues and scandal aside, which are all horrible. Okay. And I know a few of the people that have accused him of the things that he's been purportedly accused of. And I think those women are believable people. They have no doubt in my mind that what he was accused of is true, from what I understand of the situation. But his age came through on the stage the other night, and his poll ratings have gone down. You're right about Zoran being a little bit too clever and polished with some things. I found the globalize the intifada comments yesterday that he gave on the Bulwark podcast a little concerning from my own view. Okay, well, he said like he tried to equate it with intifada is the Arabic word that was used when you read about the Holocaust and the Warsaw Ghetto Uprising. But the context in normal times is that the intifada is the struggle against Israel from river to sea, and where it happened to the 9 million people that live in Israel, if you're driving them out of the land, okay? And Israel is a place. And the intifada, if you read Hamas's founding charter, it specifically calls for the extermination of Jewish people. And I think this is an important distinction to make here, because Israel is a place. Jewish people are spread around the world. Okay, so when you say globalize the intifada, you're saying globalize this resistance against not Israel. Israel isn't everywhere around the world, but Jewish people are. So I I find these flirtations on both sides of the aisle with some of human beings' worst impulses to be terrible. But I think that's a function of the world that we live in, insofar as people, as FDR said in his April 14th, 1938 fireside chat, people are willing to give up liberty and freedom if it means putting food in their kids' stomachs, feeding their family, was his exact words. And people are willing to embrace the crazy of it all if it means they can break out of a system that's keeping them down. And that's why we need economic opportunity for people. We need ladders, not chutes. When there's economic opportunity, crime falls, right? People flourish. Human ingenuity soars. We just don't, people are falling behind these days, and we don't have any solutions in place that make it better. And I don't know what going to a war with Iran does for building more housing in this country. So I consider me against it.
Yeah, it doesn't. I'm still blown away by 68% under 40 homeownership. It's blowing my mind. I haven't stopped thinking about that number since you said it. Is any part of you, I know I'm going to get you out of here, but you mentioned the home builder numbers earlier today.
Mm-hmm.
I don't know what's wrong with me, bro, but like, I can't stop thinking about the home builders. And they're off. Most of them are down between 35 and 65%.
I got your stat here, by the way. According to HSBC, 70% of Chinese millennials own their homes. 35% of U.S. millennials own their homes.
That's so wild. That's so freaking wild.
46% in Mexico, 41% in France, 31% in the UK, 26% in the UAE. I have no idea why these were the 6 countries chosen for this particular graphic, but this, like, why is the UAE on here with the US and Mexico? Okay. But yeah, if you want to share this on screen, this was a screenshot from the BBC and HSBC.
I'm not at the home, so I'm not doing a screen
gotcha.
share. I'm just doing the platform share. Otherwise I would.
Okay, well, now you have the graphic in the chat too.
I'm in Thailand right now. Do you know that?
What's the population of Thailand, Victor? Come on. Well, at least give me the ethnic groups.
Hold on.
And you want a vacation in this country?
Hold on. I looked it up. Now I don't know what to say. I think it's way more than you think. I think it's 190 million.
Yeah, it's huge.
I think it's 190 million. Somebody check me on that. Some reason I wanted to say 70 at the beginning, but I knew that wasn't right. Somebody check me on that. 190. Home builders. Have you been thinking about them at all?
I have been, and not in a great way. If we're going into a world where we have these supply constraints for whatever reason, we don't need to go into those specifics again, but let's just say there are supply constraints. If it's through human capital or physical capital, we don't have the people who are willing to work at current prevailing wages. We don't have the ability to source supplies at a reasonable cost. Building new homes is going to be difficult. And that puts existing homeowners and existing facilities in a better position than new facilities, right? And I would point out that over the last few weeks, real estate investment trust ETFs have been holding up a little bit better than the home builder counterparts. And that probably is the way of the world for the foreseeable future, which, if we're heading into an environment that the Federal Reserve is appropriately painting lower growth, higher unemployment, higher inflation, stagflation, you hide out in a few places, but things that tend to be inflation sensitive or not so sensitive, like gold, but also like housing. So I think that if you're going to be a housing bull, you have to be a very specific type of housing bull now. I'm apoplectic overseeing the state of housing right now. You and I have gone back and forth about this for years, and we're just digging ourselves into a deeper and deeper hole with each passing year.
I agree with this, but this is when this is my problem, man. This is when I get the only time I get excited about things are when nobody wants a thing. Like when everybody's got the negative reason why something is a bad asset, why it won't work. And I do agree that I almost can't see in the next 6, 9, 12, 18 months, I can't see a reason why these would be doing really, really well unless there was some need for the Federal Reserve to implement some Operation Twist or some yield curve control. And you drop rates.
Don't
and then
threaten me with a good time, Victor Jones.
And then you get this window of time where people can buy, where they can afford, and they probably buy them up. That would make home builders go absolutely insane.
Well, the market is hugely oversupplied right now. Redfin, we shared the chart on overtime earlier, but Redfin shows
35% more supply, something like that.
Yeah, home buyer. There's a 500,000 gap right now between those that are on the market and people looking to buy presently. And that's blowing out to levels that we haven't seen since the global financial crisis, right? Year over year, home listings are up, I think now 17% year over year, which again, you haven't seen that type of home listing growth since the global financial crisis. But then again, most homeowners, the prevailing mortgage rate in this country is like what, 3.93 right now? So even if things come back in, people who own their homes are fairly well insulated still. It's not 2007, 2008. And then how do you get into this market? If you're in the market to buy a home right now, you're basically hoping for a crash. You're hoping for some economic calamity so that rates come down.
Yeah,
that is
but I think
not the incentive you should be rooting for.
So here's what I think about. So I agree. The housing market's toast, bro. And the only thing that hasn't happened, no, it's toast. The only thing that hasn't happened is people have started to report on it because it's not cracked enough for it to make it newsworthy. But it eventually, the state of the housing market is going to start to show up on the news. We're just not there yet, but it's toast. But my question is the damage to the assets already done? And so some of these things are down 40 to 60%. And I know something that goes down 60% can go down another 80. I totally get that. But I just can't help thinking that there's some value to be had here. I don't know if it's at this price, but some sick masochist portion of me just wants to jump in there and start being the guy who's long home builders. And I bought a few of these the other day, not a bunch, just like less than 10 grand worth. And I'm starting, man. Are you coming with me, Vecchio?
Not home builders. I'll see you in the REIT side of things.
That's fair enough. If the people want more from you, tell them where they can go.
At CVecchioFX, here with Victor on 2 Wednesdays. Although next week, I think we got to flip next week. So next week, Tuesday, 6 p.m. Eastern, 5 Central. Also, let me explain on Tuesday mornings with Tom and Tony, 9:40 a.m. Eastern. And then overtime with Radigan and Spivak, Monday through Thursday, 4 Eastern. Futures Power Hour, Monday through Friday, 1 p.m. Eastern.
Right on, man. I was right the first time. Wrong. So it's not 190 million. It was 70 million.
Indonesia?
Yeah.
Or Thailand?
Yeah.
Thailand. Okay, yeah.
All right, my friend. I will see you. For the rest of you knuckleheads, I will see you tomorrow, bright and early, same time, same place, same great network, only on Tasty Live. Till next time, peace.